How was the walk? Did you walk?
Yeah, I thought about not walking, and then I just did it, and now my feet will be wet for the rest of the day.
You
Which
got
is
11
fine.
sets of shoes here. Can't you transfer?
Yeah, it's the socks that are a problem.
Oh, that
but
is
I
a
guess
problem.
I could go sockless. But either way, yeah, this is the shakeout, so to speak, of winter.
This
It's
is
the
classic
last
March.
snow.
They tease you with 70 degrees, and you're like, oh, everything's good. Maybe I should put out my patio furniture, and then it snows.
Not so much fun.
And it was
but
bad. This is like a nasty snowstorm. It's wet. It's heavy.
It's a classic rain and
Yeah.
then snow, but it's not cold enough for the snow to be like. Yeah, it's not like frozen, which is nice. There's no ice, but it's just like slosh everywhere.
I came
Not
down
fun.
early this morning, and I mean, short of them working on the expressway, the traffic was horrible.
I'm sure. Yeah, I'm
So-
sure the traffic is not so much fun. But you know what? It's Thursday. We had a ton of stuff come out this week, a ton of news. Markets are moving. I'm decently happy. I could work myself up to being happy.
Could you?
Yeah,
Look at you go.
I think so.
I like to see that.
I mean, why not? What's the alternative?
I think that sounds fantastic, and I do know after yesterday's show, coffee's an off-limits subject now for you and I.
Coffee. Oh yeah.
Yeah.
We're not. I don't want to talk about it.
No, it's all good. I love the
Nothing-
coffee at home.
Yeah, it's a really good situation that Pete has. Some would say perfect. I think.
So let's say perfect.
But yeah, let's tap into this U.S. dollar.
We got so much going on. BOE announcement coming up in 25 minutes. Swiss National Bank cut rates this morning.
25 bips.
Right.
If I asked you yesterday what the Swiss National Bank interest rate was going to be today, what would you have said? What would you have guessed interest rates were in Switzerland? I mean, you're pretty tapped in, but would you have guessed that they would have been this low? If someone would have asked me yesterday, "Hey, the Swiss National Bank is having a meeting coming up. What do you think their interest rate is going to be after the meeting?" I would have said like, I don't know, $1.25, like 1.5%.
Do you remember
They're at zero.
when they were low? They were at negative 275.
Oh man, I
Yeah.
forgot about that.
Yeah.
we need more data in this chart. Can we get more data now? They
I
only
mean,
got.
you think about that. They were basically just taxing the heck out of anybody who wanted to hold Swiss francs in an attempt to control the currency's appreciation.
Let's see what I can get. I like the trading economics. They have the good data. Yeah, I mean, only got up to 175 at the peak of everybody hiking interest rates, but you go back in time, negative 75 bips for a while, and I can't get back further than that to get back to the financial crisis and,
Right.
and everything else. But yeah, I hear you, but I mean, 25 bips for a major currency, that's pretty low.
It's pretty aggressive bringing them back to the zero bound again. I think they're happier with a lower exchange rate given all the uncertainties of what's going on. And I think there's this feeling too that, well, nobody's talked about imports and exports from Switzerland. When does our name come up in the random conversation?
Sure. Yeah.
So,
Or yeah, what item finally piques the interest of these trade war talks that we are heavily involved in?
right.
But yeah, I mean, you lay that against the upcoming Bank of England rate decision.
And the movement, right, we're down from 5.25 to 4.5.
Yeah.
It's readily apparent what we're seeing, and the rhetoric around the S&P. Again, the currency moved. Swiss moved a little bit lower on it. Dollar moved up a little bit higher. The rhetoric was, we're not necessarily stopping here if the market dictates more easing. So with that,
Here you have the rally in dollar. It's been beat up. I'll go to the daily chart to show you the context, because the dollar has been beat up here as it has been among most major pairs.
Right, which
But, I
means
mean,
strong Swiss, which is something,
Yeah.
again, the Swiss are very mindful. Now the euro's rallied against it again. We had the euro, the Swiss peg to the euro for the longest period of time before that peg broke, and it's actually a good question. Can you go back to euro Swiss?
Sure. Oh, Euro Swiss, where are you? There we
There you
are.
go. Okay, so
So you see the recent euro rally,
right.
but a general trend lower euro against this Swiss franc over
Right.
the last year or so.
So, and I think the Swiss continue to be sensitive about an appreciating currency for them. And so they opened the door that, we're not necessarily, I forget what the exact word was, but it's not that we're not necessarily done, but could go either way.
Gotcha.
We're not bound, and they've demonstrated they're not bound by zero, and they kind of reinforce that. So you saw a little bit more juice go into that Swiss.
A cut and a dovish cut at that. 'Cause
Right.
they were expected to cut, but to see this rally out of the dollar, which isn't anything crazy. It's what, 30, 40, 50 points maybe at its peak here. And this is a dollar, again, that's been beat up
Right.
throughout the first couple months of this year. But yeah, the expected cut to 25 bips is one thing, but the dovish rhetoric around a central bank that is very liberally moving interest rates lower to maybe defend against its currency getting too expensive in certain pairs. Interesting piece there. Looking ahead to this Bank of England meeting, you have a little bit of dollar strength in some of the pairs. Interestingly enough,
Yes.
dollars is continuing to lose ground against
Yeah.
this yen. So before getting to euro and sterling, which are maybe standing by going into this Bank of England meeting, man, this was an interesting trade up to this 150 is just so. You and I rarely harp on like, oh, this is
Big
a
round
level.
numbers.
Yeah,
Yeah.
it's important. Remember S&P's
Right.
at 3,000. Like this is a big deal.
I remember the first time they crossed 1,000. That was the impenetrable level.
I'm sure. This is a little different. Obviously, equity indexes, that number is relatively arbitrary.
Right.
It's an amalgam of a bunch of stock prices that maybe they have some unique levels, but even then. Whereas here, it's a little bit more direct. I mean, this is obviously the exchange rate between dollars and yen. And we'll go back in time in just a second and put more data in here. But we get up to this 150 several times this trading week, Pete, and they sell it off every time. And then yesterday, coming out of the meeting, they hammered this dollar all the way down below 149. And this morning, dollar bouncing against euro and a couple other pieces, not this piece.
No, a really weak up movement that aligned with the Swiss bank announcement, but selling immediately emerged
Right
out
in
of it.
here,
Yeah, and now we're seeing, again, a euro getting challenged to the downside, Aussie, Kiwi, yen is absolutely, and you've shown this through Cora, yen is, and Glenn had a great piece on yen correlations. Yen is again demonstrating it is being driven by its
Oh,
own
interesting.
things.
You think this might be a little bit of a... So yesterday you had the dollar weakness, which was one thing, which is, this move coming out of the Fed event. Is this morning's continued weakness in this pair for U.S. dollar a little bit of a flight to quality extension? Because you have equities moving lower this morning. You have
could.
The last piece to look at here
But
is
what's
that commodity
interesting-
currencies are, funny enough,
Getting hammered.
Yes.
Yes.
And U.S. dollar seeing, a percentage and a quarter of strength against this New Zealand dollar in the same time that it's off, almost a full percent from yesterday against the yen.
And I think when you look at, where the bias is, dollar yen was sold as all the other currencies, as euro rallied, yen rallied as euro rallied, while U.S. equities rallied yesterday post FOMC. Since then, this morning, euro's given back a big chunk of it. Swiss did after the rate announcement. Yen is
Here's that euro rally yesterday afternoon,
Yeah.
and then it gave all of it back.
Do you remember last Fed meeting we did the same thing where we had buying of currencies, selling of dollars, and around 3 o'clock in the morning the following day, equities had rallied. They came in and they started selling equities. They started selling currencies, buying the dollar, and it was a pretty, basically taking out everything they had put in post-Fed announcement that day, taking it back out. And it seems like they're doing that in very short order here. But the yen continues to exhibit a very distinct behavior. And is it, in this instance today, we're seeing U.S. equities or bonds are rallying. I think bonds are, we're back through 118 and the long bond.
Really? Okay.
2 years well below 4%. Is that helping the yen cause? Yeah, I think so a little bit. That
For
rate
sure.
divergence, I mean, where, again, lower U.S. rates are not helping a euro at 109.5 or Kiwi that had gotten up into the...
Well, it's always funny because you tend to think about things in our, egotistical, narcissistic U.S. mind. It's always a U.S. It's easiest if it's a U.S. dollar story. I guess I'll go that route.
Yeah,
and so it's always easy to be like, oh, especially the Fed events yesterday, and you would expect, okay, after the Fed event, this is what happened with dollar, and now this morning, this is what happened with dollar.
Right.
And to your point, maybe there's a dollar move to the downside after the event or the upside after the event, and then the next day maybe it reverses or maybe it continues, whatever. It is super interesting that this is one of those moves. If you tell me, bonds are up, U.S. rates are down, but U.S. dollar is gaining against euro and U.S. dollar is losing a bunch of ground against yen, then
So how much higher is dollar yen?
is this an environment where boons and European debt markets are actually moving even higher and their interest rates are moving even lower, but the Japan story is just so different that it's bucking this trend? And if anything, maybe we're moving into an environment where a lot of these stories are yen stories.
Yes.
And you're seeing that, okay, the U.S. is trending like a lot of these different areas lower in interest rates, like the euro area, like the U.K. and everywhere else. And so maybe they're kind of like, euro gets up to 109 against the dollar, and then it comes back down to 108 and whatever. But this yen is just building in ground against a bunch of currencies. It'll be interesting to see, because we've been talking about, it's almost been like the elephant in the room. We've just been alluding to it like, oh yeah, Japan's over there. They're the only central bank that's hiking as everyone else is cutting. When all is said and done at the end of 2025 here, will we look back and say every major economy moved lower in its growth metrics for 2025 and moved lower in interest rates, maybe to
Except
3% or whatever,
Japan.
except for Japan? It'll be really interesting because, you look back at the last 5 years and everybody's been moving higher except for Japan. And so it's just an interesting piece that you look at this board and you see, a classic dollar is up just a little bit against sterling, dollar's up a little bit more against euro, dollar's up significantly against these commodity currencies, Aussie and Kiwi, and yen is beating all of them.
Yeah.
It's kind of crazy.
Yeah, it is. And absolute for the euro, they had passed that huge spending bill, but now the talk this morning was that they may not spend it all as fast as they thought. So they may not borrow as much, to borrow as much as quickly as thought. That there's some negotiation. So as you were spot on, boons and baubles, German rates, yield the instruments rallied, yields fell.
Yeah.
Now that puts a little bit of a headwind. Would that impacted the euro at 106? Probably not. We're at 109.5, 109. We're at the upper end of the range. It's going to have a little bit more playback through the loop here.
For sure.
So, but what this is giving you, again, this was a hard rally to sell because anything between 108 and 109 looked, 108.5, 109 looked rich. Of course, as currencies always do, they go a little bit further and farther than you think.
Of course.
We got close to 110. We didn't get through it. We tried it again yesterday, right on the close in the U.S. 109.
Yeah, got
109, 20, 25.
I guess this is maybe a little bit of last night, but yesterday multiple times trying to get up to 109.15, 109.20, and then releasing.
Right. And now here's the situation. If you think that the move from 105 to 109 was far too fast, and you had been short, you would have taken some pain. But if you had actually, even if you'd sold a little early, 108.80, 108.90, and you had put a reasonable metric around what you're looking to make and lose, and we went through those numbers yesterday, and that was a really good exercise.
55, 60 points.
55, 60 points. You would have been close on the upside.
Yeah, if this right here is 109, you would have gotten 40, 50 points.
It would
at the worst.
it would have been tight.
Yeah,
And
I mean it did this for about a week or so of trade. Depending on when you would have traded this, there was some back and forth noise.
right, but you did get the release now.
Yeah.
And if you still think there is a fundamental shift in interest, you're getting an 80-point pullback this morning to get some longs out.
To get in thinking that we're going to 110. Well, I want to continue the dollar yen piece and get into our segment for today, because it'll speak a little bit to a couple of these things. The dollar's failure to bounce following an unchanged rate decision from the Fed. Pete, the context is always different with this stuff. In today's environment, an unch from the Fed is relatively hawkish, because as an action, that is, everybody except for the Bank of Japan is moving interest rates lower.
Right.
We talked about how Switzerland has moved interest rates now to 25 basis points. Even the Bank of England, who's been right there with the U.S. as one of the most hawkish major central banks, moving interest rates lower in the last several months. But we dive into some of the numbers. You and I don't always do stuff like this, but I thought it was particularly interesting just to give people exactly the outlook from this March Fed meeting. Expectations, Pete, are still 225 bip rate cuts at some point here this year. And you can see in the dot plot, if you're looking at the leftmost grouping of dots, if you can follow my mouse here, this is all these blue dots are a vote from the different Fed members. And you can see the majority of this distribution is sitting right in here in the 3.75 to 4% range.
It's more like a Rorschach test. You've got like the tall snowman, a little chubbier snowman,
This
and
looks
to the
like a
right,
little kind of
that's
alien guy.
That's
Yeah.
like either the anorexic snowman or the alien guy.
It's funny you say snowman. To me, it was they all look like Star Wars like droids or something. Like they could all be like rolling around or hovering around and like doing some Star Wars stuff. But snowmen, Star Wars characters, whatever have you, in 2025 focused around. This is actually four members thinking that we'll end the year exactly where we are right now,
Right.
which is 425 to 450. But the majority of Fed members thinking 1 to 2 cuts, a couple people thinking 325 bip cuts, and then on into the future, thinking around 3%. What was particularly interesting, and I think what people digested yesterday more so, which has translated in a little bit of a continuation of some fear for U.S. equities and U.S. dollar against the yen, which we'll look at in a second, is the fact that if you look at these graphs here, the dotted line shows you where GDP expectations were last meeting in December, and now in March, all of the expectations from the Fed members are considerably lower
Right.
than where they were. Here is unemployment, which is not considerably higher, but is inching higher from the Fed members. And so you have a weird standoff, and I think this is what people are trying to digest, which is inflation metrics they think are still kind of sticky, but they are inching growth lower
Right.
and inching unemployment higher, which is a little bit of the anti-soft landing kind of case,
Right.
which is, okay, growth sustains, unemployment sustains at its current good level, and inflation continues to move lower, and we kind of cut interest rates in a perfect environment. Not exactly what they're getting, and you saw it play out a little bit in this U.S. dollar rally into the event, Pete, all the way up to 150, and then they sold it off and they continue the selling today.
Yeah, and again, we were both. 150 was getting back to a rich level. We had when euro shook out to its highs, I think we got down to 144. So we had a pretty sizable rally in dollar yen, and
Leading into the event here, to get back from about 145 all the way back up to 150.
right, and this is interesting tape action to me in terms of the dollar yen was sold irrespective of general dollar moves, irrespective of general U.S. equity moves. But the recurring theme that as bonds creep higher, remember, we started the week at 116 and change. We're above 118
2 points
now.
higher, yeah.
So yields lower. I think that yield lever, if we continue to see bonds creep 118, 119, 120, this is going to potentially have kind of a very interesting exercise right back down to the
and you raise a
lower half of
really
145.
interesting point, which is that equities moved higher on the event.
Right.
The Fed comes out, they don't change, Powell speaks, and equities are moving towards their highs for the week.
Right.
And the dollar is getting annihilated. And you might say, oh, okay, well, the yen flight to quality trade, actually, that makes no sense here. I don't know what the move is there. It's just dollar weakness. But then today, as they digest it more in the aftermath, equities are giving back those gains. And now you might say you're seeing, now you're seeing the yen flight to. It's regardless of what's going on in the other asset classes that you're seeing the dollar selling.
And we talk about flight to quality and everything and people can say, well, you're just, again, markets moved, you're picking off your sticky board of causes.
You can always tell the story afterwards.
Right.
Yeah.
And it's not that. It is, all these things come into play in different ways. The interest rate differential is real and it drives prices.
It's probably more real than anything, yeah.
Yes. Expectations around growth drive prices. But it is the validation of the market being the sum of all those things. Yeah. And rather than trying to guess at them, it is looking at context of what is the takeaway for me as a trader? Am I supposed to guess what the next change in rates is? Not necessarily so, but to see that where's the linkage? The linkage right now is long and short end. U.S. yields are helping to fuel dollar yen moves. So this is on my radar. If we trade north of 119, I've got to imagine that dollar yen selling continues at an accelerated rate as we go into the weekend.
And this is where we'll leave it here, because the U.S. rate expectations for 26 are currently still kind of mirroring that dot plot. And remember, this is what the traders think out in the world of interest rate markets versus that dot plot, which is just the Fed members, what they think.
Were you surprised
right now.
This didn't move one way or another?
I was surprised to see, given the dollar weakness, that these rate expectations are still in that 3.5% to 4% range, which is where the Fed is. But I think leaving people here with the current picture, and also keeping in mind the carry trade when you're talking about dollar yen and a couple of these different things, here is the current landscape, which is UK's at 4.5%, the US is still at 4.25% to 4.5%, Aussie is still decently high, Canada relatively high, but all these markets moving lower, and Japan is down there at 50 bips, but they're the only ones that are moving higher. I think that you have to probably watch the interest rate price action, where the carry trade dynamics kind of kick in for a number of these pairs.
It's a great way to end it too, because we know there's a strong chance they're going to cut rates in about 4 minutes in the UK. Aussie has made clearly that they're not stop. This is not necessarily a stop to the downside.
It can't
Same
be,
thing with Canada.
Yeah.
Same thing with Europe in terms of growth. The only thing that we know for certain is that Japan has no interest in cutting, and the discussion is when the next hike is. So that is, when we look at this disconnect around performance, this is a great summary of direction, drift of travel, and potentially what moves, and why the currency outcomes we're seeing.
Awesome. Well, that'll do it for today's episode. You got Tom, Tony, and Vanetta coming up next. Thanks for watching. Peace.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
All traders are free market freaks. It's the lifeblood of risk takers. Nowadays, though, I still wonder how a productive free market economy will evolve to face the challenges of a more complex and divided world. So sure, I'm a bit concerned. In fact, as I think about the growth of digitization and AI, I know things are about to change at a pace we probably can't fathom. Regardless, one area we can all agree on is the power of decentralization to bring free markets into the future. The bullish case is that free markets will thrive when more people are empowered to participate through technological advances. Most of us also recognize the importance of sensible regulation to make sure that markets are equitable for everyone and will provide consumer confidence necessary to attract new capital. It sounds so reasonable on paper, but now come some of the challenges. Can we have a true free market when some of the megatech monopolies have a larger market cap than the GDP of most democracies? Can a free market thrive under the weight of income inequality and billionaires dominating the political machines? Can AI and quantum computing disrupt the tech backbone in a positive way to support consumer empowerment? And lastly, will the confusion around regulatory integrity be a meaningful hurdle or a showstopper? If corporate or individual fraudsters are allowed to run wild, then the importance of boundaries is meaningless. The bottom line is that free markets do not have default risk. They'll likely be around forever. But let's be careful not to mess too much with Mother Nature's ecosystem. Everybody has some level of fragility.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Thursday to you both.
I just threw up in my mouth.
How are you guys? Is that a cockatoo
I'm
on
just
your,
gonna close.
on your shirt?
That's enough internet for the day. That's enough whatever you've had for the day. That's enough of you for today.
I haven't even said a word yet. That's
Oh my
already.
goodness gracious.
All you have to do is sit there, Sosno.
Oh my goodness
Speak
gracious.
volumes.
Happy first day of spring. Literally, the vernal equinox hit at around 4 a.m. this morning, so equal periods of day and light today. Very cool. But we got snow. We're legitimately snow.
Now, this snow came quick because I was up at 2 or 3 o'clock in the morning because my freaking dog is acting up and I had to let it out and everything else. It was dry outside, 2, 3 o'clock in the morning. It was
Yeah.
And then I woke up at 5. We got an inch or so of snow.
Okay, take your word for it. I mean, I make the joke. I was like, I gotta keep that thing, gotta stay strapped, gotta keep it on me. And by it, I mean my snow scraper. Because you would think you could take your snow scraper out of your car by March 20th, but no, you gotta keep that thing on you. And I had to use my snow scraper. I don't have a garage. You guys are rich millionaires, and you have fancy heated driveways and garages. But your girl,
My heated driveway works now, and my heated garage, beautiful.
yeah. So
My heating garage has always worked out.
okay, well, I have to brush my car off, and
Yeah, that's
I was a little
bullshit.
I
upset.
didn't know it snowed. Oof.
Yeah.
A little upset.
I
That's
didn't even wear a coat today, to be honest with you.
okay. That's fine.
I was hot.
It's just so crazy.
So my wife always, so like that weekend that we had the 70-degree weather and stuff like that.
Yeah, St. Patrick's Day Saturday, but then it was the weather's just been so crazy. Yeah.
In years past, I get anxious because I've been putzing around in my garage, as Tom has told you, for the last 6 months of winter that we've had here in Chicago, that I like to do stuff outside. So in that 70-degree weather, I usually put out my rugs, I get my lawn furniture, I put my cushions on.
Yeah,
I'm
yeah,
ready to go.
you're
I'm
ready.
to go.
You
Yeah,
want it to be warm,
I love doing that.
Your lawn furniture.
My lawn furniture, yes. But she makes me the gazebo. I make sure it's all cleaned up.
Your palapa.
The palapa. So make sure I'm good to go. But she tells me, don't do it. Don't
Slow
do it
your
yet.
roll.
We're gonna get snow.
It's a
Always
false
right.
spring. Yeah.
Yeah.
False
He's always
spring
right.
here
Always
in the
right.
Midwest.
Always right. Gotta
she's-
keep that girl around, Sosnoff. She's always right.
But it is the time of year, cool phenomenon over the next 2-3 days. The sun rising and setting lines up perfectly with the east-west streets here in Chicago, so you get Chicago hinge. It's a cool, no, okay.
I thought it was interesting.
I've taken, as a photographer, I've taken some pictures, but I mean, you can't take pictures of the sun if the sun never comes out ever again.
It's true. It's true.
But Tom, how are you, sweetie? What are you up to?
Yeah, you're very quiet over there. What do you got going on? Something's bothering you, or something's good?
Nothing's
What, did
bothering
you get like an email with pictures attached to it, or something?
Let's say an email with pictures. It's nothing's bothering me. It's good morning. I mean, the traffic actually wasn't bad at all today. Coming in yesterday was bad. Today wasn't bad.
Because everyone else works for an overlord that lets them work from home today. No, I was telling Beth, I didn't see a single person until I got onto the highway. Normally, I see people on my side street, in my neighborhood, but not a single person this morning.
Yeah,
I don't know what's wrong with you millennials. You're a millennial, right?
I'm an elderly millennial, according to Tom.
Aging.
Yeah.
There's no bike riders. You're right. There was no scooter riders. This morning.
Yeah.
Yeah.
I don't know.
Yeah. What?
Nothing. By the way, Vinny became a pickleball champion last night.
Pickleball.
Yeah, he's only played a couple of times, but he's mastered it.
Oh, of course.
Just want to let you know, in case you want to challenge him.
Too easy for him.
Yep. Wait.
Can I tell you this? I was not aware of this. I've never played pickleball ever. I'm not against it, but I saw a TikTok where, because it's sort of like a trend, they'll go into like doctors' offices and they're like, hey, you're this kind of doctor, like what's the number one thing you see in your office? And it was like a foot and ankle doctor, and they're like, what's the number one thing you would tell your patients not to do? And they're like, play pickleball.
It used to be motorcycle riding. Now it's pickleball.
Ha ha! Suck at pickleball.
Taking the lead. That's right.
But I had no idea that it was the number one cause.
Well, guys like Tom don't go out there and stretch or anything else like that, and then they go out there and play. A hip's gone and knees gone, ankles gone.
But I thought I was supposed to just be so gentle and like it looks so fun on TV.
You reach for.
Yeah, I guess so, man.
It's him. What can I tell you? See, there you go. That was a deceptive speed you just saw right there.
I don't know. All right, well, shenanigans.
Pickleball could be a good sport for you to mingle with the singles.
I don't want to mingle. I've seen what there is to offer. I'm headed back inside.
You gotta peel back the layers like an onion.
I don't have to do anything. I almost swore there.
Easy, girl. Easy now.
I'm good.
Probably catches like me out there.
That's not sweetening the pot. That is not sweetening the pot, but I will tell you what I do have affection for. I will tell you this. We got a video, hopefully, coming out tomorrow. Myself and Gus, your social team, we had so much fun yesterday. We interviewed a lot of the dudes on the trade desk about some March Madness stuff. I'm going to interview you today about it, but it was so...
Today's the first day, like 11 o'clock.
Yeah, it was so much fun, and Gus, he works here now. He, just graduated, so I had to, sort of ease him into meeting all these old traders. I was like, don't be offended by anything that they say to you.
Don't get too close. You don't have any food on you, right? Because they can smell it on you like a bear.
They mean well. No, but it was so much fun. I seriously...
Those are actually hard questions.
Yeah.
I don't think he'll get any of them.
We're gonna find out. We're gonna
NCAA questions. I don't think it's like Tony's thing. He's not like a sports trivia guy.
No, I'm not at all.
Well, it's just for fun. But as soon as we walked over there,
every day.
But as soon as we walked over there, and as soon as they just heard we were talking about the NCAA, they're like, "What's the line? What do you have? What is your spread? What are your?" I'm like, "No." I'm like, "It's just a trivia game." They're like, "Oh." They're like, "What's the buy-in?" I'm like, "Guys, calm down."
JJ would be good at this, I would imagine. He would be good at it.
Yeah. There were
any useless information you need. Yeah. He's my source.
There were some standouts.
I thought I would be better.
There were some standouts, and I did have to ask one guy. I was like, "How much do you owe DraftKings?"
Did you do him yet?
We did. Nick and Mikey. Yeah. Yeah, it was a little of a challenge for him. Because he said to himself, he's like, I'm a spreads guy. He's like, I'm a lot. Like he's.
Oh yeah. They always have
spread expert.
But did you guys fill out brackets? I was gonna say ballots. So sorry, brackets.
I only did one bracket for a tasty.
Yeah.
For Ryan's pool.
Okay. Who do you want to go who do you have winning it all?
St. John's.
Okay, how about you, Bat? I know you're in like a high stakes league.
I
You and
got
Nikki.
too much money out here already on just all these betting lines with my son. So yeah,
But you didn't do just like a
I'm locked and
standard
loaded.
bracket?
No, I got one. I'm in one pool with Tom and what's the guy's name? Are we allowed to say his name anymore? Donnie?
Yes.
Yeah. All right. Tom and Donnie.
Yeah.
Yeah. Mm-hmm.
I don't know. You guys are just.
And my son weaseled his way in, but he didn't pay nothing. So
It just
I gotta
makes me
give
so
him-
nervous. Well, who do you like? Who do you have?
It's a numbers pool, like it's the
Oh,
score,
okay.
so I don't really.
So you don't even care?
No, I
Wow.
don't even care. But I would like a lot of the. I like the games to be under.
Sure.
I got a lot of unders.
Sure. There was a funny skit on TikTok.
Final score and halftime. Go ahead.
There was a funny skit on TikTok. They're like, the girl that just is going to win your office pool, and she just like has her Stanley Cup, and she's like, I'm picking all 13 seeds because it's Taylor's favorite number. And I'm like, you know what? That eats.
It's as good as anything else.
And then they're like, she's won every year. And they're like, wait, hold on. She's only picking schools in places she wants to vacation. She's got Florida going number one.
Could be worse.
It's not the worst strategy.
Mm-hmm.
So we are here for it. It's,
So true.
It's all fun and games. That's all.
Yeah.
But I do like this time of year. And there've already been some Cinderella moments.
The only problem is we don't have any TVs here.
You stream on your laptop, Grandpa?
I know. You mean, no, I don't like that.
Yeah, because you don't know your Xfinity login. You need to know your Xfinity login. But I can stream live TV on my laptop. I can.
I'm sure. I just don't have any idea what it is.
Yeah, I can help you.
What?
You should have waited. I heard the new Apple phone's coming out with like a big AI update to it.
He got the new phone.
Big AI. How many times I've asked my phone for AI?
No, but this time it's going to be good.
Yeah, but if it's an update, you just update your phone.
I don't think your phone's going to have the capability to do that.
Oh, really?
His phone is brand new.
You know what? I'm okay if my phone doesn't give me AI.
I hear you.
Yeah. All right.
I've never used it once for AI, but we'll see.
Maybe you should.
It'll get better.
Maybe you should use your phone to take pictures of things. I've done this because I'm getting up there in age too. So you use your phone to take like if the print on like a bottle or package is too small, if you take a picture of it, you can make it bigger.
Yeah, I do
Why
that
would I
all
need
the
to
time.
do that. My eyesight's perfect.
We literally
God.
tweeted a photo of you out this morning.
Put that photo up.
Be so for real right now.
Hold
Oh
on.
my God.
I mean,
Oh my God.
Seriously, here, I can do it. Oh, I got it. I got it.
Enhance.
I got
It's
it.
perfect.
Okay.
This works.
There, you can hear them
There you
laughing.
go.
You can hear them
don't have it up here in
laughing.
studio, but that's Tom right now. That's my view of Tom. Beautiful.
My
Yeah.
eyesight's perfect.
Okay. Well, I'm just saying that's
You're
a
the
hack
best.
that you can do. Hey, we got a great show for you today. A lot of good stuff. Woo! Almost to the end of the week, you guys. Hang in there. We made it to Thursday, though, at least. And then at the top of the 8 o'clock hour, we are going to bring you treats from the research team. The world's greatest financial think tank is going to present their trade ideas today to Tom and Bat. So a little bit of a down move in this market, a little reversal from yesterday, but hopefully the trades they selected will still be applicable. Then at 8:40, Victor Jones in the house. Hear me out. What are you talking about with Victor today? We had some Fed stuff, FOMC
I hope Victor
yesterday.
picks up the conversation from the three-way text message we had that Tom did not respond to. I didn't respond to either because I didn't want to poke the bear, but I hope he stays in that direction.
I cannot respond to Victor because for some reason he's banned from my text messages.
It's probably for the best.
Yeah.
Even on the new phone, I thought that's where you got a new phone.
Yeah,
so you could
He was on
communicate
fire.
to
He
Victor.
was on fire.
He doesn't. I'm going to be totally honest because he thinks Victor's on fire. I delete Victor's emails before I even read them, and his text messages.
What are you going to talk
He's
about?
out of his mind.
Well, you can't just delete him from the show. So
No, I
what are
don't
you
delete him from
talking
the show. I
about?
just delete his text.
I know. Okay, but do you know?
His
Do you
email.
have an idea of what you're going to talk about with him today?
No, it's
No. Okay, it's gonna. All right. Well, that's.
All I do is if I see like a Victor Jones and he copies Tony on it, I immediately delete it. I don't even read it. I
Sure.
seriously don't.
Sure. All right.
Can't live in denial your whole life, Saz.
9 o'clock. Hey, 9 o'clock. We got a market measures. The basics of zero DTEs with defined risk. Part of our zero DTE series. That's going to be at 9 o'clock. And then talking with Tom and Tony today. Scott and JJ, I think, are headed back today from the land of the rising
crazy.
sun. So whatever.
17-hour flight, you said, right?
I don't know, 15 hours. I don't know how far it is.
Whatever.
Yeah. It just
It's probably 14 or 15 actually.
it depends.
Yeah,
But
once you get over 10, it's long.
Tom and Bat are going to answer questions today, though. Been had some great call-ins
We have.
this week. They've been fun. Our viewers just full of personality and sass, so it's always great when they
We
call
like
in.
it. I better not say it.
Yeah, no, that's good. That's called growth. Hey, that's the run of show for today. Programming note tomorrow is hashtag Fan Friday. So we do a little segment called Fast Market. And if you have a trade idea, Tom and Bat would love to hear from you. And you could see your trade done live on air. And Tom will grumble at you and call you an idiot. It's a good time. Really is. But that's for tomorrow. The way to submit at the top of the page there. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Yeah. Hey, this is my theme music. Let's go.
Our leading story, breaking news, coming across the wire. Our
This
leading story,
just in.
top story, just in.
Today's headline.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's March the 20th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings, Mr. Bat.
For today,
Yes.
we're going to look at Lennar,
Yes.
FedEx, MU, and your beloved Nike.
I have positions on it, MU and Nike.
All right. We see what happens. Hey, let's get to my first headline of the day. The Fed holds interest rates steady, and they still see 2 rate cuts coming this year. They downgraded their collective outlook for economic growth, but gave a bump higher to their inflation projection. Powell did call out the fact that tariffs were a leading cause of some of the inflationary pressure that is happening in our economy right now. But nice move in bonds. What are we doing?
Big move in bonds. 118.10 up 26
We
ticks.
took our profits yesterday.
So
Okay.
No bond position, but we've been leaning long the whole time, so we've been on the right side of the bond move.
Anything that you are
you've
expecting?
been buying dips even in there. You've been trading it well.
What?
Anything else that you were expecting today in terms of reversion or moves after the move?
No, I mean, they were up all night. I'm not sure why they sold off like 30, 40 handles this
We
morning.
did. That's we revisited. As my emailer had told me, we revisited the scene of the crime before the number came out.
That's
We
right.
went basically down there as some of our research has suggested.
Yep, but I was weird. They just sold them off like at about 5:30 this morning.
So what does research say that is going to happen to this? Are they going to
I
turn
mean-
around, or they're going to, you don't know?
No clue. I mean, I think that
Then what are you good for?
not much. What are you good for anyway? I don't know. There could be a lot of debate on that.
What is it good for? Huh. Absolutely nothing. Say it again. Yeah.
Whoa!
I just think they're going to myrtleize little vol today. I mean, it's up this morning pre-market, but we'll see.
It is up 39 cents, back over $20. 2025 is the high, 20.05 right now.
Bank of England is holding interest rates, and they're warning that the global trade uncertainty has intensified. I saw it coming across the wire, so good job out of that. Hey, foreign holdings of U.S. Treasuries held steady in January from the previous month, rising from levels a year earlier. Holdings of U.S. Treasuries tallied $8.56 trillion in January. Do you expect this number to increase or decrease as we keep going? So these are foreign holdings of U.S. Treasuries.
Yeah, I mean, we don't really pay much attention to that number, to be fair.
But you trade in bonds like that has some
I
sort of. I
understand,
know it's
but
not like a
I
direct.
don't trade in bonds based on foreign holdings.
Well, yeah, maybe you should. Maybe you should.
Yeah,
maybe you'd be
you
better
should,
about it.
Sava. Maybe you should.
I think I'm
about
pretty
that.
good. I think I'm pretty good picking bond direction.
I do want to talk about other foreign holdings, and that's currencies. Like I said, Bank of England kept their rate steady. I'm not sure what the pound is doing or the euro.
The dollar's a
yen.
little tiny bit stronger, a little tiny bounce this morning.
The currency's a little weaker. The rest of the currencies, yes.
A little bit. The yen's up, the euro's down, and the euro's the big down move. Canadian dollar's down a little bit. British pound's like unchanged.
Are you adjusting anything?
I rolled down some yen calls. I rolled down some euro calls this morning.
Okay.
That's about it. I'm
Okay.
pretty flat the euro right here. We're a little bit long the Canadian dollar. We could probably roll. The problem in currencies, to be fair, they just don't trade.
Okay.
So, like, I'm looking at the Canadian dollar rate. Well,
I'm sure our FX team begs to differ, but whatever.
no. The funny thing is, our FX team is.
I was just making a joke.
Oh, but they don't support. Our FX team is spot markets.
I know. It was, but I needed something to fit the joke, and it was.
Oh, there you go. I just wrote down some calls in the Canadian dollar.
Hey.
You got low D over there. Like
A loony for a loony.
that's for sure.
Okay, I turned it up.
Hey, U.S. oil rises on U.S. fuel demand, and the Fed rate decision caps gains. Oil prices did edge up higher yesterday after U.S. government data showed a draw in fuel inventories. Brent crude settled up around 22 cents. What are you doing in oil?
Now, when you say oil, since we do trade light sweet crude, which is /CL, that's
Yes.
27 cents, but we also have BZ, which is Brent crude. And Brent crude traded almost 7,000 contracts. /CL traded 50,000 contracts in comparison.
I would not trade Brent. I would not get our customers into that. I mean, we just put it up there for a couple of hedgers and people like that like it. But
markets are tight, penny wide.
Hey, I will tell you this. Miss Linda Sweeney herself walked her fine ass over to our side of the office and was like, look, hey, just to let people know that we have it. So I would not go against.
Thank you for
I would
protecting
not
me.
go against Linda's wishes. I was like, Linda, what are you doing on our side of the office?
Now you reminded me of
I've
Vivian.
never seen Linda step on this.
You had already
Oh, yeah,
left.
she did.
You'd already left.
That's how important it was to
Yeah.
Linda walked.
I'm not lying.
I'm post on the company. Okay?
I'm not lying.
Put it on the post.
I'm not lying. She did. She came over yesterday.
Yep. She corralled me in the coffee room and in here 2 times to talk about Brent crude. See that?
She grunted at me yesterday.
Well, you remind me of Vivian back in probably like 3rd or 4th grade. Mitchell and Kavai was kicking my ass just about every day, and Vivian protected me.
Ah, there
Vivian
you go.
beat him up for me.
There you go.
So
What are you saying? Linda's going to protect you?
no, Vanetta's going to protect me from you.
Yeah,
You were talking down to me. Don't get our customers in that. Blah blah blah. This and that. And she said, "Well, Linda just talked about it, so she was protecting me. So thank you."
Yeah.
She walked by me in the hall. She goes,
Tom, are you doing anything in oil? We'll throw natural gas in there too. Anything? Nothing?
natural gas, yes. Oil, no.
Okay.
Nat gas has been on a little bit of a tear, 4.27. I know it's at the middle of its most recent range over the last 2 weeks, but I need it back in the 3 handle just because of my pool. I don't have a position.
I'm looking to put on commodity option positions. I need one. What? I need something to do.
Oil IV rank is 28. It's
Nah.
expanding, but
Do something in Brent. Hey, Brent.
I need some commodity. What's the good one? I need to put some positions on. I'm light in commodity options now for the
Good
first time
commodity?
this year.
Like corn,
you've been
wheat,
trading bonds. It's 27, but you don't have the same
Yeah.
direct
Silver?
bias as you do in oil.
silver.
Silver might be maybe copper.
Gold is 48 IV rank. Silver's 24 IV rank. So you might want to stick in
I like
gold.
the higher.
Gold is up another $4. 3,045. I think Frankie Wells is about to put another wing on the.
What about copper?
Could be copper today.
Okay.
Copper.
Look at me.
Should I
I know
get
you.
Copper Pete in here to talk to you about copper?
They call me Copper Pete.
HG IV rank of 14.
No, the
but that's
14
not
is a mistake.
What's that?
The 14 is a mistake. It's locked there.
Oh, okay.
You have to go to FCX.
FCX 71. Then you're looking good.
Yeah. I'm thinking copper. Yeah, just when people ask you if that's right, because
I remember you talking about it the other day. Yeah, I forgot at the moment.
Hey, good news in the crypto space. XRP surged yesterday after Ripple CEO Brad Garlinghouse said that the SEC is no longer pursuing its appeal in the case against the payments company. You will probably remember, obviously, the fight that Coinbase was waging against the SEC, but right alongside them was Ripple fighting the valiant fight, getting tied up in just like a legal nightmare for years and years. But finally, their long legal nightmare is over. Price of XRP higher by 10% yesterday. So good job, Ripple.
And we've got Ripple right there on the Tasty Trade platform. You can trade at 2.48 right now.
Where is it?
2.48.
2.48.
248.
2.44819. Yeah.
Have you traded at all?
I have not. I mean, it languished at around 60, 70.
Well, we added new coins to the site, so check that out.
I have not traded it, so it's come up from, you said 60.
It's come up from around 60 cents. This year, it's been traded up to around $3 and down to around $1.90. It's 248, basically mid-price for this year. I'm talking about 2024.
What's the symbol? Ripple.
XRP. /USD.
Oh, look who is interested in a story that I am presenting during this news segment.
It's kind of interesting because I don't own any Ripple.
There you go. You got to get some Ripple.
Yeah, get in again, girl.
I know you used to like to drink that Ripple.
Do you know, I don't. I tried Ripple once, but I can't remember what it tastes like. What is it again?
I don't drink those things.
I don't. Yeah, I don't.
I swear to God, I think
the one that everybody likes right now is Poppy. Oh, Poppy?
No, I think it's no.
Milk.
Yeah.
It's pea.
Yeah.
All right, I don't know. I don't drink.
Oh no, not that Ripple. No, I'm talking about like.
Oh, you're
I'm talking about like
Ripple,
liquor.
like
I'm talking like malt liquor.
Oh, like when you're hanging out in the baseball diamond at 9, 10 o'clock at night drinking the Ripple. I got it.
I remember, like, I don't remember how old we were, but I had a Ripple. I just don't remember what it tasted.
You had Mad Dog 2020 or Thunderbird.
No.
You didn't.
Oh, but bless Beth's heart. She's like, it's milk protein. It's pea milk, actually. I'm like, no. I was like, Beth, sweetie, that's malt liquor.
Malt liquor's a tough one.
But maybe, Tom, are you going to do a trade in XRP?
I just bought.
Just did right now.
All right, let's go.
4949.
LFG, XRP. Hey,
LFG.
Backed stock tumbled nearly 30% yesterday after the crypto custody firms shared two major clients were not going to renew their agreements. The share price fell after Back revealed that Bank of America and Webull were not renewing their commercial agreements with the company BKKT. I don't know if you heard about this or.
I haven't heard about it. It's on its butt. It's making lows, 9.31. It might be as low as, but let's just say it's unchanged today. But it started the year closer to $31. It's $9. So.
Well, that's after like 100 for one reverse split.
Oh, is it really? I was going to say buyer beware.
What is going on in there?
It's one of the crappiest companies ever, but it's.
Oh, interesting.
But it's the guy that started the exchange, right? Like.
Started the New York Stock Exchange.
Right. Yeah.
I think it's him, his wife, or whatever.
Yeah.
It's one of the hard. So they compete with a company that we own a piece of, which is Zero Hash.
Right. Oh well, then.
We hate these people.
Oh yeah. Then.
That's why.
Patooey.
I'm a homer.
Patooey. All right. I didn't know all of that. What are you guys doing in crypto, just in general? And we will wrap that part up.
Bitcoin basically unchanged, 85,000 and change, 85,500. But that's the high end. It made its highs really 87.6 last night over the last 2 weeks or so.
Okay.
So, trying to get its wings underneath it.
What about Coinbase?
Oh, good question. I haven't looked there yet. See, you got me. Coinbase, 188 and change, down about $1.50 or so, but the market's down half a percentage point. Most stocks are a little bit lower this morning.
The EU announced antitrust charges on Google, and they ordered Apple to take steps to comply with the Digital Markets Act. In response to the EU measures, Apple's going to have to allow just like some third-party software to be able to be loaded onto the phone. But the EU is taking steps to rein in Google and Apple. They're like, well, America's not going to do it. What are you doing in Google and Apple?
Apple, we're going to be a couple deltas long this morning. The stock
Apple's down about $1.75.
Yeah, and Google.
I've got a little long Apple delta too. Go ahead.
Google this morning. We're going to be based on we're going to be a couple deltas long, both. Apple.
Google's down about the same, 75 cents or so. I have no delta in Google, but I really need it to rally.
Well, you got to find something to do for your podcast today.
Every Tuesday and Thursday, that's right. Option Trades Today, wherever you get your podcast. That's right. Got you into AFRM. Worked out pretty good last time. We'll see what happens now.
And you know who posted that to social for you?
You did.
That's right. I had to take a class.
You're so good to me sometimes.
I had to take a class and to figure that out. Hey, CoreWeave set their range for pricing their IPO. Like to hear it? Here it goes. CoreWeave, the AI startup backed by NVIDIA, is planning to ask investors to pay $47 to $55 for each of its shares when it begins making its IPO this week, looking to translate to an offering of $2.3 billion to $2.7 billion. Not too shabby.
No.
What are your thoughts?
Well, because it's funny that you just bring this up because somebody just emailed me and said, how do I participate in the IPO?
Yeah.
And I just wrote back and said, like, most online brokerage firms like Tasty, we're not part of the syndicate, the underwriting syndicate.
I was like, what?
Oh, I was like,
syndicate?
oh my God, should I hide?
I was like,
My
what?
last name?
We're not part of the underwriting syndicate. Usually these companies go to like big, investment.
Sure, J.P. Morgan, Morgan Stanley, right.
Citigroup,
Goldman,
Sachs,
right, yeah.
And that's where the IPOs are. So like if you're a big customer at those places, you probably can get some of it. But for us, we don't participate in it, and we don't share in the underwriting offering.
Gotcha.
So you have to wait till it comes out and goes live if you wanted to trade it.
Okay.
We'll have it on day 1 or day 2, depends on whenever the stock starts trading live.
Right.
We should have it on that day.
Right.
I guess options probably like a week or 2 later.
Well, this is exciting though, because this is the largest IPO that we've had in a hot minute.
Some core weave.
Yes, core weave. Hey, NVIDIA CEO says the company has not been asked to buy a stake in Intel. Jensen Huang said the company has not been approached. Other companies like Broadcom have been looking at investing in Intel, same as TSMC. But during their annual developer conference, Hong said that they had not. But let's just talk chip stocks because they are in play this week. NVIDIA, Intel, AMD, SMCI, what you got?
I don't know that they're so much.
Bueller.
NVIDIA's been pretty active since it made a low like last week.
Sure.
But I saw it traded like 119 this morning, and I also saw it trade 116 pre-market. So I saw it up $2 and down $1. Now it looks like it's unchanged.
What about like AMD, SMCI,
They're all
Intel?
the exact same thing. They all take their lead from Intel.
Yep.
From NVIDIA?
NVIDIA.
Yeah, all right.
Yep. You're correct.
Intel got hit yesterday.
Oh, no.
Down 60 cents. Yep.
Well, Tencent is joining China's AI spending race with a 2025 CapEx boost. The Chinese technology giant said that they're going to boost capital expenditure in 2025 as they strengthen AI development and infrastructure. It surged in 2024 to $10.7 billion, and they want to bring that into the low teens.
Nice.
10 cent? Nothing?
10 cent?
10 cent? 5
Can't do
cent?
anything there.
50 cent? No.
No.
We don't have a position in here.
SoftBank is going to acquire chip designer Ampere with a $6.5 billion deal. The ARM-based server chip startup is going to be sold to them for $6.5 billion. Carlyle Group and Oracle have both committed to selling their stakes in Ampere, SoftBank said. So if this means anything
What do you
to
think about
anyone,
that?
yeah.
Does not mean a damn thing to me.
Hooray!
Oh, good.
You do you, everybody. A company I've never heard of, and it sounds like a made-up company, but I guess it's a big deal. Microchip Technology. We've never talked about them, but it just seems like a generic name. Like when you are like reading a book and they're like, "Oh yes, he works for Microchip Technology," and it's just like it's the most generic name. MCHP.
I've never heard of them.
Me either.
Okay, well, their shares fell yesterday around 3.2%. After the company announced they were offering $1.35 billion in convertible stock, and I guess the street didn't like it. But I don't know if there are even options, Bat.
Nothing liquid enough.
Okay. But again, I had never heard of the. I was like, this is your logo?
You can trade MU, right? And that has earnings coming.
Yes, yeah, that's a good pivot. Yes.
Yep. Almost $10 expected move. So Tom will be doing something in there.
What are you gonna do? What are you gonna do in MU?
Well, right now in MU, let's see. We have a pretty big position. We're short April 90, 120 strangle, and so that's a little bit of a bullish position. And also in Nike.
Hold on, I'll get to that.
Oh, you know what? We don't have a Nike position on. We just have an MU. I thought I had a Nike position on.
Okay.
We just have an MU position on.
Okay. So we got something to do.
Yep.
Hey, here's something interesting, and you can weigh in as the progeny of an art teacher. A federal appeals court has ruled that art created autonomously by AI cannot be copyrighted.
Oh, what do you think?
saying that at least initial human authorship is required for a copyright. Where do you fall? What side of the fence do you fall on this argument?
Art cannot be autonomously created by AI. How are you going to prove that you autonomously created it?
I mean, obviously you have to use like some sort of prompts, right? So they could say maybe that's the human, but maybe that's not enough human input. Again, I don't know the whole details of it, but you create like some image like this, but the human didn't do anything. They just wrote a prompt, right?
I guess
And then this poster, they can't copyright that. And then they could just sell it, put it on a t-shirt, and then you and I could sell it like it doesn't, you can't copyright it.
I guess that makes sense. If it was just autonomously created, sure.
I don't know. What do you think, Bat?
Oof, I don't know. I like the idea that it can't be copyrighted.
Yeah.
I mean, I like the idea. I mean, it shouldn't be. I don't know.
I mean, but there's
can't
some
think of
sort
it.
of skill. There's some sort of skill, though, to get this level of output, though. Like, that takes some skill.
I mean, this AI answers things in 20 seconds. I mean, how much output?
In a microsecond.
Yeah, I mean, I don't know.
Yeah.
I don't know.
I just thought it was interesting. Well, Shopify, nearly 10 years after filing to go public on the New York Stock Exchange and the Toronto Stock Exchange, the Canadian e-commerce platform has announced they are moving to the NASDAQ. They're like, see you later. Gonna kick the dust off of my heels from this small 2-bit town. I'm going to the NASDAQ, taking my talents to the NASDAQ. What are your thoughts?
I mean, it's like picking between...
Nope. Okay. Nope.
It's like picking it's the lesser of two evils.
Okay.
Because to me, the New York Stock Exchange is evil and the NASDAQ is evil.
What's the There's no alternative, though.
It doesn't matter to us as retail investors.
As retail investors, it makes no difference.
Yeah.
If I was a company, I wouldn't want to be on the New York Stock Exchange either.
What are you doing in Shopify? Anything?
It's hanging out at 101. It's probably down about 50 cents or so. Caught a little bit of a bid where it flirted with.
But that won't hurt their market.
No, this be
No.
No.
Boeing shares had a nice little uptick yesterday after the CFO.
Boeing yesterday was his worst performing stock. I can't believe you mentioned this. Go ahead.
What happened? I'm so sorry.
It was his worst performing stock just because of the magnitude of the move in Boeing.
Oh, okay, yeah, not even my fault. Those shares jumped after the CFO gave an upbeat outlook and says the company's cash burn is easing. He brushed off immediate concerns about tariffs, but said any impact depends on how long the uncertainty lasts.
Brilliant statement.
Okay, look. Both of you are coming at me like I work for Boeing. I am just a messenger. I am just an adorable vessel.
Any concerns depend on how long the uncertainty lasts.
Well, Boeing is, to be fair, Boeing is America's largest exporter, right? So they have some sort of position of influence, and if anything's going to hit them, it's going to hit them, pretty hard because they're the largest. Whatever. What are you doing in Boeing?
Yeah, what are you doing in Boeing? Ivy rank of 40 is pretty good. Sound enough. Boeing.
We have a strangle on. Let's get this Boeing going.
Down small. April 23rd for owner.
We were long it, and then we ended up being short it yesterday because it was up like $10 or $12.
In a situation maybe we should be concerned about, I don't even know. The Amtrak CEO is stepping down because he's being threatened by Doge and Elon Musk. Poor Amtrak. Like, what did this little train man do to you? Poor Amtrak. Well, they had a funny tweet last week. They were like, of course, we allow bags for free. And people were like, no one wants to take you, Amtrak. You take 5 to 8 business days. But also, I don't want to see this man lose his job. I'm just reporting this. So Amtrak CEO is stepping down. So should we privatize Amtrak?
I don't think so, but who knows?
It's a thing. It's not like that. You can have an opinion on that. Like, people have talked about this previous administrations ago. Like, it's always been kind of a.
I mean, personally, I wouldn't want to privatize the rail system. That would be like privatizing. I mean,
the airlines. Like, no,
but it's difficult because I feel like rails are different. But who knows?
But here's the thing: like, how can you not you go to Europe one time and then you come back to America and you get so frustrated because of just the robust, rail system. I've never been to Asia, but again, still just how awesome it is. High speed, right? High speed,
real cool.
Clean, rail systems. And we don't have that here in America. That sucks.
I mean, we should have a high-speed bullet train because the technology's been around a long time.
Yeah.
Yeah. Agreed.
Yeah.
I don't know.
It look cool. I don't know if I would. I don't know. I'm not
You'd
sure.
be fine.
No. I'm just not sure. Would you rather take that or fly?
Well, if it's a high-speed bullet.
If it's a small trip, like I'm going to Indiana, I'd rather take a high-speed train than fly. I think you get there faster.
Let's say you
got there an hour earlier, and
you're right.
blah, that kind of thing.
Yeah.
I don't think I want to take a high-speed train to California.
I mean, on the East Coast, obviously, it works a lot better because the cities are closer. Go to Boston to Philly or whatever.
Although I had a retired neighbor of mine tell me a story about a week or so ago where they like to take the train from, let's say, Florida all the way to California.
I know. My parents looked at it. I mean, because they're retired. Yeah, it's expensive, though.
Yeah, not that it's cheap.
It's not cheap.
Country. I don't think it would be fun either. I think two would enter, one man would
go
come
through
out.
the Rocky Mountains on a train.
Yes, that's what they were
it's
saying.
just beautiful. And there's actually Canadian rail.
And you do it in summertime.
Right? Yeah, it's beautiful.
Go through the Alps in Switzerland is beautiful. To go through America,
I gotta fly over there to take a train. Come on.
Here's Gary, Indiana. Okay. Hey, I gotta keep it moving here.
Always take it up a notch. You gotta make
this is hilarious to me. So China, notorious for stealing the technology and scientific advancements of other nations, is now concerned. So they were going to build a BYD factory. This is their innovative electric car. So they were going to build one of those factories in Mexico, but now they're like, no, because they say they do not trust America to not steal secrets from their Mexican factory.
You're right.
How the turntables.
They're right. I mean,
I was like, that's pretty hilarious.
It's not just China and America.
We have to make counterfeit CDs first before we do anything like that.
Everybody steals everybody else's tech.
But to be fair, I told you about that advancement where BYD is like, look, we can charge your car in 5 to 8 minutes. That's amazing.
Yeah, anybody can say that though. Let's see it. That's
okay.
That's no problem. Hey, my Taiwanese source Ryan says, Tom, corn. You were looking for commodities.
I already have it on.
GFY, Brian.
GFY, Ryan. I'll write that right now. GFY.
I already have corn on. I have on currently.
He wants you to do the 440, 490.
I have the 455, 470.
455, 470. Oh, you're a little closer on the. Yeah, after this rally. Gotcha.
Yep.
Gotcha.
You can't trade BYD, you PYT, but you can trade Tesla. What are you doing in Tesla?
Tesla, we have pretty much no.
Tesla good IV rank of 67 caught itself a bid yesterday at down around $2 this morning. 234, just under.
We are dead smack in the middle. 215, 265.
You're so good, Johnny.
Nice. This is hilarious. The director Carl Eric Wrench signed a Netflix deal worth more than $55 million. His personal deal was, a large sum of that, but he blew $11 million. He stole it from Netflix and he spent it on Dogecoin and Rolls Royces. I mean, if I saw this guy, I would not give him $50 million, but that's just me. But it's a crazy story that is emerging.
It's theft.
Well, it is theft, yeah. No, it's
not
theft.
a crazy
he
story.
stole $11 million
Thieves have been around
from
forever.
Netflix to finance lavish purchases and personal investments instead of completing a promised televised series. He going to jail.
Should go to jail.
Yeah, the FBI is looking into this. He's being indicted.
Yeah.
So
he should start writing letters to Trump right now asking for a pardon.
what are you doing in Netflix? Because Netflix has been hot.
He's living in your head for free.
Leaving this alone. Netflix has been hot this week. What are you doing in Netflix?
Netflix.
Any Netflix and chill for you, Sosnoff? Is that something you
Netflix
do in the
got me this
Sosnoff
week.
household?
I know.
They got me.
They got you.
Little bastards. They got me.
It's selling off a little bit, down around $5 or $6 this morning.
They got me back to back.
Good Ivy Rankin there is 77 because there's earnings looming April 17th. South.
They got me the last 2 days. They got me on the up move, then they got me on the down move. They double whammied
They
me.
fooled me, Jerry.
They fooled me, Jerry.
Nike is expected to post its steepest revenue decline in 5 years as they report their quarterly results after the bell on Thursday.
That makes me so bullish I can't see straight.
I was gonna ask you. I was like, you love headlines like this. I was gonna just say, let's go.
Bullish. I don't have any position on Nike. I will be selling puts in there today.
So your hands bleed?
I can't even imagine a better headline to sell puts on than Nike to post worst revenue fall in 5 years.
I agree with you there. It's so funny.
Oh my God. Have you ever, I've never seen that prior to this.
No.
Look at his face.
Oh my God. I wasn't sure what to do in Nike, but now I know.
Sealed the deal?
I just sealed the deal.
Do you want me to email you the article?
No.
and a stock that's kind of on its butt. I know it got down to around 70. It's 72 and change.
Oh, it's
right
on
now.
its butt.
Just for you number nerds, Nike is expected to post a revenue decline of 11.5% to $11 billion, according to data compiled.
$6 expected move. You go $6 out of the money, takes you to the 66 puts. Where do you think they are? 66 cents.
You just told me.
Bing, bang, boom.
Too many things there. 66 puts or 66 cents.
Oh,
666.
666, the devil. Those
Don't do it.
Oh, you can only win, South. You'll be fine.
Ikey, schmikey. We're selling putties here.
Oh, no.
Yeah, putty.
Here, putty.
Look out, kids.
Here, putty.
So wait, if this works, will you buy me a pair of Nikes? They have a pair that are like the colors of Dunkin' Donuts, and I really want them. So if your trade makes money, will you buy me a pair of Nikes? Because I showed you the greatest headline you've ever seen.
I don't think he will.
And if my trade doesn't make money, will you give me the money back?
No?
Then no.
Oh, come on. Come on.
Come on.
Come on. Hey, this is a fun debate. So, as you know, is tradition. When you win the Masters, the next year you get to have a champion dinner with a menu of your choosing. Yes,
Yeah,
you're
sure.
familiar with this, right? So the menu got posted yesterday for Scotty Scheffler's, because he won last year, for Scotty Scheffler's champion dinner. Would you like to hear it?
Yes.
Sure.
So the main course, actually we start with the appetizers here on the right. The appetizers, cheeseburger sliders,
Okay.
served Scotty style. I'm not sure what that means. If
A
they're going to get
firecracker
thrown into the back of a police cruiser, I don't know. Then firecracker shrimp
All right.
with Thai chili and sriracha mayo.
Okay.
Then Papa Scheffler's meatball and ravioli bites with the pecorino cheese.
You should say pecker.
Pecorino. I was just trying to say pecorino. And a tomato basil sauce.
Okay, that's all right.
First course, Texas style chili. So I think that means no beans.
Okay, I'm good so far.
With cheese, jalapenos, corn chips. And then the main course, wood-fired cowboy ribeye
Good with that.
or blackened redfish.
Save yourself for the redfish, South. Enough. I'll be catching that on Tuesday
Not a big redfish.
in the Gulf of America.
Well, it says or, so you would get the ribeye. I would get the
Family
redfish.
style macaroni.
Mac and cheese, jalapeno creamed corn, soy glazed Brussels sprouts, and chipotle lime roasted sweet potatoes.
Yeah, I like this menu.
And the dessert,
It's a menu.
people are saying it's
It's a
the
menu.
most underrated dessert selection, but he is elite for choosing it. The chocolate chip skillet cookie.
Yeah, who doesn't like that? Come
Why
on.
are they saying this may be the best of all time? I mean,
Well, it's just from Barstool. They just like it. But someone in the Twitter comment said,
I like this menu.
well, listen, though.
Menu.
In 2022, though, when Hideki Matsuyama was champion, his dinner was appetizers of sushi, sashimi, and nigiri with yakitori chicken skewers, miso glazed black cod,
Miso.
and Miyazaki wagyu with a Japanese strawberry shortcake.
That sounds good too.
So Scotty Scheffler asked for a pimento cheeseburger. So I just think it's
Actually-
funny because someone put the menu in the comments, and I was like, oh, which one would you rather have?
Oof. I mean, I kind of like the Hideki Matsuyama's.
Right? Yeah, that's like elevated. It's like sashimi,
Yeah, but
nigiri.
This is a good one for me.
Yeah.
I like a little wood. I like cowboy ribeye if it's done right.
Okay. All right.
Opposed to a cowgirl ribeye?
Anyway.
Cowboy ribeye is kind of like
Bacon. bigger cut.
It's kind of like thinner, you know?
I like a thin steak. You like a thicker steak.
Oh, I like thick.
You like what?
I like thicker.
Yeah, so
Thin
I said
steak.
I like a thinner steak. You like get off my street corner.
Boys.
All right. Hey, here's my viral video of the day. I love when people just take audio and then they use it to fit their videos. The most precious little girl and her 3 older brothers, which are just dogs. What do they like to do for fun? Watch this.
What do you guys do for fun around here? I don't know. Sometimes we throw shit at Kevin. Who's Kevin?
Kevin!
And then the dog takes the...
So what do you guys do for fun around here? I don't know. Sometimes we throw shit at Kevin. Who's Kevin?
Kevin!
Babies stop crying when you do that to them, too.
They
When you throw the cheese on their head.
I don't get offended by this. I guess some people in the comments...
The little guy's old enough for that. So if he's like having a tantrum or going a little bit crazy, something like
cheese
that.
on him?
Yeah, throw like an American cheese on.
I'll tell
Not
my
in front of the
daughter.
mom.
I'll tell my
Not in front of the
daughter.
mom. In front of the dad, you probably be able to get away with it. He's from Wisconsin. They like the cheese thing.
Yeah.
I don't think my daughter's going to go for that.
Don't do it in front of her. Just when you guys watch him, just throw a piece of cheese on there, stick it on his head. See how
Too funny.
What are you doing? Throwing a piece of cheese on his head. That's what they told me to do.
You like
Let
to
the
throw-
dogs eat it off.
Like to throw stuff at Kevin. But it's so gentle, the German Shepherd, taking the cheese off of the...
Well, they're going to, yeah, of course the dog's going to be gentle.
I know. I just think it's... I just thought it was a funny video. That's all. Hey, that's my time for today. What's coming up next?
Dogs love slices of American cheese.
Oh, that's how you give them their medicine. Dogs love American cheese.
American cheese, they'll woof that.
Did you ever get a piece of American cheese thrown on your car?
No.
You will soon. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What we got coming up next?
Confirm it send.
That's right. We're back in 90 seconds with Tasty Live. Thanks for
Why
playing.
would I have a piece
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live and Confirm and Send. We'll do this real quickly. Even the S&Ps are down 25 handles. Decent side range last night of around 70 handles on the even the S&Ps. Let's just call them mid-range for the day. Kind of closer to the lower end of the range. NASDAQ up down 116. Russell down 15. All of them are down. Russell the weakest of the group. And the Dow down 162. As you would think, volatility is up by 40 cents to $20.05. Bonds 118.17, up a full point and change. Sosnoff, Bitcoin hanging in at 85 and change. Everything else on a percentage basis beside nat gas, which is down 6.5 cents or so, relatively status quo. Most of the stocks that we follow are down, obviously, with the mini S&P down 23.
All right, let's do it. To confirm and send.
EDD down 10 should be good for you. I mean, not good.
No, they rallied it back. Only down 4.
Oh, that's going to be even better for you. Yes, 121. I didn't look at it.
Going to be a home run for Daddy.
Yep, for Daddy. Don't ever do that again. Don't ever do that. Don't ever do that, please.
Omaha. Right.
That's so sad. That is so sad. You feel good about yourself right now? You can't possibly feel good about yourself.
Big day today.
I feel really good about myself because if I close these options at 70 cents, they're going to open at like 5 cents or nickel, or 3 cents. Who knows?
It'll be good.
7:54. Let's do it.
Let's do it.
Emails that came into us from viewers all over the world in regards to trading optimization. When getting assigned a put that was part of a spread, is it more advantageous to exercise the long leg of the spread, thereby closing the position and taking a loss, or is it better to sell the stock that was assigned to you and then open a new put again to reestablish the original position?
I know Liz and Jenny like to do the wheel strategy where if they're bullish on something, they sell a put, and if the put goes in the money, they kind of leave it. They take the stock, they sell a call. I prefer never to get into that situation. It just uses
the put as part of a vertical spread.
Gonna get there. Even as a vertical spread, if I've got one strike in the money, one strike out of the money, I'm gonna roll that because it's probably trading at around half the width of the strikes, which puts me right at, basically unchanged to a small loser. I'm going to keep the duration going on and roll it. Now, if the spread is sitting there and why take the stock and sell it? That's not the reason why you did this. Why use all that buying power? I'm looking to close it. The whole thing.
Yeah, this is, it's funny. We've been getting, as you get close to expiration here, some people that don't roll forward and stuff like that, we've been getting a lot of emails about assignments and stuff. Mm-hmm. And just remember one thing, when you get assigned, like your position, if it's before expiration day is something different, but anytime before expiration, your risk doesn't really change. It's just the amount of capital you have to put up.
Which is a big deal. Usually,
I understand it is a big deal, but your risk doesn't change. So don't get freaked out risk-wise. It's just capital. So you just have to get out of the trade. So when you're assigned to put as part of the trade, if it's very deep in the money, just exercise the long leg if there's only a couple days to go.
Yep.
If it's still got some premium left, then we're better off closing the position, and you could do it as a single trade.
Of course.
And that's what I would do.
Yep.
And then you can reestablish if you want to by selling it out of the money put, just like they said. Let's go next slide. What's the difference between a stop limit order and a stop order?
Well, a stop limit order will only fill at that price. A stop order, when it trades that price, it becomes a market order. Now, you want to ask which one I prefer. I don't use either one.
But you would use a stop limit if you did.
Yes, because I'm going to be trading liquid products. I'm assuming that I'm going to be filled at that. Now, a lot of people use stop orders and they don't like them because you get filled at crazy prices.
So a stop order is a stop just means that you put an order in that gets triggered when the underlying trades at a certain price, and so that's the trigger price.
Yep.
Limit just means the worst fill you can get is that price, but you can still miss the trade then. And a stop order means it becomes a market order, and you can't miss the trade, but you're going to be filled somewhere.
Yep.
The cool thing about Tasty is on our platform, you can set a stop limit. Let's say stock's trading for $100. You can set a stop limit you can set a stop at $100. You can set a limit at $99.75.
Yep.
So you don't have to worry about getting filled. You get filled a little bit worse.
Exactly. I'd rather, a couple pennies at this point.
Couple pennies.
Right. It's good to move on, in my opinion.
Let's go next slide. How does government debt affect the market? Does it affect both stocks and bonds? There's so much talk about Doge and reducing debt, but I've never understood the relationship to the markets.
Good, because nobody does. And the more you try to figure it out, the less you're going to understand. And the more I know knowledge is power, and I firmly believe that, but not with something obscure like this. There's no rhyme or reason. What you don't know, you don't know. What you do know, you still don't know. Listen, you've been trading it, you've been watching it.
If you were worried about debt affecting the market, then you would have been worried for about a decade now. And, obviously
more, sure. Yeah.
Obviously debt hit record highs as the market hit record highs.
Yep.
So it would be almost impossible.
Go figure.
It'd be almost impossible to try to design a portfolio around government debt.
Yep.
And same thing for stocks and bonds. And with respect to Doge and reducing debt, we have no idea about what that actually means with respect to its relationship in the markets. And anybody that tells you they do, really, they don't.
They don't.
This is everything. We believe in efficient markets, efficient market theory. Efficient market theory essentially says that all the information is out there, everybody knows it.
That's correct.
And therefore it's already priced in. So we don't worry about this stuff. It's good talking points.
It's great talking points.
We didn't have government debt. I mean, what would they do on CNBC? What would they do on Bloomberg? What would Vecchio and Elia do? We have to have this kind of discussion. Let's go next slide. I've been trading a small account for a while now, and I often hear you give the advice to stay small. What does that mean in a Tasty Bite account? I already only put on one contract per leg, and I stay around $30 to $100 in the underlying range. Are there other things to consider to stay small? And if so, what are they?
No, I think you're there. I mean, unfortunately, this business doesn't reward larger capital accounts. It just allows you to do more things that have a higher probability of success, which inadvertently makes you, easier to trade because you have a higher probability of success. Not easier to make money, easier to trade. I think you're where you're supposed to be. If you're looking at futures or anything like that, you got to go to the micros, not the minis.
This is, what Tony said is right. So I mean, sometimes one contract, like one contract in the SPX is a lot. One contract in the SPY is a lot smaller. But it's still a $600 stock, so you got $6,000 stock and then a $600 stock. You could go to a $60 stock. I'm just saying that there is a lot of things to consider: liquidity, the size of the underlying, both notional and everything else, and then the amount of money that you're putting at risk per trade. I think you have the general idea, and you have the consensus talking points. But just be careful that, the underlyings also represent and correspond to the concept of staying small when you're first starting out. But you have the general idea.
Mm-hmm.
Let's go next slide. Oh, my God, missed this one. What is efficient market theory? You've talked about believing it, but I don't know that I've ever heard you explain what exactly it is.
Yeah, you just talked about it a moment ago, too, and summed it up pretty good. And we've talked about it all the time. I know we just throw it in there from time to time. But basically saying that if you have tight liquid markets, everything that's known is already in the market. Whether you think it should be higher, lower, unchanged, higher vol, lower vol, doesn't really matter. It's all there already because there's nothing you can do about it anyway. That's the price it is. That's efficient market theory. Now, if you look at something like housing, that doesn't have a disseminated bid ask, that doesn't have tight markets, we would say that's not an example of efficient market theory, or not the best example of efficient market theory. SPY, the best example. Tight liquid market.
So to have a little fun with this, I will type this into a beautiful.
You gonna have AI do it?
I will do that. And efficient market theory, okay, is the idea that the market price is correct. Investors are trying to get to be first to get the information that will affect security prices, but essentially, efficient market theory essentially states that.
Oh my God, you butchered it. Just listen to what I said.
That asset prices reflect all the available information. We have long argued since the days we were on the trading floor, since the days that we built Tasty or Thinkorswim or whatever it is, we have always argued for efficient market theory. It's kind of something that we've lived by, and it's differentiated us from everybody else in this industry. While everybody else is trying to figure out why something is going to do, why some underlying is going to do something, or why the broad market's going to do something, we have steadfastly believed that we're focused on optimizing the mechanics around whatever it is that we want to do, but not to pick direction based on something that we're trying to figure out. Just really picking direction based on just a gut feel. Because sometimes the market's always emotional, and the market can get too emotional in one direction or another. It can get oversold because it's too emotional in a negative way. It can get overbought because it's too emotional in a positive way. But those are all
that's
subjective.
Opportunity, and then at that opportunity, we look for strategy.
Those are all subjective. Those are all open-ended. There's nothing fixed about that. And efficient market just says that all things equal, everything's going to be priced right, and that's what we believe. Let's go next slide.
Rump.
So yesterday you mentioned when selling Thinkorswim, you preferred an all-stock deal since the stock price was lower. Correct. Whereas TD Ameritrade wanted to pay cash. We told a little story about this with Ricketts. It was 2 days ago. So my question is, it's a good question. Why would a business prefer to get stock in an acquiring company? What if the acquiring company does not do well in the near future after the acquisition, or even goes out of business? I mean, 100% stock deal has huge risk, whereas cash is risk-free.
Yeah, I mean, I think you kind of hit it on the head. But if you feel that the acquiring company and your company are going to make it a much better company in its totality, then the stock. And if the market for us as contrarians was on or near its lows, we'd say, you know what, we're selling the business for a good price, and you're getting the company stock at a low. Maybe you get a win-win.
When we sold Thinkorswim to TD Ameritrade, it was 2009, and the market had crashed in earlier 2009. This was about 3 or 4 months after the market bottomed. And I felt, and so did Scott at the time, that the market was grossly oversold. Remember, they killed financial stocks.
I mean, killed them.
And also we felt that TD Ameritrade stock at the time, which had gone from been cut in half, was way too cheap. And so we were like, listen, we'll take the risk here. You know, this is a way better company than we felt it was a way better company than the market had given it credit for, ourselves included. So there's certain times, especially early 2009, where you just look at the market and you go, you know what? I'd rather be long stock here for the next 10 years than what good is cash going to do me?
Yeah, right.
And we're, also you got to realize also, we're risk takers. This is not the same for every person. There's a lot of people out there that would not have taken stock.
Sure. Yeah.
Because they're like, I want the cash. It's risk-free. Exactly. But for us, we didn't even hesitate. We wanted stock. We wanted more stock than we even got. So, So listen, I know people thought we were crazy then, but it turned out to be the right play.
People think we're crazy right now because we're going to take a quick 90-second break and come back. We got more Tasty Live right after this with trades from the research team. We're back in 90 seconds. Tasty Live.
world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live. That's right, with the trades on the research team. Who is our first researcher? Beep, beep, beep. Beep, beep. My man.
Beautiful hand movement.
How are you, my friend? It's so good to see you.
I'm doing good. How are you guys?
Good.
That's your shark.
Beep, beep, beep.
Yeah.
Come on, you didn't do that to the kids when you were in the pool? That was the greatest thing you could do.
That's the fin, yeah.
Yeah, you go underneath the water.
Yeah, I got it the first time. Okay?
You only stick that out.
You can't swim, so you can't do it.
No, I was a really good swimmer.
Really good swimmer, yeah, when you were 9. Got it. Mm-hmm.
I was a junior lifeguard.
Your mother said you were a junior lifeguard, yes. What do you got for us today, my friend Shark?
ABGO, broad color.
Jaws.
Well, it's not called lifeguard. It was a junior lifesaver? What was that?
Lifesaver?
No, I can't remember what it's called.
Yeah, you were a junior lifesaver, like one of those little lifesavers, yeah.
No, he's trying to make it sound more pompous.
Yeah. Mm-hmm. Sure,
From
yeah.
guard to saver.
Yeah, Saz, you were a lifesaver. Said no one ever. Go ahead, what do you got for us here?
Junior something.
Yeah, it's junior pain and junior PETA is what you were. Now you're a full-grown PETA.
Yeah, the country club, we used to get like little rewards.
At the reservoir that you owned, when you would give the water to the country club, they gave you a membership because you own the water. Go ahead, yeah. AVGO.
AVGO.
Good to be king.
Yeah. It's
I've
down
46.
Good
I
to
didn't
be
realize
king,
that.
yes. You know, on Caddy Day, we weren't allowed to use the pool.
On Caddy Day, you were allowed to?
We were not.
You were not.
That's what really bothered me about Caddy
So on Monday, you.
No, that's what bothered me about Caddyshack, because those caddies could use the pool.
You were jealous. It didn't bother you.
Very jealous.
Jealous. Got it.
Yeah.
Got it. Yeah.
Wow, caddy and lifeguard.
Oh, what didn't he do?
You've seen Caddyshack, right?
Yeah, of course. Yeah.
Okay.
You were not a lifeguard. Be honest.
I didn't say I was lifeguard. I said I took the course. It wasn't called lifeguard. It was called like junior something, junior Red Cross thing, something, or
Junior Red Cross thing.
I don't remember.
No,
Jaws, help me here. What do you got? AVGO.
Yeah, AVGO. It's down about $2.50, I think, right now. So I'm going off the 193 number. So 150.
What you doing in AVGO?
Iron Condor, a little bit skewed because it's down.
It's my worst performing stock of the year, but we did make back about half the money.
$55 downside, $10 up.
Every time I come up here, it's suddenly the worst performing stock of the year.
No. AVGO seriously is the worst performing stock of the year for me until we caught the earnings, last earnings.
Okay.
Now it's only a poor performing stock. What do you want to do in here?
155, 170 on the put side, and 220, 230 on the call side.
155 in what month are you in?
Oh,
May?
in May. Yeah.
Oh.
Gotta be in May. So
That's closest.
All right. It's
Closest to 45 days.
155 what?
155, 170 on the puts, and 220, 230.
All right. Hey,
Slightly skewed to be a little bullish, like 2 or 3 delta bullish.
Hold on.
Oh, you got to go slow when you're going to do 4 legs
Not
with him.
220. You're way off.
AVGO is 195. What stock? 193. What stock are you in, Sadnov?
I'm in AVGO. You're selling a $2 put and a $5 call, and you think it's bearish and you think it's bullish?
What? No, $15 wide put and
May, Sadnov, May. It's a $5 call.
$15 wide put and $10 wide call.
Oh, you're doing the spreads.
Yeah.
Oh.
That's an old man's trick to show that he made a mistake from the very beginning.
Yeah.
Oh, you're doing a spread. Got it. Right. Got it. Oh, a skewed short iron condor. Oh, yeah. Okay. Those strikes are good. Got it. Yeah. Putts. Spread. Got it. $15 by $10 spread.
I was doing the strangle. Okay.
Yeah, he was doing a
Okay,
strangle.
yeah.
He a big dog.
You got to learn your audience, okay? You look at the guy and say the buying power.
Oh, and a
for-
strangle's not a spread anymore, Sadnov?
I'm just saying, I'm doing the strangle. Okay? I can't
yeah,
listen to
that's-
So you were just doing a different strategy altogether than what was presented.
I wasn't doing the Iron Condor.
Got it.
Got it.
I don't know if he entered it or not, but we'll find out in the morning when there's a ding at the bottom of the hour, okay?
Ding, ding, ding,
Sounds
ding, 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 ding.
That was a great save, though.
Wow. We have to move on. We're going to go to our next researcher. My man. You gotta bring in like a Cavassier or something. Like you gotta have like a sifter or something while you walk in. A little something to drink. Yeah, there you go. Gad, what's up, my man?
I'm good. How are you?
You are good, my friend. What do you got for us today?
I have Home Depot. Good morning.
Home Depot. Sadnov, do you know what that is? That's a store where men
Where you
go
get
to
hot
buy
dogs.
tools
You get hot
at
dogs there.
times. Go ahead.
It's where men get hot dogs.
And flowers.
Really?
Yes. We buy a lot of, what are those?
Houseplants. He buys houseplants.
Yes, orchids there.
All right, what do you got for us at Home Depot?
So if you're looking for a trade where you have to, and you have the earnings 3 days before the expirations, I think. The earnings will be May 13th. So if you're looking for the trade where you have earnings pretty much from today, you can try this one. So it's short term candle. I'm doing pretty much a small trade.
See, now the difference in here is you have to use Iron Condor and spreads on both sides because these markets are, how do we say, crapola.
They're wide. I would give you that.
All right,
yes.
so you're doing May?
Yeah, May 16th.
What strikes?
325.
The ones that are on the screen.
I can't see it.
385, 390.
385, 390.
325, 320. Another thing, if you notice, Gad did here was he reduced the width of the strikes because they're not that liquid. So
exactly.
I give you some credit there too. $350 stock. Usually we like to go a little bit wider with the iron condor. I get your apprehension.
Stock's on its butt, so you're going to give a little bit of upside skew, right?
Yep.
What price you got there? 153?
153.
You can go in a little bit above that and then walk it down.
Yeah, sure. I got it. I like it. All right, enter.
Okay, good.
Yep.
Beautiful.
Good.
Who's our next researcher?
I even did your strikes.
Ty, I'm not gonna lie. I think you got the best intro music right now, but it's very anticlimactic when you come on for it because you're so very humble, keel, and humble. Yes.
I take it a compliment.
I want panic and disarray. I want you to break smash one of those glass.
Widespread panic.
Leather jacket. Yeah.
Widespread panic.
Yes. That's right. All right. What do you got for us, Kai?
All right. I have an earnings ratio spread, so I'm going to read out loud.
Keep calm.
No, I'm just...
keep calm and carry on.
Yeah.
Go ahead.
Telling Tom. So 1 day DTE expires tomorrow.
See, I like this.
Nike, extremely high IVR, and the price is...
I'm just naked selling the 66 puts.
Right, but he's presenting 71, 78.
Okay, so let me ask you a question. The 7168 is synthetically short what?
65 put.
Perfect. And I'm selling the 66 puts naked.
Yeah, you're in the same place. Now the only difference here is if you get a move like PDD made, with it down $2-3, this one has a chance to make the difference between 68 and 71 because your max profit won't be just the credit that you sell it for 20 some odd cents or whatever it is.
Can you send me an email explaining that?
I'm gonna hurt him. So if you moved up a strike, you could do it there possibly for a little bit better credit, and then you could have the same break even.
I'm still selling the 66 puts naked.
I thought you liked the buying the 1 standard deviation, sell whatever.
I do.
2 standard deviation.
I do. It's just a choice. This happens to be
It's 6 of one, half dozen of another. He's got the same trade as you.
No, the difference is that this trades for what's the credit?
23 cents.
But the max profit is $300. And
I understand that,
right?
but if the stock goes higher, you're going to make 23 cents.
Yeah.
Yes. Yeah. If you're directionally correct with the assumption.
If stock goes higher in my trade, I'm going to make 66 cents.
Correct.
Or 70 cents this morning if the stock opens lower.
And if stock goes lower like PDD and does that little $2 move,
I just like my play.
All right. Don't yell at me.
That's all. I'm just saying. It's.
You're bullish. You're more bullish.
That is correct. He would be more bullish. You'd be more omnidirectional. I love it. I love a good compromise. Who's the next researcher?
Something like a recipe. Bits and pieces.
That's right, Dr. Dad, the weird scientist himself. What's up, brother man?
Hey, guys.
Doing good?
Doing great. Yep.
Good.
So,
it's a voice. It's a voice from somewhere.
It's a voice from data from above.
I like it. All right, what do we got?
Hey, okay, so right now I'm looking at IBIT. So I got the strikes here. Yeah, a little bit of IBIT here. 4160 are my strikes. Look at a chart on this. It hasn't moved outside of these prices here in a while. So I'm picking these really far away short strikes, the 41 and 60. Stock can basically go, Bitcoin can go IBIT, which is a proxy for Bitcoin. It's the ETF for it. It can move down by a little over 20%, and it can move up by almost 30%, and you can still make money on this thing. So huge strikes on this thing, huge skew on these options. What do you think?
Well, we agree with you because we actually did an IBIT trade on Wednesday, yesterday.
Mm-hmm.
In what's your assumption, I believe, and we are short a bunch of different things in there. Oh, you know what we did yesterday? We sold an April Strangle 43.53 and bought a May strangle. So we did a double diagonal, but basically same thing. And we're hoping the stock stays inside this range. It's essentially we're short an April strangle, long a May strangle, but we want the stock to sit right in between here. And I agree with everything that you said. It's
diagonal there.
The problem with IBIT is the markets
they're tight on the screen. I don't know
tight
how
on the
it's
screen.
traded.
They trade a penny or two off bid price. They're not that great because it's only a $40 some odd stock, and it's like pulling teeth in there because it's a cheap stock. But implied volatility is high. There's some rich premium. It's just Bitcoin.
Yeah, that's right. And it's not costing that much money right now. If you look, it's about $1,200 worth of buying power.
Yeah.
So
actually, the buying power in there is expensive for strangles
relative to the
relative to the stock price.
Yeah.
So it's not as nearly as capital efficient, but neither is Bitcoin. There's no way to trade Bitcoin.
This is better. This is better than the futures, at least.
Yep.
In smaller sets.
Yep.
100%.
All right, thanks, my brother. We got one more researcher. Let's get to her. That was a hit song. Julia, you little black alley cat, you. How are you?
How's it going?
Doing good, young lady. But I am with Tom.
Good news.
Oh, I'm so
Julia will
sorry.
be sitting in for you next week.
Julia, they finally found one person who can take the place of the bat. It had to be a cat. That is correct. Julia will be filling in
It had
next
to
week.
be a cat. Got big shoes to fill. I don't know how I'm going to do it.
Oh, you're going to excel. You kidding me? I'm going to have a hard time filling your shoes when I come back.
I'm going to have a bunch of
I know.
I need jokes on note cards and confetti, maybe pyrotechnics. I don't know how I'm going to live up to expectations.
Oh, I amuse you?
No, of course.
That's just kidding. Just kidding you. What do you got for us today, Julia?
I got the most textbook trade I think that you can get. I'm looking at maybe I don't know. I guess it depends on which textbook you're looking at, but I'm looking at a SPY Iron Condor. SPY's IVR is above 30. It's down a couple bucks this morning. So I put in a 57-day trade. It's not as textbook as you'd like because it's not exactly 45 days. But when SPY's IVR is above 30, I mean that we've been seeing a lot of that these days. But generally, that's pretty rare for indices to have high IV ranks. So decided to throw in an Iron Condor. It's adjusted for the move this morning. So I went with the 515, 598 short strikes. Went $10 wide, 292 in credit for 708 in buying power. So this is more of a Tom size trade, going $10 wide.
Sosnoff, speak up.
Well, I already have a bunch of strangles in there, so I'm not going to do an Iron Condor because it just messes up all my strangles, all my
it doesn't mess up anything. It's all there embedded. But
it just
a simpleton like yourself will have a hard time looking at it after 40 years of trading. You could put everything in. You know what? I don't even want to tell you how to do that, okay?
Thank you so much.
On the trade page. You know what I mean?
But I have enough positions in there as my bottom line in SPY.
It's too complex for you. I got it. Julia, you broke his brain. I get it. Thank you so much for coming on the show. You finished strong by stumping the Sosnoff, which is something that gets done just about every day here, multiple times a day. We're going to take a quick 90-second break.
Oh, thanks, guys.
You're welcome.
Peace.
Peace. We'll take a quick 90-second break and come back with more Taste Live. The opening bell next. Peace.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live with the opening bell here in about a minute and a half. Even the S&Ps actually sold off a little bit, sad enough, since the last time I quoted them. They're down 35 or 36, trading 56.93. Got down to around 82, so they're only about 12-ish handles off of their lows. NASDAQ down 160 and change. Volatility about 10, 15 cents off its highs. Trading 2010. Up 44 cents. The weakest of the group right now is the Russell, down 20. When you go here on a percentage basis and look around, you got Ethereum down 35 cents. You've got oil basically unchanged. Silver, which you just did a gold-silver spread. You did it one by one. You're selling gold, buying silver, because that ratio has gotten up to the higher level, right?
Just under 90.
Just under 90, and all-time highs are around 100?
I don't know exactly.
Recent highs are around 100?
Yeah, I think it's been higher than that, but at some point, recent highs.
Over its life?
I would say like in the low 90s. This thing moves around though.
Yes, and that's why you trade the smaller micro futures, not even the mini futures, right? You go.
Yeah, don't trade the minis. It's too
big of a trade.
Well, it's just too
like 1,000 shares versus 100 shares, right?
Yeah.
So use the micro.
This thing moves around. On the micros, it moves around a couple $100 a day. On the minis, it moves around a couple thousand a day.
Yeah.
Just a one lot.
Yeah. The big dogs only. Sadnot's not there yet.
Big dogs only.
Maybe when he grows up. You mean S&P down 41 right at... Oh, boy, you did something wrong.
Oh, for sure.
And in Home Depot, where you said the markets could be a little bit wide, and maybe you don't want to... Oh, my God. Horrible sale. Mid-price? Oh, my God. This is just... Oh, my... Did you get picked off here? Oh, my God.
I doubt it.
Maybe it trades 159. You got filled at 158. Ugh.
158?
Yeah, the markets are wide in there. The natural bid is a $4 credit. Natural offers a $35 debit. So market's very, very wide in there. Dollar wide right now.
Nike.
Nike putties. You sold them at 72 cents.
Wow.
What is Nike doing?
Down 50 cents.
Might be down. That's what I'm saying. Yep.
Yes.
Beautiful.
So Nike and...
That's for earnings.
Those are both trades from Le Research team.
Yes, but you're trading those Nike puts for earnings, right?
Yes.
Mm-hmm. Nike S&P down 43. Close all watertight doors.
Yeah. AVGO was a stock we wanted to potentially trade some. And if I get the AVGO trade on, we'll have all three of our earnings trades.
Lennar, MU, FDX, Nike.
Gotta see what I got going on here. Don't like I'm down a little bit of money this morning. What the hell?
Well, they paid us yesterday, so they're taking
They
a little
totally
bit
paid
away.
us yesterday, but
Volatility up 50 cents. That's not going to help your positions there at all.
You know what?
Tesla down $1 and change. Costco down 4. Google down 2. Apple down 2.
It's nothing like in particular. It looks like this morning.
Let's see some of those other movers to the downside. Sosnoff, top of the list is Netflix down almost $9. Baba down $5.70. Costco down $5 now. FDX, which has earnings after the market closes today, down $3.20. Microsoft just opened, down $3.50. Netflix down $6. Baba down $5 and change. You got some NASDAQ stocks a little bit lower. On the upside, you got Adobe up 2 and change. TSM up $1 and change. That's it, Sadnov. NVIDIA up 54 cents. That's about it. Even the S&P just rallied 10 handles. They're down 32.
They did. I'm just looking to see. Anyway, we never bought back our PDD options. What's going on there, boys?
Okay.
My puts are 7. Oh, they're not as cheap as I thought.
No. Maybe that's why.
Work that sucker.
Maybe that's why.
AVGO down $3. I cannot get filled yet. I'm a strangle. I'll give up
Bitcoin
one
down 500, 200 and change. Whatever.
AVGO filled. So
333, Sadnov.
Yeah. So
Half a devil.
So I got 3 of the trades from the research team.
How come 111 is sticks, 222 is ducks on a pond? How come 333 doesn't have anything?
It's the mini devil. What do you mean?
Why doesn't 444 have anything then?
Well, that's different. But the mini devil,
got it.
You know,
got it.
It's like, yeah, the mini devils are real. Oh yeah.
Yeah.
3.
My man Patrick's on this this gold silver ratio approaching prior highs. He just told me you were correct, Pat.
PDD. Oh, partial. Take up.
I hate a partial.
I do hate a partial, but I got to tell you, it's really nice to have
when it's a partial at 5 or 6 cents, 8 cents, you don't care, right? You got filled on partial at 5 cents. It's when you're trying to do something, and at dollars, and you got.
I don't know why people aren't selling these at a nickel. 1 day to go, and $10, $14 out of the money. Yeah, PDD is going to be a winner chicken dinner.
Yeah, PDD, which looked down $10 pre-market, is basically unchanged, down 50 cents, and you are filled at a nickel.
Yeah, at a nickel. So that was a good trade. That was.
How does Daddy do it, or what did you say?
Something like that. Let's see what we got here this morning. Intel for this. What am I saying? Intel. No, it's only down. I'll take that back. Wrong stop.
Intel, my Taiwanese sources say they're handling this whole thing horribly, Sadnov. 23.90, down 22 cents. Good Ivy rank of 65.
Handling what thing horribly?
Just the whole getting taken over, selling part of their business, blah, blah, blah. A nightmare.
Has there been a time when Intel handled anything correctly?
Probably not. I don't follow it close enough, but yes. Very bad marketing. Trump wants chip marketing, TCS them. Yeah, they run it to the ground.
Anyway, what else do you see here this morning? Quick.
I see complacency, although I see it's a little bit lower here, Sadnov. I don't think we're going anywhere quickly.
I don't think so either. I'm trying to see if there's a stock here that's super ugly or
existing home sales come out at the top of the hour. I don't think that's going to do anything for us. You got nothing for earnings or nothing scheduled for Friday news-wise. I don't know.
Yep, I'm going across the board, going through all the stocks. I mean, the Chinese stocks are a little bit lower. Baba's a lot lower. But other than that,
Sadnov, I tested you. 444 on the floor was called chairs, Sadnov.
Chairs?
I don't think you stayed in the pit long enough to know.
I don't think I would have known that.
Sadnov, do you know why? No, I don't know it. I mean, people did call it chairs, but I don't. It wasn't widely. Because we closed, Sadnov. We closed at 3 o'clock. There was nothing. There was only 111 and 222. There was nothing else. 1111 were sticks, but nobody else did anything else. That's what they call sticks and mini sticks.
I mean, with all due respect, you're the only one bent out of shape over nothing 444. I didn't really care. So I don't know why you're talking to me like I care.
444 was chairs because they look like chairs. A 4.
Yeah, I understood the first time.
I don't think you did. Because you can't conceptualize that unless it slaps you in the face and it's very obvious. You don't get it right.
Oh my God.
Gonna miss me next week?
No. No, it's going to be an absolute damn pleasure with Julia here.
Okie dokie.
All right, I'm ready for a little Victor Jones.
Beautiful. I am too. Who's not ready for a little Victor Jones? We'll take a quick 90-second break and we'll come back. We got a little loving with Victor Jones coming up next. Hear me out.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
The beauty of Thinkorswim was that we were different. From the name to the front end technology
was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough with just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Now don't screw up. You're the weakest link here.
You guys introduce yourselves.
I'm Tony Batista. He's Tom Sosnoff. You didn't know that? I don't have any idea why you watched.
I'm Tony Batista. He's Tom Sosnoff.
41, you got it!
See that? We knew it. Pretty good. Baseball field.
Baseball game.
It was a wonderful evening.
It was a warm summer day, 1982.
It was around
82, 83, I don't know, sometime around there.
Yeah, 83.
83, let's say.
It was 83. I remember because I was dating somebody else at that time. 1983. Yes. It was a wonderful day.
No, we were playing. We played softball on the same team.
16-inch?
12-inch.
With gloves. Because we were hand models at the time.
Yes. I played third base, Tony played right field.
You've been dying to say that, haven't you?
We took him to use a charity case.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Thomas, that sweet music can mean only one thing. It's time for Hear Me Out, my man Victor Jones.
Oh, yeah. Tom, Tony, Tasty Nation. How you doing, my friends?
We are doing
How you
well.
doing?
How you doing, Sadnov?
I've never been better. I mean, I don't think I've ever been better.
I come on here once a week, Thomas, and sometimes we have a little bit of friendly banter back and forth. We take opposing sides. You know what I've never done that I want to do today? I want to give you your flowers, my friend. And you know what I want to do is come out and say how much I appreciate being able to come onto a network where you don't limit people.
What does he want?
You don't limit people. You don't put them in a box. You don't say, hey, you can't talk about this or you can't talk about that. You allow people to cover the issues that they feel are important. And I feel like that takes a lot of stones. You know what I mean, Thomas? It takes a lot of stones to allow people to talk about particularly tough issues in a politically polarized environment. So I want to give you your flowers.
Okay, I'll take that, but there's something that's off.
Now take your clothes off.
There's something scary about that. But yes.
Give you the flowers. Give you the hearts, the flowers, and the love.
No, man. I just want to say I
Okay.
appreciate that you never
right.
put us in a box. You never say, hey, don't talk about this topic or that topic. It's just all, you know what I mean? It takes a lot of stones to let people come on and talk, give a free range of ideas. And I appreciate that about you.
Someday, Vic, I really appreciate you saying that, and someday you will see the hypocrisy in that statement. But until then, until that happens, I'm not going to point it out to you.
Until then, you're still a simple idiot.
You're still a simpleton. But anyway, let's keep going.
But I digress.
All right, before I get to the really good stuff, the real timely, hard-hitting journalism, I want to ask you, man, we're on the flip side of, I guess they tell me there was a FOMC meeting yesterday, an FOMC meeting, a rate decision yesterday, and I can't help it because I'm a glutton for punishment. I always love to get Thomas Sosnoff's reaction because it's so funny. The market builds this big thing up and they're waiting on, tender hooks to figure out what this guy's going to say. And then they get this summary of economic projections, which is this group of people's, they're these wizards of financial markets, their projection of what growth is going to be and what inflation is going to be. And tell me, oh wise ones, what is unemployment going to be? Tell me, oh wise ones, what is the path of interest rates going to be in the future?
Quiet.
Please
They're
come
speak.
down on high.
Yeah.
They should have Tony and I in that committee because we would set them straight. Because it's so ridiculous that we should be on that committee.
They came down from their magic mountain to tell us all that we should be concerned about slowing growth and potentially increase in unemployment and inflation. Which I don't know. I guess if we were just watching the yield curve for the last month or so, we probably got an idea that the market. That's exactly.
I don't think we can figure that out. That's the problem.
Yeah, and gold at 3,000 perhaps tells us we're looking at somewhat stagflationary conditions. So I wish at some level I could get this job where I could just say, bond market, tell me what to do. Anyways, what is Thomas Sosnoff's reaction to the FOMC meeting yesterday?
Yeah, Sadnov, what's your reaction?
I mean, I got to be honest with you. I don't even know that I had a reaction. I was doing a show with Dylan Radigan at the time, and I don't even.
You were trading a little bit during it.
I mean, I had a couple positions I took off. I'd sold some bond strangles in the morning, and I closed them.
It gave you some opportunity.
I mean, it didn't hurt us at all. That's for sure. It was good. I honestly, Vic, I didn't really do anything. I mean, the reaction that the market had was kind of almost. I mean, if I could have predicted it, that's what it would have been. We were right on.
pretty meaningless discussion.
Yeah.
Yesterday, the one thing that did catch a bunch of headlines is your boy Jay Powell, and I do mean your boy. Your boy Jay Powell used the T word yesterday, transitory, that the potential inflation from tariffs.
Oh, I didn't know that was the T word. But
Yeah, and me, I didn't know that was the T word either. I don't know where you were going with that. I was like, he said today's?
I'm not allowed to say the other T word.
I don't think he did.
I'm not allowed to say the other one.
That was TIDD, I said. TIDD. Today's? I didn't say the other word, and I did not. I mean, I didn't think he said it, but yes, transitory. And X, or whatever you call it now, went crazy.
Crazy.
Yeah.
Crazy.
Are you even allowed to say the word transitory? It has,
I don't think. To me, I think Federal Reserve Chairman. If your job is to basically you have two mandates, right? It's employment to maximize employment and price stability. I think you should probably take signs of inflation seriously and stop wearing a position. Like, why is the Federal Reserve Chairman keep taking on positions? He keeps doing this. I'm going to wear inflation and I'm just going to trade through it. Like, I don't get why this guy keeps taking positions, Tom. Do you want a Federal Reserve Chairman that takes on positions?
Oh my God, you talk to me like I care about this topic. Like, I literally don't care. Like, it's like I don't listen to one thing. Like, you probably memorized the speech already. I haven't listened to one Fed chairman say one thing in 25 years. I don't care. I look at the bond prices. Whatever the bonds do, that's what he said.
I got to give Vic credit, though. He goes, just read this. He sent me something. Just read this. It was 48 pages of, small type. I'm like, I want to write back, like, you playing me now, right? Like, I mean, I'm not going to read that. I haven't read this much my entire
Read
life.
this. He wouldn't even listen to it.
Right.
Neither would I. I'm not.
Read this. So I just didn't respond. Yeah, read this.
For the record, for everybody out
But
there.
I did look. You see, it was 48 pages. I did look.
It was 41. It was Stephen Mirren, the chair of the Economic Advisor Council, put out this paper in November 2024, and it was basically sort of his point of view on renegotiating trade. I won't go there, though. Thomas, I'm curious.
Praise the Lord.
Yeah. Okay. A couple of weeks ago, the NASDAQ, they announced that they are working on 24/5 trading, 24-hour trading, Thomas. And even though we have, like, some of this exists, it's on the individual broker and it's on an individual market maker. Like, it exists in a weird way that I never thought made sense. I thought if this was going to exist, it should exist at the exchange level. And it looks like the NASDAQ is going to introduce 24/5 trading so that the retail world is going to move closer towards a world where we can bet on stocks. And who knows, maybe at some point options at all times of the day. And I never really got to have this conversation with you a few weeks ago when this dropped. You've always predicted that we would be moving towards this world. One, how do you feel that your prediction is starting to come true? And then how rapidly do you think this idea of 24/5 at the exchange level for equities changes into us trading, having more than 6.5 hours to trade options in the future?
Well, first of all, I'm glad you brought up this topic because I think this topic is bigger than you're making it out to be, at least at this point. And I'll tell you why. Because it's not just the NASDAQ. The New York Stock Exchange is going to 24 hours. The NASDAQ's going to 24 hours. The CBOE is going to 24 hours with stocks, not options yet. There's not enough there's not enough business or market making to do options yet. But the point is, the CME's been 24 hours, 24/5 now for a decade. Crypto is 24/5, 24/7. I'm sorry, crypto.
24/7. Yeah.
There's no reason that equities shouldn't be 24/5 at least, or 24/7, or completely tokenized or everything else. And what's in the process of happening right now is you're beginning to see what our kids will see in the future. Like when your kids grow up and they trade, they're going to be able to trade 24 hours a day, 7 days a week. And you're going to go, I remember when the market was only open for 6.5 hours a day, which seems ridiculous.
Yeah.
That McDonald's is open longer than the stock market.
Yeah.
And so I think what's happening is the listed financial markets are facing, this is a, they're about to enter into a transition period where they're going to face the reality of global markets, which I think is a really good thing. And I also think it is going to be the precursor for everything in finance to go to 24 hours, whether it's blockchain related, because that seems to be easier, or whether it's crypto related or digital asset related, or whether it's listed exchange related. Victor, we're going to 24-hour trading, we're going to 24-hour banking, we're going to 24-hour basically everything with respect to
7 days a week too, probably.
7 days a week, 24 hours a day. Because we have the
technology and we can do it.
That's right. Because we can.
Right.
And that makes the world more efficient. That makes everything cheaper. That makes the consumer happier. And
thanks, Trump. Sorry, Vic. I just had to just do that. I mean,
hey, don't say sorry to me, bro. I've got no issues with it.
I did thanks Joe Biden for 4 years. I had, every once in a while I got to go thanks.
The point here, Vic, is that 24-hour trading stocks is a really good thing, but not just because Victor Jones is going to wake up at, or at 11 o'clock at night is going to say, oh my God, I need to buy 100 shares of IBM. That's not what's happening. The reason it's a good thing is because Victor Jones.
I've never said that in my life.
Well, maybe you should, Victor. Maybe you should. All right.
All right. You woke up in the middle of the night and you go,
I've
know
said
what?
Palantir. I need to buy.
I got to have some Palantir.
I got to have some
Palantir. There you go.
Freeport McMoran.
Yeah, I got to have some Palantir and Freeport McMoran. I can't sleep.
I can't stand it.
Come back to bed, Victor. No, I got to buy some Palantir. Okay, that's not.
I put the heels on. No, Palantir.
Okay. So, what's important is that this is going to open the door to everything else that we want to see happen in the world of finance. And this is where we're getting our foot in the door. This opens the door. This is the crack that we've been waiting for. This goes to 24-hour banking. This goes to 24-hour loan. This goes to everything going around the clock, all being, whether it leads to, like I said, whether it leads to more peer-to-peer interactions, whether it becomes all blockchain-based, whether it becomes all tokenized, or whether it's just all done centrally cleared on listed exchanges. It doesn't matter. This is the first step. And if you miss this, like if you don't get it, if you don't understand the importance of it, or you miss it, you will be left behind.
I couldn't agree with you more. I think you and Tony have had this conversations for years, and we're getting close. And I think at the point where Larry Fink the other day advocated for the SEC to effectively get on board with moving bonds and stocks onto blockchain. I mean, this is an eventuality, I think. But I guess I'm curious, what matters more? Does it matter more that we are going to be adopting new technology like blockchain, potentially expanding hours? Or does it matter more that somehow capital markets are able to attract IPOs in early stage private companies? Which one of those two things do you think matters more to the retail participant like me? Because on one end, you have private companies that are not going public until much later stages. And then on the other end, you have all this increased technology and ability to clear in a less risky way, which removes costs and time and friction from transactions. What do you think matters more to the individual retail investor? Is it the technology advancing, but without new issues? Or do you think new issues are equally important, and what needs to happen to bring more new issues at early stage companies to the market?
Well, it's a really good question, but I think that part of the answer is that one of the reasons that it's more difficult to take your company public is not just because companies don't want to go public. It's also because you have companies now at the top of the food chain that are like, let's say $3 billion or $4 billion, trillion dollars. If you have a $3 trillion company, okay, it is very hard to generate excitement for a $2 billion company. And I know that's going to sound like almost elitist, but it's not. There used to be a big company would be like 10 billion, 20 billion, 50 billion, 100 billion was a big company. 500 billion was a massive company, right? Just 20 years ago. Now you've got these companies that are 3 trillion. So now people look at a $100 billion company as if it's a tiny company.
Yeah.
So a $2 billion company is like, what do I want with you? That's like pocket change.
Right.
And so the challenge is there's only so many of these massive companies that are going public at, 50 billion or 100 billion. There's not that many companies like that. And so what looks like less IPOs is just, it's hard to generate interest now. 20 years ago, you want to take a company public at $1 billion, it's freaking massive.
You were moving a ship.
Yeah, you were moving a ship. Now $1 billion, they laugh at you.
Tiny fishing boat.
You can't even get Goldman Sachs to pick up the phone.
Right.
So the world's changed. And that, I think, is one of the challenges. And that's one of the reasons that companies don't go public as often, because they just don't have the size. And it's also they can't attract the investment banking world or the institutional world as investors. That was kind of one of the things that led to all those kind of SPAC deals that kind of failed, because there wasn't the same level of due diligence and everything else that went into that whole era, that whole period in time. So I think it's a combination of both things that you said. I think it's a combination of, hey, the markets have shifted, and and then there's also culturally we've shifted a little bit into bigger deals. Let's put it that way.
Do you think these markets carp each other? I've never asked you this. You've always said, both of you guys have always said, you advocated a world where you could trade everything. At some point, you and TP, that was sort of what you were trying to do.
We've been on that train for 20 years. The whole idea that every person can trade everything has been our thing from day one. And now everybody's catching up with it. Like, last night, Kraken making a deal for a broker dealer. I mean, it's just like the whole world's finally figuring out what we've been saying literally for 20 years.
But this is my point. So, Chris and I were having a conversation the other day, and we can talk about the public markets and their bets on whether or not Mark Carney is going to win the future election in Canada, and sort of. So I wonder, like, in a world where you sort of we're almost there, where you can bet everything, and not only that, but you have these different tokens where you can trade effectively the excess liquidity in the marketplace as well. Do you think this has been good for equities? Like, is it a good thing that I can choose whether or not to trade Apple or take my money and go to the betting markets? Is it a good thing that I can choose whether or not to deploy capital to some diversified quote unquote ETF, or take my money over to cryptocurrency? Is this a good thing in your opinion for equity market and market structure? The competition.
Yes, 100% it's a good thing. But let's not confuse betting markets with real financial markets. Betting markets and event-based markets are still a joke size-wise.
I mean, it's 10%.
The VIG on, if you trade an event-based contract, okay, here's how crazy this is. If you do 100, look at S&Ps.
Up 3.
Up $4, NASDAQ up 20. What a rally. VIC, I'm going to show you the difference, and this is why event-based stuff sucks. I mean, when I say sucks, it's good to have and it expands, but it's
not as efficient as it should be.
But it's not about efficiency. It's why it won't. It's why it never will be. It's why it never will cannibalize the listed marketplace. And I'll explain in one easy lesson here. You buy $100,000 worth of spiders. Okay, let's just say you buy 200 shares of spiders. It's $112,000. 200 shares. The bid-ask differential is $2, all right? $2. You go bet on, who'd you say, Carney?
Yeah.
You go bet on Mark Carney winning winning the parliamentary vote in Canada. Okay? Now remember, $112,000, you have $2 wide spread. Now you take the same exact bet and you go to an event-based exchange like Kalshi or anybody else. You bet $200 on Mark Carney to win, $200. You have to put up in fees $2. So on the one hand, I just bet $112,000 on SPY, $112,000. And the other hand, I bet $200. The fees are the same. This is why event-based betting is always going to be a freaking joke, because the fees are so high as a percentage of what you're doing that nobody will ever take that serious. It's never going to be a serious investment until the fee to do that is $1. I'm sorry, is a penny.
Penny, one.
And the chances of it going from $1 to a penny?
Zero.
So this is why DraftKings, this is why FanDuel, this is why the event-based markets like PredictIt, Kalshi, and everything else, or whoever else offers it, it's always going to be just a secondary joke of a marketplace. It's going to be cool to have. It's a nice to have. Because if Tony wants to bet on the NCAAs and he wants to go to a listed marketplace, or he wants to bet on who's going to win the presidential election, yeah, okay, I'll throw down $100 or $1,000, whatever it is. But if you want to bet $100,000 that the S&Ps are going to go higher and put up, you're going to, there's nobody's going to do that. Nobody's going to say, nobody's going to put up $100,000 to bet on the election and put up $10,000 in fees.
Yeah, no, never going to happen.
They're not going to happen.
You know, Vic, he sounds so smart when he speaks with you. Maybe I should start doing the trading for him, and then we can have a successful little business here. What do you think, Vic? Something we should do?
As long as you don't talk politics, it sounds good to me.
It sounds good to me, too. Sounds good to me.
Hey, I'll
close on this. Chris told me this story. You mentioned Ilya and I think Chris earlier in their segment, so let me end with this. Chris told me this story where Christopher and Ilya were in Las Vegas smoking a Black and Mild on the Vegas Strip together. And Chris asked Ilya, he goes,
they don't know
what
what
do you
Black
think
and Milds are, okay? Those two do not know what a Black and Mild is, Vic. Okay, you went too far over the goy line there, okay? No way.
I want the whole audience to just imagine these two just over the Vegas Strip on a bridge or something, smoking a Black and Mild, and Christopher looks over to Ilya and he goes, hey, what do you think about cryptocurrency? And Ilya says, the legend has it that Ilya says, it's like gambling to me. And Chris talks about how ironic it was that they're in the Vegas Strip about ready to go into this casino and play blackjack and poker, and this guy goes, I don't want to touch crypto because it's like gambling. But I asked Ilya the other day, who the hell cares? If you think it's bad collateral, who cares? You can trade the thing up or down, and you basically have no edge. It's a 50-50 bet regardless. But when you walk into the casino, you're giving up edge to the marketplace. So even if you don't think it's great collateral, you can still bet with very little edge in the marketplace. It didn't make sense to me. So anyways, I'm leaving you with that visual of Chris and Ilya smoking a Black and Mild over the Vegas Strip.
I'm going to leave you with a visual, too. Not as good as yours. First, I'm going to give you some information that my friend Jason just told me. Boston Celtics sold. Sadnov, how much?
I have no idea, but I will make a market.
You made one earlier. Go ahead.
I don't remember what market I made.
That's okay. Do it again.
What was the most expensive NBA team sold? Was it the Clippers or the?
I don't know, but I'm going to make a market on the Celtics because they're going to be rich. I'm going to say $7.7 billion.
Vic?
I was going to say 6.
6.1. William Chisholm, a private equity guy.
Yeah.
But here's the vision that I want to leave you with. I just got the information from Jason, so I want to put it out there. Thank you so much, Jason. Appreciate it. Sadnov, the big question.
Yes.
Small or big Royal Caribbean ships? Sadnov, you can look up on the screen there. You obviously are moonlighting, and you tell them in this video, we don't want to watch it, but in this video you say, which do we do? Big or small Royal Caribbean cruise ships? What should you go on?
What is this?
That's you. I mean, what is that? I mean, that is freaking.
I don't think Tom's ever been on a cruise. I'd bet.
I know, but obviously he's moonlighting. He's doing something somewhere. I wondered where you got your money from because I watch you trade, and I'm like, nah, you got a side gig somewhere, a hustle somewhere.
Oh my God.
Big or small Royal Caribbean? What do we do?
Been on?
Big or small? I don't understand what you're asking.
Big or small boat?
Oh, why would anybody? First of all, I don't even care because all I'm rooting for if I go on a cruise is that we hit an iceberg.
I don't think you're going to go anywhere for an iceberg.
Have you been on one? Have you ever been on a cruise?
I've been on one. He's never been on one.
I've been on one.
You've been on one, right?
Fern and I went on one when we first got married, and we went on one, and both of us couldn't wait to get the hell off. And we've never been on one since.
I managed a small team in Singapore, and we went on a team outing from Singapore over to Bintan, which is in Indonesia. It's about a 45-minute boat ride. We're on the boat ride. I've never been on a boat before, Tom. I got seasick almost instantly, okay? So I go up to the captain, and I go, hey, man, I'm not feeling so great. And he goes, okay, this is what you do. I want you to come sit here, cross your legs, Indian style, and rub the back of your earlobes.
I don't think you can say Indian style anymore.
Singapore.
Oh, no, you can. You can now. Sorry, go ahead.
The back of your earlobes?
Yeah.
So,
the earlobes
so here's
are...
the visual.
Go ahead.
The visual is, I just met these people. I'm there to manage this team. And we're going on a team outing.
And there you are naked, sitting crisscross applesauce style, rubbing your earlobes.
Applesauce.
You sick
in front of
SOB.
12 other grown adults rubbing the back of my earlobes. It was not a great look.
In a circle.
Going on a 45-minute boat ride is not a cruise.
Oh, I didn't say I was on a cruise. I'm just saying, I'm telling you a boat story. That's all.
Last summer I took a boat for 4 or 5 hours. Remember I told you I was in Croatia. I had to go from one city to another. I was like on a boat I rented a boat for like 5 hours, 4 hours, whatever it was.
4, 5, 2, 20 seconds. What difference does it make? Victor, great job out of you, my friend. We're going to take a quick 90-second break. It's always a pleasure to see you. We got more Tasty Live sound. And what comes up next?
I was told my segment was going to be extended so I could talk politics. I thought we were going to double the segment and we could do the first half on markets, the second half on politics. Is that not true?
Vic, don't worry. Next week, Tony's not here. Okay? So you're going to have...
Oh, he's going to beat up on you if your big brother's not here.
Yeah. Next Thursday... You're going to have a lot of time on the network, so just get your helmet on.
Who's replacing him? Who's replacing you next Thursday?
Next Thursday,
Is it Josh?
Victor Jones. You're going to be replacing me.
Okay.
It'll just be you and Tom. You'll have no crutch.
You get your helmet on for next Thursday.
All right.
Come with your best stuff.
See you guys.
All right, be well.
Peace.
We're going to take a quick 90-second break. Come back. We got a market measure next. Peace.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
Tom versus Tony. Round 1. Trade. Massive volume. Killer trade. Surplus. Shoot. The fall. Volatility boost. Killer trade. Resistance. Straddle support. Order sold. You win.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
got Joe. Joe in Houston, what's up?
Just want to call in and say I really appreciate everything. I started trading and learning from you guys about 6 years ago. You know, it was you guys' work and the platform that got someone like me that didn't really know anything about the market capable of really outperforming the market now for, 5 out of the last 6 years. And so just, I really appreciate you guys. I can't think of another company where I can pick up the phone and call the CEO, the trade desk, and reach somebody as quickly as I can there. So just really appreciate everything and what you're doing for guys like me out here. What you're doing is really spectacular. So really appreciate it.
Thank you, my friend.
I really appreciate it.
Very. You made my weekend, man.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what else is back? The E-mini S&Ps. I don't know if E-mini S&Ps are up 11, trading about 20 handles off of their highs after trading around $10 off of their lows earlier this morning. They made a nice little rally here of about 40 handles. NASDAQ up 46. Russell still the weakest of the group, only up 2, and the Dow up 82. They're all up around the same today. Volatility down 26 cents, helping that up market, and bonds up 25 ticks. I don't know if that's all I've got, because we've got a market measure sponsored by the SIBO, Sosnoff. 0 days. Very popular these days. You haven't been trading a lot of them. Shame on you.
I'm just looking to see what we got going on here.
We got a positive P&L for like the 4th day in a row. So I don't mention that, because we don't want that to happen.
Don't ruin my your
mojo.
Exactly. I'm on a good roll here.
You are on a great.
I'm not
roll.
listening.
I give you credit where credit is due.
I'm not listening to you.
You must be listening more to the BAT podcast. It comes on every Tuesday and Thursday, Sadov. Wherever you get your podcast around noon, or you can just watch it right here on the.
I'm being so careful not to listen to a word you say.
Thank you for the support. Appreciate it.
No problem.
Appreciate it, buddy.
I'm Tom
Sosnoff. Ever call you buddy?
No.
I didn't think so.
Anyway, Buddy in this office is kind of reserved for Buddy. We had a Buddy. He's no longer with us. But,
we did.
But he, you can't use the word Buddy.
I agree.
But anyway, it's 9:15 in the morning. We're in Central Time. We're Chicago based. So
9:15 somewhere.
It's always 9:15 somewhere. Anyway, before we do the market measure, just real quickly, you've got 1 week from Saturday is our last digital collectible, and then we'll start announcing our live tour. Tony and I are going on tour together. We're probably going to kill each other on the last day, on the last tour of the last day. We should do that.
I like it.
And we'll be announcing all the different cities we're going to be in. I think it's 9 different cities, 9 or 10 different cities over the next couple of months. So you'll get a chance to, talk to us, hang out with us, do whatever. It's actually a really good show. I think you're going to like it. Something we haven't done in almost 10 years. So I think you guys are going to love it. And we got a couple of other shows that we're going to be doing with other people here. So it's going to be some fun stuff. We have a crazy road schedule coming up. But if you want to sign up for Mike, Nick, and Katie, they did a show, advanced option trading, called Mike, His Friends, and His Whiteboard. You can sign up at tastylive.com/events. That's tastylive.com/events. And when you're there, that's the same spot that you will go to sign up for all of our live events. So you get used to that one little URL. But this one on March 29th, 10 o'clock in the morning, we're going to play it twice. You can watch it as we stream it, or you can watch it anytime you want. And if you don't sign up for it, you won't see it. It's one and done. Also, what else do we have, Beth?
Let me think. The store. Guess the Market's coming up end of the month.
No, not ready for that yet. Oh, I know what I was thinking. For tomorrow, we have Fast Market. So tastylive.com/fast market. tastylive.com/fast market. We need your trades for tomorrow. And fire away. Man, today is kind of pretty wild.
Yeah,
I mean,
in a same way we went down is kind of the same way we went up. There's not a lot of big velocity to the moves, but we are stair stepping higher. It looks like after being
up 20 last night, up 25 last night. Somehow down 40 something, 45. I saw him down this morning.
Yep,
and then down 40 on the opening, and then boom, right back up 17. Now this is what you get with a little high volatility. Now vol is now
good number, 19 and change.
Down a little bit. Everything's kind of working. Don't jinx it. And we got a really good pizza place for lunch today. 918. Let's do it. Best. Let's go to our market measure.
Let's do it.
The basics of zero DT with defined risk. We like to do a zero DT piece every week. So does Liz and Jenny. So we kind of twist up the piece a little bit, but we think it's important. They like to do it from the floor of the SIBO in the SPX pit, and we like to do it from the
friendly confines.
The basics of zero DTs with defined risk. Okay, let's go to the next slide, please. While we might like a high pop, means and large credits from selling strangles. For zero TT trades with the BPR, sometimes these positions are untradeable because if you do a strangle in the SPX, zero DT, it's like 120 grand, 110 grand, whatever it is.
Nobody wants to put up that
do a one lot.
Coin.
It doesn't make sense. So using very far out of the money wings can be a practical alternative, but it still involves involves potential exposure to large losses. Meaning if you go, I don't know, $50 wide, $30 wide, $20 wide, whatever.
Yep.
So how have narrow iron condors performed in the zero DTEs? And what effect did the choice of the short and long strikes have? Okay, that's kind of a question to you, Mr. Batista.
Yeah.
How have narrow iron condors performed in the zero DTEs? Because we know they're not great anywhere.
That's correct.
And what effect did the choice of the short and long strikes have?
I mean, I didn't see this. I don't know the context of putting it, but I got to think the choice of your short is going to be the definitive factor. I think you're going to have to go further out of the money because you're going to be so tight. That would be my guess. Even though you're going to make less money on entry because you're going to sell it for less premium if they're going in that direction. I don't know. I haven't seen this.
Let's go next slide. Very typical for us, 2 years of data. We examined looking at iron condors every day with a variety of initial deltas for the short strikes and the wings at 10, 20, 30, 40, 50, or past those. All trades were closed at 25% of max profit, while the losers were left unchanged. All trades were assumed to be filled at mid-price. So it's a little bit of an edge our favor, research favor. All right, let's go. First slide, Beth. Okay, so we get here. Again, these are your short strikes at this is what we call an iron fly, okay? Because your short strikes with the 50 delta, that's right at the at the money. And what surprised me here, okay, on this slide. Now again, this is the key here is we're taking profits at 25%. So nothing went to the end of the day. Take profits at 25%, and if we had it as a loser, we let it go. But if not, it was profits. So you can see that the C-bar in this one was actually really good. But
you're collecting so much because you're so tight. This is really benefiting from little to no movement, right? I mean, that's what it's saying over that time frame. I wonder.
What's surprising about this is that your average P&L is so good.
Yeah, I agree.
Me.
I agree.
If you do the $10 or the $20 wings.
Yep.
And if you went wider, it's actually, even though your win percentage is higher, it's not nearly as good. This was a big winner for those that stayed as tight as possible, essentially.
I would not have seen that. I would have thought that we would have had too much movement for the tight straddle. $10.
But we would never do this because this is not the way we trade. So let's go to the next slide.
But the straddle has come up many times in our research, not only in 0 day, but in others, as a viable strategy. So maybe
Beth, let's go to the next slide. And again, this is not an area that we don't really sell the 50 or the 40 delta. It's again, this is not an area, even though these numbers are pretty good.
Yeah.
With the bigger option in the middle. Let's go to the next slide, Beth.
Yeah, it's consistent. Let's get a little bit.
I mean, what's nice about this is that all these numbers are positive, and I did not think that would.
You know what's nice about this? You could be a smaller size trader. You just talked about $200 worth of risk to up to $600 of risk here. That's the CVR I'm looking at. And you can trade a big product like SPX on an earning style trade 0 day and have a good probability of success. Win ratio is pretty good, and maybe make yourself some coin. Maybe it's something that needs to be put into the portfolio.
Well, here's the next one, the one we would probably do, which is the 20 delta. Let's go to the next slide. So this is kind of our sweet spot right here, the 20 delta.
I mean, look at the win ratio, that 90% there. I mean, you'd like to stay out of harm's way.
Yeah. So this is kind of our world. The 20 delta with the $10.
Eat like a bird, poop like a bird.
20 delta short, $10 wide wings, 90% win rate, $20 over time. Now remember, you're talking about $20 wings. I'm sorry, 20 delta short, $10 wide wings. So you're probably in these cases, you're risking about $800. As you can see, the C-bar is about $800. So you're risking $800, and the average over time that includes all your losses was about $21. That's not bad. But it reverses now. Now the further out wings do better.
Mm-hmm.
It's interesting how both these sides skew so nicely.
Yep.
When you have the big delta option you're selling, the far out of the monies don't make any money. When you have the small delta option you're selling, the far out of the monies make more money.
Yep.
Let's go to the next slide, the 10 delta. Oh, no, I don't have it. So the last slide is the one that we would probably do. That's kind of our default right here.
Yep.
Is short the 20 delta and buy the 10 delta wing.
But you can't make, from what I can see, a huge compelling reason why this one would be better than the other one. It just really comes down to your comfort zone.
Yeah. Yeah.
Right?
Yes.
Yeah.
Yeah. Let's go to the next slide. So if looking to sell at the money or near at the money, 0 DT premium, it may be best to bend on our love of high probability trades and place the long strikes relatively close in. These were the most overall profitable and, of course, have less bad days. With further out of the money strikes, you can place the BPR for a wide iron condor, and the long strikes can be very cheap indeed, resulting in better overall performance. By adjusting both the short and long strikes and actively managing these trades, accounts of almost any size, which is what you said, Tony, can participate and find success in the fast-paced and incredibly liquid world of 0 DT options.
I like it. Good job. Good job by the team. Sal, if you know it's good job by the team, we got to go take your phone calls. 855.
Harumph.
237-855-238-2789 or 855-BE-TASTY. So give us a buzz. Phone lines open. I got 4 or 5 lines open. We'll have that number here below in just a second. 855-238-2789 or 855-BE-TASTY. Give us a buzz. Talking with Tom and Tony. I got 4 or 5 lines open. We'll be back in 90 seconds. Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Why are we literally rolling out the red carpet? What has this diva done?
I saw that. Why do you got a little red carpet?
Diva?
I don't like it. They said it's
sound.
Do we have a wide shot of the studio? They said it was sound. Yes, me lord.
And do we have to clap when you walk in?
Where are the rose petals? Wow.
Vanetta.
Hello. Yes. Good morning. Ooh. Yay.
New phone. Who dis? I did go in and get the phone at AT&T, and I didn't realize.
You went in unsupervised?
I went in by myself without a helper.
Did Beth have to pin all of your information to your jacket? It was like, my name is Tom Sosnoff. I need help, but I am an independent person, but I am looking to buy a phone. Here's how much money I have available. If I need help, you can call Beth.
I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am. You guys are elderly?
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your accidents.
You don't report your accidents. Other people report your accidents.
They hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. No. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist. This is fun.
Forgot about that.
Get the full scoop by checking out the archives at tastylive.com.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Okay, well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well,
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade. Make your move.
Damn.
Wow. Long live the trader nerd.
Man, you're a turd.
Trade junkie.
Hey, it's fun, see? Tom and Tony in the morning.
Tomas, we are back, my friend. You know what that means. Time for a little more Tasty Live with Talking with Tom and Tony. Even the S&P's up 23. Sosnoff, what do you say about that?
I don't think I'm that surprised.
Oh, you looked a little scared earlier. 855-238-2789 or 855-BEAT-TASTY. That's the phone to call. Got 2 or 3 lines open. Love to hear from you. Sosnoff, would you like to go straight to our phone callers?
Am I ready for him?
I think you are. We got some familiar names. I think you're going to like it.
Okay, let's do it.
Amir from Miramar. Amir, what's up?
Hey, guys. How's it going?
Doing great, man. How are you?
Hey, Amir. How are you?
Hey, I just got back from Iceland, so I'm taking the day, and I decided to just chill on the couch, and I was watching your zero DTE market measure, and it kind of resonated a little bit with me. And I just wanted to call in and say hi.
Awesome.
How'd you like Iceland?
You know, it was really good. It was good. I should have taken longer period of time. I wanted to do the ring road completely, and I ended up changing my mind halfway through because I wasn't really sure. We went all the way up to the East Coast to Hoffen, and then from that point on, I didn't have any bookings further out because I was told, don't plan too much because the weather can change rapidly. So I decided to just circle back, went down to Vik, and then came back to Reykjavik, and then stayed in Keflavik right before we left. Did the Blue Lagoon. It was good. It was very good.
I
definitely something you should do if you like that kind of thing.
I have one question to ask you. I mean, Iceland's so much smaller than Greenland. Maybe we could probably get Iceland for a much cheaper price than we could Greenland. Do you think, from your experience, since you've been there, we should just buy Iceland and save the extra capital and leave Greenland alone? What do you think?
Hey,
Tony, this can take a really bad tangent.
I don't want it. Just a joke.
Hey, Amir, I did hear the food. I heard the food is expensive but great in Iceland.
I'm glad you brought that up, Tom. One thing I was not prepared for was how good the food was going to be. So I expected to eat, I didn't know what I expected. I expected to be either gain 20 pounds or lose 20 pounds because I'm not like a fish guy.
Yeah.
Or, I heard pickled stuff. And let me tell you something. Everything I ordered, and I'm talking about just regular food, hamburgers, pizza, it was phenomenal. I'm talking phenomenal. And it was like, I was, and yes, it was expensive. It was the 4 of us there, and I don't even want to tell you, every meal was, we'll get into that later, but it was super expensive, but it was so good. And I thought at first, maybe because I'm on vacation, everything tastes good, and, then I remembered all the times I went on vacation, I normally don't like the food. I'm missing home food, I'm missing South Florida food, but everything. I'm talking about pizza, hamburgers, fish and chips, even the high-end restaurants we went to. It was just superbly fresh and it tasted like somebody gave a crap when they made it. And I don't know how to explain it better than that. It was just, there was nuances in it. It was great. It was great. I would highly recommend the food. And I was trading a little bit when I was there. Nice. I was in a hot tub in my Airbnb flipping SPX spreads and trading ES against it, and it was pretty cool. I tweeted at Tony.
Love it, man. And by the way, Amir, nobody ever said they missed South Florida food.
But they haven't been to my house. And I've invited you over for dinner multiple times. They haven't been to my house. My wife's a good cook. I do pretty good on the smoker and the grill, so anytime you want to taste a really good steak, come down.
Good job, man.
Thank
you so much for calling in.
Costco has to offer.
Welcome home.
Welcome home. We got to run. Thanks, Amir.
Thanks. Appreciate it.
All right.
We're going to go to L.A. Sosnoff. Kevin in L.A. What's up?
Hi. Good morning, Tom and Tony.
Hey, Kevin.
Hey, so I have a couple of problems. So my account was flagged for PDT. So because of that, I can only do my management and adjustments whenever it goes back to 25,000. So with that said,
stop for 1 second. You get one reset. Have you used the reset?
I have not, because it hasn't been like a emergency that I need to. So I'm trying to save that for when
Okay, as long as you're aware of it.
Get a reset, and you can trade futures options too.
I haven't tapped into futures yet.
Okay.
Okay.
Because you can trade like, I don't know if you're trading stocks or anything like that, but if you wanted to trade like the MES options, they're the same size as spiders. You can trade those. There's no pattern day trading rules.
Okay, got it. Yeah, I'm just not too comfortable with futures yet.
Okay, no problem.
Fair enough.
Understood. No problem.
And this is a regulator rule, not a tasty trade.
Yeah, he
rule.
knows.
Okay, go ahead.
Oh, yeah, I know.
Yep.
And then, so with that said, now I have a Amazon Iron Condor. That's in May. But I kind of paid a debit for this, and I don't know what to do.
Oh, what do you mean you paid a debit for you're short an Iron Condor?
Yes, I short an Iron Condor in February, rolled it to March, and then the down move kind of messed up my account, and then now I rolled it to May and end up paying a small debit for the entire position.
So he kept the dream alive. He paid a small debit.
It's
a small debit.
So you still have a short Iron Condor on, but you paid a small debit to roll forward.
Right. Usually we would change the strikes to collect a credit, change both strikes to calls and puts, all four. But I have no problem with what you did if you paid a small debit.
Yeah, in the future, that's why we only roll the untested side. So then no matter what, it's a credit.
Right.
But it narrows the strikes, of course.
Yep.
But anyway, so what's your question? So you're in this short Iron Condor, and are you being challenged again with it?
Not at the moment.
Okay. And so is your question like just what do you do?
Yeah, since I'm technically just holding all risk.
Are you saying that even if this thing goes to zero, you can't make any money back?
That's correct. So I would need to maybe roll it up a couple cycles.
Oh, that's not good.
No.
Yeah. So okay, I didn't understand. So you're net in for a debit. So you've used up your whole credit, so you can't make money. You're dormant.
Well, he can make money.
Yeah.
Oh no, he can't make money.
No, you can't make money.
Yeah, you got to close it.
I can't make money in this cycle.
No, right. So in golf, they call this you're dormy. It's over. Like, I mean.
I had nightmares about that word, but go ahead.
What?
I had nightmares about that word with you, but go ahead.
Dormy? So, okay. So then the choices here are, and you're in, what'd you say, you're in April right now?
I'm in May.
Oh, you're in May. Okay. All right. So you really screwed this up.
It's not the end of the world.
No, it's not the end of the world because it's an Iron Condor, but I'm just saying so your question to us is, should you roll this out to a further month and give yourself a chance to make some money back and go super wide, or do you just
cut bait?
Do you just cut bait?
Or I just hold this until 21 DTE and then roll it to the next monthly cycle until I generate enough credit.
If you generate enough credit, you might have to do it for another debit again. I personally probably cut bait on this and open another Iron Condor with my legs closer to at the money in the direction I think the stock, or I needed the stock to go for my original trade. Does that make sense? So I pick up the delta that I need or want, because that's what you have now, but give myself a higher probability of success. That's what I would do.
Well, I mean,
it's going to use more buying power.
Yeah, you're in a tough spot because you're using up buying power. You can't make any money.
That's the worst spot you could be.
I know.
I don't understand how you would want to stick with that.
Well, because he can make back some of the money he's down. That's all.
Then just do one side. Just do a vertical spread. I mean, I don't know.
Boy, I
do anything but stay where I am.
Yeah, I would do. I'm going to agree with Tony that I would probably do anything, but not just sit with this. Not sit with this alone. And I just think when you're kind of stuck like that. Oh man, I mean, because I wouldn't roll it out to June, so I'm okay with what your original game plan was. Hold this till 21 DTE, and then decide what you want to do. Or I'm okay with closing it out. I think it's 6 of one, half dozen of another right now.
Okay.
I wish I had a better answer for you, but I just don't.
All right, Kevin, I got to run, man.
Thanks, Kevin. Sorry about that.
Appreciate it. Yep.
Sorry. I wish
we go to San Diego. I got Gary. Gary in San Diego.
Hey guys, how's it going?
Good, man.
It's been a while.
A little bit.
Hey, Gary, what's going on?
Yeah, last time I called Tom, you had a little sniffle. I thought Tony was going to have to call an ambulance or something.
He had a do not resuscitate. I was not on the phone.
Yeah, it's hard.
I know, I don't know if you recall, but I was asking you about your 2 best plays of the year, and you were like, I don't know.
Yeah, because I never.
Very good. That's a very good impression of.
It's a very horrible impression of me, but yeah, you're right. I actually don't know. I'm not a good,
No, you've never been good at it. You've done it in the past. You suck at it, and you want to know something.
Tom,
since he doesn't have a play of the year, which I know you want to do the opposite of. I get it. He has traded much better.
Right.
He has traded much better.
No. Listen, the play of the year was the short on Tesla and long bonds, and you were like, I have a sniffle. I don't know if I can do that. Or say that or something. Anyway, I'm glad you're feeling better now.
Thank you.
Okay, so my question is, I got assigned a horrible stock at $77.
Okay.
And it's trading at like 57 right now. And my puts are expiring tomorrow. I want to hold the stock because I think it's going to go up, but I don't want to. What is the best maintenance for that?
Do you have?
You know what I mean? Like I don't have to.
Do you have the buying power to hold the stock?
I do, but it's a lot, Tony, to be honest with you. I don't want to use the full buying power. Like right now, I have the put.
So with what you just said there, and you want to stay in the position, I probably go out to June expiration, right? And I would May 57 days is fine. I would probably go out to the May expiration.
Yeah, okay.
I would probably do a stock substitution, buy the call, sell the put. That gives me my 100 shares of stock, however many puts that you sold, and buy that, and then sell out my puts so I don't have double the position. That's what I would do. So I would have a stock substitution in May, still 100 deltas, using 25% of the buying power that I would use for holding the stock. It's exactly the same thing. You got a couple of pennies in slippage, whatever you sell the
But you're saying like I'm gonna get rid of this position and then just reestablish a new one by doing that?
Yeah, of course. You already have the loss. I mean, nothing's going to change for you.
No.
If you had a 5 lot of puts, you do a 5 lot of call reversal. You call put. You got the same.
No, but what I'm saying now, I have the put on the backside of it, which takes the buying power down.
You didn't say that. All you said was you had a naked put. That was
Yeah.
the only,
Well, no, you didn't understand.
You have a diagonal, or I didn't understand. That's possible. Tom says I don't understand a lot of things. So you have a diagonal on.
I got 200 shares, and I got the.
You got 2 or 3 contracts in the back end.
And then I have the $60 puts, and the stock is trading at 57.
There you go.
There you sit, I guess. I mean, if you can hold it, or you close it. I mean, it's over.
No, I can't. But that's what I'm asking you. So my puts expire tomorrow.
Yeah, so why don't you just roll it forward?
Roll it forward.
Just roll the put forward.
Yeah.
Okay. So you could just do that and that.
Sure.
Yeah.
You could sell the stock and do more puts too.
In the future, don't wait this long, but just roll the put forward.
Yeah.
Okay. Okay, one last quick question. Tony, with the Iron Condor we have in the SPX,
yes.
What's the target?
Break even? I mean, are you asking my...
Well, we're really close, right?
We're not far. We're getting closer. I mean, first thing will be break even, right? I mean, it's been a struggle. We need a little bit of a rally.
I'm $3 right now.
Yeah.
I'm $3 down right now.
Okay, well.
That's it.
Yeah.
Well,
I mean, you got 27 days. We usually close a roll in 21 days. We hope to make that $3 back in 21 days.
Well, we're going to make that back today.
Okay. From your mouth to whoever's listening.
Gary, we got to run. We got so many people on.
Good job, man.
Okay.
Appreciate it. We're going to go to Wisconsin. I got Mark in Wisconsin.
Hey, gentlemen.
Hey, Mark. What's up?
Just started following you guys for the last couple of months. You guys really produce some amazing content.
Thanks.
So, a serious question for Tom and Tony. I've been reading kind of your backstory about Thinkorswim and Tasty Trade. If they were to make a movie to the big screen, who would Tom want to play as him and Tony to play him?
Great question, Mark.
Kathy Bates would probably play the older Tom as he is right now.
Tom Cruise wants to play me. Come on, we've been through this before. Tom Cruise wants to play me, and Tony's always had this love affair with John Travolta going back to the early days.
Young John Travolta. Richard Gere would probably have to play me now.
So the question is that if he were to play John Travolta, would he shave his head?
Was I bald? Oh, yeah. I don't know. That'd be a tough one.
Tony doesn't shave his head for
Thanks,
nobody.
guys.
Thanks, brother. Appreciate your time.
Have a good weekend.
You
Bye.
too. We're going to go to NYC, maybe NYC, but New York. Craig, what's up?
Hey, guys. How you doing?
Good, man. How are you?
Good. Really quick question. I'm just getting back into trading after being away for a while, and I'm dipping my toe into the options on gold futures. And this is probably a very simple question, but I'll ask the experts.
Sure.
When I look at the option chain, you've got, the recent contract. It says last, gives you the price currently. And then you go to, the next contract, and it's in this case, 3,073. How does that get resolved? What happens if you try to roll between one close expiration to something a little bit later on, but it's a different contract?
And you're rolling the options only?
The options, yes.
Yeah, no problem. It doesn't matter. Because what you're concerned about is that they might be the front month that you're rolling forward into a back month, they're going to have different settlement, meaning that the front month would settle, let's just say, as an example, into March, and the back month might settle into June. So you're wondering if that affects the roll of options, and it doesn't.
Got it. Okay.
So
it was just a little confusing when I was looking at it.
Sure.
And realizing that the in the money price was completely different, and it threw me.
Yeah, because what you have to look at in the case of gold is that the March futures are about they're 30.44, and the June futures are 30.72. So there's $27 in carry costs between March and June. So that if you're rolling the future, that's not a loss. But if you're doing what you said and just rolling, let's say, the options, the delta is going to be a little off. So if you roll to the exact same strike, you're going to be rolling to kind of probably the wrong delta. So what you want to do is what we recommend people do is, let's say, just as an example, let's say you're short a 30 delta call in March and you're rolling it to April. which settles into June contracts. Then you look for the 30 delta call in June. You just set it up as a diagonal rather than a straight calendar spread.
Copy that. All right, got it. And also the
nice thing about Tasty is we don't care what's like. You can adjust it to any strike you want. So the platform doesn't require that you roll to the same strike. You can roll to any strike you want, so you can adjust it by delta.
Brilliant. Awesome. I'm going to co-sign on Iceland. Spent a month there. It was incredible. And if you can drive around the entire island, I highly recommend you do it. It's tough to do it in March, but you can do it.
No. We don't go anywhere when it's cold. If we go to Iceland, if Tony or I go to Iceland, it will be when it's...
she sent me there.
We would go white nights, when it's long white nights type thing, when it's warm out or warmer.
When it's good, warm, and 50 degrees outside. That sounds great.
Yep.
Yes, exactly.
Thanks, my man.
Well, I appreciate you guys. Thanks so much.
Thanks.
Appreciate the kind words. We're going to go to Atlanta. I got AB. AB in Atlanta.
Yes, sir. Gentlemen, good morning. How are you?
Hey, B. How's it going?
Good. Quick question. I've been bullish on yen for a long time, and I wanted to improve my cost basis by being long yen. And I just don't know if I had a 66 put sold in 50-day cycle and I got assigned, what would be the buying power to hold that long yen contract?
I'll tell you 1 second, but you won't there's no early assignment in there, so that won't happen. But if you wanted to know the buying power for a yen contract, 3,500, 3,600.
I was going to say, just under 4,000.
Yeah, $3,600.
Okay, perfect. Yeah, is there somewhere on your website I could go to see this information instead of bothering you every time?
No, well, you could just
for other currencies and similar.
You just set up an order, and then you look at where it says BP effect.
I'll actually put it up there for you. So all I did was put up buying a yen contract in a margin account.
Buy or sell it. Yeah.
Buy or sell. But he's going to get long it, so I just simulate it.
Yeah.
It says reduced by $3,600 and $36.30. That's what it would cost.
And also, AB, just so you know, it's the same. That number's the same at every firm. So like, even if you went to the CME site, that is the number. It's not negotiable.
Okay, understood. Perfect. I just wasn't sure if it would be the max loss amount or the buying power, but now I get it. Thank you so much for your time, and I look forward to seeing you here in Atlanta in a couple of months, I suppose.
Oh, we'll be down there. We'll be down there in May. We'll be announcing it very soon. I don't have the dates or plans in front of me, but Tony and I will both be there, and it's our first show. We're kicking off our whole tour in Atlanta. We're looking forward to it.
Awesome. Thank you so much.
Thank you. We'll finish up in Florida. We're going to the beach. I got Mark the Trainer in Florida. What's up? Long time.
Hey, guys. How are you?
We're doing great, man. How are you?
Hey, Mark. How are you?
I'm having a rough day, but I will have you know the Tom and Tony head were in Iceland on a glacier.
Hold it. I think you sent that to us years ago.
Yep. He's right. He's right. He did.
Yes. Yep. And we got in trouble. We got environment. We got a citation for ruining the environment there. Somebody said no Tony head should ever be seen in public.
It was seen as garbage. It was like you left garbage there. Yes, that is true.
Okay, I'll give you a quick question. You know how you say vol is going to get crushed?
Yeah.
What makes vol get crushed? Is it supply and demand, or Tom and Tony saying, we're going to crush volatility?
Supply and demand, man. A lot more option sellers than buyers. That's all it is.
Okay, that's it.
You got it, my man.
Enjoy your day.
Enjoy the day, Mark. Thanks for calling.
Sadnov,
be well. Bye.
Be well. Before we go to break, Sadnov, I have just one question for you. Are you ready?
Give it to me.
Louisville.
Plus
2.5 versus Creighton. People want to fade you, so they just want. I got just 5 games.
Okay.
Creighton getting 2.5 against Louisville.
Creighton.
I got Creighton. High Point getting 7.5 to Purdue.
Purdue.
Good. I got High Point. McNeese State getting 7.5 to Clemson.
They're going to play for their coach because I think he's leaving. I love McNeese State.
Oh, my God. I got McNeese State. This is disgusting. Georgia plus 6.5 versus Gonzaga.
Gonzaga by 1,000.
Oh, good. I got Georgia. Arkansas plus 5.5 versus Kansas.
Ooh, that's a good one. I'm going to go with Kansas is like always overrated, and I'm going to go with isn't Calipari the coach of Arkansas?
Yeah, let's go. Come on, who do you like?
I'm going Arkansas.
I got Arkansas and the under. Oh, my God. I know maybe all the games could be under. I can win some money there. Hey, listen, Sadov, I'm going to take a quick 90-second break. Yeah, it was fade the Sosnoff. You know what you're supposed to do. Make those bets. We'll be back in 90 seconds. Let's take the live. We got Liz and Jenny next. Up a piece.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Hi, my name is Liz Deerking. The beautiful brunette next to me is... What an intro. Jenny Andrews, and we are about to play a very exciting game. No. Hold on. No, you're wrong. Hold on. She's wrong. I'm right.
High school party, high school condo.
Yeah, because it wasn't in school. I had friends at my high school who were mutual friends of Liz, and so we were all at the same party. and then parties for the rest of our lives.
For the rest of our lives. Same thing with college. She went to a different college. I went to a different college. But we both ended up at the CBOE together.
Yep.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
What happens when 2 titans of trading come together to harness the power of their prowess? Let's watch these 2 master the precision of the short game. Wow, I've seen better putting at the mini golf in the Dells. Tom, do you see holes where there aren't any, mate? Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the Liz and Jenny Show. I'm Jenny. That beautiful blonde in red is Liz. Happy Red Shirt Thursday, everybody.
Happy Red Shirt Thursday to you too, Jenny Andrews. How are you?
I'm fine. I meant to post a picture or videos of the tornado because people all over have been posting them from our area. When John asked, did you get snow? I totally forgot that last night we had our dinner and spent our evening in the basement because we did have a tornado.
We had all 4 seasons in 5 hours. So we had storms on the way home. Tornado warnings were going off while we were in the basketball award ceremony. While we were there, we totally ignored it. Everyone ignored it. And we just went on with the basketball award ceremony. Then we got home and I had 6 inches of snow this morning.
The snow was crazy.
And it was 60 degrees when we were going to the train. So that's why I was like, that's only 3. What was the 4th? So we could have worn shorts to the SIBO yesterday, and we had all 4 seasons in the matter of 12 hours.
No, when we left in the morning yesterday morning, you said, oh, I spilled a little water on myself. And I was like, it's in the 60s. It's not that cold. You're going to be fine. And then by the end of the day, 40s, 30s, I guess that's what brought the tornado. It was crazy. The amount of people I know who went outside and saw the tornado and watched it form and took videos of it. It was kind of bonkers. Now, maybe, I don't know. I wish I would have posted pictures and videos. I totally forgot. Maybe tomorrow.
Okay, and not changing gears, but I want to give a big shout out to the segment Hear Me Out today. I loved it. I really want to send it to, Jenny, you saw it, and I know you saw it, but I really want to send it to all of my son's friends because they are really into gambling right now, very much into gambling, and think that is actually a better edge than trading. So I loved it, and I am going to send that to everyone that I know.
Right. When Victor and Tom talked about the markets being open more and trading happening all the time versus betting on sports.
Well, it was more about how much it is to bet on sports. Like legitimately, it's the cost of betting on sports versus the cost on making a trade.
Speaking of the cost of betting on sports, yesterday we had our train conductor running a square pool, and he wrote on the square pool, "I'm taking 10% juice off the top of this square pool."
I can't believe people don't tip him.
Right, he said he's dead tired of no one tipping him, so he just added that to the square pool.
Hey, then you don't have to tip him on top. I think that makes sense. Actually, it benefits me because if I win, I would have tipped more than 10%.
Yeah. How about the guy who won $6,000 and didn't tip him anything?
I know. Our train conductor is pretty funny.
Oh my gosh.
I feel like our viewers will appreciate this. So we talk to him all the time. He's wonderful. We're in too deep now. We can't ask his name. So what do? We've done, Jenny and I are like an SNL skit on the train because both of us are trying to look for names, figure out how to figure out what his name is. And we got Bupkis yesterday.
Well,
and then we said,
here's what I'm going to say. He might be watching Love Our Train Conductor, and
he's at work.
Oh, you're right. He's probably on the train. Okay, so yeah, we've been riding. This happens to us everywhere, though. It's like we meet people and talk to them, and it's too far. We're too deep, and then it's like 5 months later. Actually, it's almost a year later, and we don't remember his first name because he told us once on day one.
And we will never remember that. So we come up with every trick in the book and he thwarts it. So yesterday, Jenny's trick was ask him what numbers he has in the square pool. And then we'll look on the square pool and see what his name was. And I was like, do you have good numbers? What numbers do you have? He's like, every number is a good number, isn't it? Like, didn't even give us anything.
No. We could, you worded it wrong. Cause I said, we've got the square pool. We've got the numbers. We've got the names. We can figure out his name. Ask him what numbers he has, because if you said what numbers do you have and he said 3 and 0, we could have found him on the square pool. But Liz, you said, do you like your numbers?
Yeah, that's true. I guess I did. And you know who has 3 and 0?
You?
Yes.
So do I. I have 3 and 0 in one of my pools too. I mean, you're in so many pools, you probably have every number combination.
This is true.
Funny. So funny. So March Madness begins today for all those basketball fans out there. I had so many plans for today's show. I was searching for the plaque. I have a plaque that hangs on our door that says this marriage is put on hold for March Madness. So that begins today.
Oh, post that tomorrow.
Yeah, it's like a plaque my mother-in-law gave him at Christmas.
Oh, that's cute.
Like 20 years ago.
Oh, but he's not going to be here for a lot of it.
Oh, he's having it hard. For those of you who don't know, my husband played college basketball, and he is like super, super, super big college basketball fan, and he's gone to tournaments all over. Like, he's gone to tournaments. I remember him going to a basketball tournament in Hawaii and in Bahamas and all over. Whenever we're on vacation, if he can find a basketball tournament, he goes to it. And he has to leave for Germany this weekend, and he's gone all week next week in Germany, so he is not happy.
And I'm going to guess it's not conducive to watch it in Germany. No. Or is it? Like, if it's night here, what time? Is it day in Germany?
No, he's asleep. Like, if the basketball games are on tonight, he's asleep in Germany.
Yeah. Uh-oh.
Not good. Not good. This could be the worst March Madness for him ever, spending the week in Germany missing all the games.
Ruh-roh. Yeah, that's bad. It's bad.
Oh, well. My son will be in Vegas. My son will be in Vegas for March Madness.
Oh, yeah. He's going this weekend, right?
Uh-huh. Mm-hmm.
That's awesome. I love it.
Yeah.
That's a good place to
what
be.
About you?
That's a good place to be for March Madness. You know what I mean?
You've got the basketball party at your house tomorrow night.
Oh, my God. I love it. So the party starts at 6. UK tips off at 6. So on every TV in my house, I will be fully supporting my son's team.
Oh, good.
Yeah.
Good.
So we got the basketball end of year party at our house, which is fun because, they'll all be watching the March Madness too.
Yeah, that'll be fun.
Yeah.
That's going to be a good time.
Yeah, it will be fun. All right, Jenny, what do you think about this market? First we were red Shirt Thursday. Now we are green.
Okay. Well, yesterday, after the rally yesterday, I thought, and I did listen to
Ilya?
No, I listened to the Fed speech. So I listened to that and it was like, economy's looking good. Everyone's going to jump on the bandwagon and we're going to be green tomorrow. And so I kind of as I was watching it, set myself up, got rid of a lot of my bearish positions, because when I say a lot of my bearish positions, I had like 2.
You're one. That's what I was going to say. You're one bearish position.
So set myself up for a big green day. Was pretty upset when we were down 40. So up 24, I'm happy with. I'm hoping we're up 100 by the end of the day. That would be helpful.
I'm giving this because I do love Tony Batista, as foretold by them that it would be a green day today. Did you hear him getting in trouble because he says as foretold too much?
No.
Tom was yelling at Tony because Tom was yelling at him, be like, stop saying as foretold. Because Tom said that, Tony refuses to stop saying as foretold.
That's funny.
Pretty funny.
I mean, I get it. I know there are things people say that I'm sure there are things I say that annoy people when I, like nails on a chalkboard. So for Tom, it's as foretold when Tony says it.
As foretold. It was funny, super funny. Do you want to pop in the platform and let's manage some things.
Okay, I opened up a couple positions, things to do. On the very bottom here, I don't know if you can see this TLT. We put in a zebra yesterday. This was on What's Your Assumption? Someone wanted bullish trade in TLT. We just put on a zebra. We spent $347, and right now it's worth $447. $100 overnight in our long TLT stock position.
Honestly, I did the same thing on the train. Mine's gone.
That's what I would say. I would say take this off, take our $100 overnight, and on a down day in bonds, we'll get back in.
Yeah, for sure.
Okay, 100%. Here we go. Taking this off, paid $347, selling it for $447, and then we'll be out of our TLT position. But when we have a down day, we'll get in. Bonds 118.03.
Yeah, bonds had a decent move, after that this morning.
Right, for sure.
Did JP say anything about crypto?
I think did someone ask him? Like, I watched even all the Q&A. He didn't say anything about crypto, but I think in the Q&A maybe someone asked him and he didn't. He was kind of like, I'm not going to answer that. I answered that before. I don't think there was any talk of crypto.
It's hard, even when you listen to them, because I've tried to listen before, to interpret what exactly is going to happen.
Oh, we have no idea what the market's going to do. Right. It's not like I'm watching him to try to figure out what the market's going to do.
He's like, called you yesterday. I was like, there's a man talking in the background. Who is that? You're like, it's Jerome Powell.
I don't know why I put it on, but I got home and I put it on. Usually I'm just watching Tasty, but for some reason I put it on.
The funny thing is I've tried to listen to it before. I like to listen to the interpretations versus the actual. He's pretty even keeled though, isn't he?
Oh yeah.
So he's very calm. He never gets like riled up at any of the questions that he could get riled up at. Just like even that one where he's like, I've answered that before. It wasn't like I've answered that before. It was probably
no. He's very just like
yeah.
Just steady. Doesn't really He doesn't really change his inflection at all. No. But I don't usually watch. But I have no idea why I put it on yesterday. I came in, I was coming in hot because we got off the train and it was raining. So I didn't bring my umbrella. You didn't have an umbrella. You were parked so far from the train.
My infinite wisdom, I decided to get my steps in. So I parked in the last spot in the lot and we got out and it was boring.
It was raining. So I came running in all wet. And it was 1 o'clock, right? Our train comes in at 10 to 1. I come running in at like 1 o'clock, all wet, and just threw on the TV to see what was going on.
It's so funny because it's very dramatic, like you said, for us. You want to get in and see what's happening. But to the rest of the world, they have no idea what's happening. Like, who's talking? Who's Jerome Powell? Right? It's weird.
Right. Oh, well, and we are always on the train on a Wednesday because we take it when we go to the SIBO. So our train conductor, I think he thinks we're just trying to get rid of him because he's like, what's going on? And we're like, hey, we're busy. There's a Fed announcement today. It's like every happens quite a bit.
Oh, that poor train conductor. Okay, is the TLT off yet? Not yet. Penny it up.
It's working. Suppose only up 21 right now.
Yeah, true story.
I went them up at least 50 by the end of the day. I mean, I guess I'll take up 21 instead of down 40.
Another, kind of public service announcement. Yesterday, we did the market measures from Jacob. We do it live from the pit of the SIBO and the SPX crowd. And Tom and Tony did it again today. I really like doing that because they have a little bit different of a take on it than we usually do. But I think that market measures, the one that we did, was a little bit more geared towards people with smaller accounts, which I loved. So
I liked
when they went through it, they kind of looked at it from a different lens, and I liked that. I like kind of seeing two different opinions on there. So I just want to give a big props again to Jacob.
I put the same one on today. I put the same trade on today as I did yesterday. Short the 30 deltas, make it a $20 widespread. Yesterday morning, this is the difference in vol. Yesterday morning, I put that same trade on around the same time, and I collected 1080 for $20 wide with my shorts at the 30 delta. And today, when I put that on, I collected only 910. So a big difference in vol.
There is a big difference in vol. It's funny, and I'm glad you did it on at the same time, because mine I did a lot later today. Yesterday we did them on the train, so I guess I didn't even notice. You know what I mean? Because I figured it was the time. But that was good.
I panicked when we turned green. When we were, down 40 and then turned green, I panicked and closed mine. I was like, geez, we could be up 100 by the end of the day. I'm getting out of this thing.
Well, okay, so I did the right thing, and I put my GTC in for, I think I put in for 20, not 25. Wasn't it steady 25?
25.
I'm sorry, I put it in for 20, and I'm 1 penny away from being filled.
Oh, that's good.
Yeah.
Oh, because you put it on later. Put it on later.
Yeah, I put it on later. Yeah. So I'm a couple cents away, but like I said, I thought I was following the rules. Shame on me. I should have paid more attention to what we were talking about yesterday. I put it in for 20, not 25.
Well, you're lucky you put it on later, because this morning we opened Spruce around 40. So it's a 60-point move away. I'm trying to do
it the time Jack Tucker does. What time did he put his on?
No, but he put it on earlier today. Because this came in an hour ago and he was already in. So
click on it. You can see what time he put it in. Yeah, 9 o'clock. He put it in at 9. Go to the other slide. Just hit that arrow.
Okay, yeah, so
9 o'clock.
8:57, right?
Yeah,
which is around the time I put mine on. I think I put mine on around 8:40. 8:40, or 8:50. I think I put mine on around 8:50. Yes, and I was one strike up. I was 56.30, 57.10, something like that.
Yeah, I love these though.
Or maybe I was a little bit tighter because I was the 30 delta. So he put on around 8:57. So with the 5,700 call, we're trading, just about 5,700. So we're there. So we need to stay here all day or have a little bit of a pullback, because that's where we are.
Yeah.
But we've had a little bit of a rally, and I don't know that there was any news or anything that came out that caused the rally, but we had a little bit of a turnaround.
I kind of like I said, I do like waiting until, it kind of shakes out a little bit.
Oh, and he has some higher strikes here, 57.10, 57.05, 5,700. He kind of ladders them.
Yeah. Well, I think he goes to where it is when it's trading there.
Mm-hmm. Okay. Okay. You know what? I will go back into Twitter. We do have some earnings. Let's see if I can get back to where we were. How do I get back? Trying to get back to where we were.
Hit the back button.
Oh, there we go. Okay. Oh, Liz and Jenny forever. Noelle saying hi, getting ready for a new baby, but just not sure where she will fit it. Oh my gosh, look at all of our toys. Oh, it's so cute. There she is with all of her little dolls. She dropped one because it wouldn't fit and said, whoopsie, hopes she doesn't do that with Grant in 6 months. So
I love the name Grant. That's a great name.
I know. So sweet.
Adorable.
So happy for you and the new baby coming.
I know. That's so exciting.
Oh, here we go. Good morning, gals. Digital Asset Summit today, and Trump to speak in 2 hours, and Michael Cashburn Sailor to also pump. Here we go. Looking to do a call vertical in MSTR, very bearish. So looking to do a call vertical in MSTR, very bearish. So you want to sell a call vertical, sell the 350 25 delta call for 700. This is April 4th, or the April 17th, sell the 360 21 delta for 1100. So this is all in MSTR.
Go to MSTR. I'm actually going to pull up Twitter right now, and I will have the strikes. You go to MSTR.
Okay.
So very bearish. Okay.
So they're very bearish, and they were looking at April 4th or April 17th.
So yeah, 4.4. Estimated move is $52. Right now it's 4.4. There you go. Sell the 350.
Okay.
Call for $7. Okay. Yeah, you could have gotten a little bit more. Or the 417, 360 call.
For the 417, 360 call for $10. Yep. Okay. So personally, I'm not selling any naked calls in MSTR.
No, we're not. We can't afford it. We can't afford this in this account. I think it would.
Even if I could afford it, I'm not selling any naked calls in MSTR. This thing is just like too wild.
Now, I will tell you, I'm looking at the tweet right now. He was selling them for $1 over where they are right now. I might even just take my profits, because if he sold them for $110, you can buy it back for, like you're at $10 now. He sold it for $1,100. You know what I mean? And like, so I don't like the naked calls in MSTR, but if we wanted to be bearish in MSTR, what would you do? And honestly, listen, Jenny Forever, big by big, he knows what he's doing. You know what I mean? So that's great. We just can't for this size account, and in my account, I don't like to do that.
And if I wanted to be bearish in bigger products or something that's wild, and I just don't want to take too much risk, what I do in those is I will, like buy a put spread and try to sell a call spread to cover some of the cost of it, or something like that, where that's what I'm doing in some of these bigger products if I want a directional position and I want to have defined risk.
So how wide is your put spread? $10 wide?
$10 wide. There's like a $10 wide put spread. I'm selling a call spread to pay for it, but I don't even like that $1,600 in risk up at the call spread.
No, I don't either. And you're not getting much for the call spread because it looks like there's call skew, correct?
Well, this put spread was almost $5, right? So
yeah, so that's what I'm saying is like so a lot of times I'd like my room to be wrong, where I would sell the 50, 55, the 350, 355 call spread, but you're not getting much because if I'm looking at that, right, they're almost the same price. There's a lot of call skew there.
Yeah, so it's tough. So if we put on a directional trade and I don't mind putting money into it, I'll do a zebra. If I really want to have a directional trade and I don't mind the money putting into the trade, I will put on a zebra. But a put zebra here, I'm going to guess, is going to be pretty darn expensive.
Ooh, well, okay, so yes, when you're in a $300 stock with this kind of implied volatility, it will be expensive. No matter what, it's going to be cheaper than just going out and selling the stock. And it's still going to probably be cheaper than just selling that call.
You've got $8,000 into a zebra. That's expensive. To your point, it's cheaper than just selling the stock. But I mean, if you sell that call,
that call was $17,000. It's still cheaper. It's still cheaper than selling the call.
I know. This is a tricky one. I don't trade MSTR. I think it's a little bit of a challenge to trade. I mean, something that's gone from, 190 to 530 to 300, I don't trade that.
Yeah, I know. But I get why they want to. So, yeah, I mean, if you were one or the other, I would say either one. It's dealer's choice there. Listen, Jenny Forever. Do whatever you want because you know what you're doing, right?
Yeah, just be careful of the upside risk. Andrea went in the red shirt today. Happy Red Shirt Thursday. Thanks for participating.
I love it. You look great.
Love this. Love that. So cute. Jack JT, you know what I'm going to say. Micron, we're bullish. We understand there's a market sentiment risk to the downside. What are we thinking doing? Also, there's Lennar to consider. I don't want any buying power excuses. Jack, I appreciate that. That's funny.
Yesterday, I put in the upside. I was thinking of you. Yesterday on the train, I put in the upside diagonal in MU for earnings.
Okay.
We don't have to. Like I said, I'm just telling Jack, I'm with you. We're here.
Today we have Micron, Nike, FedEx, Lennar, and Carnival. Last night, the only earnings trade I did was Pinduoduo. That's it.
And Pinduoduo was down quite a bit. What is it doing now? I think it's up.
It was like last time I looked, it was up. Pinduoduo up 239.
Yeah.
I mean, I closed my trade for about a scratch today. Like I did not. It was down $10 pre-market, then down $4, then up. I did not. I closed mine. I didn't really make any money in Pinduoduo, even though it's like looks like it was kind of crazy because it was as low as 119.
Yeah, I mean Pinduoduo was down on the day, but it wasn't down a lot. It was only down like $2 or $3.
Well, 119 was $10 lower than here, so it was down to 119. So it was down $5 or $6. I don't know.
Well, they were talking about it this morning. Pre-market, it was only down a couple dollars. So the only reason I know this is I was watching the trades from the research team, and Tom and Kai were having it out about a downside ratio spread, and Tony kept saying if it does what PDD does, down $2, Kai will make more. So that's the only reason pre-market, that's where it was.
Yeah, but then it ended up opening a little. So the open was 122 and then dropped down to 119 because I remember Tom putting his bids in to buy his puts back in PDD, and he's like, "Why aren't my PDD puts getting filled?"
Well, because it's going against you.
It was fine. I mean, it ended up like it's almost unchanged now, but it did look like it was having a bigger move.
It was not even to its expected move for.
No. Yeah. I think what was the expected move? $11 or something like that.
Can we look at the micron diagonal? We do not have to do it, but I do want to look at it. It was cheap yesterday. Cheaper. Let me see.
Okay, so micron diagonal, I think it gets very tricky when we have 1 day to go. Sometimes when I put on the diagonals, I'll go to the 8-day, 15-day if we're not getting anything in the 1 day. But let's take a look.
We were getting, yesterday you get a decent amount. Yeah, so that's not bad.
Expected move, you're getting 163 in the 1 day. And in the 8-day, buying that 104. So you have a $10 wide for $4. Not bad. Not bad. And this is a bullish trade. This is bullish in micron.
Yep.
It's not bad.
Like I said, we do not have to do this. I just wanted to show. I did it yesterday in like preemptive of thinking that if we were going to go up, I would take this off even before earnings. And micron's up a little bit. I mean, it's up $2, and this is up $50.
All right, so let's compare. So here is a $10 wide for $4.
And so
in the diagonal.
And I do like Jack's, very strong opinion on Micron. I like having people that have the strong opinions on things. And Micron has come down quite a bit. So we could do something else where maybe we're selling puts.
Compare it to, so in Pinduoduo, I did this diagonal. I did a diagonal is about the same. It was like $10 or $11 wide, and I paid about $4 for it. Whereas if I just sold puts, that would have been a winner. Mine wasn't a winner, the upside diagonal. Even with it up $2, I don't know that it's much of a winner. So just comparing this to selling puts, how far could we go? You can go the 95 and get $1.50. That's not bad.
It's not bad.
That's not bad.
Now we know, I'm just because it's in the 1 day. Can you scroll down and show me lower strikes in the puts? I just want to show.
You can buy this.
Yeah, like we know it's going to get cheaper if you wanted to buy something. You don't need to, but you know what I mean? We know in the 1 day as they go down, those aren't going to be as, those will lose value.
So I want to see, I just wanted to compare kind of apples to apples as far as risk. So if we were going to pay for something for that diagonal, here's a put spread with $400 in risk. So basically, if micron goes up, we make $1.30. If it goes down, we make $1.30 as long as it doesn't go below 97. So it's like we have a higher probability we can make $133. We have the same risk as the diagonal.
The other thing too,
we have less profit potential.
The other thing I was going to say too is this is Micron. It's got a 56 rank. I do like selling the puts, and I wouldn't mind if this drops down. I'm going to manage it like a naked position. I'm either going to roll the put out in time. Maybe I'll create a zebra. We'll do something with it if it goes down. Where's our break even on that?
So I think it was the 97 put.
So 96.
The crazy thing is Micron has had quite a run in the last week.
You know what's weird
is the right chart. This chart looks strange, doesn't it?
It bucked the trend. Like you were gone and it went and Micron skyrocketed.
Doesn't that chart look kind of strange?
Yeah, but that's the chart. I think for some odd reason, I think my chart looks like this whenever we do it. So Micron still looks down low. When you were zoomed in like that, it looked like it was up at the top of its range.
Right, the zooming in.
But kind of look at those green bars, Jenny. It's very different than what we've seen when you were on vacation. So when you're on vacation, the rest of the market plummeted, and Micron rose like a phoenix from the ashes.
Yeah, so I don't care. I'll do either diagonal or put spread.
Well, I sort of like selling. I mean, don't get me wrong. I love the diagonals. I put the diagonal in, but I sort of in this account, I think we should sell puts. Let's stick with the mechanics.
And I know we do those diagonals because it's like less risk. And so that's why I brought it up and tightened it up to be a similar risk to the diagonal. So we're not taking $1,000 in risk in Micron. And if Micron drops down this low, we'd be out $400 on that diagonal too.
Well, if it drops down to 91, I think the interesting thing here is I don't think it's going to go. If it goes to its expected move, which we cannot be shocked by, we're out $150 here.
Oh, right down to here.
Yes.
Yeah.
If it goes to its expected move, which is non-shocking to any of us because that's what the markets are telling us, we'd be out $150 versus if it goes to, whatever, 90, 94 and a half and we do the diagonal, we're out the full 400.
Now, if Micron's up $9, which is its expected move, and it could, the diagonal would make $500, where this would only make $130, and we'll be like, oh, darn, we only made $130. We could have made $500.
Yeah, but I mean, honestly, we've had too many diagonals go against us. I know this sounds crazy. We're making less, but and risking the same amount. But this is the more conservative trade. Let's ship it. Let's put this to bed.
This is the more conservative trade. That is the more conservative trade. Now, let's see. I'm working it. Sometimes what I will do, like if I do that trade as a more conservative trade, but I want to maybe have a long Micron position, if it goes up and want to like hold it for the run, I will throw in, because they usually are pretty cheap, like maybe go up towards the expected move and put on a very short-term calendar. They're usually cheap. Oh, that's 83 cents. No. Sometimes if you can get them pretty cheap, then it's like, okay, well, if I made money on that put spread and then I have that call for next week if it continues to run.
Yeah, well, we can get back in if it continues to run.
Yeah. All right, so we're working that put spread.
What is the VIX do? I'll look. I just want to see if the vol is totally coming in.
Well, we're only at 12 now.
Yeah, but the VIX is down. VIX is down 23 cents. We're under 20, which I was shocked by.
Yeah. So people aren't nervous about the market continuing to fall. It doesn't appear to be.
Well, as foretold, they said vol would come in today. I can't stop.
Okay. All right. So another position I have open here is CCJ. CCJ, we have a long call that I think we had a short in the money put. We changed it to just a long call, and it's expiring tomorrow. So I think we need to change. We do have to change our CCJ position.
Look at that gift from the gods. We are back to being profitable as of today because it's up 113. So, Jenny, I was saying OKLO I was on Market Watch this morning, just looking at the market headlines, and OKLO had some headlines saying like some positive news in it. So I was very happy to see it's up. Yeah, made me think of you.
Thank you. Yeah, it's up a little bit. I mean, still nowhere near our put spread, which expires tomorrow. I mean, we never closed it because it was full loss. So we after tomorrow, we have nothing there, but let's adjust this. Let's figure out what we want to do with CCJ. Now, CCJ, I know we started with maybe the 55. I feel like we had the 50 or 55 put something and we turned it into a long call.
I'm going to give you CCJ. Yeah. Yes, for sure.
Probably down $500. We're probably down $500 or more.
No, a little bit less, but yes.
So we'll close our long call that acts like stock. And then do we want to just get in with an at the money put or an out of the money put? It's not using much buying power.
You've got a 44 rank, sell premium, sell that put. I'd go to 44 or 45.
Sure. We'll get a little, I'm fine with that. And I want to clarify this. I don't know if you were listening this morning, but Tony said, oh, Liz and Jenny, they like to do the wheel. They like to take the stock on their short put and then sell calls against it. We don't.
No.
We don't.
We can't afford to. The stock is too expensive. We know what a synthetic stock is, so we walk through that. But if you take the stock, can we go through this real quick? Let's for fun, sell the 46 put just because it's easier. So the 46 put, one strike in the money. So this is using $900 for the 46 put. Perfect. This is a synthetic 46 covered call. Long stock, sold that call. We did not take the stock. Now let's go through what would happen if you did take the stock.
if you like even that call that's in the money, if we let that expire and took the stock and we buy 100 shares of stock, that's going to use $2,263. So we've talked about the wheel when we're teaching people. We used to talk about the wheel when people want to do covered calls. Like, hey, if you start with selling puts and you get put the stock, then you can sell a call until keep selling calls until your stock is called away from you and get back in. I mean, it is a way to learn calls and puts, but it's not how we manage our own portfolios.
So I think you're spot on accurate. It's how we explain it. And then we try to say, but there's a better way, because it's conceptually, if you're learning that, you understand buying a stock and selling a call against it. And then you got to learn your synthetics to the puts, but it's less capital effective to be long the stock. We know that. So we always use the synthetic version.
So as Tony this morning was saying, oh, Liz and Jenny, they take the stock and then they sell a call. I was thinking like,
when you hear that, the number is 855-238-2789 or 855-TASTY. Breakthrough.
I might have called or texted him, but whatever. It's a way to, I think that's the best way to learn options. The best way to learn options, find a low price product that you don't care if you own, sell some puts until you get put the stock, take the stock, because then you learn how a put works. And then you have the stock, then you sell some calls, then sell calls against it until your stock is taken away. And then you learn how the calls work. It is the way to, by doing it and watching it, you learn calls and puts. And I think maybe for our boys who, we're teaching them to sell puts and then they don't want them anymore, or we're rolling them or whatever, maybe we need to let them watch what happens. Here it's in the money, watch what's going to happen. Now you're going to get 100 shares. But then it's
and watch your account value go down.
They can't afford the 100 shares of stock.
We need to start chanting Wheel of Fortune. That's why we love it.
Okay, so we find cheap ways to replicate stock, which is why we had this one long call. We're going to close that long call. And if we were to have the stock and selling calls against the stock, we'd be rolling our put. You could still mimic that by selling it in the money put. You certainly could.
Yeah.
But let's.
No, I wanted to be conservative. I just went with the 46 because we were talking about taking the stock. I'd go 45 or 44.
Sure. Let's just do the 45 for 207. So we're selling out our long call. We're selling that put. We're taking in 645 credit. And you can see we're an additional $400, meaning we had $400 in that call. So it's probably $800 or so buying power.
Which isn't bad.
Put, right?
Yeah, that's not bad.
Yeah, 874.
That is not bad at all.
So now that's how we adjusted our CCJ. I don't know that we had anything else to adjust.
No, I don't think so either. I did want to get to Bob's list. I know we went to Bob's list, but MU, Nike, FedEx, Lennar, and CCL. Is there anything else in there? CCL's Carnival, right?
CCL's Carnival. I'm not, I used to be in Carnival and then I stopped trading it because I thought, I trade something I don't like. Like, I don't really care for Carnival cruises. And
the market doesn't either, because this doesn't look like the other ones.
Well, they've all kind of had a fall.
Not like that. I mean, but it's never had the rise that Royal has either.
It did. It was trading. It was like went from 10 to 30. It tripled.
10?
Yeah.
Oh, I guess it did.
It did. So my rocking stopped yesterday. I didn't rock really much at all.
Congratulations. I figured it would stop soon, but that's awesome. That's got to be crazy scary when that happens.
Well, the crazy thing is we know people who've had that rocking motion after getting off a boat and it lasted for months.
Yeah, but not a cruise ship. Cruise ships don't rock as heavily as like a boat. So our friend was on a boat, like your boat. And then she didn't stop rocking, because your boat is definitely like, now we're not talking about your docking ability, but when you can't stand while you're moving. Do you know what I mean? It's like, that's a real rock.
Right.
Yeah.
Yeah. Right. You can't stand while you're moving. Right. Everyone needs to be seated. Too bad they're on what? I was going to say too bad they're on seatbelts, but I guess that would tie you in case the boat flipped over.
That's why they give you the life. That's why we're supposed to be wearing life jackets so you can be popped out of the boat if something happens.
And you'll be fine, floating away. Okay, so Carnival, even at 21, I don't know. I wasn't.
I'm going to sound like Tom. I think I would never buy that. I would not, but I wouldn't get on a Carnival either.
No. So Royal Caribbean. Yeah. See, it fell, but it's making a little bit of a comeback.
Wait, but if you go, just scroll back a little bit in Royal, because it went from 30 to 270.
Oh yeah, Royal had a crazy move.
I mean, it literally did. So right there, it was $30 or $50 or whatever. It had like a bonkers move.
Yeah, Royal Caribbean did have a crazy move. Crazy.
Do they don't have earnings coming up, do they?
They probably do. If the other, not until.
Yeah, not for a while.
Not for a while.
So I don't care to be in CCL. Okay. We can if you want to.
No, what else was on Bob's list? Oh, so Nike.
Nike I'd like to look at. FedEx I'd like to look at. And then JT also wants to look at Lennar.
Lennar, the home builders.
I literally, that when you were gone, I had TP. So sometimes I start, like, we were just doing the show, and you notice I'm just like this.
That's funny. That's funny.
Usually I stand, but today I'm sitting, so I found myself back a little farther. Remind me to sit up. Sit up.
Oh, look at Lennar.
Yeah.
Okay, so Lennar, decent expected move, $7, 76 rank.
Part of me says I don't care that much about this. There's not even 1 million in front of the shares.
I mean, if I did anything in Lennar in the one day, I would get 50 cents and 50 cents and take in $1. You get pretty far. 134 and 110.
It's not bad. I mean, honestly, if you were going to do anything, that's fine. You're looking at 2 10-cent wide markets, though. 50 at 60.
Yeah. Are you surprised you're getting that far? And you're $12 down, $12 up.
So my only apprehension about this, and that's a 15-cent wide market, 45 at 60, that's terrible. My only apprehension with illiquid products is when they move, they move.
Yeah, only 749,000 shares.
It's insane. You've got a K instead of an M. Like, that's not, if they're going to move because there's less players in the game, I feel like it does move farther. So I think Nike and FedEx are going to be two of the other ones we can look at.
Okay, so Nike trading 73. Heard Vanetta on the news. Give some bad news in Nike.
What's the bad news?
Maybe it's right here. Maybe it's in here in the news. News.
Well, just can you paraphrase it for me? What was it?
Here, Nike to post worst revenue fall in 5 years.
They told us this ahead of it? Does this normally happen?
It's what Vanetta said on the news this morning.
I mean, why isn't the stock down more?
I don't know. Yeah, why did they say that before they're coming out with earnings? Like, who's the leak? I don't know.
I don't think that's leaked. I think that you know how they have to give you estimates? So their estimates are saying this. So I think this is going to go up.
So, yeah, Nike to post.
So their estimates are supposed to be really bad, right? So that's what their estimates are. So if they beat those even by a little bit, it'll be good.
Everyone's expecting. Nike's expected to post its steepest revenue decline in nearly 5 years.
Who's the leak? It's pretty funny.
Okay, so in the one day, if everyone's preparing for the worst, do you want to? We can just get $1 with that 68 put.
Yeah, let's do it.
$949 selling at 68 put for $1, 97 cents.
Well, I was just going to go more conservative. I was like, you can even go to the 67 and we'll get $70. Who cares?
Sure, $70 in Nike. That'll buy
out of the way the expected move is all I was trying to think for this.
Okay, there we go. 73 cents.
Beautiful.
That's it. All right.
Who's the lead?
And
now,
FedEx.
That being said, was it ACN only just because it was my old place of employment, Accenture? They had earnings yesterday, and I think they posted really good earnings, and the stock was down.
Oh.
I don't know if it's down now, but
it's down $20.
Yeah, and somebody said they had really good earnings.
Well, in the beginning of the year when we were in a bull market, we did every diagonal to the upside. I mean, I'm not saying, I'm just saying maybe we do every diagonal to the downside.
I'm not saying, I'm just saying. I honestly think selling puts is better because, like you said, Pinduoduo went to the downside, but it didn't go to its expected move. So you kind of changed a little bit. We were getting all these surprises to the upside where we wanted more profit potential.
More profit potential, but I don't know if that's going to happen this round.
Is this considered this round, or is this the tail end?
No, I think this is the end of the old earnings.
Can you do me a favor and go to Lulu? Because Lulu usually wraps it up, in my mind.
March 27th.
Okay, this is the tail. This is the end. It's
next week.
In the Liz barometer, Lulu is the official end.
Okay, did I tell you? So I went into Lulu around the street from our office the other day. There was a full-blown, bulletproof vest, guns, security at the Lulu entrance.
Welcome to Chicago. It's true.
Do you see that at the Oakbrook Lulu?
Like I said, I don't go to Oakbrook. I order everything.
Okay.
I very rarely go shopping these days. I don't know what's happened to me, Jenny. I'm an old person.
Honestly, it made me feel very safe. I walked in, I was like, hello, officer. And then I felt like I could shop, not worry about anything, just shop and
let your stacks of cash fall out of your bag and then just casually pick them up. Sure.
I mean, if that's what has to happen at Lulu, that they have to put armed guards in every store, they're going to have to consolidate and have one big store instead of many little stores.
Oh, yeah. Yeah. But I think a lot of the stores, a lot of the brick and mortar stores in Chicago have been struggling. Okay, so I just went to Twitter, if you don't mind. We got to go back to Marty Stonks. This is hysterical.
Marty Stonks is always hysterical.
He's stopped down.
Oh my goshness. What about Dollar Trees?
Let's go. Let's see Dollar Trees.
Yeah, let's go take a look at Dollar Trees. Liz, I'm going to see. Can you guess what roller coaster this is?
Hulk.
Is it? You're probably right.
Yeah. I'm guessing it's green. I think it's Hulk.
Yeah, I know you're a roller coaster person, so I thought you might know.
And I'm still traumatized by the Hulk. I love all roller coasters, I really do. But so we went to Universal during the pandemic, and on New Year's Day, I got on this at noon. Not a good idea on New Year's Day after you've celebrated with multiple glasses of Prosecco to get on the Hulk. I got off. I was like, oh, I don't know if I can do that again. But yes.
I never thought about that, but probably not a good idea to go to an amusement park the day after a late night of drinking.
It was a terrible idea. Terrible. But yes, I think I'm still traumatized by that. Now, that being said, there was another news story I was looking at this morning. So Disney and Universal. Do you know how to trade Universal? I did not know this.
Oh, I thought we looked at it long ago.
Comcast. It's CMCSA.
I think long ago we figured this out 10 years ago. And then forgot about it.
And so another news story, whatever, just because I get triggered with everything Disney because I do love Disney. But so Disney and Universal, they said, are going head to head these days because Universal's opening their new park in 3 weeks.
Yeah. Yes. So, with what's new with the Mario Land?
Oh, and How to Train Your Dragon.
Okay. So, and I know Disney's building a new ride at where the Muppets used to be in Hollywood Studios. They're building a Monsters, Inc. roller coaster where it's literally, when they get in the elevator and they grab the elevator and then the elevator goes, they're making a roller coaster where you're kind of suspended and it's the roller coaster's holding you from above.
Which I think will be really cool. And I do like Monsters, Inc. But I was sad because I like the Muppets too. I love the Muppet Show.
I do like the Muppets. I'll miss the Muppets. But it looks like a cool roller coaster.
Yeah, it will be cool. They're always.
I know. So I know that if you were there with the kids and the new Universal stuff was open, what would they rather go to?
I think you got to pepper the infield. I think it's yes and yes. You know what I mean? Because when we're there, I think it's great to go. But I think you go to Disney over and over again. I think you go to Universal twice. Do you know what I mean? So once you go, you ride all the rides. It's fun. Like they love I brought all the girls. I brought a gaggle of girls twice. And one time they went to Universal and one time they went to Disney.
I have Harry Potter fans coming. My kids are both bringing people over Memorial Day
If you
weekend.
have Harry Potter fans, you gotta go to Universal.
And I would normally, but I feel like the crowds are going to be out of control because of all the new stuff just opening.
Oh, because you're going in May.
Yeah.
I was going to say, if you go
So like
now,
Memorial Day weekend, I figure the crowds are going to be nuts at all the Universal parks because of all the everything new opening up, which might keep the crowds down at the Disney parks. I don't know.
Well, I think I would go to the old Universal parks because everybody's going to be at the new one because they have such good Harry Potter stuff.
Isn't it all combined?
No, they're separate. Well, you can take the train.
It's a totally new park.
Yeah, you know how Universal has the 2 parks that you can only get to via the train? This is a 3rd location.
Oh, okay. I thought it was still like part of one of the parks. So it's a 3rd park.
It's a 3rd park. It's a 3rd park.
Okay. So then we could go to the Harry Potter stuff.
Yeah, do it. Do it.
Yeah, okay. That's a good idea.
I'll give you all my wands. I got a lot of wands.
Okay, so if you're bullish on the new Universal Park, you could trade it.
Let's do Marty Stonks. Let's go to Marty Stonks first because
Dollar Tree. DLTR.
Because we've got a couple minutes left. We just went down a tangent about what you put up, Marty Stonks, but we're going to jump right back in.
Okay, Dollar Tree earnings next week up. And what does he think about Dollar Tree? He was on the roller coaster. I don't know if he thinks it's going up or down.
This is what he thinks about Dollar Tree.
Woo! Up or down in Dollar Tree?
Do you know what's so funny? Okay. I wish you could call me right now because I want to show what pops up on the screen when you call me because it is. When Jenny calls me, it's her and I on a roller coaster with our arms up.
Oh my gosh.
Do you know that? Do you know that when you call me, that's what your picture is?
No, I don't. Next time I call you, take a snapshot, take a screenshot of it.
I was going to say, call me right now. I'll put it up.
When I call our friend Mandy, it's the Golden Girls song that plays.
Oh God, that's so funny.
Okay, what if he thinks Dollar Tree's on a roller coaster?
Okay, but here's the deal. It's a 75 rank. You've got earnings coming up. What's a new subscriber to do?
Tricky. Did Marty Stonks say he was bullish or bearish? Oh my goshness, what about Dollar Tree?
Oh my goshness, go back to Dollar Tree for 1 second because I don't know if my eyes deceived me.
Wait here. Oh, what about Dollar Tree?
He doesn't really give one way or another. But the market...
And Jack is telling us, I'm in all set of, he's in strangles as I added short calls out of the money for my existing shares. Liz, I took off a trade last week in Micron when it went up 30% overnight.
I have no shame. I like it.
Okay, and so we also, all right, what else did you want to see about Dollar Tree?
No, here, I mean, were my eyes deceiving me or are the markets that wide? Look at the 57 puts, no bid at 146.
That's weird, but those are weeklies. The regular monthlies, they're still wide.
They're wide.
Let's see how many stars does Scott give Dollar Tree?
Let's see, Scott.
3 stars. 3 stars. It's weird. If you think, in my opinion, if you think something's gonna move wildly, you have to pick a direction to trade it. I think, like, in my opinion, if you think something's not going to move, great, sell strangles. If you think it falls high, great, sell strangles. But if you think something's going to move wildly, you have to pick a direction. You can't play for a wild move in both directions.
You think you're on a roller coaster? Pick a direction. Kind of agree with you. No, but it was interesting to look at, and we will trade it on earnings probably, but not today, right?
Yeah, right. We'll wait unless we were, there's not much left in the one day for us to do anything. We'd have to wait till next week.
Okay. And then, so can you please do me a favor and go back into Twitter and go top down?
The Hulk and Rip It Rocket are the only coasters capable of giving you concussion and smiles at the same time. Okay. Rip It Rocket. I hate that ride.
I like that one. I like that one better. Well, I'm jarred from the Hulk on New Year's Eve or New Year's Day, but I love Rip Rocket.
I hate Rip Rocket. I think I was there with you and your daughter and your kids, and you guys were like, Rip Rocket's so much fun.
We love it. Well, we're speed junkies. Like, so when you brought my daughter to Universal, and she rode all the roller coasters with your son and his friend, didn't she?
And Aunt Lily and I hung out, and it had
I felt so bad when you brought her, and she's like, "No, I'm gonna go with Logan." I was like, "Stop it."
No, that's fine. I'm not a big roller coaster person, and like Rip Rockets, my head would be shaking. I'd have to go back to the chiropractor.
Have you ever been on it?
Yes, you brought me on that ride. Or Annabelle did. Somebody did. I didn't like it. Okay, what is this? Uncle B2, for later viewing, as foretold, when Tom finally had enough.
It was so funny. Yeah, thank you very much, Uncle B2. As foretold, here it is.
Okay, so we haven't, because the market's been so crazy, we haven't really put on earnings trades lately. So today is the first day where we've got Micron, and did we do any other ones? No, we didn't.
Not for earnings, no. But we did.
We didn't do
close
Lennar.
trades.
And I didn't even look at FedEx.
I mean, SPOOs are coming down a little bit. We're only up 13. The market's kind of coming back a little bit. I don't know I think we're going to maybe stay in this range for the rest of the day.
I know I could have left my SPX Iron Condor on. I chickened out and closed it.
It happens. It happens.
All right, Liz, have a wonderful Red Shirt Thursday.
You too. Good luck with your earnings trades out there with Micron. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
See you tomorrow, everybody. Seriously, call my...
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really Tasty Live until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in a Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits, and you'll understand why a position did what it did. Sometimes the market wins, and sometimes you have a 90% winner, and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
Here's what your buddies mean when they say to catch a falling knife. Ever seen a stock make a huge move lower? And maybe you had the thought, I'm gonna buy that stock. But then it just keeps going down. That's a falling knife. A falling knife is a stock that makes a big move lower and then continues to move lower. The contrarian trader has the idea to go long that stock in the hopes for a bounce, catching that falling knife. But you gotta be careful trying to catch those falling knives.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man Mike Butler, and of course, Katie McGarrigle in the house with me today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day gets spent with my buddies, Mike and Katie. Katie, how are you?
I'm doing well. How are you?
Amazing.
I'm ready to burn my winter clothes, but otherwise I'm doing well.
Can't do that yet.
Can't.
Snow.
Yeah.
Today was kind of crazy.
Trash.
I literally, the other day I was walking outside in shorts and a t-shirt, and now today was just trudging through slush.
Yeah.
Mm-hmm.
Yeah.
Very odd.
Very over it.
Yeah.
But no, I'm good. Yesterday I went on the Options Bootcamp podcast with Mark Longo and Dan Pastorelli. So I'll drop that in the chat. We talked about futures options.
Love that.
It was fun.
Look at you.
It was a good time.
It is.
I know Mikey was on recently.
Yep.
Nikki, I'm sure you're going to be recruited one of these days.
I'm just, I'm the last call.
No, you're.
They're like, oh, we need to fill in. Just give me something. Give me something.
No, like that means you're actually like the true A-list.
No.
Yeah, like you don't have to show up at the beginning of the red carpet. You show up at the end, right before the show's gonna start.
I appreciate that, but my lineage has put me as the
Put a black mark on your.
Yes. I can't be the guy. Can't. It's unfortunate, but it's all right.
Yeah.
Everybody needs a bat,
I'm pretty sure this was like a general email that was sent out, and he just didn't respond to it. I think that's what it is.
Probably. That could have been it too.
Yeah.
Yes.
But no, I'm good otherwise. I see we're pulling up some other events and related things. So yeah. We are streaming the Mike, His Friends, and His Whiteboard show coming up in about just a little over a week.
Mm-hmm.
Sign up at tastylive.com/events. That'll be airing on that Saturday morning, March 29th.
And you don't have to watch it live.
You don't have to watch it live. It'd be great if you did.
Yes.
# job security. But.
Right.
Grab a little coffee.
Yeah.
Yeah.
Sit in the morning, just learn about
in your
managing
bathrobe,
options. Yeah.
Pet your dog.
Mm-hmm.
Whatever you got going on.
Yeah.
Yeah, but we're talking about trade management, defense, cost basis reduction, what to consider if you're rolling in futures options. It's a good one.
Yes.
Yeah, it is totally free. You can sign up for it, tastylive.com/events, and it'll hit your inbox on that day if you're not streaming live.
Yeah.
It'd be great.
Yeah. In other news, thank you both for helping me fill out my March Madness bracket this morning.
Yes.
Appreciate your 2 cents.
Yes. Who did you end up going with?
Duke.
She's a dookie.
Yep.
It's in a small tournament. It's the right move.
We'll see how it goes.
Pick one of the big
I mean, I'm fully expecting to just be eliminated, like you said, Mikey, in the next 45 minutes. So.
Isn't it funny how there's so much time that goes into it, and you just do all this stuff, and then within the first game, everyone's just done.
Well, that's why I tapped into you two. I was like, I'm not going to put the mental load to carry this burden on my own.
I appreciate that you think
leverage the experts.
I appreciate that you think we have some sort of leverage over you, like we have like a better insight. You really could flip a coin.
It's true.
And do just as well.
It's just like markets.
Yes.
You know?
There will be upsets. There will be favorites that go on.
Yes.
It's just a matter of picking the correct combination.
What I can say with certainty is that there will be a prepubescent boy at one game crying.
Oh yeah,
with no doubt.
That's one
certainty.
of the that's one of the best things. The camera people that find those people that are crying.
Those poor
so good.
Like boys and girls who are
or just grown ass adults that are just weeping.
Yeah.
Mm-hmm.
Yeah.
The memes are always positive.
Mm-hmm. That's true.
Yes.
Very true. So yeah, go basketball. What's going on in PGA land?
They started this morning.
Okay.
But it's a windy day. So I basically faded all of the people that are teeing off in the afternoon. So we'll see if that strategy works.
Mike gets into his like weatherman.
Yeah, oh yeah.
Yeah, he does that.
Yeah. He's got a wind sock like at the location.
Yeah.
It's a hard course, and the morning wave had like 10-mile-an-hour winds. The afternoon wave has 30-mile-an-hour winds.
Oh boy.
And then tomorrow morning they flip. So the afternoon people go in the morning, they have 30-mile-an-hour winds, and the afternoon people get nothing. So it's a clear advantage if you can play well just in general. But the fact that it's a really hard course makes me lean into the weather wave.
I see.
So
that's a fair assumption to make.
we'll see if it works.
Is as we're sitting there, Mike's explaining the weather patterns to me.
Yeah.
At the end,
Checking the DOP.
I'm like looking at him and I'm like rolling my eyes, and at the end he just goes, "It's really simple." And I'm like,
it really is.
Okay, got it, buddy.
Yeah.
That's great.
Yeah.
You'll see.
It's
You will
really
see.
simple.
It's really simple. It's just wind.
It's as simple as that.
That's it.
Yeah.
That's great.
Yes.
There was some winds yesterday too.
Mm-hmm.
There was a tornado like down by where my parents live.
Really?
In Chicago Heights. Yeah.
Wow.
That's kind of wild.
Traffic yesterday was a debacle.
Yeah.
Took me 40 minutes to go 4 miles.
That's
to like
crazy.
Lincoln Park.
That's crazy.
Yeah.
Insane.
Well,
Just classic Chicago stuff.
Yes.
classic. What else is going on?
Well, I'm trying to close this Japanese yen trade. I had an order working this morning, but it sold off from the highs. So I'm just gonna hold on to that one. But I noticed Baba's down $6. That's nice. So I had the 125 calendar that with the short option expiring today. So I rolled out to the 2-week April 4th cycle for $1 just now.
Nice.
Yeah,
beautiful.
Feels good.
Yeah.
Feels good.
I got assigned some shares of Target.
Nice.
Yes, I did that too.
Yep. So I am just trying to cover that. It is, it's 1 day to expire with, it's the 100 shares and then the long put from that put spread that I had on.
Yes.
So just trying to cover it. Get out of this dog.
As Mikey would say, he would love to see it. This is a hate to see it.
Yeah, you hate to see it.
You hate to see it.
I respect some of the reasoning behind why Target is behaving the way it is behaving.
Yes.
But for my personal position, not the best.
Not the best.
But c'est la vie.
C'est la vie.
For me, I did a couple things. Closed out of Apple. It had the discombobulated position, all inverted, all that stuff. I closed out of it, rolled it to May. I took a small loss on the current position, but really just took advantage of the move we had up this morning. It was up to like 217. We're only at 215 now, so I did that. Just took advantage of that. Rolled up a put spread in Shopify. Palantir was another one. I had just a junky leftover call. It was marked at $1. Closed out of that, put on a new little long delta position there. And then I had this Tempest AI position.
I remember you doing that on the show, I think.
Yes, Nancy Pelosi stock.
Yes.
Yes. So I had an inverted strangle. I closed out of that for like a net $286 loss, rolled to a short put in the same expiration, in the April expiration, because volatility is super, super high there. I basically just changed, but I took off a little bit of delta. I had this inverted position that was basically like a synthetic covered call, short the 60 put and the 50 call. I took that position, closed it, took the loss, and then just sold out the 45 strike put to be a little bit less directionally long. I was like 60 or 70 deltas long. Now I'm 30 deltas long. So it was just kind of like a change in my directional lean in terms of how big the position is from a delta perspective.
Okay.
Just a small little adjustment.
Nice.
Those were my trades today. But E-minis looked like they were going to be down big this morning, then up big this morning. So we've had a little bit of a chop fest. E-minis only up 4 right now. They're basically unchanged here. We've had about an 80, 90 point intraday range here. It's been a little bit of volatility in the last couple sessions. Had J-Pow yesterday, nice little bounce. Today you're getting kind of a chop fest. Tomorrow is option expiration, triple witching, or is it quad witching? Quad witching. Quad. So maybe you just get a little bit of a chop fest for the rest of the week and see what happens next week. NASDAQ completely unchanged. You got the Dow up 115 and the Russell basically unchanged. So really the only thing that's moving is the Dow today. Oil catching a little bit of a bid / CL 67.89 up about $1 here. Volatility futures unchanged now. We got as low as 1920. The VIX itself is at 1996. It got
Great year.
1930. Is it a great year?
96?
Yeah, why 96? I guess bulls.
Yeah.
That's it. Bonds up 11 ticks. They were up almost a full point here. You got gold and silver basically unchanged here. Gold's up $7. It's had some two-sided action. Silver down 21 cents. It's off the lows today. And then Bitcoin getting whacked. Down 1,100 on the futures. Spot down 1,300. It did look like it was going to rally. A little bit of chop. Choppy chop.
Dolly the sheep was cloned in 1996.
There you go.
You were wondering.
Wow.
Dolly.
Hence a good year.
Yeah.
Yeah.
President Bill Clinton elected.
Yeah.
Quite a few other historic things that were maybe not so good.
I think he was trying
leave out.
to piggyback off. Like yesterday, I think volatility was at 1990, and I said, great year, the year I was born, or something like that.
It's an inside thing.
Yeah.
Something like that.
Yeah.
But yeah, love 1996. Also love earnings trades. Micron and Nike both have earnings after the close. FedEx also has earnings after the close.
A Mikey Butler favorite.
Yeah. We love
FedEx.
FedEx trading near lows. Smash. Smash.
Violently long.
Yeah, I might get violently long right now. But yes, we do have some earnings after the close. FedEx, Micron, Nike. If we want to pop over to the slides real quick, we can walk through the trade idea that I have in Micron. If you want to join us on the YouTube channel, we're streaming live. You'll see this video on the homepage of the Tasty Live channel. You can pop in your trade ideas and questions along the right-hand side chat. I've got the Cherry Picks link pinned to the top of the chat. I also have the Micron earnings preview article that I wrote a couple days ago. But Micron, trading near lows. They've posted strong earnings consistently. And I think we might see a little breakout here to the upside. It's been trading in this little channel for quite some time. But just doing a defined risk earnings trade here. I went out to June. I bought the 105 call. The June option was like $150 more than May, and you get 92 days instead of 57. So went out to June, bought that, sold the 1 day 115 call against it for $1.50. And the total cost here is $930 for a 10-point wide diagonal spread with the long option almost 100 days out. So just getting a little more conservative with the time-based long option here and looking for a rally. If we get a rally, could see $300, $400 profit if we go straight to 115 or around there. since we're getting all that extrinsic value premium tomorrow out of the 115 call. But yeah, having the option to go to June allows you to roll from the 1 day to April, from April to May, and then May to June if you really wanted to, if you needed to. But having 2 embedded rolls in there is really nice, and it'll help me reduce basis if MU ends up selling off. That's it.
Beautiful.
115, 105 diagonal.
I have a strangle in Micron, so I'm a little bit neutral / slightly short just based on where my strikes are. I'm short the 90, 110 strangle in the April monthly expiration. So a nice vol crush, a little bit of an up move. Both of us should be okay.
Nice. All right, I'm going to take a look at this and potentially put something on as well.
Beautiful.
Lovely. Also, one last thing about 1996. It's the year that Forensic Files premiered.
Ooh.
Wow. You know?
Very nice.
They didn't know then how much of a hit it would be today.
Truly, how many millennial women would watch it as their comfort show?
Yeah.
Amazing.
All right, Nick, what are you looking at?
So I'm looking at one of the biggest dogs right now. Cannot buy an uptick. Absolutely left for dead. Not a positive thing said or done in sight. Just the peak. Bleh.
Peak bleh.
Tesla.
I think you should trademark that.
Yeah, peak bleh. Bleh. I'm getting some long delta in Tesla. So if you think we got a little bit of a bounce ahead of us here, which I do, I'm long the market. I think we bounce a little bit, get a little relief. Tesla has got to kind of play a little catch up, or at least that's my thought process here. It's trading basically at a low going back to middle of last year. I mean, the stock has come down 50% in 2025. I'm just using round numbers here. It's gotten killed. So I'm looking at a upside crab trade going into May. I'm buying the 250 call. I'm selling 2 of the April 275s. I'm buying 1 of the April 300s. So this is a 25 by 25 crab trade. I would look to get like maybe $300 to $500 out of this would be my best case scenario. I'm not going to be holding it for much more than that. If that happens, and you'd probably see 20-point-ish up move in Tesla maybe over the next like 3 weeks. That would be your $300 to $500 in profit. I would imagine. Max loss on this is $1,200 or $1,205, which is what I got filled at. I just think it's an interesting bounce play if you think there's some upside in the market. I think you can really put that story to any of the big name stocks, Amazon, Nvidia even, which has been kind of the strongest of the group over the last week or so. Apple's getting killed too. I think that's all of these are kind of in play for this assumption. With a little bit lesser volatility, because Tesla usually has a lot of volatility in both directions.
Sure. All right.
Yes.
I'm probably not going to join you, but I understand your logic.
Okay.
It's not unsound.
Thank you.
Of a double negative.
Yes.
Is that considered a double negative?
It's not unsound.
Unsound.
Meaning it's sound.
Yeah.
Yeah.
Basically.
Double.
I kind of like the calendar here even.
You do so.
Like you can do a cheap calendar, like the 300 strike calendar, long May, short April for $400. That would double in price if Tesla got to 300 or close to it.
Yeah.
So yeah, there's a lot of different ways you can play this thing. I think I'm going to do that. I think I'm going to do the 300 calendar.
Okay, there you go.
There you go.
To each his own.
Yeah. Collect $2 in April, buy the 300 in May for $680. I think that's what I'm going to do. Cheap calendar.
Fair enough. All right. Well, I am entering the currency space. This is like the first time in a while I feel like I've had a lot of like individual equity names on. So I was kind of looking for something that would give me a little bit of broader global exposure, if you will. And of course, with yesterday's Fed announcement, with just all the data that's kind of coming out and everything you're saying in terms of like it being a Friday that's kind of full of quite a bit of trading activity. This one jumped out to me. So I am nibbling a little bit long on the Australian dollar via the micro Aussie dollar futures. So that's /M6A. They come in at 1/10 the size of the major contract. So the current notional value on the majors is what, $63,000? So taking that, dividing it by 10, only controlling about $6,300 in notional value. And then when you roll that into the actual buying power on these products, they're $150 per contract. So, right, I mean, like you alluded to just now. So you can ladder into these if you have a higher risk tolerance. If you're new to these, you can certainly stick with one just to kind of see how the price action goes. But, you know, the currencies all fluctuate based on what is going on in terms of the strength and performance of the US dollar. And so I'm just nibbling a teeny tiny bit long here. I got filled on this at 62.93. Like I mentioned, you can, you know, do a couple contracts at once. You can ladder in at lower prices to kind of enhance your cost basis and profit levels. But because these are $150 in buying power, like my smaller rule of thumb is like, okay, what's 50% of that? Like that would be a home run in terms of profit on this. So $75 would be great. So of course, then you could take that and multiply it for however many contracts you have. So just kind of looking for a little bit of a bounce here, as you can kind of see by the chart that I included in this slide. We are kind of trading on the lower end of the range. I mean, we've been in this 62 to 64 level for all of 2025, but I'm hoping that we see a little bit of strength return to the Australian dollar. And again, because this is not the major contract, there is still the 23-hour access, but it's something that I feel like I can typically hold overnight doing like a swing trade where I'm holding it for a couple days rather than having to like flatten this position at the end of the day because the exposure is just too much for me going into like an overnight session.
I like it.
Yep.
I followed you.
Cool.
Same.
All the currencies have been kind of volatile.
Yeah,
Like
definitely.
if you look at like the euro, I mean the euro is back to almost $1.10. It was $1.10 yesterday. The Canadian dollar I haven't looked at recently. I guess it's still been chopping around. 6B, which is British pound, is near the higher end of where it's been trading. So definitely some volatility in that space. I mean, just looking at the dollar itself, the dollar has come down very, very significantly over the, you know, since the start of the year. So
yeah,
interesting trade with the Aussie not participating.
Yeah. And I mean, if you wanted to look at the futures options in /6A, they're about 2 or 3 ticks wide right now. So just keep that in mind if you're doing any type of defined risk spread. Your difference between your mid price and your natural price is going to widen as you add more legs. So I would still say, you know, liquid enough to participate in, but just be choosy on your entry price so that you're not overpaying or chasing something that maybe ultimately ends up shifting your risk-reward ratio in an unfavorable way.
And this is actually a good segue because I want to mention the Swiss franc is also available on the platform. I did not know this. It does not have options. I don't think there's a micro to it. But if you are looking to trade the Swiss franc, we were talking about FX with Thomas on Tuesday for Thomas Tuesdays, formerly Westwater Wednesdays.
Yes.
And I asked him because, you know, like we're working on Tasty FX and we got all sorts of stuff, you know, coming down the pipeline there. I was asking him, you know, what's the kind of the craziest currency or what's one that's like a interesting one to trade, and he mentioned the Swiss franc.
Yeah. That brings me back to my early Pete days, talking about that.
Really?
Yeah.
What's the story? What's your thoughts?
It's tough to remember, but I think just because like the Swiss franc and Switzerland being such like a neutral place. Like it's kind of almost used as like a base currency.
Okay.
I could be totally botching this, so take all of this with a bucket of salt. But
A bucket of salt.
yeah, not even a grain.
Wow.
Yeah, a bucket. But in other news, I wanted to also mention some other things that have dropped. We also Tasty Trade also just rolled out some more crypto coins that they're supporting. So if you head to the crypto watch list, you'll see
it's growing.
There have been quite a few that have been added in the last 2 or 3 weeks. But as of this morning, there's now APT, AVAX, and Pepe, PEPE.
Beautiful.
On top of the other ones.
Beautiful.
Pepe, my guy. There's also Brent Crude.
Yes,
BZ.
Yes, BZ.
BZ.
Yeah.
And
Easy BZ.
PL.
Yes.
Which is platinum. Big contract.
Ooh.
Yeah.
Big boy contract.
Yeah, these are big contracts, but good
No
to
options,
have.
But
the availability is nice.
Yes.
For sure.
Furthermore, I know there has been chatter of the CMEs. I think it's their Solana futures.
ooh, yeah.
They are not on Tasty Trade right now. I think, it all comes down to liquidity, right? Like we prioritize both at Tasty Live and Tasty Trade liquid tradable products. So I think as the volume ticks up in there, that might be something that could be added, but waiting for a little bit more participation there before turning it on in the platform.
I forget the notionals. Ryan mentioned them. I know one was 50. I think that was the big contract.
Yeah, I will have to check out these
remember.
specs.
Yes. But once they're more readily available in liquid, we'll talk about them.
Yeah.
For sure.
Yep. Absolutely.
Very good.
Lovely. All right. That is it for the trade ideas.
Mm-hmm.
Good stuff.
Trades.
Again, if you want to join us on the YouTube channel, we're streaming live. You can pop in your trade ideas along the right-hand side chat. I'm getting to the first one. Robert Denseglio. Sorry I got you into Natty Guess early yesterday, but it's down 20 cents today. Take a quick $50, or are you holding it?
Ooh, I was looking at this.
I've been in this thing.
I've scalped out into some of the down moves, but I put one on yesterday, and so I'm in a better spot now.
Yeah.
But I was looking at this today, along with my crude position, which I have a short put spread. I've been trying to work that for a 50 cent or for a $100 winner on that one, so I'm still working that. But I'm still holding this natty gas position as long as Mr. Westwater stays on the same side of the trade.
That's your tell?
Diamond hands.
All right. Yeah, I've got on what do I have on? I've got the 390, 380 short call spread expiring in 6 days. So let's keep this weakness going.
Yeah, I have the 3635 long put spread, 6 days to go. So
Okay. Yeah, so we all need this thing to collapse.
This. We need this to happen 2 more times.
Yes, please.
This move twice more.
Yeah.
And we'll be
6% corrections day over day.
Yeah.
I'll take it.
No problem. It's
hey,
simple, as Mike would say.
It is simple.
Simple.
Wizard Katie, any guesses how to say which in Spanish?
I think I actually do know this. I think there's a couple ways you can say it, but I think like the one that's most common is like bruja. Bruja sounds right.
Okay.
Yes.
That sounds right.
Yeah, but I think like, there's sorcerer too, or like magician. I think bruja is right.
Ella es la bruja.
Yeah. I could be totally wrong, and maybe I'm swearing in Spanish right now.
Who knows?
Hey, it's gonna be okay.
Yeah.
Either way.
But, I mean, actually, speaking of just video gaming, the new Assassin's Creed is coming out soon.
Ooh.
So I have to hurry up and get through my, Viking KD era so that I can enter my Ninja KD era.
Ooh, ninja. That could be fun.
It could be really fun.
Maybe with like some throwing stars.
It'd be sick.
Yeah.
They do really good with those.
Yeah.
Yeah. But, that's been a lot of my life lately, and I'm really exciting and fun.
As long as it's cold, what else are you gonna do?
Yeah.
You know what I'm saying?
Yeah. You're absolutely right about that.
Aaron, looking at gold, would you short GLD via diagonal spread 280, 275 May, April? I certainly would. Gold fluttering at the highs And yeah, this is a 16% IV product. So diagonal spreads are right up our alley here because you're able to get into them pretty cheap. The lower the IV is in a product, the less expensive it is to buy delta, is the way to think about it.
What you gonna do?
Well, I'm already in the gold futures position, which I'm holding on for dear life. I have the 2940, 2930, 2920 free butterfly. 6 days to go. So I need a 100-point sell-off here. But if it happens, it'll be a nice trade. Well,
GLD long put.
Yeah. I mean, I like it.
Do a cheapie. Do like.
That's like a little devil on your shoulder of you, Nick.
No,
Yeah.
I mean,
Do
come
it.
on. The
Buy
people,
it.
The people want the risk on.
280, 275.
Yeah, dude, 280, 275, $3.72.
I guess it is cheap. Yeah, it is cheap.
You
Yeah, let's
can't
do it.
put $300 out there.
Yeah,
you
let's do it.
Little Johnny loser.
That is a little
That
devil on
is-
my
I
shoulder.
mean, yeah.
Wow.
I have a deep in the money broke-wing butterfly too that unfortunately I did not turn into a free butterfly.
All right, I'm rounding.
Shame.
I have it on for 375, or I'm working it for 375.
There you
The exact setup, Aaron. So
I'm proud
I'm
of
in.
you.
Thank you.
I'm proud of you.
Thank you. What are your recommendations for a Nike earnings trade? Well,
NKE.
first of all, earnings trades are extremely volatile, but I did write an earnings preview. I'll put it in the YouTube chat here. This is the Spark Notes version. They're trading at lows. This is, I think, one thing that I didn't like about the last earnings call is they missed earnings and they said we'll do better next time. Like, you just cannot say that. You're Nike. Like, you can't be missing earnings. But then again, this is a tough economy we're in. So I don't know. I would rather be bullish on Micron than Nike here, but I could see Nike posting if they have a good number and they say nice things, then you could see it rally from lows simply because it's Nike and it's trading at lows. But yeah, it's a tough one. The premium's there. $5 expected move, $72 stock, and not too much premium in the back months. You gonna take a little shot here?
Yeah, I am. I'm gonna buy May the 75 call, sell the 77.5 in the weekly, the one for tomorrow. 232 is what I got filled at. Small little upside shot. If you get a move to like 76, 77, you probably make like $100 into the close tomorrow. But you got a lot of flexibility. You could roll it out to April and continue with this cheapie.
Yeah, I like it.
I mean, how much lower can it go? It's Nike.
That's the question. It's always the question.
Now that you said it.
Yeah, now that
AOD.
I put the kibosh on it.
Yeah.
But then again, it's like when I think about like the market we're in, the market's had a big correction. Yeah. What are the stocks that you might want to get into if you're looking for like household names? For me, it's Target, Nike, Starbucks, those kind of companies that are just getting demolished, especially for longer term trades or investments.
Yeah, gotta nibble.
All right, I'll jump in.
There you go.
A small one,
What the
like
hey?
you put $100 in risk overnight, no big deal.
What the? All right, I got filled at the exact same price as you.
Beautiful.
Look at that. First Solar, 365 leap put at 100. Sell short-term calls against it. So wait, are you buying the call and then selling call against it, or what are you doing here? Buying a leap put? I think it's a leap call.
At the 130?
At the 100.
At the 100. And then selling, yeah, poor man's cover call type position.
Yeah, so I think it's you buy the call at 100, 365 days out exactly.
Yeah.
And then you sell near-term premium against it. Yeah, I think it's fine.
I don't hate that. I actually had an interesting back and forth email string with somebody that had an HSA account where they could only buy options. Can't do spreads, can't sell options.
Interesting.
You can literally only just buy options. And I was like, well, you can take shots if you want to take shots. And then we got to, it was a small one. It was like 10K or something like that. And I was like, the way I would look at this is I would say, you know what? I want to take this 10K and use it as capitally efficiently as possible. Like I used the example of Apple where I was saying, you know what? If you were to buy shares of Apple with 10K,
Right.
you can only buy, 50 shares here. You can get 100 shares of exposure.
Right.
With a January leap option, you buy the 150 strike, or if you don't mind paying a little bit of extrinsic value, the 170 strike. And, instead of having 40 shares or 50 shares of Apple, you could have 100 shares of Apple and 100 shares of NVIDIA exposure over the next year. That's how I would approach the situation. So that's just what I came to thinking of that position.
Yeah, for sure. Mikey, did you ever have an earring?
I wanted one really badly.
You didn't?
I wanted an earring up here.
You did the fake ones. You did the Claire's.
I know I didn't do. No
yeah,
fake.
You did.
No fake.
You
No, I
did the
didn't.
Claire's. You did the Claire's magnets.
No.
You did.
I wanted-
You had to. You were a
You wanted a
skater.
cartilage?
I wanted the cartilage, and then I wanted the eyebrow earring.
Eyebrow?
Yeah.
Okay.
I was deep in the emo phase.
Oh, yeah.
Yeah,
well, you had the hair, too. Yep.
Yeah, listening to Paris in Flames in between every period, walking to my next class.
Yeah.
With my my sweatband on,
Yeah.
Yeah.
Nick, were you an earring boy? Huh? No?
No.
Somebody just asked, it looked, I guess in your event picture, Mikey, it said it looked like you were sporting an earring.
Yeah.
If only.
I think we tried to pierce my ear with a pin once. We just put it under the fire, and then it was like wasn't working.
Yeah. Girls used to do that stuff all the time.
Yeah. Naturally.
Yeah. Still do.
Yeah.
Two of our friends that both of you know, I was there when they did it, like very recently.
Oh.
Like in the last 2 years.
A little quarter life crisis.
Yeah. Why not?
Love to hear it. Sean rolled the Carvana broken wing butterfly from Tuesday into a free put butterfly today, I assume.
Nice.
Up $3 on it now with it going back down, and you freed up the buying power, and you have no risk. So there you go. You love to see it.
That's why we do those trades.
Yeah, broken butterflies are nice when you convert them to free flies because you're able to basically leg into a symmetrical butterfly for a credit, where otherwise you would definitely be paying a debit. Brad, what did I do with my corn position? I have done nothing, so you've missed nothing. I have the 490 long call in April, 36 days out, and I have the 505 short call expiring today. So let's take a look at this. Can I do anything? Let's see. 490, 500. I guess I could. I could roll into the 500 vertical spread or the 505 vertical spread, pick up $150. I'm actually make this wider. 510. Yeah, let's do the 510. So I'll turn into a vertical spread, the 490, 510, pick up $113 into this rally.
There you go. I was giggling because I just saw the picture your dad posted of Tom literally like 2 inches from his screen.
Oh,
Twitter.
Yeah.
Yeah, I just saw that and I started laughing.
The eyeballs, man.
He's literally like this.
Perfect vision, perfect hearing. That's what he told me yesterday.
Oh, yeah.
Vision.
Perfect human.
The vision 2010, so he's a little off, but hearing perfect.
Yeah.
Perfect.
You're a pin drop in the night.
Yes.
Pin drop in the night. Brian McBroom's a dookie.
Okay.
Good luck.
Shout out.
Good luck to you.
Let's. I did feel, I wanted to rep my team. I went to U of I, but just couldn't make it.
I mean, he's a
Jayhawk.
He's a non-Jayhawk this time around.
Yeah, I'm a non-Illini. I had them winning one game, maybe two, but
Yeah. The Jayhawks were used to greatness, and we had what should have been a great team, and they just,
they just
weren't there. They
Yeah.
they weren't in it. And so, they kind of spoiled me this year.
There you go.
Spoiled my love.
It's unfortunate.
Okay.
But you still get those calls from those poor kids that are like, would you like to donate?
Yeah.
Oh, yeah.
You know?
Yeah, it's terrible.
I go, no habla inglés.
Oh, my God. Yeah.
Like, hey, we know you graduated, and you also were like graduating during a financial crisis, but any chance you want to throw a couple dollars our way?
Absolutely not. Yeah, DePaul does the same thing. They called me once, and it was very obvious that it was a kid calling me, and they were in a sales class.
Yeah.
And he was like, "Hey, I'm calling. We're looking for $500 or something." And I'm like, "Absolutely not." And then he's like, "Well, how about 150?" And he was just started lowballing me, and I'm like, "That's even worse. No, absolutely not. Stop calling me."
You've already gotten all my tuition.
Yeah, I think tuition is enough.
You gouged me enough.
Yeah.
Yeah. Maybe once we, print money in Pepe, we'll have a different conversation for these schools.
Right.
But not now.
I don't think it's just not a good tactic. Go after the people that have created multi-million-dollar companies and get their donations. Hello. Don't go after
There's a $1 billion company here that was
them on the horn.
Yeah. But don't come after the kid that just graduated that, at that time was
all student loans.
Yeah. Has student loans, paying rent, not making anything, you can't do that.
Yeah.
Baba has whipsawed me badly, basically going the wrong way every time I make a move.
Yeah, welcome to trading Chinese stocks. That is my thoughts as well.
I saw Baba going higher, and I was like, there's no way this can be sustained, and then it just kept going higher and higher and higher. But, yeah, that's why in these stocks that are just so crazy volatile with so much just randomness to them, got to stay small, defined risk. But I'm liking this sell-off today, although it seems like it's not good for you. Scramble everything.
Also just added SUI crypto to the platform.
Ooh.
Literally fresh off the presses.
Beautiful.
SUI.
Oh.
Yeah. Yep. All right, who is next?
David Gilmore.
I have a put credit ratio spread with a single put as a hedge for a net credit. Current price is above the original credit. Should I close for additional profit or roll something?
So if you have a put ratio spread that is losing value, it likely means that the stock is rallying. So what you could do is you could turn that ratio spread into a butterfly if you can do it. And then that would remove your monetary risk, free up the buying power. It's the same thing as turning a broke wing butterfly into a free butterfly.
Right.
If your credit is high enough to where you can buy a symmetrical put further out of the money, so if you have a 10-point wide ratio spread, if you go 10 points further down from your short strikes and you can buy that option for a debit that is less than your total credit, you can create a free butterfly and have a net credit and free up all that capital. So that's what I would do if you can do it.
I can smell pizza.
I can too, yeah.
Which one is it today? Bob's?
Don't.
I don't know. It smells like Bob's.
It smells like Bob's.
Let's see. Tesla's going to $10. No one believes that Elon's nonsense anymore. Yeah, I mean, he's definitely flown off the rails a little bit. A lot of bit. I
don't know. I like the peak insanity.
For trading,
I've been telling Chris that too, of that's why I'm leaning bullish, just the market, because everything, it seems it couldn't get any worse.
You keep saying stuff that's just putting us in a tough spot when
I'm
things
trying.
Like when the narrator's like, it did get worse.
Yeah.
You know what I mean?
Newsflash, it did get worse.
It did get worse. You might be wondering how I found myself here.
Yeah, exactly.
Buy an M6E contract on this dip? Yeah, I mean, M6E, M6A, M6J.
I don't know if I could do this on this high.
Yeah, M6E's definitely done better than some of the other ones.
Yeah.
But yeah, I mean, it's the same kind of story.
Yeah.
But I mean, again, $287 in buying power. So if you do want to nibble and that aligns with your risk tolerance, you certainly could. But
I will say, we mentioned this with Thomas because I think I was asking him what was the most volatile currency, and I think he said the Swiss franc. And we were looking at the euro. I mean, the euro has like 7% implied volatility or something like that. If we look at it at the big boy contract, options, it's like 7.7% implied volatility. The move that we've had from $1.05 to $1.10, that's a years long move
right.
at 7% implied volatility. So it might not seem like a huge move. It really is in just a week. So
fair enough.
That's another tough reason for me to get long.
To nibble long here.
Yeah.
Yeah. But like you're saying, like if you have a time horizon that fits with that, like maybe you are trying to flatten out by the end of the day because you think it's gonna, rally a little bit. Sure.
Yes.
It just kind of depends on when you're planning to cover.
Ruben, SPX May 2nd, Iron Condor, 5,500, 5,800 shorts, 50 points wide.
May 2nd.
Why is the credit so high?
5,500.
5,800 shorts, and then 50 points wide.
Okay.
Credit's $3,100. Max loss is $1,800. So the reason why the credit is higher than the risk is because you are well within the expected move for that cycle.
Yeah.
So the expected move for that cycle is 260 points on either side. You are inside of that on both sides. So this is it's going to feel like a butterfly type situation where it's not going to move too much until you get closer to expiration. But if you're trying to get $200 out of this, sure. You could get that if you really need like chop like this for a couple of weeks and an IV crush. That would probably get you $200, but it's still a narrow spread relative to the expected move. So you might need to wait a little bit longer, but yeah, I mean you could see this decay. An easy way to look at it is just line up the same strikes in the 35-day cycle or the 30-day cycle and see what it's trading for. And that kind of synthesizes the passage of time. So if you look at these same strikes in the April 17th AM cycle, I can set it up real quick. 5,500, 5,450.
Yeah, they don't have the
5,800.
Yeah, after a week, you'd be looking at like
$400.
$1.
Yeah.
So each week is probably worth $1.
Yeah, the 27-day is trading for $2,700. So that's $400 with synthesizing 14 days, 15 days of time passing.
But you'll see the pop will tell you everything. When you have a 37% probability, it's not going to move all that much. It's a coin flip trade at expiration. So the movements day to day are not going to be significant for the position in terms of the change in the value.
Carvana diagonal spread. Sell the May 150, buy the June 140.
Sell the May 150, buy the June 140. So you want to do this reversed.
Yeah, we don't typically like the reversed.
Yeah. And the biggest issue here is just the buying power. I mean, you're holding $1,000 hostage for 50 days. I get it. You buy a free put if this stays out of the money, but you make nothing on an upside move. I mean, it's just not the trade I enjoy. And you can see, I mean, like, if we flip this over to the Theo here, you might make 30, 40, $50, but
yeah.
Sure.
But if you flipped it and reversed it, and you did
Missy Elliott.
Yeah, if you
Missy Ellioted it.
If you Missy Elliott did it, you buy the 150 in May, sell the 140 in April. You're using less buying power. You have more risk on a neutral move, but now you can make hundreds of dollars on a down move.
Yeah, and the biggest problem here is your long vol too. So, if you're if you're looking at this and you're thinking, oh, I'm just going to take time out of this equation and, you know, my long put will basically stay flat and this one will decay because this has like slightly positive theta, you're probably going to see volatility contract in June, especially if the stock goes up. Mm-hmm. And this is a stock that has significant call skew too. So when you get that up move, this falls much further off the distribution, the expected, you know, move here. So it's just a tough trade, these sort of setups.
Yeah.
I get it, you know, I can get a free put out of this, but a lot of things have to like work in your favor for that to be the case.
Air Age was looking at a short leap put earlier in First Solar.
Oh.
So sure, I mean, the short put will have more delta and more premium if you're selling short calls against it that are near term, but you still have undefined risk to the upside.
Mm-hmm.
I would rather, if you're bullish, I would rather just buy the call and then sell calls against it. So you have no risk to the upside.
Yeah, you're margined on both options too.
Yeah.
And the put's just not going to move all that much.
When a short put's in the money and you're at 28 days, it's tougher to roll for credit. Does it make sense to close it for a loss before getting assigned? Getting assigned and having a deep in the money put is the same trade, so there's no difference there. But if you can't roll for a significant extrinsic value credit, I think it makes sense to take the shares if you want to stay in the trade and then sell a call against it near your break even, or wait until the stock hopefully rallies and then sell a call. For ELF, April 75 short put.
But this isn't.
It's not too bad.
Yeah, you're getting $1 to roll it forward, $1 and change.
Yeah.
I mean,
would just roll it forward then.
You're
Yeah.
probably not going to get filled at 143, but yeah, it's just a matter of adjusting the price.
Mm-hmm.
Yeah, this is still plenty of extrinsic value.
Yeah.
Shopify 8110 strangle in April, getting away from me. Roll early or sit tight.
8110. I mean, you're still right there.
Yeah, you're still right there. Still out of the money.
Yeah. Could roll it up to 90, collect $1, flatten out. You know, you pick up 12 deltas, cut your delta by a third ish.
Mm-hmm.
Yeah, that's a tough one.
I know we don't buy naked calls normally, but hypothetically, if we did, what delta are we looking at?
You know, like our diagonal spreads.
Yeah.
40 delta. I mean, I just don't. There's always a reason. There's always a benefit, I think, to sell the premium too.
Yeah.
The 40-20, and you get the best of both worlds.
Yeah.
Like if you have some hunch about some stock, go for it. But like if you're just buying calls just to buy calls,
yeah,
I think doing the diagonal spread, the benefit of it hedging you is better than
the small percent chance.
The small percent chance that you get a
big move.
2 or 3 sigma move to the upside.
Right.
Sigma. I think that's the first time I ever heard you say sigma.
That's that Kansas education.
Fellow kids.
The Six Sigma system.
Gosh.
But yeah, you get what you pay for with long options. So I would say nothing that's outside of the expected move, because those even if you get the rally, aren't going to move that much. Like you want to have a delta within the expected move, and the longer term you go, the less implied volatility premium you're paying for, and the more time value you're paying for. So I always like to go, if I'm buying a naked call, it's like 60, 70, 80, 90 days or further. It's not anything near term. What was your trading style before Tasty Trade? My trading style was zero.
Yeah, none.
Zero, yeah.
Yeah.
My trading style, I've told this story before, but my only experience with quote unquote trading was in 6th grade when I was in some like program, and the extra thing we did was look at stock prices in the newspaper and buy shares and then look at it week over week. But yeah, we all started here relatively young and poor.
Yeah, yeah.
We didn't have money to trade.
Now look at us, old and poor.
Yeah. Take that.
My first trade was I bought a call in Twitter, and the next day it like announced something, and it had the biggest single day move in the history of Twitter, and I was like, this is so simple. This is it. Yeah.
Why not?
Yeah. We all basically learned to trade here, though, in all seriousness.
Yeah.
So
Yeah.
probably a better question, and something you definitely can see on like the Rising Star interviews that the team has done over the years is hearing from people who come from different walks of life that did start as just stock traders or totally fundamental traders or only buying out of the money options. So maybe check out some of those. But yeah, we've just been, what does Bane say? And I was born into it.
Yeah.
Born in the darkness.
We were born
molded by it.
Yeah. I think the general, like, everybody starts off as just taking shots.
Yeah.
Like, whether it be just buying stock, meme type stock, or calls. Like, if you're trading options, it's usually just, big up. I want to get as much as possible. I want, you see the big numbers. I think everybody starts that way, or most people start that way.
Yeah.
Which usually doesn't end well.
Yeah. And then they see
It usually
other
starts
pastures.
it starts like that, where you catch one and you're just completely lucky, but you think you know something.
Yeah. You're like, I took the limitless pill.
Yes, exactly. Like, this is so easy. And then instead of doing one contract, now you're doing 10 on your next idea, and that goes to 0, and you're like, shoot.
Yeah.
Everybody learns that lesson.
Oh, yeah. Andreas, on your general rule of profit taking, 50%, et cetera, does it also apply on covered calls? Do you recommend selling higher delta covered calls in general in this quite volatile market? There's a lot of different factors, but if you have a covered call setup, you don't have upside risk. So you can hold on to that short call to get 80, 90% of profit, but the closer you are to max profit, the more you're not making anything on it and you're just capping your upside. So that sort of concept still applies. I would search for offensively rolling covered calls on tastylive. I'll drop the video to that in the YouTube chat, but that explains how you can, before the call goes in the money, if you're selling a call closer to the stock price, if you get the move up, you can buy back your short call, roll it out to the next month, and move the strike up to offensively roll to give your shares more potential profit space. So that's what I like to do. But yeah, if your stock has call skew, then yeah, I would absolutely move the call further out of the money because you're taking advantage of that call skew the further away you are from the stock price.
Right.
It?
I think that's it.
Oh.
Good.
Yeah.
Cool. Somebody asked, when are our kids joining TT? Do we give off parent vibes, you guys?
No.
Because none of us are parents that we know about.
True.
Waiting for my little brother.
Oh yeah, Vinny. Yeah, Vinny's the next child
Vinny,
to
Nikki,
join the
Tony.
dynasty.
All the Guidos in here.
Yeah. All the Italian horns.
Yeah. As many as possible.
Maybe we need like a Tasty Trade co-branded Italian horn.
That'd be wild.
Batista collection.
That'd be wild.
Yeah, it'll be the
limited drop.
Yeah, the cherries will be the 2 balls, and then you get the horn. It'll be perfect.
Hey, we could be onto something. All right, let's mock it up in Adobe after this. All right. Anywho, that wraps up this edition of Options Trading Concepts Live. If you want to see anything in future episodes, just tweet at us. I'm at Trader Katie. Mike is at Trader Mikey B. Nick is at Trader Nicky Bat. Don't forget to head over to tastylive.com/events and check out our digital collectible dropping on March 29th. So that's next Saturday. In the meantime, good luck, good trading. Go golf, go basketball. Peace.
Go Houston.
Unders.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
I'm just gonna wait for the stock to dip, then I'm a buyer. Buying into weakness is a phrase used to describe the action of getting long a stock into a down move. It's a contrarian trade. Most people want to buy what's hot, the stuff making huge upside moves, the chart line moving up and to the right. Nobody wants the stock at lows. But it's hard to buy high and sell higher, rather than buy low and sell high. There is a phrase for this. When the time comes to buy, you won't want to.
We are back. It is Thursday, March 20th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater, back for a daily double. Thomas, it's appropriate that we get you again because we can bookend the FOMC meeting now.
Yeah, right. It's good to be back. It's a little pop in the market, not as much as I wanted to get long, but still staying out of equities.
Equities have been a tough trade today. Overnight, we were up big. And then European markets came online. And I think one of the ideas that we've been kicking around here and just discussing, are we facing a new era in which there is another alternative compared to U.S. stocks? People are selling the Mag 7 names, buying European defense, German steel makers, what have you. And sure enough, when Europe comes online today, U.S. equity markets are slammed lower. We get some levity here in the U.S. session, but the gains have disappeared once more as we turn to the slides. And we're going to discuss this March FOMC fallout here today. Net, Thomas, it feels like the market is grappling with two ideas. On one hand, tariffs could be transitory. Oh, that's one of the Fed's favorite phrases. We know that they love to use the word transitory, and their recent history with the word may leave something to be desired. But the reality is that the Fed's own models, as we've discussed, stipulate that a tariff will be a one-time price adjustment. And while it embeds structural inflation, that's not really their cause of concern. Their cause of concern is the decline in real economic output that occurs thereafter. So what's a Federal Reserve to do? Well, right now they tell us it's not in the data yet. We can't do much of anything. On one hand, I suppose that's a good piece of information, Mr. Westwater, because, hey, we don't need an emergency rate cut. As it goes, the market is thinking that the first one arrives in June still. The next meeting that we have in May is producing about a 15% chance. And that's effectively where we were at the start of this week. There are still maybe, we'll call it 2-3 more cuts priced in for this year. There may be another additional one for next year. So on balance, the market's perception of what the Fed's going to do isn't necessarily all that different from where we were ahead of the Fed meeting yesterday. That's my perception. What's your perception on how the market's responded here, at least in the rates pricing channel?
It wasn't enough for the market. You know, the SEP showed lower growth, slightly higher inflation. I think it just wasn't enough for the market. You know, it wasn't enough to spark some enthusiasm. It was very short-lived, people trying to speculate on the move right away. Like you said, Europe, we sold off. And now we're trading lower. So it's we need another catalyst that's going to revive something. So something has to change from the current course for an equity market revival.
Something has to change. You know, there's the duality of this. Are we watching a Fed fall behind the curve? Is that the problem? Or is the Fed telling us, no, the market, you're just overreacting. Everything's fine still. The data, don't worry about the data. Stocks here are zigzagging today after this Fed meeting. S&P 500, perfect-looking doji candle, didn't move above yesterday's high or below yesterday's low. We're bouncing right in between those 5, 13 EMAs. I suppose that's something to talk about. 35.3 IVR. So this feels like we're stuck. But this is also a day where we have expiration. We have quad witching coming tomorrow. So expecting a lot of sideways chop isn't necessarily, unforeseen. The structure is looking a little bit better. So yesterday I was holding that short put spread in ES going into the FOMC meeting. I'm still holding it now, Thomas. Obviously, I'd like a little bit more follow through to the upside. But it feels like there's enough here to think that maybe a short-term low is in. I can't say I feel uber bullish about it, though.
Yeah, same with me. The only position I have, and I think I'm going to stay away from ES and NQ and just trade individual names right now. The only thing I have on in the equity market right now is a long call spread. NVIDIA hasn't really done much over the past week for the trade. I'm going to continue to sit on it, but I'm trading bonds, commodities, metals. I'm staying out of the equity market for now.
The technical structure in the NASDAQ is what interests me, particularly on this lower term time frame. When you and I were speaking yesterday, we talked about how in an ideal world, you get a NASDAQ that punches through 20K. You can get up into like 20,000, 200, 250, really just push through the former swing lows that we had on March 7th, clear out some of the swing highs that we've seen here on the 17th and again yesterday on the 19th. And we haven't been able to do that. And so from a technician's perspective, unless we are above 20,000, 200, 250, we want to be a little bit generous here, see a little bit of a further push higher through the actual closing lows on that 4-hour time frame. Let's call it 20,250, Thomas. Right now, we just don't have that. This could be a bear flag as long as we're still below those levels. And traders who have seen any attempts at getting bullish acceleration to the upside thus far, they keep getting short-circuited. The price action overnight to me is really alarming. 4:30 a.m. Eastern time rolls around and some sort of sell program hits these markets where you effectively go into free fall by 6:15. What do you make of this intraday or at least overnight volatility here? It feels like that's a big move. And for the life of me, when I woke up this morning, I looked through the headlines. I actually spent my time scrolling back on Twitter, Thomas, and just kept moving down my feed to see, okay, what happened at 4:30? That took a while. I follow a lot of people. That's a lot of refreshing. There was nothing. This was just a market that keeled over and lost 300, 400 points in the span of 2 hours. That doesn't feel healthy, is what I'm getting at right now.
No, it's not. It's not healthy at all. I mean, yeah, there was nothing really to drive that price action. I'm thinking it's just a lack of follow through. I don't know. We're through earnings. We're through the Fed. You think this would be the time some risk are removed to get back on the longer side, and the conviction is just not there. So bear flag for right now. This is still a viable bear flag in my opinion. A break to the downside could give us another flush down. The next likely thing I see happening is just more consolidation. Getting these moves that doesn't really give you anything if you're directional in any way. So yeah, it's not really too appealing for me right now.
You could see how if we get a little bit more of a push higher here through the EMA envelope, we could, have more reason to look perhaps long delta. I would point out that the MACD indicator here on February 21st gave a sell signal, and it remained in sell signal mode until yesterday's close, right? So in terms of momentum, there are these little pieces of evidence. Stochastics rising out of oversold territory for the first time since it dropped into it on February 25th. There are these little pieces of technical breadcrumbs out there that say, okay, you can hang your hat on this. But almost like if we were in an uptrend, and I think for the past several years, particularly since you and I started working here full time, I think we came on board full time with Tasty right as the market bottomed in 22. So for the better part of our, entire full-time employment here, it's just been a raging bull market. But to that end, right, if we think about how this momentum's shaping up, we had seen so many occasions in the past where you'd get a market that was advancing and it'd break out of overbought territory, and then it would just shuffle sideways for a while. I want to just point this out because it kind of feels like a mirror image of that. You have these moves in the market where, sure, we break up and go higher, we move sideways, stochastics comes into oversold, but the market doesn't really fall back, right? So we're losing the extreme momentum condition, and the best thing that you get out of it is a choppy sideways market. You're not actually getting a decline. And I think the point that I'm rounding out to here is that, yes, we've seen momentum indicators lose their oversold conditions this time, but we're not getting a sizable bounce out of it. We're getting a bounce as if the market is relaxing the oversoldness, but no one's in a rush to buy. And that sets up a market where it's susceptible to another downside swing. NQ happens to be dancing on a knife's edge here. And this is the most important chart for me for the NASDAQ. If we look at the continuous, this knife's edge is the low point swing low. We talk about as long as we've worked here, Thomas, December 22, October 23, August 24. This close here this week will determine whether or not we are ultimately putting in 2 consecutive weekly closes below that uptrend, or this is a false breakdown. So the next 2 days, getting back through, again, now going to the tradable contract in QM5, getting back through 20,250, very well might be the line in the sand difference between this market feeling like we have staved off the worst of a correction, or the correction still has a ways to go. That's a pretty uncomfortable spot to be in as a trader who's looking to execute on the back half of quad witching week with another weekend of who's going to tweet what coming right around the corner.
Yeah, and I mean, from 2022 to 2024, you had a pretty, like you said, a raging bull market where you get these small pullbacks, and then you get a bunch of FOMO coming into the market, and you just rip higher. So for a while there, it was easy just to, sell a put spread or buy a call spread on those pullbacks, and you wait a week or two, and you could just redo it again and again, and the structural nature of the macro environment has shifted now. It's not the tariffs itself. It's the uncertainty around tariffs, right? We still don't have a clear roadmap by the administration. We still don't know exactly, how negotiations are going between us and other countries, and you don't know the full extent of these retaliatory measures that are in place, and you don't know how it's going to ultimately affect the economy. At the same time, it could pressure inflation up, so it also puts monetary policy in a less than ideal spot if you're a policymaker. So there's more uncertainty around rate cut expectations too. So it's a confluence of factors, but right now, contraction, economic growth concerns is driving most of this selling. The question is, has it been priced in fully now? And if it was, I'd expect to see more veracity to the upside, and we're just not getting that. So that's showing that, traders are hesitant, people are cautious. There's still a lot of uncertainty in the market, and you're not getting these big rips like you did on smaller corrections in the past. So, as you consolidate, the question becomes, as an equity trader, how do you play this? Do you start diversifying into other non-equity assets and then just wait for the equity market to gain some more clarity on the economy? That's kind of what I'm doing, at least.
Yeah, that's been the operating procedure for me, basically, for the past month or so. Stay away from stocks during the decline until they find some sort of a turn, and hide out in bonds and gold if we're thinking about recession fears percolating. And right now that's served well. Here in stocks, though, we see a market that's still struggling between gains and losses. The sector rotation today is muddled. I don't want to say there's any clear signal, but it's certainly not growthy. ETFs in positive territory: ITB, OIH, XHB, XLF, KBE, IYE, KRE, XLV, XLE, XLU, VNQ. So rate-sensitive things in real estate, energy, and the defense, healthcare, right? On the other end, what's still underperforming? Retail, tech, biotech, SMH, telecom. Not huge underperformances, but still we're seeing the growthy stuff get pushed lower. People are reallocating capital in the market to the more defensive names. So it's a tough slog out there. The Russell likewise is imbued with the same problem. Today showing signs of a bounce off that 1 week moving average, Thomas. So maybe, just maybe, again, an inkling perhaps of a market that's trying to make a turn. You can see here on the 4-hour time frame, that swing high that we had on the 12th. We are trying to post ourselves through there and hold through that level. So it's not for lack of trying right now. It's just that the bears are still very much dictating the outcomes, and bulls haven't delivered the kill shot yet to force people to back off. This economy is going to weigh on the stock market perspective in full just yet.
Yeah, and I mean, do you expect? Do you see the triple witching tomorrow? What is it, like 4.5 trillion? Do you expect that to be seen as a risk taken off that could potentially allow us to run higher after that?
It's a good question, because last time we had options expiry on, was it the 21st, right? It came alongside the S&P global PMI showing that we may be dipping into recession. And so when all these people are like, okay, time to roll, do I want to? Should I just sell everything and let's see where the dust settles for a little bit?
Right.
Maybe because that has already happened, we're not going to see that big downdraft. And tomorrow's calendar, for what it's worth, it doesn't offer us any of those types of catalysts that could produce another growth type of scare in the market on an expiration day. Canadian retail sales, Canadian new housing price index, a speech from New York Fed President John Williams, maybe Dutch consumer confidence gets the ball rolling. I don't think so. I'm not looking for expiration to be a layer on top of a new fear coming into the market, unless, of course, there's a tweet, some trade deal, what have you, that emerges on Friday late in the day. No, I don't think that we're looking at this expiration window as being something that is like the driver of markets. It's an accelerant. There's nothing there for it to accelerate right now.
So one thing that's interesting is Powell referred to tariffs as one-off for inflation.
Yes.
Is he assuming that these tariffs go on and are only temporary, or is he seeing this as, typically tariffs in the past have given a little bump to prices and then, haven't had an extended pressure on inflation? So I think, if you're pricing in 3 rate cuts this year, can you be disappointed by that? Does it have a higher potential of coming into 2 rate cuts, or do you have a higher potential of going to 4? Right now, it seems like the calculus is shifting more towards we could be disappointed from 3 and going down to 2. And in my opinion, that would have a bearish impact on equities.
How should we go about doing this? Should I just use... I'm just going to use paint. Let's just use paint.
Bring back the 3rd grade skills, We didn't do Microsoft Paint for nothing.
So the way that the Fed views this is inflation's moving on a path. When the tariffs come, it's going to cause, this is going to be difficult to do with paint. It causes like a one-time bump, okay? And then prices resume the same rate of inflation that they were on previously. And so they're not so much concerned about this. If inflation was going to go like this thereafter, okay, then they would ultimately say, yeah, we've got to raise rates. This isn't just about a one-off price hike. But they see this as a changing of the plateau of overall inflation. And once you get that one-off, then it resumes the same rate of change that it was doing previously. Obviously, this is poorly done. It's a Microsoft Paint graph, but we're trying to do things here on the fly. Visually.
You should throw this in one of your blog articles. That's pretty beautiful.
Yeah.
But
forget using Jupyter.
Do you see maybe if they go to 2, it shows that the economy is stronger or strengthening, so less rate cuts, and then the market likes that? It could be either or, right? You go down from 3 to 2 rate cuts. 2 rate cuts is more saying the economy is still doing well enough to not cut rates at a faster pace.
Yeah, there's probably a sweet spot there. I think last year there were points when the market got to like 6 cuts priced in. You're like, okay, hold on a second. If the market really thinks 6 cuts are coming, then something bad's going to have happened.
Right.
You're just not right. So like if we go back to, and if we went to 0 cuts last year, there was a point where the market was entertaining that there might be no cuts. The day of the May 1st FOMC meeting, there was a 0.3% chance of a 25 basis point rate hike by the end of the year, right? And so like that was also an extreme. That's no rate cuts is a bad thing too. So there was a Goldilocks zone where policy rates are coming down, but it's not because of an emergency with the economy. It's not because of inflation. That's where you want to be. And maybe we're rounding out into a mindset where, at least in the short term, we can think that that's occurring. But Powell and co., again, if you just spend the time reading the Fed's various white papers, which I know is a lot of fun, so don't all jump at it at once. But if you spend the time reading those white papers, they articulate a vision where tariffs are going to reduce growth, they're going to hurt the labor market, they're going to boost inflation one-off, okay? So if it's a one-off price hike, but then there's permanent damage to growth and to the labor market, should they be raising rates or lowering rates? Their view is, let's just see what happens, understanding that this probably tilts the risk to the downside. And quite frankly, when we look at their economic projections yesterday, you could see that. They do these confidence intervals. Do you feel that there's more risk or less risk? Weighted to the upside, weighted to the downside, to your labor forecast, to your GDP forecast, to your inflation forecast. And across all of them, the risk is inflation weighted to the upside, unemployment rate weighted to the upside, GDP weighted to the downside. So at least we have this at our back, right? I'm supposed to put a cherry on this. At least we have a Federal Reserve that is laying or foaming the runway for us, that if things turn south, there's the perception that maybe they're not too far behind the curve because they've already downgraded the GDP forecast. They've already downgraded the labor market forecast. They've already boosted their inflation forecast. They're recognizing that the odds are shifting for these outcomes. And so if they do cut rates in June, it's not going to be like, where did this come from? Well, they've been making the case for it the past few weeks and months. And by then we have enough data that wait and see may no longer be the appropriate path. For stocks, though, I don't know if that's anything good. It's a duality. Is the Fed falling behind the curve or not? You can see it play out between yesterday and today.
So 72% chance that they cut in the June meeting. The May meeting, which we're about 48 days away from, market expects a hold. We don't get an SEP at the next one, but the Fed will have a good chunk more of data to where Powell's comments will be, teeing up for the next June meeting. So this is going to be an interesting period over the next month and a half, 2 months, to see how the economy develops and how Powell's going to, update what he's saying.
It looks like, from some respects, the downtrend is breaking here in ES. Again, let's just see a little bit of a push higher. I have my short put spread on. I'm going to keep it. But if we get through 57.75, you then have a much more sturdy case for this inverse head and shoulders pattern or some sort of bottom here. And against 57.75, you're talking about, roughly speaking, 17 points. So 217 on top of 57.75 is going to bring us to 59.92. 59.92 is a nice little bit of recovery that puts us basically, well, isn't that quite convenient, Thomas? Basically right here at the underside of the swings that we had in February here later in the month that ultimately became resistance. So building blocks. We have to be disciplined about this. We can't chase. I will add in and get a little bit longer once that occurs. But for now, no reason to. Sitting on hands.
Yep, I agree. Should we talk about bonds?
I think this is a good time to talk about bonds. What a pain. Looked like they were breaking out yesterday. Now they're not. 117 and 24 ticks is a bit off the high here. I want to go to that daily time frame first. That is a big upper wick. What looked like to be a bullish falling wedge up against that 1 month moving average. That's how I was playing it. I felt pretty good about that earlier today, Thomas. Why did we turn around here?
I have a short put spread in ZB since last week. It's done really well. It was doing very well this morning. So I still think bonds go higher. So I did a long call spread in the 10-year ZN as well, just about when the show started. I think as long as the economic outlook remains kind of muddied, you get bonds moving higher. The sell-off through today's trading session from these highs, I'm not really sure what's driving that too much. But I do still like a long bond position here, especially on that longer end.
ZB right now, 26.2 IVR, so the vol continues to come in. I'm likewise holding that short put spread here in ZB. The volatility has come in quite a bit since it was put on. The IVRs were back in the 50s. But the technical setup still looks good. Now, the question is whether or not this reversal off the high, it does seem that we had a move here up into 118 and 21 ticks on March 11th. That is effectively where we get capped today at 118 and 23 ticks. So near term, right, if we are stuck below this level, you can kind of see a little sideways range that's been carved out here. If I wasn't in already, would I look at today's candle and be enthused about jumping in long deltas? Absolutely not, right? The story being written is that traders are dropping their safe haven holdings as the session moves on. What we do see, though, is that this 1 month has been a sticky point, and if we find a pullback down towards 116 and a half or so, I think the credible thing to do up front is to take another long entry there, if it's through a short put spread or long calls at the money, out of the money, depending upon market pricing and obviously one's risk tolerance. I'm going to hold it, but I got to tell you, I'm feeling a lot worse today than I did about 9 o'clock this morning.
Yeah, I mean, it's a temporary move. The less hawkish tone by Powell yesterday definitely fueled some of the gains. The war off wore off a little quicker than I expected here. I mean, the market is pretty long bonds right now. If you look at COT positioning, things like that, interest rates still expected to come down. So if it shifts to 3 from 3 to 2, are we still going to get upside in bond pricing? And I think a lot of that has to do on the growth forecast right now rather than inflation. Especially, the variations in the SEP yesterday were more a cut in growth rather than an increase in inflation. They still moved and increased inflation, but not by as much as where growth is. So I think the Fed's going to remain focused more on the growth story than inflation, especially with Powell's comments yesterday that the Fed sees it as a transitory event. I think that's encouraging for bonds, but the price action today is definitely showing that, the market's not as encouraged as they were just yesterday after the meeting.
There is an economic idea out there called Okun's Law, which is the observation that as you see country GDP fall, unemployment rate rises. And when the unemployment rate rises, you see a country's GDP falls. So if we're talking about a situation where the Fed thinks that the tariffs are a one-off price rise, right? Like we just level up and then continue along the current rate, 2-3%, whatever it may be, 5%, whatever it may be, then they're going to be focused on the growth and labor market side of this fallout. That's the FOMC fallout that we care about. Like they're not giving us the cuts now, so there's no monetary offset to cushion the economy during this detox transitional phase. And as a result, the risks for erosion in labor and GDP are more worthy of consideration than those to inflation. Because at the end of the day, if labor markets deteriorate and GDP falls, inflation is going to go by the wayside as well, given what we've seen here historically. So like the Fed right now, they're telling us we have our eye on the recession ball. Inflation, it's a pain. There's nothing that we can do about it. And what we're going to do for it won't even solve the problem. So we might as well not do anything.
Yeah, and I mean, you get lower growth. That's less demand for goods. So that plays into the inflation thing. If you're getting tariffs and growth is expected to accelerate, you might get more pressure on that inflation. So it's almost like the two somewhat balance each other out. But the question is, or the concern is, you don't want growth to fall off a cliff. And that's right, because the Fed wouldn't be able to do much for inflation if growth is falling off so rapidly. They'd have to tackle that first. So I think the Fed's on the right path. I don't think the market thinks they're actually behind the curve yet. I'm going to stay in this long bond position for now. If we make a significant break lower, I would, of course, reconsider and get out of it. But I think it's a good trade right now, especially staying out equities, playing some bonds. I don't see anything wrong with it.
What's so interesting about this move in the 10-year yields, just as looking at this from a different angle, we hit basically 4.15% back here at the start of March, swing low that you have in yields in early December, okay? When we get a rally off that level, where do we go into? Right into the 1 month. And that makes a lot of sense. We were looking at ZN, it's finding support at the 1 month. But you can see how we bounce back into the 1 month and start to keel over here. Obviously below 4.2, some people feel like getting long notes is a good bang for your buck. But there is a deterioration of momentum right now. Even with this lower wick in today's session, you could see the market pushing us to the downside. I would prefer to stay on that side of the trend. So long bonds works well for me. It's working well for you. It is the recession hedge, and the sector rotation today in stocks is pretty garbage. Nothing to write home about. Thomas, let's make our way over to the metals market, where this has been the consistent source of pride and joy in recent weeks and months. It's at least been a more enjoyable thing to trade than waiting for equities to stop dropping. Gold, silver did push to new monthly highs earlier in today's session. They have since backed off. Gold is up by 0.11%, although we did hit a high of 30.58 here in the GCJ5 contract. We are in that zone between 30.39 and 30.60 where we have measured moves in various extensions from triangles that have formed over the past several months. So this is a decent place to look for the market to cool off. I'm still leaning long deltas here in gold, in silver. Yesterday I took off my copper trade. As you know, you were with me here in Futures Power Hour. But I still see nothing that says the momentum's exhausted here. We've been trading off of that 1 week moving average every day since the triangle breakout occurred. Maybe that fails today. But as far as I'm concerned, this is still a market that looks very strong. There is a red flag, though. Back in February, when we were rallying, volatility started to fall off over here. And volatility fell off before gold prices ultimately fell off. We're starting to see that happen again now, the last few sessions, where measures of volatility, they're coming back in, okay? That has been a precursor to gold prices seeing a short-term retracement. And so if we're going to be following a similar path here moving forward, okay, if gold vol is falling off and the market is staying pinned at the highs, it does mean it's susceptible to a bit of a pullback, in my view, given the rhyme and reason of trading here in gold over the past year plus. Where does that go back to? Maybe the 1 month. That means the setback could go down to 29.58, and this breakout's still very much intact. The swing highs that we have here, February 24th, 29.74. You can get a 16-point band to look for gold prices to fall into on a pullback before ultimately resuming higher. Either way, though, today it's a modest gain, but all things considered, I'm not going to say that the day that gold sets another new all-time high is the day that I need to get off the long side of this trade.
Yeah, I got an order in right now for a long call spread on gold. I would have preferred a pullback today, get a better price, but I'm just pulling the trigger right here. I want to get long gold. I think it has more upside. I sent you the chart earlier looking at gold stocks in London. They're continuing to fall. Silver even more so, which surprised me. I wasn't aware of that. So that's showing that, gold is flowing into the U.S. There's an arbitrage opportunity there where it's coming out of LME and other associated vaults with London, and it's coming into the U.S. That's a lot of what's driven this price action over the past 2 weeks or even the past couple months, in my view, seeing that arbitrage opportunity and, especially considering you're getting 10, 12% price premium in the U.S. versus London, I think that's really bullish.
What do you make of this pullback in silver? Silver's had a little bit more difficulty gaining upside traction here. It's been attempting to break the downtrend from the October and February swing highs. 2 days ago it was looking good. It looked like that we had a bit of recovery here yesterday. But silver is now falling back below that trend line. If we're looking to fade off the move here in gold and silver, is silver the one that we should be looking at first because it is the weaker of the two?
I mean, it's coming up to the February swing high. I think it's in a good place to buy right now, honestly. I was looking at orders earlier. I'm probably going to get long today or tomorrow on silver as well. I usually don't get long silver and gold at the same time just because of the correlation there. But I technically, I still like this here. I think it's a buy. I'm going to get long.
I'm staying long for now. I want to see where this closes today. I know technically the market, the futures market is now marked for the day, $33.99. But the 1 month, or excuse me, the 1 week moving average, $34.16 an ounce. If we find ourselves back above there by the end of the session, it also means that we're back above the trend line from those October and February swing highs. That would be a nice little first step, if you will. Let me just duplicate you and take you here. What I'd like to do, Thomas, I think there's two ways to examine this. Let's go to short dashed. Perfect. We can treat this first trend line that we had previously from the February high as old resistance. We can then extend a new one up here. This becomes the new triangle. You're feeling a little bit better. Again, if we're back through like 34.25 or so, you're feeling great if you're back above 35, because then the breakout is back into play. So we need to be patient here. Patience has suited us well in gold and silver. I'm going to stay long. I know that you don't want to do that. The 17.4 IVR, though, and so I suppose this is the key fact. There is not a world, and there rarely ever is, but there's not a world in which I'd be selling silver calls right now if I was getting bearish on this. And a 17.4 IVR, given the nature between volatility and metals, if silver prices go back up, there's far greater than a non-zero chance that volatility is going to rise as well, right? And so if I'm short calls and prices moving against me and now volatility is expanding, I'm getting double tapped.
Right.
I don't like being in trades where I feel like I'm going to get double tapped. People panic buy safe havens, Thomas, right? So vol tends to increase when the metals are rising. So if there is a pullback, I'd rather wait for it to be an opportunity to get long, do something directionally neutral, but selling calls here, considering how quickly we've moved in recent weeks. I mean, again, 10% move in silver prices this month from low to high. I'm operating short is going to be done a little bit differently than if we were trying to operate long.
Yeah, I agree with that.
Copper yesterday, I popped out of. You've been a big bull on copper this year. I was hoping to get a little bit more of a pullback, Thomas. Like to see it move down to the 1 month moving average. I'm assuming not much has changed for you here. Are you still looking to find opportunities for long deltas when they arise?
Yeah, I was looking. We're essentially pretty much flat. I was looking for like a 1-2% pullback over the past couple days. I don't know. This is where you have to ask if you're long and you think copper's still going up. Do you just buy right here? I mean, I don't think it's horrible. I think I'm going to wait a little longer though. See what tomorrow brings, and then probably try to get long either tomorrow or Monday.
Can we go back further on these charts? Does this allow us to go back farther? Okay, no, unfortunately, you can't go back beyond 2012. All right, well, either way, though, we're going to just take me at my word. This is the monthly chart in copper. One of the reasons why I'm so bullish still, it looks like that we just broke through multi-year resistance, and we're trying to. We could look at it through the CPR ETF. We could go back to HG. It's going to be a similar story. But once you punch through like 465, 475 a pound, copper prices start to go ballistic. I'm, again, not of the mindset that we should be fading copper here. I'm looking to get long deltas on pullbacks right now. This looks technically very, very stable.
Yeah, and the great thing about making a strong, piercing of new all-time highs is you're coming into levels that have no liquidity. And when you see a strong move into low or no liquidity levels, it shows that there's a lot of conviction in that move. And, when you see that, you typically, more times than not, more often than not, you get a follow through on that. Sometimes you can get pullbacks back to that level, support holds, and that shows that there's also a lot of conviction in the people who have been long. So this is a great setup for copper right here. Like I said, I'm still going to wait for a little bit more of a pullback, try to get a little better of a price. If we don't get that, I'm just going to get long next week.
Yeah, I mean, I feel silly for getting out yesterday, I'll tell you that. But it was also a short put spread, so the juice was what could have been squeezed was squozed. So in HG, $5.11-12 right now per pound. It's a continued strong run. This is up basically 25% from the lows. The low this year was $4.005, Thomas. So this has been just an absolute ripper, and kudos to you for putting this on my radar. When I want to have trades for negative reasons or kind of positive reasons, I go to Reddit. When I want trades for good reasons, legitimately taking trades, I go to you. And so this has been one of the better things that you've put across my desk in recent weeks. Oil up, nat gas down today, which is a sucker punch for me, considering I just laid back into a short natural gas put spread 2 days ago, and we are bounding around levels near 4 now, which this is what I'm keeping an eye on. If we drop below the swing low that we had on March 13th, I'm going to cut the short put spread right away. It looked like this may be a lift off that 1 month moving average. Yesterday was feeling pretty good about it. Today, not so much. So I'm going to keep it tight. Obviously, natural gas can do wacky things, and you need to be very nimble if you're trading it. Why today, though, Thomas? Why yesterday's big move up? Why today's give back?
LNG flows were really big, hit a record high this week, or right near a record, I believe. So, all that gas, it's still moving. It's still going to the Atlantic Basin, where it's going to Europe, where it's going to Asia. Those TTF Dutch futures, the JKM Asian futures, there's still a pretty good premium on that. Not as much as a couple months ago, but it's still being sucked out of the U.S. Nat gas is a lot more of a global market than it was just 10 years ago, where it was a lot more regionalized. There wasn't as much LNG moving between countries. But at the same time, right now, you do have the warmer weather coming. You have April, which typically marks the injection season. But at the same time, right now, you have pipeline maintenance. You have these high LNG flows. So all of that is kind of adding to keep prices pretty elevated here. I mean, we've made a big move since the start of the year. And when we've seen these big moves before, you've typically retraced a lot of it. The retracements have been more modest than they were before. So, it's only March, but still looking into later this year, when another winter is going to start, Europe has a lot of work to do to restore their inventories. Asia has some work to do. LNG production in the U.S. or nat gas production, projections could get up to 111 billion cubic feet per day. Right now, I think we're around 105, so still pretty low. Mm-hmm. These higher prices, if they stay up here, they can incentivize more production. But at the same time, there's not really much of a demand gap. It's still going to be flowing to Europe all summer. I don't expect to see us go back to. I don't expect to see us go back near 3, maybe 3.6, 3.7 is the place you're looking at. If you're getting short, if we did get down there, I would definitely take it off right there. I just don't think we're going to get back to where we were in the previous season around these, even sub 3. That would be unlikely, especially with U.S. inventory. I think we're 15% below the 5-year average. That was a pretty cold winter. In the U.S., I think it was the coldest winter in 3 years. So we've had a lot of inventory pressure. I think this is where you more buy dips than selling rips going forward, even though we're moving into the summer.
From your lips, man, because this is 6% move lower today. So if we're in a buy the dip environment, now would be talking my book would be a fantastic time for dip buyers to come in. Crude oil up 1.66%. We've basically seen every session since the 5th of March where we put in a close between 65.50 and 67.50. Today could be a change of that pace. Likewise, we are bouncing back above the 1-month moving average. Now, 2 days ago, it was noted that we had put in a bearish engulfing candle where we failed at the 1 month, where we closed below the 1 week. This looked like a local top. There has been no follow through to the downside. We tried it yesterday. Ended up closing a little bit higher today, now bouncing again. We're talking about growth conditions, right? Is the Fed falling behind? Is the market understating that the Fed is going to be there if things really hit the fan? What's the perception? Is this geopolitics risk because Israel's resumed its war against Gaza? Is this about Russia-Ukraine? Is it saber-rattling that we're seeing going on with the Houthis or even an Iranian nuclear deal? I don't know if we can assign any of those factors because it's only at 23.5 IBR. In other episodes of elevated geopolitical event risk, we've seen that volatility in oil markets has expanded and expanded rapidly, like back in early October when you saw oil prices rise after an exchange of missiles between Israel and Iran. And sure enough, vol, when it does spike up to a high of 129.89, that occurs over the course of 3 or 4 days. You're going from a steady state IVR where you're in the 40s up into the 120s. So is this the geopolitical driven move? I don't know if we can attribute it to that. But if we are getting to a world where there's less concerned about inflation and let's keep an eye on the growth ball. We're probably not going to allow growth to fail too much. And that's going to be supportive of demand for energy products. I don't see a great trade here, although with this push higher, you can make a case if you really wanted to do it. We could go out to 56 days. We could go over to some of these lows. We could look around 63, 64. We could do the short 63, 64 put spread. We could risk 3 to make 1, not quite, actually a little bit better than that. It's a 70% probability of profit, Thomas. We could adjust this, obviously, to do basically 1 to 3 still. There are ways to play it. I don't like this balance. I really want to see if I'm going to go for a risk to reward like this. I'm not using so much darn buying power, right? The thing that always pushes me over the edge, I want to see my max profit equal to at least the buying power that I'm taking up, but a third of it, little under a third, juice ain't worth the squeeze. I'd rather keep capital around to use for a potential equity market trade, add it to bonds, look to restructure gold, silver, get back into copper. Crude does just not tickle me right now.
Yeah, I sold a put spread last week in crude at 65.5, 66. Today's really the only thing that's given me anything out of it. I'm up $50. It's only about 16% of the max profit there. The EIA inventory report yesterday was bullish so far as fuel products declined a little bit more than expected. We got a little jump in crack spreads. I don't know. I'm not too crazy long oil. I'm going to take this off pretty soon. At the same time, I'm with you. I don't think there's a great trade to get short here, at least not one. Your capital can be used in other places. The reason why I don't like further upside in oil prices right now is there's a bunch of spare capacity in OPEC. If prices get back up above 70, 72, 73, OPEC is going to extend this April production output where they're bringing more spare capacity. They're going to do it again. They've got plenty of spare capacity right now. So it's like an artificial cap on prices, right? Oil prices rise, they start releasing more oil. They have plenty to do it. At the same time, growth expectations are coming down in the U.S. So the demand side isn't really too firm there. I'm with you. I don't think there's really a great trade here in oil right now.
We are at the underside of some of the swing lows that we had at the end of February. So, a place for this market to fail, we can look at the 4-hour. You could see why this is not out of the woods just yet. Not just yet. It's chop. It's been a chop fest. I've avoided this for months. I see no reason to change that stance. Thomas, let's wrap this up with some U.S. dollar talk. The dollar's higher across the board here on Thursday. The biggest loser to the downside is the Australian dollar, off by 0.97%. And to think, 2 days ago I was lamenting that I sent you over, Thomas, look at the IVR north of 80. Short put spreads look pretty juicy. Couldn't get filled. Thankfully for that, because this would be underwater right now. The technicals speak to the damage that's been occurred or has transpired. Downtrend, October, February highs. We fall back in to that triangle. We can't clear out the swing highs with any sort of gusto, and we fail. And as a result, this market now looks like it wants a little bit weaker. Good heuristic. If you leave a consolidation only to return into it, you go back to the other side. In this case, we fell outside of the breakout condition to the upside, so going back to support put you closer to 62.50 or so over the coming days. This could be then just a gigantic flag down here, if we want to be honest about it. If this is a gigantic flag down here, Thomas, we have a lot more weakness coming. In the Australian dollar, it's too soon to tell. By this view, we're actually in the midpoint of a range. So I suppose with a little bit more of a sell-off, it does become prudent to look at maybe a short put spread here. This is also a very commodity-centric currency. So perhaps a warning sign for us enthusiasts about the metals. The Aussie would typically be doing better given what's happening in copper and gold. And I don't think it's worth dismissing that entirely. So, stuff to work with here. Volatility is up. Do you have any compelling case, reason, story for why the Australian dollar, maybe even the Canadian dollar, are doing what they're doing here today?
Not really. I mean, I haven't been playing the Aussie dollar. China has a lot of influence on it. Australia is a big exporter, coal, iron ore, gold even to China. If China is going to start accelerating later this year, then I do see a better case for the Aussie dollar. But at the same time, this is a risk-linked currency as well. You could see a correlation between the Dow and the Aussie dollar, the S&P and the Aussie dollar. So I'm not too crazy on it right now. I am long the euro. I'm long the yen. I think those are the currencies I'm going to play in the FX market.
Canadian dollar has been really resilient. It has not done anything since December 17th, since the Fed meeting in December. I mean, yeah, we had that minor breakdown in early February, but this is a market that's been very, very sideways and stable. 73.2 IVR. We know the tariffs are coming. We know they're going to be maximally painful. We know they're being levied in, I think, is an inconsistent manner. The Ontario Premier says something that Trump doesn't like, so the tariff rates are getting jacked up, right? But even so, that kind of randomness, lack of ability to forecast when tariffs may be actually implemented, how much they're going to be levied by, for what conditions, what rhyme or reason, it's not weighing on the loonie here. Warts and all, the yen is where you and I have interest. We saw that really nice wick the other day on that daily candlestick. Yesterday, when you and I were talking, we were lamenting that we weren't getting a little bit more follow through to the upside, although after the Fed, we do get a rebound there. And that's kind of a beautiful double wick structure with a bullish outside engulfing bar or key reversal right up against that 1 month, which has been really a line in the sand. So I'm going to stay long the yen here. Even though today is not finding much follow through, I think this is a good setup to work with, and looking for a move back up to, say, 0070, maybe even higher over the next few weeks. It's not out of the question.
Yeah, I have a long call spread in the yen. 50 days, plenty of time, so I'm not worried about these small pullbacks as long as the technical structure holds. I'm fine holding it. I think, the chart looks nice, right? We're getting these nice little ups, small pullbacks. We're holding the trend. It's a good trade, in my opinion.
It's working for now. The uptrend remains to a certain degree, depending upon how you want to measure it. And, technical analysis is more art than science, as they say. But this is something that I think holds some promise still. So 20.2 IVR, that's pretty cheap. There may be a vol trade in here where just yen volatility is underpriced. And that's been one of the rationales that we've talked about this year, is wanting to be long the yen at various points. What's next on the calendar, Thomas? Tomorrow, Friday. We talked earlier about how there's not many catalysts tomorrow. Unlike the February 21st options expiry, when you had the S&P Global PMI, no such event is scheduled to take place. And so there's no catalyst. There's nothing for the witching day to accelerate, if you will. Options expiry may not be as violent as it was just a month ago, which I think is a good thing. As we do at the end of every one of these shows, we talk a brief bit of education. Head over to tastylive.com, top banner, Learn Beginner Futures, where you can find this coursework put together by the fine folks on the Tasty Live research team. Today we're talking contract size, notional, and tick values. The notional value of a futures contract is the total value of the underlying asset which we have bought or sold, aka the contract size. Due to their unique physical characteristics, each product is measured in a slightly different way. For example, crude oil is going to be measured by the barrel, and gold will be measured in troy ounces, copper in pounds, what have you. But the minimum tick size equivalent is equivalent to the minimum price increment for a given futures contract, and it's going to change product by product. So what you see in ES is not going to be the same as in Q. What you see in ZN, not the same as in ZB. Check the product specifications to learn more. It's important to know what you're getting into, and if these products are too big, there are things like MES or MNQ or MGC, the micro contracts, that allow you to scale down and fine-tune your exposure a little bit more. So go to tastylive.com. You're interested in learning futures, learn about contract size, notional and tick values, and get into the futures market. It's my favorite market. 23 hours a day, 5 days a week. As a trader, it's as close to 24-hour trading that you can get, and that's, what I want. Bottom link here on the screen will take you there directly. Of course, Thomas, you and I are done for today. I will be back this afternoon for overtime. I do appreciate you filling in for me yesterday. It's a post-FOMC day, so that's the best day to do it. Jealous that you got to spend the time with the good folks here on Tasty Live, but we'll be back in a few. Until then, good luck trading. Of course, after a brief break, you're going to have more Tasty Live with Dr. Jim Schultz from Theory to Practice coming up next. Thank you, Thomas. See you later.
If you missed the live show, here's our cherry on top weekly recap.
Ah, look what the cat dragged in.
Top of the morning to you all. How are we doing?
Rich McDonald from London, he was so excited to tell me that he was on a game show in LA.
You were on a game show in LA?
Yes. He was walking down the street and some Hollywood producer spotted him and goes, "Oh, we gotta have this guy." And what was the game show again? I forgot.
It was called Eliminate.
Oh, I know Eliminate! You were on Eliminate! Oh my god!
You've seen it?
Have you met me? Yes, I've seen Eliminate.
Did you get eliminated on Eliminate?
Who would not pick the Scotsman? Like who? Why? Oh, that's that woman's trash. I'm so sorry, Rich.
The camera's finished, and she turned around to the guy she eventually picked, and she said, "So where are we going on our date then?" He said, "I'm very sorry, I've got a girlfriend. I'm going out with one of the Lakers cheerleaders. I just wanted to get on TV."
In a tribute to you today, just so you know, we have one of our viewers sent Tony a bunch of Scottish things. The first thing.
I mean, I wanted just a man in a kilt, but apparently I'm just gonna get some pudding.
I don't even know what spotted dick is, really. It says it's delicious. I mean, this is the first time for me trying this. Vanetta, you?
Yeah, I'm on a dick-free diet.
Have you managed to warm up your spotted dick?
It kind of tastes like, you know, like the banana pudding or the vanilla pudding that you get, but that's like not refrigerated.
It's actually pretty good.
Yeah, it's not bad. And I imagine if you go actually to the UK, I'm sure there's places that can do it more authentically.
Is all the custard in cans?
Yeah, pretty much. It's one of those ones. If we end up in a war, then you just fill your bunker with custards and beans.
Control knocked me off my pivot today because they came up and they said that you were having, I actually had to go Google this, that you were having a conversation about traditional spotted dick desserts, whatever.
No, it's not a dessert. It's not a dessert.
It's a muffin.
Are you adding this to your repertoire?
It's a muffin. And we poured the custard on top.
You pour custard on top of a muffin. That's dessert.
Okay, American, you uncultured American. Okay, Dylan, explain to them.
I think that the good Dr. Sheridan accurately describes any item that has custard upon it as being in the dessert category, whether you're a sophisticated Milanese gentleman such as myself.
I can't be friends with Dylan Radigan if I eat SpaghettiOs out of a can because the Italians...
I mean, but you can't because remember, I'm from Saranac Lake. My relationship as a young man with the canned beans was to go out to the ice fishing shack. Because the canned bean is a very staple food for the ice fishermen.
So you grew up in the ice fishing community?
It's a card-carrying member.
Please tell me what the pleasurable portion of ice fishing is.
I haven't done it since, probably I was 16 years old. But our primary pleasure was smoking pot because you could get into the ice fishing shack.
There we go. Do you actually care if you catch a fish?
No.
Okay, perfect.
With your buddies, you're like, Sosnoff, grab the drill, and then it's like man work, and you got to drill the hole.
Tony is going to counter that and say it's all about catching the fish, for sure.
No, I don't think he's an ice fisher guy. I don't see him sitting around the hole in the ice fishing, just hoping a fish pops in.
There's not enough marijuana in the world or Coors Light to get Tony to go ice fishing.
Get the full scoop by checking out the archives at tastylive.com.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
I want to play a game. It's a relationship game. So I'm going to ask you each a question to your
Who
partner.
loves the hardest?
Yes, yes, yes. So are you ready? Who's more stubborn? Who's more public? And who do you think takes longer to get ready in the morning?
Oh. He's got to do his hair.
Who's a better driver?
I mean, for sure.
Yeah.
Like I live in Italy. Yeah. Like we drive like.
I drove a truck in New York City.
I drove a tractor on a farm. I can fly an airplane.
Who loves the Fed most? Who is more spoiled?
It's not even close. Like you got buildings full of people. What do you want, Mr. Zosnoff? I have nothing.
Started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well.
At Tasty Trade. Make your move, genius. Tasty Trade.
So what are some things that we know? We know that time will pass. We know that the hourglass will empty. We know that the calendar will march forward. So what do? We sell premium. We generate positive theta. We take the short side of the options contract. Before you ever think about generating returns, you need to control that risk. The returns will come. You need to make sure your risk is mitigated in the most efficient way possible. Now, the fun stuff. Let's talk about managing those winners, right? You have a long put spread on and the stock goes down. That's going to work out pretty well. You have a long call spread on and the stock goes up. That's also going to work out pretty well. You set your profit target at 50% of max profit. When it gets there, you take it off, you move on, you find another opportunity.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that and the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. You know, sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move. Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Really appreciate you guys being patient as we had to reboot and restart a couple of the tech things, but I'm so glad that you guys are here because we could not do the show without all of you guys out there and all y'all from my Memphis, Tennessee crowd. So thank you guys so much for being here and being a part of what it is that we are trying to do here on this Thursday edition of what it is that we are trying to do, which I have no idea what's going on, but guys, I couldn't believe it. I could not believe my eyes. So yesterday at 2:30 Eastern, right, 2 o'clock, you've got the number comes out, whatever, the market's back and forth, doesn't make a difference. Everybody's waiting for 2:30. Now, normally at 2:30 on a Wednesday on a Fed day, I'm prepping for today's assignment. I don't have a chance to watch the Powell presser. Like I'm getting ready for the show, right? But I'm like, all right, today I got to know, man. I got to know because he's up there with Cal Ripken at this point. Like I got to know. My man's on like 19 in a row. Purple tie showings. And so when I saw him walk out from behind the curtain or off to the side, like however he walks out to take the podium, I looked and he had kind of a darker tie on. So I'm like, wow, did he really go black today? I'm like, if my man went black, I'm like, the Reaper is right around the corner. This is not good. But then when he took the podium and they zoomed in on him, I was like, oh, my man went with a dark purple. So he kind of mixed it up a little bit and kept us guessing, but he still stayed in the purple family. I couldn't believe it. It is now 19 public appearances in a row that Jerome Powell has gone with the purple tie. Well, if you're watching over on the Tasty Live Network, somehow we survived. Somehow we are here. Pop on over to YouTube because you can join the conversation and you can join the discussion and you can communicate with our brethren who are also watching the show. You can celebrate if you're a bull or a bear, commiserate if you're a bull or a bear. Who even knows these days? But indeed, it is going to be a good time had by most. And oh, don't forget, we have an extra long show today. So I know we had to get started a couple minutes late, but that is no problem because we're going all the way to 3:15 Eastern or 2:15 Central. So, all right, John, bring us into the market if we still have a market. I mean, I don't know, guys. I really don't even know. Hold on a second. Let me grab my drawing tools here really quick. We've got E-mini S&Ps down 11. They were actually down about 20 or so a couple of minutes ago. You've got the risk-free instrument, also known as the NASDAQ futures, down 64. That is an extraordinarily high-risk product, just to be clear. The Russell 2000 futures are down 23, and of course you've got the Boomers are down 23. The Russell is only down about 8.5 points. You got bonds up a few ticks. You got notes up a few ticks. You got oil up a little bit. You got UB40 up a little bit. Man, look at the shifties go. Man, I don't know who told you to get short gold, but I would not listen to that dude or do that anymore. Gold up another 10 points today. And so, man, that is some crazy, crazy stuff. The Bitcoin bros, you got Bitcoin down $1,500 down to 84,000. And so, again, we've talked about this many times before on the show, but I think it topped out at like 106. And I told y'all when it topped out at 106, I said, we're going 106, we're going 92, we're going 84, which is where we are right now. And then we're going 37.5. That's just the way it is. I'm just reading the tape, guys. Right? This is not my opinion, right? This is objective truth. I'm just reading the tape, right? You can't trade the market that you want. You got to trade the market that you have, right? And this is the market that we have. I still have no idea what that line even means, but it feels right to say right here. So Bitcoin down 1,500, and that's just the way it's going to be. You've got volatility on the day. Volatility futures actually down a penny. So the volatility bros, they're not doing a whole lot today. Volatility unched on the futures front, and then volatility on the spot front, the cash index. For volatility, straight cash, homie, up 21 cents on the old VIX there. And so, all right, there you go. All right, so what do we need to do today? All right. So first and foremost, I want to get to y'all, man, because I see you guys in the chat because we got started a few minutes late. The team had to reboot some things, but now we're up and running. Man, we are singing here on this Thursday. So thank you to the production team for getting us up and running. We're all good to go. Everything is amazing. I want to get to as many of you guys as I can, though, because I know like the last couple of days there have been so many questions. And just because I am the way that I am, and I just kind of go off on tangents, and there's digressions off the tangents and whatever, which is kind of like what's happening right now, I don't usually get to as many questions as I would like. So I want to get to more questions today, but we have a few things we have to do, though. We have a few things we have to do. Of course, we need to address our gold butterfly, but that's a bit of a somber tone. We're going to come back to that here in a minute. Let's start the show strong. Let's shoot from strength, as Mr. Tom Sosnoff would say, and let's take a look at this little victory lap that we were able to take yesterday on this XPX butterfly. So if you take a look at this guy, you know, if you watched the show yesterday, you saw these were the two trades that I did for Uncle Jay, for FOMC. We did SPX, an upside butterfly, and then we did gold, a downside butterfly. And these were both intended to be plays for FOMC yesterday. Now, the SPX was a one-day deal. It was going to expire yesterday. But the GC, we still have until tomorrow. But I think it's a weird, because again, I think the gold options, the metals, it expires at like noon or like 1 or like noon 30 or something like that. And so we don't have the full gamut of the day tomorrow, I don't believe. And so time is running short. Like the crystals in the hourglass, they are disappearing at an alarming rate for this gold butterfly. But that's okay. That's okay. Let's focus on the positive. We grab the diet strawberry here. Look at SPX. We bought this butterfly for $4.50. We sold it out yesterday, right? If you guys saw this on the follow page, I pushed it out as soon as I did it, like minutes after I did it. I pushed it out on the follow page, as I told you guys I would do. Like I told you guys, like this guy's going to expire tomorrow. I'm with Errol for today's assignment. You're not going to see me out from theater practice closing my trades like I would normally do, because with the expecting butterflies, they're kind of slippery. You kind of want to, you know, catch them while you can if they happen to land in your net. And not to mention, we didn't even have a show yesterday, so there really was no opportunity. But we closed this guy at 324. Now, funny thing about the closing at 324. Obviously got super lucky. I didn't know what was going to happen. I mean, we joke about it. We have a good time, but I have no idea. Like nobody knows. I mean, obviously Squeeze Metrics on Twitter, he knows, but nobody else knows. When it comes to this trade though, so yesterday in the morning, the market was strong. Like going into the number, the market was pretty strong. And I think we were up maybe a couple bucks on the trade. Like not much. I want to say maybe I could have closed it out for like $7. But I'm like, hey, we've come this far. Right? Is Uncle Jay really not going to save the day? And again, I didn't know. I thought he might come out with a salmon. I thought he might come out with a light blue. And then I'm like, man, if he comes out with light blue, we know what that means. That means diddly poo. Like we've gone over this many, many times. But again, he came out with purple again. So as soon as I saw that, I'm like, oh, we are good. We are totally good. Well, what's funny is before the number, I was thinking about closing it at like $7. And then, you know, the number comes out, the market's kind of going back and forth. It was a little bit strong, but a little bit weak. Didn't really do too much going into the presser. Well, then I had to start getting ready for today's assignment. And so I kind of forgot about it. But then while I was on the show with Errol, if you saw the show with Errol yesterday, you might notice I was a bit more distracted than usual. I didn't necessarily participate as much as I might normally do. I mean, Errol runs that show anyway, so he's amazing. But I was kind of distracted. You'll see me kind of looking over to the left a lot, which may be your right and my left, you know, whatever. I was watching the market and watching my SPX butterfly. And I was like, man, I need to close this trade, but I didn't really want to be, you know, focused on filling orders and doing things like that. I really want to stay focused on the content, you know, with E. But that's why when the show was over, I was like, man, I am not going to wait any longer. Let's close this guy down for what looks like about a an $18 winner this ended up being. over $18. And so that ended up being a great trade for FOMC. And the nice thing is, if we do happen to, just kind of completely flush this gold trade, which it does appear that that's likely going to happen, we're still going to come out net plus $13 from the little trade package that we put on for FOMC yesterday, the SPX trade and the GC trade. So that's the SPX butterfly. That's the SPX victory lap. I think we did it some justice there, and that's the way to do it. All right, so what I want to do now is let's see here. If I go ahead and I'm going to go into GC. What if? So I wouldn't normally do this, but again, we're not even going to have tomorrow's show. I don't think. I think these expired before the show. So I'm actually going to put in a GTC order. And I almost never do this because I want you guys to see my trades. It's very important to me. The only exception that I've made to that rule is these expected move butterflies. And so we're still kind of operating within the category of the lone exception to the rule. And so I'm going to put in a GTC order just in case something crazy happens overnight. Like, oh, by the way, actually, before I do this, if you look at gold, right, you can see that we basically need this thing down inside of 30.30, so lower than 30.30. That's when things start to get pretty interesting. The stock right now, or the index right now, is at 30.50, a little over 30.50. It might feel like it has a long way to go. It might feel like, man, that's a big move in gold. It's not. It's not a big move at all. I mean, you've got a $3,000 index now. It's like this is less than 1% in gold. We need a 20-point drop in gold, overnight into tomorrow, even into the close right now. That's just not a big move in gold at all. And so it's like, man, this could absolutely happen. In fact, let's even look at, like for us to break even on this trade, we need gold down to 30.25. So now I haven't looked at this before the show, so I don't know what the numbers are, but I bet you the 30.25 for GC that expires tomorrow is like a 20 delta. So I'm thinking, sight unseen, I don't know what the number is. I could be way off. But I think it's about a 20 delta, which gives it like a 40% probability of touch. And so if we go to tomorrow, let's go to tomorrow. Let's look at the 30.25. Okay, so I wasn't that far off. It's a 15 delta. So it's a little bit lower than I thought, but still, it's not like a 5 delta. This isn't like a 3 delta option where it's like, okay, it's gone, it's not coming back. It's very, very unlikely. Like, no, this has a 30% chance of touching that level. A 30% chance. That's pretty high by anyone's probabilistic gauge. And so I certainly don't feel like this trade is completely gone just yet. Are we going to take max loss? Most likely. But could it come back? It could. It absolutely could. So I'm going to put in a GTC order here. And I don't want to get crazy with it, but I'm like, man, let's put in a GTC order for like $7. Like, what if something crazy happens overnight? Could be a lot of different things, right? Could be some, European central bank. Maybe they meet overnight. Maybe Trump's kind of active on Truth Social in the middle of the night. My man can't sleep. He gets out there. He fires off some truths, right? Some tweets, right? Some, artists formerly known as tweets. It's like, man, that could send the market moving for sure. Like, no problem. And Elon, he doesn't sleep. So he'll have some things coming out tonight for sure. And so with those two together, it's like, man, 20 points in gold, like that's nothing. That's an appetizer. Man, that's like the bread they bring you at Bonefish before all the rest of the good stuff is coming. Y'all know what I'm saying. So I think let's put this in at $7. It's just a little GTC. Did I do GTC? Hold on. Or did I do? No, I did a day order. I'm so not used to doing this. I didn't even do it right. Let me do GTC. That, of course, means go till canceled. GTC orders cannot be canceled when the market is between sessions. Interesting little flag there. I'm okay with that. Are we okay with that? Yeah, I think that's fine. I don't think that I was necessarily going to do anything crazy between sessions. That's fine. So let's just let it run. Let's let it run, and we'll see what happens. And of course, if this thing gets filled overnight, then I'm not going to push it out until the morning. And so I'll let you guys know if that happens. And again, you'll see it on the follow page as soon as I can possibly get to it. But just know that if gold falls down under 30.30, it's live. It's in play. Like it could possibly happen. I would say we're going to need gold closer to 30.20 for that to get filled. But yeah, so that's what we're going to do with gold. And then other than that, man, what else do we got? We got a couple things. So number one, let's take a quick little Best Buy victory lap. So look at Best Buy, up another 30 cents today. And so we are sitting on our short in the money put that is likely going to become a longer term project. But right now, it's basically just like holding long stock. That's exactly how we're going to treat it. We love Best Buy. I've been Best Buy since day one, just like I've been the Eagle since day one. Like y'all know this. We've talked about this many, many times before. And so Best Buy, we are ride or die until the end. And by the end, I mean we could close this position any day. So Best Buy, we're going to sit tight right now. And that's going to be that. But look at Starbucks too. I did want to bring up Starbucks really quick because if you look at this position, so again, Starbucks, this is our investment style covered call, right? This is a project we've had on now for multiple months. I think we've learned some very interesting things. There have been some really nice teachable moments that have materialized along the way that has allowed us to maybe look into something that we don't normally look into because normally we're focused in the active space. We're trying to get in a 45, out at 21. You're doing your strangles, you're doing your ratios. You're doing your short puts, whatever, verticals, iron condors, etc. And so it's like a covered call style, or an investment style covered call is very, very against the grain. That's very, very, that's not something that we would normally do. And so with this position, it's been really nice over the last few months to kind of have to, go through and kind of confront several situations that have been very interesting where the call is getting in the money. What do we do? Where the call is in the money, what do we do? Exercising patience, understanding extrinsic value, kind of thinking through the different options that are available to us. Well, here's another one. So we have Starbucks. Look at the market taking a little bit of a dive. Just a little something, nothing crazy, just 24 points off the top. Like you won't even know it's gone. You won't even know it's gone. Got the NASDAQ down 119. Man, some things are happening. Got gold up another $1. That's what I'm saying. Man, the shifties, I'll tell you, man, they absolutely nailed it. And by absolutely nailed it, they started saying this in 1983. And so again, was Peter Schiff wrong? Of course not. He was just a little early. So can I give myself until Friday? My man's had 2 decades. Can I get an extra 2 days? I think so. I think that's fair. But anyway, I digress. If we look at Starbucks though, stock's at 99. So now we essentially have the opposite scenario where the short call is now out of the money and getting further out of the money as the stock drops or just chops around and whatever. You see the extrinsic value on the short call is dissipating. The extrinsic value on the short call is going down. And so the question becomes, what are you going to do? Like, do you want to manage the short call at 50%? Do you want to start to take some profits on that short call at some level that is before, maximum extraction of all the extrinsic value? Okay, a couple of thoughts. Number one, there is not necessarily one set pathway forward through the forest that you have to follow here. I really think this is very much a gray area with a strategy like this because there's just so many little, nuances that you have to consider. So here's what I typically think about. Number one, when you are at 50% of max profit on the short call, I'm not usually in a hurry to take that off. Not with an investment style covered call, because it doesn't really fit the general framework, the vibe of the position, which is one of kind of more, it's almost like a slightly more active level of passivity than just kind of sitting there and leaving SPY in your stock drawer. Maybe it's a lot more activity than that, but that's kind of how I think about it, right? I'm not zigging and zagging like I would with a strangle or a ratio spread or whatever. I'm also not just sitting tight and dollar cost averaging, collecting dividends and reinvesting them. I'm not doing that either. I'm somewhere between those 2 points, but it's not something where I want this to be something that every single day I'm looking for a move to make. I'm trying to squeeze every last drop of, juice out of the orange. That's not really the type of, approach I want to take with this strategy because I don't really think it fits the general spirit of the strategy. The general spirit of the strategy is one of more hands-off, one of more just let the strategy work. You just put it on the back burner, you set it on a low simmer, and just let it cook, man. Don't rush the process. Like you got to just let the juices congeal. Like you can't get in there before there's no congealing that's taking place. Like everybody knows this. This is basic stuff. And so here, it's like, we're up 70 cents on the short call. I don't see a lot of congealing. Do you guys see congealing? Because I certainly don't. And so I'm thinking we stay in the short call. Now, I'm not going to stay till the very end. That doesn't make sense either, right? I'm not, if this thing is marking at 20 cents in a couple of weeks, I'm not going to say, well, we got to stay till the end. It's not fully congealed. Like, no, it'll be 90% congealed at that point. Like 90% congealed is basically 100% congealed. And so when you start thinking about, there's probably more congealing references than you expected on today's show. The over-under on that is usually set right at about 0. And so if you look at the short call on this, well, look at S&Ps. under 5,700. Very, very interesting. Even gold just sold. Man, gold just went down 20 cents. Like, is it time to take our victory lap on our short gold position? I mean, it might be. I don't know. That thing just went down like 40 cents. I don't really know what more you guys want from me, but I'll see if I can figure it out. So SPUX, I'm going to sit tight. There's no rush. There's no hurry. Let's try to get more out of the short call because, again, if the stock rallies, I mean, there's a long way to go between here and our short call strike. And, again, the spirit of the strategy is more hands off. It's, a slower moving type of deal. And so let's just sit tight and let's let this guy cook a little bit. So that's SPX or SPUX, I should say. We did SPX. We did Best Buy commentary. We did the gold GTC. Man, we did all that stuff. I think it is time to go to you all as the market continues to crash as we speak, only on the Tasty Live Network. You can only find this on the Tasty Live Network. You cannot find this anywhere else. And so, man, market down 32, NASDAQ down 145. It's not good, guys. It is not good at all. So, all right, let's see. Where are you guys at? So I see, there we go. Don 721's in the house. What's going on there, Don? Don says, happy Thursday, Dr. J. In your opinion, is it possible to make significant muscle gains without taking a creatine supplement? Okay, very interesting. And these are the types of questions that I'm here for, by the way. And so this is some really, really good stuff. The answer to the question, of course, is yes. You absolutely can. Like, creatine is a supplement. Like, it's not a staple. Like, it's not a core position. It's not gonna, it's even if you take creatine, it's not gonna overcome or overdo or outdo the actual training that takes place, the actual nutrition that takes place, and all those things. But I don't know why you wouldn't take creatine. Like, everybody should take creatine. There are so many benefits to creatine. Like, men, women, children, infants. Like, you can bet your bottom biscuit I was giving Penelope creatine in her bottle when she was 3 months old. That's why she's huge right now. You should see if she's massive right now. And I would like to say, I get all the credit for that. And so creatine is pretty much a no-brainer. I mean, it's very, very safe. Obviously talk to your doctors, whatever. I'm not a medical professional. I'm not even a finance professional. And so, you can take it for what it's worth. I'm just a rando on the internet, man. That's all I am, which is right where I like to live, right in that B-minus lane, random dude on the internet. It's perfect. It's absolutely perfect. But yeah, I would definitely take it. But you can certainly make plenty of gains. Without it. Yeah, no question. So Daniel Perkins says, hello to Dr. Jim and all my fellow core position traders. That's correct. Yes, thank you guys for being here. Daniel's certainly part of the core position. He's right smack dab there in the center. Like, Daniel, you're there. You and Dow 721. You guys are like Best Buy. Like, I'm not getting rid of you guys. And by that, I mean any day. Any day you might get that Willie Mays Hayes pink slip. And you just got to be on your toes, man. I don't know what to tell you. And so let's see. But Daniel Perkins, thank you for being here. I appreciate you, my friend. Sam L's in the house. What's going on there, Sam L? I appreciate you. Doc, you called it. Closing red today. Yeah, I did tweet about it earlier. Just having some fun. I had no idea. Just having some fun. The market just felt kind of, I don't know. I do think that over time, and I have no hard stats to back this up. I have no data to give you. But I do think you begin to develop a bit of a feel. I do think you begin to develop a bit of, kind of a gut feeling, intuition, whatever. Now, is that actually going to move the needle for the better at the end of the year, at the end of the quarter? I'd like to think it does, but I can't prove that it does. I can't tell you that it does. I'm just telling you that, you kind of get a feel for certain markets and, just watching the tape and getting a feel for, what's happening that day. It just felt like it wanted to go down. That's all I can say. I don't have anything. I wasn't looking at charts. I wasn't looking at stochastics. I didn't have my favorite oscillator pulled up. I didn't have any of that pulled up. We were just, just looking at some things and just putting it out there. But Sam L says, Doc, you called it. Oh, not even Uncle Jay's purple tie could save us for more than a day. That's correct. He saved us for a day, but apparently that is all he could do. And I think he should have went with regular purple. That was the problem. I think he tried to go a bit too regal. I think he tried to go just tapping into a little too much royalty. Like Uncle Jay, he's a man of the people, man. He's just like the rest of us. He's a peasant, he's a plebe, and he needs to lean into that. I felt like he was trying to be a little better than he actually is, right? And so, we get a lot of that from like your Toms and your Tonys, right? Your bombs and your ponies. And so it's like, nah, man, he should have just, stayed in his lane. But he didn't. And now here you go, S&P 500 down 33. So it's basically Powell's fault. But Brad Glazier's in the house. Greetings, Professor. I appreciate you, my friend. Thank you. Grumpy Mike, I thought Jim was on vacation. I am not on vacation. I am here. I am here. So I'm sorry if that disappoints you. But if it doesn't, thank you for being here. Even if it does, thank you for being here, even if it was only for a few minutes, as just kind of a whisper in the wind. And so thank you there, Grumpy Mike. Junior Mac, good morning from Australia. Dr. J, flat as a biscuit, the old stock market. No, not today. I know you put that comment in there about 40 minutes ago. And so maybe it was 40 minutes ago, but no, sirree, Bob. Even the S&P is down 32, NASDAQ down 145. They're basically on the lows of the day, I believe. If I'm not mistaken, yeah, we're a little off the lows. The low was it lower earlier? Yeah, I guess it was lower earlier. It was this morning because the morning was weak. Yeah, hold on. This is 5682 was the low. So that's another 15 points lower. Interesting. Let me bring up like a 5-minute chart. That happened this morning, I think, right? If I do like a 2-day 5-minute deal. Let's take a look at this. Yeah, that was earlier this morning. And so you can see the lows were right there, I guess, right? No, that's 5684. It was actually early morning, so like 6:37 was kind of when the lows were put in for the day so far. I mean, we'll see, what happens moving forward. I mean, I may have been right in the middle of a fairly nasty pec pump right around this time. So I didn't happen to see this when it happened. But the pecs felt it though. They absolutely felt it. So on a Thursday, by the way, which I understand that we're breaking all kinds of rules, but that's the beauty of it. And so YouTube Jim in the house. Greetings, Dr. Jim. What's going on there, YouTube Jim? I appreciate you, my friend. Thank you so much for being here. I appreciate you, man. Thank you. Rob Banks, good day, Dr. J. Would you rather open an Iron Condor, my favorite, of course, or 2 credit spreads, open and managed separately? Okay. So this is a really, really good question. So you have an Iron Condor, right? Like here, I'll even set one up. And we got extra time. We got the Elaine Bennis extra wide lanes today. So let's use it. Let's go to like QQQ just to mix it up a little bit. All right, hold on. We'll just do SPY. It's fine. So if I go to SPY, I go into like the May cycle, 57 days to go, right? If I were to do an Iron Condor, then, I'm selling let's say I sell like a 540, 535, right? This is my short put spread as part of the Iron Condor. And then I sell a 590, 595. I'm just picking one kind of at random, right? 2 $5 wide verticals that basically make up an Iron Condor. You have the short put spread below and you have the short call spread above. So Rob's question is, do I prefer to put them on together like I have set up here on the screen? Or do I maybe put on the short put spread on like a down day to kind of play kind of a short-term contrarian deal? And then if the market rallies up, then I add my short call spread. So legging into the Iron Condor. So a couple of thoughts. I'm going to give you the official Tasty response that has been, produced and sponsored by our research team, which of course we all are forced to agree with. And I certainly agree with. I mean, the research team is amazing. And so I agree with this officially. Unofficially, I'll give you a different answer. So officially, the research has shown that that legging into strategies, whether it be a strangle, whether it be Iron Condor, whether it be whatever, is not going to be beneficial in the end. It's not going to help you in the end. It's not going to move the needle. It's not going to produce better P&L. Okay, and that may very well be true. I mean, I have no reason to believe that's not true, other than the fact that, again, using intuition and using kind of a gut feeling and using kind of like wanting to fade short-term moves. I personally don't hate the idea of doing that, Rob, of doing, the short put spread on a down day, and then if the market rallies back, you add the short call spread. It allows you to get potentially better pricing on both, and it allows you to maybe get kind of like a makeshift Iron Condor that's a bit more favorable than it would have been at order entry. Now, I mean, the research hasn't shown it's going to hurt you. So, I mean, I'm not trying to throw the research under the bus, of course, but it's not showing that it's going to help you. So you're kind of left to decide, what am I going to do on my own? I don't hate it. There are some gotchas, though. There's always a gotcha, right? You find a gimme, you can bet you buy a biscuit. There is some gotcha lurking somewhere. It's just a question of whether or not you can see it. When it comes to, adding a short put spread on a down day, let's say, like a day like today, the market's down, I'm going to add a short put spread. And what I'm going to do is when the market rallies up, I'm going to add my short call spread. Okay, those are famous last words, right? Because there's a good chance, not good chance, but there's some non-zero probability that the market never gives you that uptick, that the market never gives you that opportunity to sell that call spread. And then you end up worse off than you would have been had you added the call spread from the very beginning. And so it's gimmies and gotchas. I don't typically do that. And I think part of the reason why I don't do that is because, another element to all of this that I think is actually really important. We're talking about defined risk. Like we're talking about practice, right? We're talking about defined risk. You have to understand the limitations of the strategy set that you were choosing to begin with, right? And I've said this many, many times on the show before, but let me remind us all right here, right now. I firmly believe, personally, professionally, that if you want to get to a state of consistency, of hitting your goals, wherever they might be from a return standpoint, a risk standpoint, whatever, smoothing things out, blah, 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 the way to get there is going to be a heavy emphasis on undefined risk. I know it sounds backwards. I know it sounds counterintuitive, but it's going to be moving, graduating, let's say, from your vertical spreads to your short puts. Graduating from your iron condors to your short strangles. Now, I know that sounds crazy, and you may not be ready to do that yet. I'm not saying you should jump into the deep end on day one. You got to build towards it. You've got to work towards it, right? But all my conversations with tens of thousands of traders over the years now, whether it be email back and forth, even in the live chat, at the live events. I've probably seen close to maybe not 10,000, maybe 10,000. But I'd have to think. I don't know. Between 5 and 10,000 people live at our events over the last however many years, 10 years. It might be more than 5,000 actually, now that I think about it, because we've done a lot of live events, and I've been a part of a good number of them. So speaking with so many people at the live events, the common denominator across all of the ones that have found success, consistency. There may have been a couple of outliers here and there that I'm misremembering because I want to make the point that I want to make. They all focus on undefined risk. Some of them are bulls, some of them are bears, some of them like indexes, some of them like individual stocks. There's so many different ways to play it. But the one common denominator, the string that holds all the other pearls together, is an emphasis on undefined risk. And I think there's something there. And that's been my own experience personally too. And so when I start thinking about all right, how creative, getting back to your question, Rob, how creative do I want to be with applying my vertical spread, entries on an iron condor? I don't know that I would spend a lot of mental capital on that. I wouldn't spend a lot of mental capital on that. I wouldn't spend a lot of financial capital on that, because I don't know that the payoff is going to be so great. I know that it's certainly not going to be as great as really fine-tuning your approach to a strangle, a ratio spread, a short put, a jade lizard, etc. Right? You can insert any undefined risk strategy that you personally like. And so those are my thoughts. Hopefully that helps a little bit there, Rob. It's a really, really good question, and I hope I gave you a couple of things to think about. So Martin Sheem is in the house. What's going on there, Martin? Martin says, greetings, Dr. Jim. How are you today, man? I'm doing good. It is a good day to be alive. Thursday is obviously the best day of the week. This has been statistically proven many, many times before, probably by our own Tasty Research team, because we are all anticipating the weekend. We are all anticipating the greatness of the weekend. And sadly, that greatness is likely going to underwhelm us. And so today, because the anticipation of the event is often greater than the event itself, Thursday is statistically proven to be the best day of the week. And so thank you there, Martin. I appreciate you for being here. Daniel Rooney says, hey, Dr. Jim, what do you think about catching the knife on Reddit? Man, I love catching me a falling knife. Let's do it. Let's take a look at this, because, the market is falling. It keeps trying to rally, but it just can't do it. Okay, so Reddit's at 108, down a little bit today. We've got earnings on May 6th, so I don't love that. I don't love that at all. But let's see. If I go into let's see. Let me go into wasn't Reddit a lot higher, though? Hold on a second. Let me look at a daily. Let's do a daily for look at that. Man, that is look at that. That is like the final boss candle right there. Look at that. Hold on, before I even zoom out, let's just appreciate the greatness that is this candle from a couple days ago. That's just a little $10 off the top on a $120 stock. That you're gonna notice that. You're gonna know that's gone for sure. And so, man, wow, Reddit, yeah, that's really something. But I think it still was a lot higher recently, in the last year, let's say. Wow, yeah, it was a lot higher. Yeah, this thing's basically gotten cut in half. A lot of stuff. Tesla's done the same thing. This is kind of a common theme, I guess. At least I have two examples. So maybe it's not as common as I think it might be. But, Reddit was up to 240 almost, I guess. And now it's down to 109. That's a pretty big drop. And Daniel's saying we got to catch the falling knife. You got to catch the falling knife. That's the only way to play it. right? We're going to buy low and sell high. I'm not going to sell low and hope to buy it back lower. That doesn't make any sense. And so Reddit, let's see here. Let's go into, yeah, I don't love those earnings though. I don't really want to do a May cycle because I want to do something undefined risk in here because it's only a $100 stock. So what if we did a weekly option? Ooh, look at those spreads though. Yeah, those spreads are bad. What's going on with Reddit? Something crazy going on? Let me know in the chat. Even if I don't see it during the show, I'll scan it after the show. Is something going on with Reddit? Because those are some pretty juicy premiums in there. You've got a $100 stock, and then the 95 put, which is basically your 30 delta, is selling for like $7. I mean, that's a very, very significant premium. You know, the IV in here is 88%. Is Reddit always like this? I don't really trade Reddit that often. And so I'll come back to Reddit here in a second, but just to show you the point I want to make, let me go to like a watch list really quick. Like if I go to like Tom's or like the Tasty watch list and I sort by stock price, let me find like another $100 stock. There actually aren't too many. Oh yeah, like Starbucks. Well, I mean, this is perfect. Starbucks is a little bit less than Reddit. It's 99 versus 109. But you go into Starbucks, right? Go into like the same cycle, you know, like some monthly cycle that does not include earnings. And you can see like a 30 delta put is only like $1.75. I mean, that's a big difference, right? Like that's a huge difference. And I know I didn't match perfectly for DTE and you know, distance from stock price and exact delta and whatever. But just to get some kind of feeling for the premium in the stock, $7 felt exorbitant in terms of the premium in there. But maybe something's going on in Reddit. I don't know. Yeah, let's go in here. I want to do something in here now for sure. I mean, the IV rank is only 32. Wow. So you're telling me that, wait a minute. Hold on. The plot thickens here, people. So if you go to rDDT.IVR, this is going to give me a graph of the actual IVR of Reddit over the last however long I want to look. And so, okay, so Reddit's IVR was just recently up to almost 60. And so now it's at 32. So it's definitely been higher just recently. But 32 is still not too bad. Yeah, I think we're going to go in here. Let's think here. Yeah, let me think. I think I want to go in here. I think I want to be bullish, of course, to kind of fade the short-term move. And, yeah, earnings on May 6th. Yeah, those May 2nd weeklies are just not too amazing. Yeah, because then you go into the May monthly, and, I mean, look at those markets. Those are way better. You're only 20 cents wide. That's a lot better. I think this is what we're going to do. We'll do the May 16th monthly. My intention is not to hold this thing through earnings, to let you all know that here on the front end, here on March, what is it today? March 20th. So here on March 20th, my intention is not to hold this thing through earnings. And so we'll see where the wind blows us. We may have to obviously call an audible on that intention, but that's kind of what I'm thinking here on order entry. And so again, we'll see where the wind blows us on this position. But I'm kind of thinking, man, let's go in here. What if I just sell this 30 delta, this 95 strike? Whoa, man, look at that. Yeah, something's going on. Okay, so is there like M&A talks? I can't even, wow, look at Scott Sheridan and the boys, man. They're going to get you. Like, you think you can escape them? Nah, you can't. Like, you think you're going to get away with it? Nah, man, they got you lock, stock, and barrel. Man, look at that buying power in that Reddit position. $8,600. Man, I'm not trading Solana. Like, we're not doing a Batcoin, Fartcoin pairs trade. Like, this is Reddit. That's crazy. It's basically in the Fortune 100 at this point. Wow, I can't believe that. So they're going to make us do something to find risk. Man, it doesn't get more anticlimactic than that. It really doesn't. Wow, they got us. Amazing. Yeah, $8,000. I mean, I can't do that, obviously. It doesn't even make sense to do that for a $100 stock. So obviously the margin, you know, all jokes aside, the margin is this high because something is going on in the stock. So now, I mean, you guys can let me know in the chat. I would love to know like what's actually happening. But something is clearly happening in the stock, whether it's M&A talk, whether it's whatever. Like, that's the reason why the margin is ratcheted up so high. Like, Tasty Trade's not going to do this for no good reason. Like, they want to give you the best possible margin that's possible, but still they have to make sure that it's risk appropriate. So there must be some abnormally high risks in Reddit right now, which is that's surprising that the IV rank is only 33 though. Like, that's just so weird. Yeah, that's crazy. Well, anyway, let's go in here. Let's do something to find risk. I mean, now it's kind of like, why even put pants on in the morning at this point, but let's go ahead and do it. What if I do like a 190 a $10 wide. Yeah, there we go. So I can do a $10 wide short put spread. Wah, wah. For $3.90. Only because I was going in wanting to do something undefined risk. And so it's like when you have to, shift gears, it's not that fun. But this is still a decent trade. So if you have a smaller account, this is only going to be about 2% of my account. If you have $10,000 in your account, you could do this trade if you want to do maybe a little higher than we would normally like undefined risk. That'd be about 6% of your account, but it's within the conversation. Like it's not something crazy. You're not doing like 15% of your account or something like that. Kind of trade once, trade huge. That's not usually something we want to do. So I like the trade. Let's push this out. Now I'm financially invested in Reddit, which is kind of good. Given the fact that I get all of my own medical advice from subreddits, of course. And so, that's good stuff. So let's go ahead and let's go into where are we at. So Daniel, thank you for that. Finn West, good morning and aloha, Dr. Jim. What's going on there, Finn West? I appreciate you, my friend. Thank you so much for being here. I appreciate you so much. I hope that your travels are treating you well. And Hawaii is it's the place to be, man. It is the place to be. I went to Maui when I was 18. And I haven't been back since, but maybe this year will be the year. I don't know. We'll see. RC's in the house. So, Dr. Jim, how did you know that we'd go red today? I had no idea. And we may not even stay there, by the way. The market's catching a little bit of a rally here. You've got ES only down 21 now. And so we're comfortably above 5,700, at least for the current moment. I had no idea. Again, it felt a little weak to me. Again, it's just kind of, it's my intuition and it's not usually right. So it's not something I'm going to hang my head on. It's not something that, I'm going to kind of, pat myself on the back for. And you guys know me, man, I will take victory laps whenever I can. I'll take them when I'm not even supposed to. But when it comes to this, the truth is I had no idea. It just felt like, we might go red. And we are red now, significantly red. I don't know that we'll stay here. I'd actually be... So if you want another prediction, again, that's not worth very much. But if you guys want one, you can have it. I don't think we're going to rally back to green today. I think we're going to stay red. I think it's going to stay red. And maybe part of the reason is... I didn't necessarily get a super bullish vibe from Powell yesterday. I was able to listen to some of his commentary before today's assignment started because I was watching for the tie and then he hooked me in and, all that kind of stuff. And I caught some of his Q&A too. I didn't get a super bullish vibe from what he kind of went through. I think that, given the fact that he wants to be gradual and patient with, rate cuts, I'm not saying that's not appropriate, given the purpose of defeating inflation and whatever, and then you've got tariffs he's got to deal with and whatever. Like, I get it. He's got an incredibly difficult job. I think he's done a masterful job to this point. However, I do think that if he's really, really slow to start cutting and start trying to stimulate the economy, if the labor market does begin to really crack, which some might say it already is doing that with unemployment rates and, jobs reports and whatever, he might be a little bit behind the eight ball in terms of, when he decides to cut rates, which that could be a problem on the other side. Again, I don't know. I just didn't get a super bullish vibe from it. And so, but again, I wouldn't put any stock. I wouldn't put any stock into that at all. John Stein says, love you, Dr. Jim, man. I love you too, John Stein. I appreciate you, my friend. Scott S. says, good afternoon, Dr. Jim. What's going on there, Scott S.? Thank you for being here, my friend. I really appreciate you so much, so very much. Dave S. says, hey, Dr. Jim, how does the AM expiration differ from the PM expiration? And which should I use for ES? Yeah, so ES, if I go into ES, you're going to have the AM expiration, which is going to be tomorrow, I believe. Yeah, so if the AM expirations on like ES only happen on the kind of the quarterly expirations of the contracts. And so this is just I think it's 8:30. I think it's 8:30 Eastern. It might be 9:30. It's around 8. I'm pretty sure it's 8:30. 8:30 Eastern, this is going to expire. And then of course you have the PM, which you get your full day. Right. And so it doesn't really, there are some guys that are really kind of trading the discrepancies between the cash index and the futures and the convergence and all those kinds of things. I don't really do that. And by really do that, I mean, I don't do that at all. I mean, I understand it conceptually. I certainly don't understand it as well as some people understand it. But some people are like trading that. Some people are like actually trying to like capture, some divergences or some differences between and disparities between, the spot price and the futures price because they're going to converge at that 8:30 mark. since that's not really something I do, I don't normally trade the AM cycles. I just keep everything in the PM just to keep everything kind of clean. You got plenty of liquidity in the PM cycle. It's not going to be a problem. Like if you go into like, PM right here, you can see, I mean, if you look at the options here, I mean, they're a tick wide, right? They're 2 ticks wide, basically. You got your out of the money puts are super tight. You've got your out of the money calls are super tight. I mean, like everything is really, really tight. So you don't have to worry about liquidity. That would be the primary concern, of course, of doing one over the other. But I wouldn't do the AM expiration just for the sake of doing, AM expiration. That doesn't really make a lot of sense. Again, just given the fact that that's more of a spot futures convergence play. And so there are some people that trade that. I'm not one of them. And unless you are one of them, and you would know if you were, it's not something where you're like, am I one of those? Like, am I trading that? Like, it's something that you'd probably know if you were doing that. And so if you don't know, then I would just do the PMs. I think you're fine. And so Sparky Dog, what's going on? Sparky Dog says, I'm wearing a purple tie right now. Yeah, I've got my purple dress shirt, which is right here. I think... Because again, I've got my stable right over there. So here it is right here. I got this purple guy right here. I wear it from time to time. I think this is going to be my new Fed shirt. Right? Like I got to get in the game, man. I feel like I'm not part of the team. Like I feel like I'm not really one of the guys. So I think from now on, that might be the only purple shirt that I own actually. And so I can't give you guys like a stable of purple shirts like Powell can do with his tie collection. But I think we're going to start going with that shirt on Fed Day. Like until his streak is broken, our streak will not be broken. And so watch him bust out like a light pink next FOMC and totally throw everything off. And then we'll always be behind the 8 ball. We'll be playing catch up with purple shirts and magenta polos and all those things. But Daniel Perkins says it's not Ripken, it's DiMaggio. Yeah, I don't know what it is, man, but it's a pretty impressive streak. Pretty impressive streak indeed. Ruben says, Dr. Jim, we survived it after all. I sold the 25 wide Iron Condor on SPX 1 day to go within the expected move. 1 hour later, I was able to take out $100 profit out of it. Was it volatility decline? Yes, almost certainly. Almost certainly. Because, when you think about profitability in the options world, in the derivative space, even really in just the investing space, kind of writ large, it's always 3 things, right? It's going to be direction, time, and volatility. Well, I guess when you start talking about stocks, you've got dividends, so there is another element to it that I guess doesn't really apply here. But in the derivative space, let's say, it's direction, time, and volatility. Well, you put on an Iron Condor and only an hour goes by, there's no time for the theta to kick in really. Maybe a little bit, but not very much. Directionally, maybe you recentered it a little bit, more nicely between the 2 short strikes, and so maybe that paid off. But it was almost certainly mostly driven by Vega. It was almost certainly mostly driven by the volatility sell-off, in the overall market. Like once the number comes out, the uncertainty now becomes, more of a certainty, and so the volatility just gets sucked out. I mean, that's what happens on FOMC. That's what happens on earnings dates. That's what happens on these binary events, like a jobs number, CPI, whatever. This is pretty common, unless of course the number comes out and the market doesn't like it, and now there's more uncertainty, and it takes a nosedive. Then you see volatility shoot up. Right. And so normally kind of the default setting is volatility becomes lower because the uncertain becomes more certain. And so then we can kind of move forward with this new information. But in the event that, the event itself actually produces more uncertainty, which certainly can happen, which will absolutely happen if Powell breaks his purple tie streak. You can bet your bottom biscuit on that. If that happens, you get market down, volatility up. And then it's like, man, I don't know what to do. And so that can certainly happen. But that was definitely volatility. For sure. Finwest, good you solved your tech issues. Can you do a Control-Alt-Delete on the market too? Yes, we're going to need some. Apparently, some of you have been doing that the last 30 minutes or so because the market is still back over 5,700. You've got the NASDAQ now only down 100, and so everything is looking good. You got gold is selling off a little bit, though. Look at gold. Gold's almost back under 50. And so, again, guys, I think we can pretty much chalk this up as a W. Like now, I said to get short, I think it was around 3,000 or 3,006. But this looks like a win for my mental records, at least. And then RC's liking the squeeze metrics reference. Yeah, he's got some good stuff, man. He's got some good materials. And then RC says, "Oh yeah, on that butterfly, Jim, let's go." Yeah, it was good stuff, man. It was a really nice trade. I can't believe that we hit it like that. And that's just I'll take it. I'll take it and run. And so let's see where am I at? I lost it. There we go. Sergio, what's going on there, Sergio? Appreciate you there, Sergio. Lincoln says, cancel X. Now, what is X? It's still Twitter in my world. Go Blue Sky or Mastodon. Mastodon? Man, are we going back to like MySpace? I've heard of Blue Sky. I don't personally, and Blue Sky might be great. I have no idea, but I don't personally have any. Man, I don't have any of the things that you need. I don't have interest. I don't have capacity. I don't have bandwidth. Even my intern is like, I mean, she's working her, her bums. I was gonna say bums. She's working her buns off, working her bum off, getting all the trade analysis done for this very program. She doesn't have time to figure me out like a new social media platform or whatever, and so I can barely use the ones that I have. And so I'm probably going to stick with X and just go down to the gravesite with it. But thank you for joining there, Lincoln. I appreciate you, my friend. I hope that we're helping you out in some way, shape, or form. And if I can ever help you in any way, man, let me know. Let me know. Just hit me up on X because you probably won't find me on Mastodon. Cynthia says, Dr. Jim, what's up? What's going on there, Cynthia? Thank you for being here, my friend. Thank you for being a part of what we do. I hope that you are doing well out in your neck of the woods and you made it through the FOMC print. You're here, so we can only reasonably deduce that you did indeed make it through. Let's see. Peter says, because neither is human. Neither is human. Oh, I think maybe you were talking about when I said Trump and Elon staying up all night. That might be true. RC says, take a victory lap on Colin. SP is going red this morning. Yes, I guess I should. But I did say they were going to close red. Now, again, I mean, they were down 35 a couple minutes ago. Is that enough for a victory lap? Yeah, I suppose so. At least the way we typically do our victory laps. But let's wait and see how it closes, in all fairness, right? If it closes green, I don't know that that's really a W. But yeah, we could still take the victory lap. It's just a victory lap amongst friends. And so Bill Buchanan says, I love X. Yeah, I mean, I think it's pretty solid. RC says, I earned it, man. I appreciate you so much. Let's see, CM, making some math jokes. This is what I'm saying. He says, I love why I'm more of a vertical access guy. Man, there you go. That's some good stuff. And then RC says, what about the Z-axis? Now we're going three-dimensional with the math jokes. That's some really good stuff. I think we're ticking up from a B- to a B now, a solid B. And then let's see. Oh, and this Zip says it comes right at me. Man, you guys are really, we're not B+. We're probably just solid B still, but this is some good stuff. RC's taking options stew in the house. CMGS May options? No. Shut your face. There's no way. I'm not going to believe it. Look at that. Well, would you look at that? Man, somebody told Vinny to get his skates off and get in those CMG pits and get us some May monthly options. Look at that. This is how you affect change, people. You got to let your voice be heard. You got to speak up. If you see something, say something. Right? This is basic stuff, man. Like, we put the heat on the Batista Heritage, and now we got ourselves some May Chipotle options. Right? This is what I'm saying. Wow, thank you, Options Stu. I was probably just going to let today pass and not even look at it. All right, well, let's go ahead, just because we can, right? I mean, we're 15 days to go in here. Let's roll out to these freshly minted May options. Man, the ink isn't even dry on these guys. And we got to do it fast before the Batistas pull it from us, because they'll do that too. But let's go ahead and let's roll out from a 50-50. Oh, you know what's funny? You know what the irony is? I don't even want to go to May monthly because it's going to mess up my strikes. Yeah, it is. Wow, look at that. I'm about to choose the weekly option anyway. Oh, that's hilarious. Oh, that's so funny. Yeah, no, the markets are pretty bad in the week. Oh, they're not that bad. Yeah, so in an unbelievable plot twist. So let me hang on the strikes for a second, just so you guys can see why I'm gonna do what I'm gonna do. This is so funny. So I'm in a 50-56 strangle in Chipotle, and I chose a weekly cycle on entry for this very reason. In the monthly cycles, Chipotle only has $5 wide strikes. I wanted a bit more flexibility with, the risk return trade-off and kind of the strike selection probabilities, blah, 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 at the time that I put the trade on. So I chose a weekly cycle thinking the liquidity is okay. It's not as good as a monthly, but it'll do. The last 10 days, man, I've just been shouting from the mountaintop. Where are these May options? Where are these May options? Somebody get me a Tony. Somebody get me a Nick. Somebody get me a Vinny. Somebody get me a Ladyback. Give me somebody. Give me somebody to get me some May options. We finally got them. I'm not even going to use them. We finally got them. I'm not even going to roll into the May because I can't. right? Because, in true Batista fashion, like he'll get you started, but he's not going to get you everything that you need, right? We're still lacking a 56 strike in the May monthly cycle. And so I want to go back into the weekly that has kind of the dollars that I need, the 56 cycle. So let me delete that. Let's see here. Let's clear all that away. Oh, it's so funny. Now I feel bad for all that. I mean, only a little bit bad. Really, I don't feel bad at all. But if I go in here and I go to roll the expirations, if I go to a May 2nd weekly, yeah, see, there you go. That's what I want. We're going to get $1.65 for the roll. And we're keeping the same strikes. Now, could you roll and tighten it up a little bit? It wouldn't be that big of a deal. I mean, obviously, we were going to pick up maybe 234 because we have a more narrow strangle that makes sense. You have less room to make money, less room to generate profit. You're going to be compensated for that. I didn't really want to do that just because I want to keep it kind of streamlined from one cycle to the next. Now, some of you might look at this situation and you might say, hey, I like the added liquidity of the monthly. I don't really want to mess with the weeklies. I'm okay tightening up the strangle. That's totally fine. Like, I don't really think this is really kind of a better or worse scenario. I think this is really just kind of a gimmies gotchas scenario. And the gimmies and gotchas are pretty well balanced between the two. Again, you're going to have better liquidity in the monthly. And so the fills will be a little bit better and a bit more favorable. But it's not like we're scalping Chipotle every day. It's not like we're in and out of this stock, 2-3 times a day. And then like the liquidity really matters and, wanting to get really fair pricing really begins to add up. We're talking about like a one-time deal here where it's not going to be a huge issue one way or another. So let me go ahead and, it's so funny. I'm not even going to use them. That's hilarious. So let's go into the May 2nd weekly option. Yeah, so there you go. We got filled pretty easily, actually. And so there's your Chipotle roll into the May weekly. But it's good to know that the May monthly's out here. And so now I feel better. I feel better about that. So Lefty F3, what's in the house there, Lefty F3? I appreciate you being here. Dr. Jim, how about some kettlebells? Man, I'm not much of a kettlebell guy. I'll use them from time to time for some dumbbell lateral raises, or I guess they'd be kettlebell lateral raises. It gives you a whole new stimulus on that kind of medial deltoid because of the way that the kettlebells hang, which is kind of nice. But Lefty F3 says, how about some cleans? Nope. How about some snatches? Nope. How about some swings? Nope. Presses? Okay, possibly. Some thrusters on some kettlebells? Man, I'll hit a little glute thruster from time to time. But how would you do that with a kettlebell? I don't even know. I don't even know where to begin. So I'm probably going to pass on all that, Lefty. I do want to get some kettlebells for the garage gym, though, as kind of just, for those couple of rare times that I might use them, like lateral raises, for example. It might be worth a little investment in some kettlebells. I got to run it by the boss. And I mean, there's lots of paperwork, man. I got to submit all the paperwork. And then it's usually like 3 to 5 business weeks before I hear anything back. And so, I mean, that's if I'm lucky. And so I'll let you know there, Lefty, if we hit that up. But kettlebells are not usually my go-to. Tango 999, are you really there, or is this your AI? You can never be sure. You can never be sure. I'm excited when, I'm gonna if it ever is AI, I'll tell you what I'm gonna do. I'm gonna do it like you guys have probably seen this, right? Have you guys seen? It's not really a meme. Maybe it is a meme. I don't know. But have you guys seen the little deal it's been on the internet now for a few years, ever since kind of remote work became a lot more popular, which obviously that's what I do every day. So I'm, very attuned to the remote work world. Lots of Zoom meetings, lots of whatever. Well, there was this guy who used to have like this. It was like a poster board. It wasn't even like, he didn't even do like the digital version. It was like a physical poster board of like him, like looking like super interested, just like this. And he just had it like set up like in front of him. And then one day on one of his Zoom meetings, like it fell down and he was sitting behind it like playing video games or something, which is absolutely hilarious. That's so funny. If I ever give you guys the AI version, I'm going to be sitting right behind it just to make sure it's not spouting off misinformation, just to make sure it's not giving you guys like, I don't want it coming out with like B+ humor. That would be so out of character. Like that will not be okay. So we'll have to water those things down and kind of get it back on track. So, but that could happen. I mean, it is 2025. So Emmett Morrison's in the house. What's going on there, Emmett? Good afternoon, Dr. Jim. Doing anything in Nike or FedEx for earnings? Oh, man. Wow, FedEx, they're still in business? Nah, there's no way. Let's go to Nike, though. Nike's down to 72. Wow. That's pretty low for Nike. That's pretty low indeed. Emmett, we do have a super long show tomorrow, too, by the way. And, that content's not going to make itself. So what if... I mean, you got to be bullish on Nike. Again, I mean, this is basic stuff. What if we did, let's see here. You know what I'm going to do? I don't want to do an expect move butterfly. Let's do something that's even a bit more fun than that. I want to do a Super Bowl. So a Super Bowl is where you double dip to one side of the market, usually to the upside, because it's a Super Bowl. You have a super bidder if you're doing it to the downside. So we're going to double dip to the upside by buying a call spread and then financing it with a slightly out of the money put. So if the market rallies, you can get paid on both. If the market goes down, you end up losing on both. It's just kind of a fun little way to take another shot on one side of the market. And that's essentially, for me, that's what earnings really are. It's not really going to be something that I think is going to move the needle a ton one way or another. Again, I mean, some of you might differ. You might feel like, hey, Jim, I've got the intuition you referenced earlier. I've got those kinds of things. I think that I can kind of, see some things with earnings that maybe other people can't see. I'm not going to say that's impossible. I'm going to say it's very, very unlikely, but I'm not going to say it's impossible. And so, yeah, go for it. I, on the other hand, I'm just doing this to kind of, see if maybe we move the needle a little bit. But again, I mean, the content's not going to make itself, guys. So if I go in here, what if I buy, let's see here. What if I buy a 70, 74 call spread? That's $2 wide. That's a little too much. Because I want to finance the whole thing. What if I do, actually, hold on. Yeah, here we go. We'll make it even smaller. Let's do a 71.73. Just a $2 wide call spread. We're going to pick up 97 cents for it. And then I'm going to sell a 69 put. So my net credit is 52 cents. The buying power is only $1,200. So like if I go to the curve view, look at this going to the curve view. That's how you know it's a super long show. There's your P&L diagram. If I zoom in a little bit, you can see, let me try to get it on. You can see the P&L right there. Oh, I missed it. How do I get that? Oh, there we go. Hold on. That's good enough. So if you look at it, you can see that obviously we have risk to they got us. I don't know how to, I thought just the wheel zoomed in. It kind of does and then also kind of doesn't. But that's okay. So you can see, hopefully you can, hold on. It's very slippery. Okay, you can see I've got risk to the downside. My main profit is going to be above 73 where the call spread's fully in the money. And then I can still make a little bit of money if it just chops around right here from collecting the credit right here at order entry. All right, let's go back to the table view. This curve view is making me anxious. So let's go to the, because I'm not using it right, because I don't use it that often. Let's go ahead and let's go for 48 cents. And this is Emmett's trade, by the way. So I take no responsibility for this trade unless it is an easy winner tomorrow. So let's go in here. 45. Let's try 45 cents. We'll probably get filled at 45. All right. So we're in at 45 cents on the Nike. A little Super Bowl action just to kind of keep you guys guessing a little bit. But thank you, Emmett. I appreciate you very much. CM says, I wonder if investors are worried to invest in a country without a judicial branch and thus law and order, man. I don't know. But as far as I know, Law and Order is on like season 44 right now. So I don't know what you're worried about. It is going strong. It couldn't be going any stronger, actually. So Junior Mac, here we go. Some a 10-minute snatch test will show you the way. I'll tell you what. So your cleans, your snatches, all those Olympic lifts, your jerks and whatever, like those are some really serious, like that's really serious training. I just kind of like pretend like I might be strong. I just kind of like pretend like, all right, he might know what he's doing. I really don't, but I try to kind of, pawn it off as, all right, I might know what I'm doing. But those guys that are doing stuff like that, like that's some crazy stuff, man. That is some absolute crazy stuff. And so let's see. Peter says, with a barely functioning legislative branch, yes, potentially so. T-Port says there's always a risk you don't the move you need to manage the other side. That's correct, T-Port. Talking about the Iron Condor legging in. That's what I was talking about earlier. And then let's see. Stefan says, hey, Dr. Jim, I got a short strangle on IWM. 185, 219. 29 days to go. Does it make sense to already roll in case the market will drop over the next few days? Okay, so you're out of the money on both sides. Personally, I would sit tight and do nothing because the trade is working. I would do nothing. If you wanted to add more time, go to the next cycle, you could. You'd bring in more credit. You would slow everything down. It just depends on where you're at. Based on your comment, you're kind of concerned about big moves. I would probably roll it out. Roll it out, kind of reset, reshuffle the deck, and bring in some more credit. That's never... Well, I don't want to say it's a prudent thing to do. Let's say that. It's a prudent thing to do. Cynthia says most of my losses were defined risk trades. That's sort of what I'm saying, which is not to say you're not going to take losses on undefined risk, but it's just something really special and something really magical happens when you get rid of that safety net. And I mean, that's how, Batman got out of the pit in Batman 3. Like, Batman would have never beat Bane if he kept that rope around his waist. Have you guys ever thought about that before? You can apply that to your trading today. It's the exact same thing in a not really kind of way. But guys, I think I'm pretty much done now. Wow, I got to go and get you guys to Tim Knight. Man, I appreciate you guys. I appreciate you guys so much. Come back tomorrow. Super long show tomorrow, too. And if I miss you today, come back tomorrow, get in early, and I'll try to get to as many as I can. But I appreciate you guys. I thank you guys so much. If I can ever help you in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
We built Tasty Trade for today's traders. See it, click it, trade it. Customized charts with hundreds of indicators. Actually see your potential profit and loss. Quickly roll to the next expiration. See gains and losses even when you roll. Cancel, replace, duplicate, or invert orders with just a few clicks. The tools, the data, the knowledge. See it, click it, trade it. Join the club, genius. Tasty Trade.
Good afternoon again, everybody. Tim Knight. And yeah, the week so far has been up, down, and it cannot seem to make up its mind. In fact, over the past 2 weeks, there's this line on the ES futures at 57.25, and just for 2 weeks, it's just been like a sine wave. It's up, down, up, down, up, down, up. Can't seem to make up its mind. Really struggling. But it's a pretty good day. And as always, I've got some charts to show you. So let's just dive in there and see what's cooking. Beginning with the spider, it is down a little. We've really just, for the past 4 trading days, not been going really anywhere. And I'll make this general point. I'll try not to repeat it over and over. The limit of the bounce is completely unknowable. It'd be nice if it was done. I don't know. Maybe it's only 50, 60% done. It's tricky. So I'm remaining cautious. I've got about 34% cash still, and just kind of keeping some powder dry. But in general, we've been moving downward, and we started bouncing last Thursday. But as you can see, Thursday, Friday, Monday was kind of it. And since then, it's just been kind of grinding around here. Maybe it'll push up to this level or even higher. I'm just trying to take things one stock at a time. The diamonds are also down a little bit. And I've gone ahead and anchored this to today's high, which seems a reasonable place for resistance because we've got sort of 4 blocks here of price action. 1, 2, 3, and then a rather wide one, 4. There's no particular scheduled news tomorrow or even anything of great import next week. I think the PCE comes out the last day of the month, which isn't that big a deal. And of course, earnings season isn't for a few more weeks. So, yeah, it's just kind of general psychology and overseas events, I suppose, the only thing driving it. But it's not a very dynamic day. The ES is down, but it's down 0.26% right now. And it's a mixed bag also with the stocks that should have blasted higher. Home Depot tried to make some progress today. It's still up some, but not particularly. One could argue for it to go as high as the bottom of this pink zone. Hasn't gotten anywhere close to it yet. Microsoft also earlier today was trying to push higher. It's been beaten back. It's actually down right now. You would expect it to maybe get to around the bottom of its own pink zone. And IBM is giving up the ghost here because it was in this range. It had in its 113-year history, just a few days ago, was the highest valuation ever. And we sunk to the lower portion of this range and then broke it today and moved down to the lowest level we've been since this big gap up, which really opens up a drop down to this gap closure. So no real leadership, either up or down, frankly. This was a good one. This worked out nicely. China, FXI. I'd mentioned at length this trend line yesterday. Probably spent more time on this chart than any other yesterday, and put in a big old short position. And I was pleased this morning to see it was down pretty hard. It just got too high too fast. And even at this great distance, it seemed to be ripe for a pullback. And you can see that reflected in individual Chinese stocks as well. Here's Alibaba, for example, itself down about 4 1/3%. It had an attempt at a breakout last week, and that's flopped. So that's all gone. Here's some odds and ends, some other positions I've got. Like I say, not a very dynamic day, really a mixed bag. Here's BG, which has a massive topping pattern like so. And I've tightened up my stop on this to some degree, but these slower, longer moving things, I tend to put way out, like in January, but give it lots of time. So that one, so far so good. No dramatic moves yet. Just got into puts yesterday on Apple, and that's doing all right. We've got a bearish engulfing pattern on Apple. Yesterday's shooting star constitutes really the peak for that. Really the appropriate stop loss point. See if I can set that more appropriately. Let's take this horizontal here, and we will be a little more picayune about where that stop is. So yesterday's high, I think, is an appropriate stop. And as I said, we've got a bearish engulfing pattern on that, so this is down a bit more than 1%. CrowdStrike, CRWD. This one had plunged from around 455 all the way down to 303. So about 30% drop or so. It has gone roaring back, but once it hit this top yesterday, it stopped zooming. So that's a position that's going all right. Got into that yesterday. Netflix, this is a really interesting one. As I've said before, a lot of fake outs recently with this. Fake out, fake out, fake out. It's too early to tell whether this one's going to ultimately work out well. It's going okay because this line here, 973.69, constitutes resistance with respect to this overhead supply, and way more important, this midline of this long-term channel. So again and again and again, it's tried to push past it, can't do it. This big drop still rules the roost. It hasn't been able to get above that bar. So still maintaining my bearish position on Netflix. And one other one, you know what? I didn't type this one up, beg your pardon. IonQ. All right. This is time to hang my head on this one. I was short on this, got spooked out of it earlier today, and about 2 seconds later, it started to fall. So it's one of those shame on me moments, but this one's down nicely. We talked about this before as kind of the odd man out in quantum world. But this is down over 10% today. and looking real sharp. And I wish I still had it, but I'm not going to chase this thing down because the risk reward is just all warped now. So shame on me. But if any of you stuck with it, good for you. There was no reason to get out of that thing. Let's go back to where we were. We were just about to look at the cubes. And back. There's the cubes. All right, these are down a skosh. Zooming in on this. And these have had, there's this big block range. And then we broke down through the trend line here. And then for the past, 8 or 9 trading sessions, we've been range bound like so. And the highest we got was here, which I guess was Monday. And we've been going nowhere fast since then. So this plausibly Monday's peak might have been it. But as I say, not a lot of scheduled drivers to really push it one way or the other. And as I mentioned, Apple is an element that's helping in that regard. They had some executive shakeup today. A specific sector, of course, always important to keep in mind is semiconductors, which is down just a little. This isn't a bad resistance point. Here, too, we exhausted most of our blast higher between last Thursday and this Monday. That is to say, Thursday's open and Monday's close. But it's been just milling about for the balance of the week. So 232.26 seems a pretty good resistance level to me on SMH. And digging even deeper into that, biggest component by far, NVIDIA, which is up a little right now. But in NVIDIA's case, it also seems to me that Monday's high would be an appropriate stop loss point for anybody taking a bearish position on that. Now, one of the easier predictions I felt yesterday, I think I mentioned it here in passing, it was kind of new news to me, was the president was going to make a big announcement about Bitcoin and crypto. We have been here before, and I'm not sure how many times this little movie is going to play, but I saw, big announcement, crypto summit, and they proudly stated the first time in history a sitting president would speak at a conference. I guess that's true. It was like, is this the first time? Because he did one of these before. It's like, he wasn't inaugurated yet, so he was the president-elect then, so we're going to split hairs about it. But my supposition was this is going to be a double patty nothing burger with cheese. And yet, Bitcoin went raging higher yesterday based on, what's this exciting news? There's going to be a big announcement. Oh boy, oh boy, oh boy. So if we look at the intraday of Bitcoin, you can see here, this lift that took place. We moved from around $81,000 to almost $87,000, principally because of whatever big news was coming out. I think this right here is approximately when they rolled the tape. It was a pre-recorded announcement, which basically said, in a nutshell, from now on, we're not going to sell any Bitcoin that we seize from criminals. Anyway, have a nice life. Bye. And as usual, things plunged like so. I guess they can do this dozens more times, and we'll have the same comical pratfall where you get this big lift and the classic buy the rumor, sell the news kind of situation. So in general, Bitcoin remains very important to keep an eye on with respect to risk on, risk off psyche. And I would say that today's high isn't a terrible place to think in terms of resistance. It could go higher. I mean, I think 90,000 is a nice, clean level. But as it is now, we might just mark today's high as a good resistance point merely because it had the benefit of this aforementioned grand news. And MicroStrategy, which is, of course, absolutely dependent upon Bitcoin, is softening up as well. And it is sort of amusing to me that the whole origin of crypto was libertarianism, unfreeing ourselves from the shackle of government, the fiat, the central banks. No, this is the everyman's technology. And they've been reduced to the point now of like begging the government, just do something. Do something. We've been at 85,000 too long. What happened to the $1 million predictions? So, yeah, they've shifted from libertarianism to basically government welfare. Please do something, help us. So the help hasn't helped so far. Interesting to watch. We're living in historic times. A little more of a legitimate hedge against craziness has been doing just fine. Thanks so much. Gold, another lifetime high. I guess it's got to ease off at some point, but it doesn't seem really interested in that. We're up again, front month's up at another $12. Gold just keeps on keeping on. God bless it. Yay, gold. Interesting chart here. The interest rates, maybe they've topped out. Maybe we're headed for a lot lower interest rates. The president's already gotten public about his demands from Powell to, do the right thing and drop interest rates. Whether he complies or not remains to be seen, because ostensibly it's an independent group. But at the moment, it looks like interest rates might be topping out nicely, but it hasn't come anywhere close to completing this pattern. But it might. We may be here where we were back here, which, interestingly enough, I noticed was late in 2008. How about that? Something happened back then. But yeah, that's the 15-year fixed mortgage rate. Honestly, I didn't realize the timing. Cool. What else? How are we doing? Oh, good heavens, we're out of time. I do yammer on, don't I? Well, you know what? I kind of made my points. So I think I shall say fairly well. It's a shame the week's going to end again. Got to deal with another weekend of waiting for trading, right? But it's always good to see you, metaphorically speaking. And I will wrap up the week tomorrow with you. Hope you're doing all right. Thanks a lot. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap. Why are we literally rolling out the red carpet? What has this diva done?
I know, I saw that. Why do you got a little red carpet?
Diva?
I don't like it. They said it's sound.
Do we have a wide shot of the studio? They said it was sound. Yes, me lord.
And do we have to clap when you walk in?
Where are the rose petals? Wow.
Vanetta.
Hello. Yes. Good morning. Ooh. Yay.
New phone. Who dis? I did go in and get the phone at AT&T, and I didn't realize.
You went in unsupervised?
I went in by myself without a helper.
Did Beth have to pin all of your information to your jacket? It was like, my name is Tom Sosnoff. I need help, but I am an independent person, but I am looking to buy a phone. Here is how much money I have available. If I need help, you can call Beth.
I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am. You guys are elderly?
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your accidents.
You don't report your accidents. Other people report your
They
accidents.
hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist. This is fun.
Forgot about that.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
What happens when two titans of trading come together to harness the power of their prowess? Let's watch these two master the art of the noble sport boxing. Wow, look at those geriatric thumbs go. Someone had an extra dose of fibre this morning. Like a flutter of fills, it's definitely fists of plastic fury over here. And I'm spent. Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market delivered right to your inbox. Sign up at tastylive.com/newsletters.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for the last call here on Tasty Live on this Thursday afternoon. What's going on? What's shaking, Sadnov? Well, even the S&Ps were probably up 20 the last time we were on the show. They're now down 20. NASDAQ down 100. Russell down 12. And the Dow down 63. Even the S&Ps had a range from 57.60 to 56.80. We're 57.11. Is this an inside day? Is this a new inside day?
Oof, for this kind of volatility, sure, I'll give it to you.
Inside day with volatility 1945 in by 21 cents. Bonds 117.25. Sad enough, they were almost 119 earlier this morning. 118.23 was the high. Bitcoin basically unchanged. Bitcoin down 1,300. Ethereum down about $50. Oil up $1.28. Sadnov, Brent crude. I know you don't like to talk about it.
Oh, please don't start quoting Brent crude. I mean, it's just going to confuse people. And they're going to be like, what should I trade? We don't do that. Okay. It's not cool. Until
I'm just trying to support Linda.
Here's my deal with you.
Everybody thinks they got a shot, Sadnov. No, everybody thinks they got a shot.
Unless you start trading Brent crude, like, don't be one of those people. Don't be one of those talking monkeys that like Brent crude did this. Do you trade Brent crude? Nope, never have. And why are you quoting it? Okay, because nobody gives a damn. Just quote crude oil. Don't confuse everybody.
Cut this out for me, will you, Beth, so that I can give us to Linda later today? Appreciate that. Gold up $12. Silver doing the opposite, down 16 and change. Platinum down 17. Now you've traded platinum. I can do that.
Hey, so my gold silver pairs trade today, I think it was up or down. Let's take a look.
It was up $70 real quick. I told you to take it off. You snickered at me. I have no idea what it's doing right now. I haven't looked. What's it doing?
I'm up $42.
You see, you cut your profits in half. Typical Sosnoff trade. Unbelievable.
Hey. I'll tell you when I'm up like 500 on the trade, and then I'll take it off, and then you'll be like, "Oh, I'm so jealous. Where's my half?"
No, I'll be saying as foretold, Sosnoff, as foretold. You know that. That's how it goes.
Actually, they did a really good job of pretty much crushing premium today, like we thought they would. And now we're into that stage where this is effectively expiration. This is the last time you can trade SPX options. So this is kind of like, this is where all the imbalances.
SPX options. What are you talking about? Last time you could trade SPX options
in March.
They did away with. In March, right? Except the March 21 options and the March 24 options.
Forget that. I'm not talking about that. Here's what happens tomorrow morning on the opening.
So when you said March options, you're not talking about these 8 or 10 series of March options. You're talking about just the March 21 monthly options. Is that what you're talking about?
I will explain, okay? For those of you that are for the slow adults out there, tomorrow morning.
For the Batistas, just say for the Batistas of the world.
For the Batistas. Tomorrow morning on the opening, what they call triple witching is that the monthly AM SPX options settle tomorrow morning. The ES monthly options settle, and the SPX, so the SPX, the ES, and the ES futures all settle tomorrow morning on the opening. They settle on the composite print. So tomorrow morning on the opening, right before the opening, there'll be some form of order imbalances and everything will settle. Well, today on the close, what you get is a little bit of jockeying for position. And because there's some people with open positions left, some people that are going to roll the dice into the close today. And so we'll kind of see. Usually you get a little bit of a funky close going into the day before a composite opening the next day. I don't read too deep into it. The last 4 composite March openings where everything expired together were down pretty big. I don't have the exact number in front of me, but I want to say they were down between 9 and 16, which again doesn't seem very big in this market, but it was bigger in the other markets before at these kind of levels. And that's all that the SPX, the DJX, the NDX, and the RTY all have the same thing tomorrow morning. If you have an ETF, like the spiders or the diamonds or any of those kind of things, or the Qs, those expire on the close tomorrow. But if you have an SPX position on that expires tomorrow morning, you can't trade it. So you might want to get out on the close, so you have no control. And if you're hedged for some June future, it's not a hedge, just so you know.
Right.
We're not, as a firm, we're not going to look at that as a hedge risk-wise, because the cash can open down and the futures can open up, and it's not a hedge.
Sure.
So anyway, just bring all that stuff up. That's why today you probably saw, I'm guessing, decent volume. Yeah, you did see decent volume.
10 million SPY options have traded, 3.2 million SPX, 5 million Qs, Sosnoff.
Yeah. And that's why rarely do you get, usually it's like NVIDIA and Tesla and all that kind of stuff are the most actively traded options. But today it's SPX, Qs, and SPY because everything's
everybody needs to roll, close, it's all tightened up.
Whatever you got to do. We do it at 21 DTE, so we don't mess around when it's so hard. Like these markets are hard right now.
Yeah.
Like, this morning last night we were up 25 handles. This morning we were down 45 handles. Then we went from down 45 handles to up 35 handles.
Right.
Okay, so we had an 80 handle reversal, and then we went back down 30 handles. And then we had a 65 handle reversal the other way. Those are all 1% moves. You only see that when you have volatility in the 20 range where it is right now.
Right.
And it's not going to change dramatically. It's not going to get any volatility is not going to drop that fast. Probably maybe later next week or as we get into April or something. But we're still in that period right here where there's going to be a lot of freed up cash tomorrow morning, and I think you're going to see a pretty whippy market continue just like you've seen so far. Don't you think? I don't think anything's going to change.
I think you did well in summarizing a very public view. Yeah, sure.
I also think, thank you for that. I'm going to take that. I'm going to wear that as a badge of honor and consider that to be a CompuSalt, and I'll be very happy. I'm happy with that. Yes, thank you. So
you're so welcome. You're so welcome.
A couple things to talk about here going into the close today. There's a couple earnings plays tonight, which is kind of weird on night of triple witching.
Nike, MU, FedEx.
I happen to have positions on in Nike, MU, and FedEx, not because I put them on today, but because I pretty much had them on. So I will tell you what we did. It's not that exciting.
You want to look at Nike first? Good IB rank of 69, stock's down $1.
Yep. In Nike, we sold the Nike. What did we do? We sold the 66 puts.
You did that in the 1 day.
1 day. It worked today in PDD. I'm going back to the well in Nike. The market right now they're kind of like
65, 69.
Yeah, let's call them 66, 67. My average price is 67, so I'm right here.
Got it.
Okay.
MU.
Yeah, that's the 66 puts in Nike. Now, why did I sell the 66 puts? Just to help here understand my thought process. The expected move is just over $5. The overnight expected move is just over $5. So I went exactly to the expected move. I went, it was Nike was trading around 72 at the time, minus $6, about 66. That's why I went there. That's all.
The expected move is right there on the right-hand side in parentheses. Says 526. Yep.
It's not rocket science. That's all it is. Just go to the expected move. I did not sell any calls.
MU expected move $8.60. Sadnoff, what'd you do in here?
Okay, so this one I did a little bit bigger size. And I don't know if that's the right move to do or not. But in MU, I sold about 2 puts to every 1 call. And I sold
in April or in March?
In March and April. So in March, I sold the 90 puts. And in April, I sold the 85 puts. And in April, I sold the 150 calls. It's totally a bullish position. I sold the puts.
In April, you sold the 150 calls?
Yes.
In April, with 28 days to go, you didn't sell the 150s. 115s?
What I sell? I'm sorry, the 130s.
Okay. Okay.
Hold on.
130s, sure.
My 2020 eyesight let me down for a second. Okay.
Yeah, sure. Understand.
And I don't even like selling the calls in there. I
kind of agree with you. MU, all my Taiwanese sources say going to be good things for MU. Good things.
Yeah, well, your Taiwanese sources, okay. That's the short bus, okay. Your Taiwanese sources, just so you know. And so I'm not exactly banking on. I might not even take those. I might even cover those before the close because they're up money today, and I think I might just take the profits. But I am selling I like selling the March 85 puts, March 90 puts the best. I like selling the April 85 puts a little less, but and then I'm up a little money on the calls. I might take it, I might not. I'm not sure, but we'll see. And I happen to have one last position on. It's tiny. I've had it on for about a couple of weeks. I'm up about 50 cents on it today before the number, but it's FedEx. If you traded FedEx
I thought you told me not to trade FedEx or something like that.
I did not trade it. I had a position on in there. I did not establish a new position. This is a position I put on probably a couple weeks ago, and I think it was one of the what's your assumption trades or fast market like tomorrow morning. tastylive.com/fast market tomorrow morning. tastylive.com/fast market. FedEx last earnings, if I remember correctly, really crapped out. And
FedEx, it did. It looks like it went from around I don't know, let's just call it 300 to 250, 260, something like that.
Yeah, it crapped out pretty good. I am now, the stock is trading 245. I'm currently in the 200s, 290s.
Expected move about $18. You're in April with these 290s?
I'm in April.
Got it.
I don't really even like the position. I was thinking of covering it before the close. I don't know.
Markets, I mean, I guess they're as tight as they're going to be right now, but they're relatively tight. Out there, they are at least. I mean, one option was 2-3 cents wide, one was about 6-8 cents wide.
Yeah, they're relatively tight. It's not the worst. I mean, listen, we've traded worse. They're not that good. In April, they're not that good. They're okay in March with the day to go, but they're not that good in April. Yeah, I just messed around with a couple of. I mean, I figured last time they missed so bad that this time maybe they do something. I don't know.
Very nice. Vanetta said you're going to buy her a pair of custom pink dunks when you hit it big in Nike earnings.
No, Vanetta said, "Would you buy me a pair?" And I said, "No." I said, my exact words were, "If you take half my losses, I'll buy you a pair."
I was there. I mean, I heard you all day today. Yep.
I mean, if you're open to taking half my losses, we can talk. But if this is just a one-way trip, then
you're not playing. If it's just a one-way street.
Well, I have other people that are on the one-way street bandwagon. You know?
Oh, I have to get off that one. Sadnov, are you going to tell everybody about the fashion show today?
No, never.
Vanetta's going to tweet it out. She's got a whole little sizzle reel going to happen. You know she'll do something good with it. I would buy her those Nike Dunks whether you make money or not. If I was you.
I would be very careful about tweeting that stuff out if I were her.
Too good. Too good.
I don't really like you guys, so I just want to go on record.
I understand that.
I just want to go on record as saying that it was not my finest moment. I mean, I'm a little bit upset that you guys don't think that my current wardrobe would hold up for, you know,
for anything, anything, anywhere. I mean, the fact that I don't even want to embarrass. I'm too embarrassed on what I saw what you were going to wear to the wedding, and I am embarrassed for you. So I can't. You're a reflection on me. I can't even say what you were going to do. So I'm glad. Todd, big shout out to him. Went above and beyond, buying you clothes, picking them out. I mean, seriously, you slap a set on Todd, he'd be the best housewife you could ever have, Sosnoff. He'd be great for you.
Okay. My standards.
I mean, I know I can't really do any justice right now because Vanetta's not done with the little sizzle reel that she has of you.
Oh my God.
But my man, you clean up nice, Sosnoff. I mean, real nice. And Todd did a good job picking out your clothes for you. He really did. Better than I would have done. I would have went more creamy. He threw in a little blue in there. Perfect.
All right, that's enough. I can't take it anymore.
You got a little goy in you. I'm not gonna lie though, a little goy. You got a little bit of a goy look there. But it's beautiful. I like it.
A little bit of a goy look.
Just a little bit. But like rich man goy, it's good goy.
Oh God, Beth, you got to save me.
It's not like, you know, Grove's goy. I'm talking. This is good goy. You'll be fine. It's good to have a microphone.
Yeah, it is. Yeah. All right.
I know you mentioned fast market for tomorrow, but if we could put up the art card just so everybody sees it on Friday. Every Friday, we go to your trades that you submit for us. We look for it. We'd love to see you participate. Fastmarket.com/tastylive.com. Please submit your trades.
Well, there's no question today was if you came into today's short premium, you made money.
I think so. Yeah, it would be hard pressed to, unless you got shook up or just too, I don't know, man. You know what? 28 days, it's hard to get shaken on anything because 21 days, it's hard to get really shaken
21
on
days.
moves.
Inside of 21 days, you can get shaken a little bit, but
Yes,
28 days, you're right. It's hard to get shaken. And
even if you roll up, it costs you, a dime. You know what I mean? It doesn't usually cost you, a lot of money.
I think the last couple of days have been a great lesson to all Tasty Nation that, when you get that vol pop, I mean, this stuff came in. That's all. It really did.
Yeah.
And I don't think it's done.
Mm-hmm. I think you're right.
I don't think it's done at all. I haven't. Our theta numbers, our deltas are pretty flat. Our theta numbers are pretty big, and our extrinsic, it's middle of the road. But we're staying.
Sadlov, you got to admit you've had a couple of nice days, maybe even a week going here. You've been non-opinionated, a little bit long bonds on dips. You've been buying them and selling them out. You haven't been holding them and having a. Isn't it nice to trade like the bat?
No, because I feel like
I mean, you can't walk down the street like a Bengal tiger, but you got more money.
Yeah, but I don't feel like a full. I don't feel like a man.
Like a full trader. You don't feel like a full trader.
I feel like half a man.
I feel like half a glass. I got it.
A manster. Yeah.
Yep. Okay.
All right, let's see if we got anything else here. I'm just looking for kind of outliers today. And to be fair, I don't have a lot of outliers on my screen. I know it's the day before, but I just don't have a lot of outliers. I don't know if you got outliers, but I don't see them.
It's been a good payday day. That's all. Nothing. Everything's been covered. Apple was up a couple of dollars. It turned around down a dollar and change. Tesla was up a couple of dollars, down a dollar and change. I like them a little bit north of the number, but other than that, fine.
Yep, I agree. All right, we can jump in and bring in the boys if we want to have a little Thursday afternoon pre expiration.
Bring them in. Let's do it.
I think it's only a 2 lot today.
Okay, 2 lots are fine. I like 2 lots.
Just the two of us.
Just the two of you. Yeah. Pretty typical day before, triple witching. Kind of typical. Nothing. A lot of tug of war. A little more violence to both directions than we would see with volatility's, 15. You would have seen probably like a 10-point rally and a 10-point sell-off. When volatility's 20, you see it like 40 handles. But I mean, other than that, you guys pull anything out of this today?
Pretty choppy. I went around pricing, seeing if maybe I want to nibble a little bit long on the Russell, but ultimately I don't think the pricing looks any good. Everything looks like it's basically a coin toss. So I'm just going to sit in bonds and short dollar and wait. Doesn't look like there's anything to do for me.
I think the bonds kind of blew their brains out this morning, to be fair. I thought they when they were up a point early and they couldn't hold it by the end of the day, I think you might get a little bit of a down move here in bonds. Maybe you get them back into the 116 handle. Then I think you can buy them again.
Maybe. I'm open-minded. I have a little bit of positive P&L in here. I'm basically looking for ZB to hold above like 115.30, something like that, 115.5. As long as that happens, I'm okay. I've got duration on my side, but otherwise, I'm certainly open-minded. That doesn't look like a very good candle today. They capitulated hard.
The other thing I want to say is that bonds are just they're kind of I don't think they're the play here. When you get down to triple witching, it's all stocks here. I mean the whole play from today to tomorrow is it's stock play. Pick your poison, but it's all stock plays.
Which is why I'm standing aside. I mean, for me, the bonds are kind of like a multi-week idea, so I'm not going to touch anything. The dollar is a multi-week, multi-month idea, so I'm not going to touch anything here. I'm just going to back up and let it do what it do.
That's fair. Mr. Vecchio.
Healthcare, energy, utilities are the top performing sectors today, Tom. And on the downside, the laggards are retail, technology, throw in materials. It's not exactly a bullish looking day under the surface from growth perspective, from that growth evaluation perspective. So I don't know, a lot of chop, haven't been able to clear key levels in the indexes, can't hold rallies. It doesn't look great.
Can't hold rallies, can't really hold sell-offs either, right? I mean, listen, we're down 12 or 13 on even the S&P, but I agree with you. They seem like they have a little bit of their thumb on the upside, a little bit depressing it. I'll give you that right now. Volatility /VX down 21 cents, hanging out at 1945 or so, is relatively a good number too, right? Saz, what would you say the mean is on?
Great. The mean is probably under 18, but this is a good number.
That's what I was going to say. I was going to say probably under 18. Yeah.
Yeah, this is a really good number here for traders, and I see, I couldn't think of a better landing spot. I think this is it. I mean, if you want to go into a triple witch with high option premiums all over, with a little bit of plenty of room to come in, anything wrapped around 20 into a triple witching is very strong. And you're seeing it, man. The cheapest play, the least risky play on the board this week was just selling premium, because there was no real earnings, there was no real outliers. I mean, maybe Netflix this week. That's about it. No other real outliers. And Netflix is so hard to trade. Doesn't matter.
Yeah.
So I think it was kind of a pretty. I think the market threw a little bone this week. I don't know if it will next week, but tomorrow's kind of interesting. After the opening, they get this. All this cash gets freed up. Half the street goes on vacation. The other half, half the street goes on their kids' spring break, and the other half just tries to push the market around. So it'll be fun tomorrow.
If I had to bet, I would say that if you needed a path of least resistance, the immediate kind of few hours after the Fed yesterday told you what the path of least resistance was just before all of this fuzz. And so there's no hard data out of the U.S. basically until the first week of April. PCE comes out, but markets know what that is. So you probably get this melt up because there's just nothing else to happen, and then the hard data comes out, and then you get a chance to maybe have the downtrend resume. I still think it's overall pointed down, but if you're going to be a seller, and I'm looking to be a seller, it's got to be at higher levels.
I didn't mention Carnival Cruise Lines has earnings too, Sal. Now, if you don't have a position in it, I didn't think you cared.
CCL?
He was in that. I thought he was in that promotional video today.
Only that was was that Carnival Cruise Line? I think it was Royal Caribbean, was it?
My mistake. Sorry.
I'm a very sought after model, Chris. I'm in lots of different ads all over the place. Yeah.
I've seen you fighting Tony actually in a Mortal Kombat ad today too. So you're all over.
They're still playing that thing. Can we put that to bed?
God.
I think John has a vendetta against Tom or something like that, or me.
It does end with you on the floor in flames, so I think it's a vendetta against you, Tony.
I think so too. I think you're right. Well, good job out of you guys.
My favorite one, by the way, Chris, my favorite one that Tony had orchestrated was when they put my face on the cover of a swimsuit model on Sports Illustrated.
Oh, I still have that somewhere. You're
Kate Upton. Kate Upton.
Kate Upton, that's her name. Kate Upton. I couldn't remember her name. I know
she never recovered. She had to retire after that came out.
That was one of the best mock-ups we've ever done. Nah. Oh well. To yesteryear.
Great. I hope you're happy. You destroyed her career.
We're gonna take well, listen, we do that in life. We're gonna take a quick 90-second break. We're gonna come back. We got overtime next with these gentlemen. Peace out. Even the SP down 13.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
I'm running Snow Leopard with this. I'm a Mac. I'm a Mac. I'm a Mac. Multitask, MacBook handler, brother. iPhone in one hand, iPad in the other. Pop open top, Apple logo shining on the back. That's why all these player haters know that I'm the Mac. Easier to see a nun with VD than to see me ever typing on a PC. So if you got one, you can play a sad tune and play it back later in your room on your Zune. Windows made to break, and I'm here to crack it. And if I'm a Mac, that means that I'm immaculate. Style so clean, like it's disinfected. Clean surfaces where white light is reflected. Plastic case, Apple Store, keep my phone protected. Check my toolbar to see if networks are detected. Use my side swipe, applications hidden in it. This is Mac world, bitch, you're just living in it. I'm a Mac. 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 Roll into the coffee shop, know I'm on a power trip. Strapped with my laptop and my own power strip. Eye outlet, about to make your cable drop. Apple logo shining off the marble on the tabletop. So if you see me, then you see the star. Any place I sit down, call that the Genius Bar. Looks like I'm working hard, but to really know the truth, just taking pictures of my fine self in photo booth. Interface simple, why I need a Kindle. Working on that pad keeps my fingers mad nimble. So if you think I come up short, you must be wrong. More than one reason that these ladies call me Justin Long. I'm a Mac. I'm a Mac. I'm a Mac. Yeah, Justin Long, son. You catch that? Known by the ladies as the toolbar. 10-hour battery life. Force. Quiz.
Stocks can't stick the landing. It's Thursday, March 20th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Mike Butler in Chicago as Dylan Radigan makes his way back to Milan. He'll be with us next week. Of course, if you're joining us, please make sure you come over to YouTube. Tell us what you're trading today, what you think of this lackluster market action here over the course of the U.S. session. Otherwise, go over to YouTube and, well, you've already done that. So come over to tastylive.com and go to the platform. Tell us what you think. That's what we're here for, of course. It's another day of, well, digesting the Federal Reserve. Yesterday looked like a pretty strong move out of the gate, guys. We couldn't find follow-through in this session. S&P 500 down by 0.23%, as is the NASDAQ. Your Dow Jones is off by 0.06%. The Russell off by 0.69%. Bonds, which are up much more heartily in the day, have now reversed. Kind of an echo from maybe January 2024. We'll talk about that in a little bit. Gold, new all-time high, but doesn't close there. Silver, new monthly high, but then backs off. It's a mixed day for metals. We can go over to the currency world. The yen is the only thing afloat while everything else is down versus the dollar. We're going to get some single stock talk going with our man of the hour, Mike Butler, in a little bit. But before we get there, Ilya, what do you think of this lackluster follow-through in stocks after what was seemingly a very good day yesterday as we were making our way post-Fed?
I don't really make much of it one way or another. I think Tom makes a good point that we have this crazy OPEX hanging over us, and there's some sort of fuzz in markets. And so wherever you look, you make attempts to follow through, you make attempts to come off, you ultimately are left with what the S&P is showing you here, which is no change. You're basically inside the range that you've been in since the market decided that it was going to stop falling in anticipation of the Fed. Because that's really what you have here is after the CPI numbers, really, the market basically stops and says, right, okay, so the Fed's next. Let's see what they say. I was kind of expecting that the Fed would disappoint markets because they would rally more strongly into it, because the Fed would have to acknowledge that the data has become soggy and would have to do something or other to basically flag the moment, but also then say, but we're not going to cut rates any faster. And I thought the market would at least anticipate a little bit more heartily some amount of support, or at least acknowledgement, and rally into the announcement. It didn't. It basically sat. And then you got the announcement, and the markets got exactly what they basically were looking for, which is to feel seen. The Fed told them all the things. Sentiment is down, and tariffs typically do this and that to growth and inflation, as you all are concerned about. But it's soft data, and until it's hard data, we're not going to change things, but don't worry, we're on the case. We're paying attention. So the markets liked it, bonds liked it, dollar didn't like it, all the things you might expect. But we're still in that same range. So until you get some kind of conviction here, there doesn't seem to be really much to do in any of the major assets. I mean, I'm sitting long bonds because they haven't overturned their.
Well, don't go there yet. We're talking
higher.
Stocks still. We're still talking stocks.
All of them. All of them.
What are you
name
doing?
it. All the charts.
You want to go to bonds yet?
They all look the same. It's all the same.
We still have 51 minutes, Ilya. You can't do that. Okay. Mike, jump in and save this.
I'm obviously not annoyed by the lack of progress in the bonds and the dollar.
You know, before we go into single equity names here, which it's kind of a mixed bag. Microsoft's off a little, Nvidia's up a little. Sector rotation isn't great. What do you think of the indexes down here? This recovery after our 10% correction in ES and NQ.
I was sad this morning when I saw we were down pretty big, and then I was smiling when we weren't. I think really it's. I think there's a couple of things that are interesting. I mean, you see volatility coming in. Even though we're down today, I think volatility is coming in just because the range is a lot smaller than what we've seen in recent times. But, I mean, the market's trying to recover as best it can, but I think there's still a lot of questions under the hood. Powell was wearing a purple tie, which usually means buy, buy, buy.
Yes.
But, you know, there's still heightened implied volatility with the VIX at 20. But we are creeping out of backwardation in the J, K, and M contracts. So I don't know. Usually, obviously, backwardation tells us that we should expect big, violent moves in either direction, which we've gotten. And contango tells us that historically the markets have slowly grinded higher. But whether we see like a huge V bottom versus because that's what we are used to. I feel like the last couple of years we see big sell-offs, we see big buys that are completely reversed in a couple of weeks. I'm not sure that's going to happen this time around, but with that said, there's a lot of big name tech stocks and big components of the S&P and NASDAQ that have been absolutely destroyed. And I think if there is a investor out there that's looking to buy something, the whole board is open. If you're trying to, you know, make 20% or 30% from the lows, a lot of these single name stocks are there. So it's going to be interesting to see the rest of the summer, I guess, into the summer months. But yeah, Nvidia trying to climb higher. Micron had earnings after the close. They're up $5, $6. So the tech stocks are not dead yet. Not dead yet. We'll leave it at that.
Not dead yet. That is
an encouraging assessment.
You know, Mike, when you're down 90%, you can still drop another 100%, right?
Correct.
You know,
Not dead yet. Yeah. Yeah.
Okay. So, like, what do we do here though with a company like Nvidia? They had a pretty interesting news announcement today. They're opening up a quantum computing research lab outside of Boston, which Boston is a major research hub. That's obviously more important than the news that the Celtics were sold today. Who cares about Boston sports teams? So Nvidia gets a nice little counter trend bounce. The market's down, but Nvidia's up 0.86%. It's not like that resiliency really is going to reward us. I mean, there's a 22.3 IVR, Mike. How do you just move on from Nvidia at the moment, or because this has been one of the champions, do you have to put your faith in it and continue to trade around short put spreads, long call spreads, etc.?
Yeah, I like when IV's low. I think we kind of lean more towards diagonal spreads, calendar spreads. Nvidia, I think, is the poster child of that. I mean, at the same time, IV ranks at 22, but the actual implied volatility is still in the 50s. With that said, IV rank being low tells you that this is still a cheaper diagonal spread than what it was before. and you're getting $118 stock price versus $150 back at highs. So yeah, I think if you're bullish, or even if you're more neutral to bullish, you can still set up a trade where you're long May or even long June. That's what I got. That's what I did in Micron today. I actually bought the June contract because the implied volatility differential was pretty strong in terms of the May contract still had a much higher implied volatility than June. So I didn't have to pay that much more to get almost 50 more days on that contract. So I think that's getting kind of interesting. If you're longer term bullish on these tech stocks, getting into the June cycle and selling April, I think is an interesting setup because that also gives you the embedded roll where if you're wrong and the markets keep chopping around, you can roll from April into May and still have a nice distance between your long and short option, which is key for getting profitability out of that if there is a directional move. But I'm encouraged with Micron rallying. I think if that holds, you might see a sympathy rally in NVIDIA and some of these other tech stocks. But yeah, I think defined risk for me is the way I'm going, unless I'm really taking a stab and I'm comfortable with taking the shares at certain levels. Or if I'm trading QQQ straight up, I think undefined risk in there is a lot easier to manage and deal with just because on the worst days, it's just a normal day in an equity. So that's kind of where I'm at. But I like trying to catch these dips. Unfortunately, I was a little early for a lot of these, but I still traded very small, and I can dive in with another bullet here. But that's kind of how I'm attacking these is your Microsofts, your Amazons, your Apples, like all these stocks are at 28, 30% IV. But if we rally 300 points in the E-minis as kind of a relief, you could see these stocks go up significantly, well outside of the implied volatility, I guess is the best way to put it. So long-winded way of saying diagonal spreads and calendar spreads are where I like to live with it, especially at this point in time where we're kind of flattening out here. Even if we move lower, you can still get a longer term trade on.
Ilya, I think the lack of follow through is perhaps alarming to some, maybe not so alarming to others. I think about the S&P 500. You were talking about a bit of chop right now. It really seems like there are two clear paths forward from here. Either this is coming together as an inverse head and shoulders pattern, which if a neckline comes in around 57.75, that gives you a pretty beautiful measured move off the low back close to 59.90. And if you believe it, lows that you have after DeepSeek Monday, what do we see here? Tariff Monday in early February. The lows are basically there. That'd be returning to the neckline of the double top high to a certain extent. The other scenario is that this is simply a triangle. And if you begin to fail below today's swing lows, below 56.80, you start to look at the 56.50 area and then the lows from the month, lows from the year. So right now, I don't know. I mean, I have a short put spread on still, and I'm comfortable holding it because I put it on last Friday and we've weathered the big event risk so far. But I can't help but think that for people who are looking to outlay capital right now, this is actually a decent time to just wait maybe a few days longer. You know, maybe it's tomorrow afternoon, maybe it's Tuesday, who knows? But there could be a directional cue coming up sometime soon that will give us a little bit more confidence about which way the next, 200 points are going to be.
Absolutely. And I think the way that this sets up is, in my mind, kind of the news flow is probably more supportive of a larger correction than it is of an immediate sell-off. Because basically everything we heard from Powell at this press conference after the Fed was, look, we're attentive, we're paying attention, but we need to see this in hard data. Well, what's the hard data? The PCE number is really well telegraphed because once CPI and PPI are out, those numbers rarely surprise. Maybe we'll see something there, but that seems unlikely. That comes out at the end of this month, I think the 28th. Then there is this Monday, the PMIs. Now, the PMIs are still survey data, but if they're really, really scary, again, for a third month, then the markets are going to start to really notice. So maybe that's a roadblock if it misses. We'll see. The real hard data that we have to look at next is NFP, and that's the first week of April. So there's all kinds of time here. Now, if the markets wanted to entertain an idea that everything is fine because the Fed has their back, which was their initial reaction after the policy announcement, they heard Powell and they're like, yeah, okay, so you're slowing down QT, telling us it's nothing, but you're doing it. You're telling us that you are going to end QT a little bit above where you think the assets on the balance sheet are ample. In other words, you're biased to be a little bit on the looser side when you end QT. You don't know how things are going to work out, but you're telling us that you're prepared to act quickly in either direction. So you're not going to shy away from cutting. You're calling the current setting of monetary policy clearly restrictive. So you're biased to cutting. Okay. We have some open space for the market to go, oh, right, this is fine. Let's just go to easy money sentiment melt up. Bonds go up, dollar goes down, stocks go up. So in my mind, that's kind of the path of least resistance for 2 weeks' time, but maybe we have to get through whatever OPEX shenanigans tomorrow to get that clarity. Having said that, I am biased short because I think the trend is down. And so I'm flat. I would rather be a seller around those former range bottom support become resistance, obviously. But if it breaks the counter trend line there, that orange one, then I'm in. Let's go. I am also completely open-minded to getting long if we take out this range and writing out something small, maybe in, to manage size in like a SPY vertical or something like that. Maybe an IWM vertical for Russell. NASDAQ seems a little funky, but we'll see if the Qs offer something. At this point, I think Russell actually seems like it's held up the best. So maybe that's where it is. But I'm not opposed to a counter trend move if the risk reward is there. So far, it's not.
It doesn't seem like it's there right now. Not coming together in the S&P, in the NASDAQ. Similar type of setup. I've drawn it a little bit differently. You have a trend line, maybe a horizontal level of resistance overhead near 20,150, 20,250, somewhere in that band. Yeah. But if you're not clearing there, then it just looks like a bear flag. And ultimately, that's the problem when I was reflecting on this today with Westwater a little bit and it kind of hit me. One of the reasons that I've been so bullish on the market for the past few years is because you and I started working here in full-time in December 22, Ilya. The market bottoms then. So it's been a straight line up up until the last month. It's been a straight line up. But I'm reminded of the conversation that we had so many times over those months. If it looks like a head and shoulders pattern, do you trade it short? Not until the neckline breaks. Right. So if you're looking at this, if this is an inverse head and shoulders,
that was my whole year last year. That was my whole year last year. Looking for those breaks, and then when they don't happen, going, well, it's a good thing I waited for the neckline break. Next.
Yeah, and so this being a down market, it kind of is the exact opposite logic applies, or the same logic, but just crisscrossed. So we see that then you don't trade this as an inverse head and shoulders pattern unless you're breaking the neckline as well. If you want to treat it
unless
as a flag, right? And that's kind of the game right now. You could see a credible case for a bottom having come together here, though. If we do, I'm just looking for a little bit more of an advance, guys. But if we get a little bit more of an advance here, the downside obviously has been broken. We're moving out a swing through 20,150 going into next week. That's something maybe we can hang our hat on. Yeah. But Mike, you're more of a quant guy than Ilya and I are. I'm more of an options person, and I think that you would be a better person to explain what you're thinking about, or what we are the collective thinking about on overtime with respect to OPEX tomorrow. $4.5 trillion notional value set to expire. I think one of the curiosities of the last OPEX in February was that it occurred on the same day as the S&P global PMIs were released. So you had this like accelerant as people were rolling their positions. and they had a reason to just step back for a little while. What do you think about tomorrow's OPEX? What do you think about this week's expiration? Are these things that traders should be concerning themselves with if they're operating by the typical 45 and 21 day out tasty cycle?
Historically, they've been interesting. I believe the research team has shown that the witching days are traditionally lean bullish, but I feel like we're in a weird time where that may not be the case, of course. With that said, there's still a pretty hefty, like today was a day where it felt like, okay, we're not moving anywhere. We're just digesting, like you mentioned. But tomorrow, there's still a 50-point expected move in either direction based on SPX implied volatility. And if you extrapolate that through next Friday, there's only a 120-point expected move. So definitely leaning into implied volatility tomorrow could be due to that. But yeah, I think if we're going to see some kind of move, I think tomorrow is interesting because there's such uncertainty with where we're at right now. I think you might see kind of a snowball effect where if we start to see a 30, 40 point move to the upside, maybe that extends to a 50, 60, 70 point move to the upside and vice versa to the downside. I think you might see people waiting to see what happens and then just piling on to that directional move.
Ilya, do you have any strong feelings about OPEX this week? Are you I remember on Friday, February 21st, I said, it's OPEX week, and so this move lower, maybe it's because of OPEX. And you're like, I think it's a little bit more than OPEX, Chris. Like, this is the S&P Global PMI.
Yeah.
Tomorrow, we don't have a catalyst like that on the calendar.
That's right.
Does that reduce, do you think, the potential of seeing a market go haywire because there's nothing really to exacerbate this extreme amount of flows and position flipping?
I mean, to me, whatever spring has gotten coiled from CPI and through the Fed, I mean, that we've had a lot of event risk. That spring has not uncoiled. And maybe it hasn't uncoiled because the Fed isn't sure and the markets are unsure. And what Powell did at the podium yesterday was basically commiserate. He was getting asked all these questions like, but what if this happens? What if that happens? And all of his press conference was like, guys, we don't know. You don't know. We don't know. Nobody knows. Let's all hold hands together and be ready to cut rates if we know when we know. Who's to say? And that was the whole press conference. I think that ultimately that's sort of what the markets liked about it was Powell kind of leaned on the podium, looked the markets in the eye and went, I know. Who's to say? You don't know what we're doing. We don't know what we're doing. Nobody knows what anybody's doing. Take it easy. We'll be with you. We're watching. So the market is waiting to unclench and pick a direction. If OPEX is the reason, if they need to be shuffling through positions before there is this unclenching, that wouldn't surprise me, right? It wouldn't surprise me if people say, you know what, that's a lot that we just heard. Let's digest it, but then let's wait to kind of clear the books, and then we'll lay out capital based on whatever kind of the 1 week, 2 week view is. I can see that. Markets oftentimes wait for event risk before committing, even though they might know which way they want to commit. They will often wait for event risk just to get it out of the way. And so I can see OPEX being that kind of a thing where it's not necessarily the nature of the thing. It's just let's get through this, and it will be more significant in its passing than its substance.
Yeah, I mean, you can see the market grappling in real time with the two narratives. Is it good that the Fed doesn't need to give us an emergency rate cut? Sure. That's good. Right? Is it?
I suppose.
Right? Is it bad that they can't do anything at all because they don't know which way up is from down? They can't see through the fog of the trade war. That's not good. right? You run the
No.
risk of falling behind. I mentioned before, and Ilya, you tried to do it 28 minutes ago, but we'll talk about bonds now. We'll go over to ZB and we'll look at the price action today, where after the Fed meeting, you get this explosion to the upside and pullback. And I couldn't help but be reminded of what happened in ZB back here in January into February 2024. We had a Fed meeting where the Fed told us they were going to stay on hold, and people were expecting that maybe, just maybe, they were going to start talking about when the cuts would begin to materialize. And they didn't. And bonds surprisingly traded to the upside. And I remember specifically you, me, and Dylan having a conversation on February 1st. And my exact remark was, this is the market saying the Fed's going to make a policy mistake. Now, granted, that didn't stick around, so maybe it was the wrong interpretation. But in that immediate aftermath of the Fed, bonds raced higher, despite the Fed telling us that, no, we can't do much of anything at all. And then sure enough, what happens? We give it all back immediately.
Yeah.
It kind of feels similar in that regard. It's obviously not the same thing when we think about what the Fed's doing. And we want to go this way on the chart. It's obviously not the same thing. It's a completely different context. We're not worried about inflation. We're worried about growth. But this lack of stickiness after the Fed meeting does raise an eyebrow. I do find it concerning. I know I'm in the same boat as you. We're both long bonds, notes in some capacity, various forms and functions. But this is a really ugly candle.
It's annoying, is what it is. Because earlier today, when I woke up this morning, I was like, well, the dollar is pulling back a little bit, but it's not, or pulling up a little bit. It's not clearing any crazy barriers, so I'm okay there. But ooh, look at ZB, look at my boy go, no, it did not stick. But at the same time, it also didn't come undone either. So it's holding that range that we've been seeing. I mean, as a fan of horizontal lines, I'm sure you can guess where my line is here, and you can see it's kind of clawing its way up. It's kind of trying to take out the internal range. It isn't sticking the rally, but it right there, of course. But it's also not coming back in. And so I think this is just wait and see now. I think the market has picked a direction. I think it knows where it wants it to go. It's no surprise, by the way. And it's very interesting that the rally in the bonds happens immediately at the Asia Open after the Fed. So markets outside the U.S., they run the bonds up all night. They run them up in Asia. They run them up in Europe. It's only really once the U.S. enters the fray that things get beaten back. And maybe that's OPEX, because obviously that's not a thing for markets outside of the U.S. necessarily. So when I look at this, I go, okay, well, Wall Street didn't like it, but maybe that's idiosyncratic. Sentiment-wise, the markets seem to want the bonds higher. The Fed sounds dovish. They just don't want to make a mistake, to your point. So they're being careful. They're saying, we're not in a hurry. We'll give you this forecast that points in opposite directions, but that's where we are. It's kind of a scratch. We don't know. So when you sort of boil it all down to what happens, yeah, okay, maybe they cut sooner, maybe they cut later at the front end, but at the long end, you have a tilt in your direction here. Because if they cut sooner, the entire curve shifts, and the long end will capture that.
If they cut sooner, something bad happened, and the market flees to safety.
That's right. And if they cut later, that means the market is going to go, okay, you all are asleep at the wheel again, so what we're going to do is put all kinds of easing in the back of the curve. Because since you're going to be late, and since you're going to be reactive, you're going to have to go harder and faster when you do go, because you're going to be doing some sort of a catch-up. So I think the long end still looks okay. I'm fine there.
Mike, do you have any bond positions? Do you find this conversation anything interesting to how you trade and approach markets?
I tried to get long TLT, and then my position expired, and it expired right around when it rallied almost 10 points from 85. So it's not fun for me, but I usually like to trade rates directly. So like 2YY, 10Y. I used to trade those a lot more frequently, but I was looking at those just now, and I was wondering if you guys had any take on the fact that the 2-year sold off almost 2% today, but the 10-year was pretty much flat. And I'm looking at the FedWatch tool for probabilities of interest rate cuts, and it kind of definitely aligns with what Ilya is saying in the sense that if you look at further or longer term probabilities, there's a strong lean towards 50 basis point, 75 basis point cut by December, but there's still a lot of uncertainty. If you look at the May cycle, there's a 20% chance we get a 25 basis point cut, but in June, there's a 60% chance that we arrive there. So still some near-term uncertainty, but it's being priced into that longer tail. But what do you guys think of the direct rates movement today with the 2-year kind of getting crushed where the 10-year is flat?
Not a great sign if you think that the Fed is, well, it says higher for longer, right? I mean, like that is the policy mistake twist in the curve. When short end rates get pinned up and long end rates begin to drop, the market is saying that there's either a near-term inflation problem or the Fed is missing the mark and they're going to have to play catch up later on. So inversion, and again, it's always contextual. Why was this inversion not a big deal in 2022 or 2023 in terms of like this means they're going to have to play catch up? Well, they were intentionally kind of fixing the yield curve that way. They wanted to raise borrowing costs. They wanted to try to crimp down aggregate demand to stamp out the inflation. But the context here is not about inflation. I mean, Powell himself, and we go back and forth, are tariffs a consistent price rise? Or are they a one-off price rise? Either way, we agree prices are going up. The Fed's perspective, according to their literature, Powell hinted at this as much yesterday, they see that prices are a one-off hike. So if inflation's increasing by 2% and you get a tariff, it bumps up to a new plane and then it continues increasing at that 2% clip. And so should the Fed act on that? No, not if it's a one-off. Why? Because while there's a one-off bump to prices, there's also a permanent decrease in real economic output. There is a loss of jobs. This is what the history tells us. This is what the Fed's modeling shows. And so the Fed says, no, we shouldn't even think about inflation. That's transitory. Great word, Powell. That's worked out well in the past.
Why he decided, of all things,
of all the words
go
to
to
say,
that word. There are so many synonyms. And he is so well-spoken usually. Why he decided to go for a word with that much baggage. Come on, man.
At least he's making
I'm trying to be a Fed apologist out here. Help me out.
Mike, when you heard him say transitory yesterday, did that like raise your eyebrows? Like, we've heard you say that before.
Yeah, I always find his pressers amusing. It reminds me of like when me and Nick banter, where I say, XYZ stock is, well, I can't say XYZ anymore. Sorry.
That's Square.
Yeah. Nike earnings are announcing after the close. It's not going to stay here. It's either going to go up or go down. Like that was what I was hearing yesterday, where it was like the landscape is starting to paint itself in terms of the picture that we have and the process that we have, but we just don't know what it looks like yet. So stay tuned. It's just like, at least I'm not addressing the globe, I'm addressing our loyal Tasty Livers. But it's amusing to me when he's just getting barraged with questions and he has to just tiptoe around every single answer. But that's, that just speaks to the time we're in. But yeah, better word choices are always available, I think.
My favorite Powell-ism, for what it's worth, is that we will know the neutral rate by its works.
Oh, this is a good question for the chat. What's your favorite transitory synonym? What should Powell have used instead? Yeah. impermanent, temporary, transient, brief, short-lived, ephemeral, evanescent, right? Fugitive. That'd been great. He's like, yeah, this inflation's a real fugitive. Like, we're not worried about it. Like, what? What are you talking about, man? It's like
the algos would have broken on that one.
600 ES points, right? Like that, like God.
Yeah.
Done. Circuit breakers kick in.
Yeah.
We were talking about sector rotation earlier here. Let's go into the details. It's not a great look today. We track those 25 different sector ETFs here on Overtime. I'm only counting 6 that are in the green. And what's in the green? Stalwart XLU, IYE, XLE, OIH, XLF, XLV. That seems pretty defensive. And then on the flip side, the worst performers among them, biotech, technology, retail, banks. So not exactly the friendliest mix. We had 2 consecutive 90% issue up days in the S&P 500, which off the lows, when we've seen that occur with right at the 6-month low, historically speaking, it's about a month of chop, 3 months, 9 months, 12 months later, you're looking for higher returns. I don't know if there's enough here yet to justify doing it unless we can see it's getting big long, right? Like, I want to be long out of the money calls. This thing's still going up. Let's get them cheap. Let's get some convexity in the position. That's not my mindset. It's more like, let's just nibble here. Let's nibble right now before we see that upside convexity. Mike, I want to hone in on what you were talking about, though. Some of the big names being down like 20%. I know this is a really interesting stock, right? It feels like it's so detached from fundamentals, but Tesla's always been detached from fundamentals. It's largely moves on people's faith in Musk executing this pie in the sky idea. And that's not a knock on him, right? He had a vision, he sold it to the world, and people got rewarded for it because he hit all these goals. That's why
and pie in the sky ideas are kind of his thing.
Well, and you know what? Years ago, when there was deliberations over his compensation package, we were talking about it with Vic Ilya, and I said I take particular issue that they try to strip him of his compensation package.
I agree.
Right? So on the merits, on the principle of it, you have a signed contract.
Man's doing his thing. You sign a contract with him, give him his money.
Give him his money, pay him. But so Tesla has always been a stock that's been tied to Musk's popularity in some form or fashion. I know that Dylan's been trying to sell some put spreads down here. I know that Tom has. I think that Tony has as well. How are you looking at this right now? Is Tesla cheap at 236? Should it be back at 450? Is this a good place to try to get some long delta? I mean, the stock's down 50%. If you liked it at 400, you'd probably love it at 236, Mike, right? Why not now? If not now.
Yeah, Tesla is the Fast Times at Ridgemont High in VHS form. It is a cult classic. Like it doesn't, like, they
Solid
don't need
reference.
to actually sell cars. Like this stock, like you're saying, is like, it's the belief that they can do things better than anyone else, and it's like high technology, high futuristic stuff. But yeah, to answer your question, I mean, if you liked it at 300, why would you not like it at 240? I think there's a couple things that are interesting. I mean, it bottomed out in October of last year, right around the same level.
Right.
And it had that rally all the way up to 440, 460. But that, I think, was just another example of post-Trump euphoria. Like, if you look at the election, the day after the election, it went from 220 to 260, and it just never looked back. And now it's come crashing all the way back down. But yeah, there's plenty of premium in here. Nick and I actually both placed bullish trades in here today. So Nick did a call crab trade, which is basically a butterfly where you're pushing the long option further out in time. And he did that. Let's see. He bought the 250 call in May, and then sold the 275 call twice, and then bought the 300 once in the April contract. So again, it's just an equidistant butterfly, but you're pushing the closer long option out in time. That was a $1,200 trade. Nice max profit there. I did a much smaller trade. I bought the May 300 call, and I sold the April 300 call against it. So I just did a straight up calendar spread. these higher price stocks, I think with high implied volatility, they can still perform well if you get that rally. And mine was only a $500 trade. So the nice thing about this setup, if you're buying May and you're selling April, is that the April monthly contract will expire right before the projected earnings. So worst comes to worst, if you have to roll this, you can literally roll it 1 week out and get a ton of earnings premium in there and further reduce cost basis. So that's how I'm playing it. Just keeping it small and defined risk in here because, it's gone from 400 to 200. There's nothing that says it can't go from 200 to 100 or from 200 to 300 in like a span of 2 weeks. So defined risk in here, I think, is the way to go, even if you have a large account.
Take a look at where that top in Tesla is, because there's it's an interesting index from cargurus.com, which tracks the average resale price of a used Cybertruck. And it's interesting to see what has happened. It initially spiked higher, but has since absolutely cratered. And if you look at what's been going on here, the benchmark, the Car Gurus used car index, down 2.79% year over year and down 1% over the past 90 days. Cybertruck down 57% year on year and 11.4% in the past 90 days. So not great. Sentiment, if you wanted to kind of look at this as a barometer of are people buying the futuristic visionary that is that Tesla is an avatar for, doesn't seem like there's a lot of confidence. Seems like the market is flush with used Cybertrucks and their prices are caving.
So I'll always start with this point, like violent protests, the looting, the burning of the Teslas. Like, what are you guys doing? Clowning yourselves. First and foremost, every major theorist that talks about nonviolent protest and civil disobedience does it in a way where gains are maximized through the nonviolent aspect of the protest. So if you're trying to make a point, hold up signs, honk when people drive by, stop with what delegitimizes the movement. Whatever you're trying to accomplish.
What does it do to vandalize a Tesla to make your point? Stop it.
I don't get it. Well, as someone who's now in the car market, Ilya, some of these prices are looking pretty good, right? Like
my friends are looking at all of this and going, I tell you what all of it means. I'm no market person, but there's about to be a lot of cheap Teslas on this market, and I'm about to go get me a bargain.
Yes, that does seem to be the case, but there's also like I'm trying to figure out how I fit the recent commentary from the White House in my pantheon or Parthenon of when people with their hands on the economic levers of society tell you to do something, you should probably do it. Like when Besson and Trump have been saying, we don't care about stock prices, we want lower yields. You go, all right, there's no put in the stock market right now. They're not going to stop this thing from falling. And when Obama says in March 2009, it's a good time to buy stocks, like the government is flooding the market with stimulus. You listen to those big macro calls. I think you listen to the big macro calls. I find it really curious. And do I take issue with there being a Tesla event at the White House? Not necessarily. Biden had, the F-150 electric truck there. Sure. He wasn't doing a sales pitch for Ford. That crosses a line. But then you had Letnick out yesterday saying that this is a generational buying opportunity for people to buy Tesla. People should be buying Tesla. What are you doing? There's part of me that says, okay, the people with their hands on the economic levers, they're in on this. That's a signal into itself. So then there's also the part of me that this is a single stock, so it doesn't fit with a macro call.
No.
And if these people are out there saying these things, and given what we know about publicly available data of Tesla sales in places like Germany and France and the UK and Korea and Japan, right? Like anywhere in the world, effectively, it's been plunging double digits and then some. I think there may be I mean, I'm not the only one who thinks this. It's not an original thought, but like there probably is a really bad quarter of earnings coming down the pipeline for Tesla, right? Mike, I'm thinking about your trade here where you say if you have to run into an issue, like this is 28 days to expiration, so maybe you try to ride it past 21 a little bit before you roll it up past the earnings. But if this stays juicy, that becomes really, really compelling. I suppose the question we're going to ask ourselves is if all this information is already public and we all know these things about what's been done to Tesla's brand, how much more downside is there? Is this like the non-farm payrolls report a few weeks ago where there were whispers of a negative number, and the fact that it wasn't negative, even though it missed, it's kind of like, oh, fine, we're not dipping into imminent recession. Okay, we can stop falling now. Right? Like Tesla may have a bad quarter, but so what? The stock's down 50% from the highs. That's largely priced in. So if there is a negative reaction in the share price, as the trader in me says that is a dip that we've absolutely got to fade, Mike, and we've got to get some long deltas against it. The volatility is there in 36 days. The signals, the writings on the wall, a washout could really be a gift. And that could actually be the final clearing of the deck for the NASDAQ, where Tesla being such a large component, it takes that final leg lower. Then we're able to base out in the broader index and we can begin our new rally to the upside. I don't know. I sound crazy. 40 chess, if you will. But I'm trying to figure out, like, I'm trying to think of the narrative here. What hasn't been priced in that we already don't know? There are literal news reports of Tesla's on fire because of people throwing Molotov cocktails at them.
Yeah.
We get it. The brand's in shambles. What else is there to know about it right now? Right? This feels like a sentiment extreme. It feels like a sentiment extreme.
Yeah. Nick had a great one-liner today. He said, Tesla is at peak blah. That's literally what he said.
Okay.
But yeah, I agree. I think like when you look at, and especially the diagonal trades, that's why I think a diagonal spread or calendar spread in here is the way to play this, is because like you said, implied volatility, if you just look at the difference between the price of the 28-day and the 36-day 300 strike call, the 28-day is trading for 224. 1 week later, it's trading for 430, 420. So it's twice the amount 1 week out. That bakes in the earnings premium. But if you're buying May, that has that inflated earnings premium and will still have inflated earnings premium when the April expires, you kind of have this beautiful thing where you can buy the inflated premium that isn't going to decay as much. You sell the premium that is before the announcement that's going to fully decay, and then you can roll into the 36-day from the 28-day and pick up another $2 or so to further reduce basis. And then you could even, like I have a calendar spread on at 300. If we get a rally and I want to keep the trade on, I could buy back the 300 in April and roll it to the 320 or the 330 1 week out and do it for a credit. So that's the kind of flexibility you have when you diagonalize these trades, where your long option is past the earnings cycle and your initial short option is before it. So I like the way it sets up. I agree with Nick. I think we're at peak blah. And I mean, I don't see this stock going to zero. I mean, in theory, I guess it could, but I think it's just going to behave like it always has, where it's just this very volatile, very sentiment-driven product, regardless of what their actual earnings numbers are. Even if they miss, like we used to live in a world where we were expecting $3 or $4 EPS misses, and they would post like a $2 miss, and then the stock would be up $100. So like I think this is just one of those products that will ebb and flow with the cult and market sentiment.
When you say things like that, I'm reminded of the Andy Dwyer. Is it Andy Dwyer? No, I'm thinking of Andy from The Office. Yeah, Andy from The Office. He's like, the thing about good times, like no one ever lets you know when you're in them, and you only know it afterwards. Like, remember how like those are such fun trading times? Like, oh yeah, Tesla missed earnings, stock's up 20% after hours. Like, of course it is. Like, let's just keep buying the calls. You don't need to think. And those are fun things to do. And, as the inimitable George Soros would say, like, when I see a bubble forming, I rush to buy in and add fuel to the fire, right? And like, that's in those market environments, that's what you have to do. It's the only rational behavior, is to trade like a lunatic and, seize the day. I'm not a great scalper, so maybe put an asterisk on that. But when the volatility's here, you have to capitalize. It's a 58.9 IVR in Tesla right now. That's certainly in excess of the broader market, which is 33.5. Guys, we've talked a lot about stocks, single stocks. We've talked a bit about the Fed here. We haven't talked about my favorite asset in the world now because it just continues to chug to the upside. Gold, technically a new closing high here in GCJ5, although not the absolute high. Silver prices pull back modestly down by 0.29%. Copper prices, they're up by 0.23%. The metals continue to run right now. Ilya, when does it stop?
So we're talking with Westwater about copper in particular yesterday, and the upshot was that Westwater is bullish because he sees structural forces here. I'm a little bit suspicious, not because I don't think that what he's talking about structurally isn't right or doesn't make sense. It almost certainly does, and Westwater knows more about the inner workings of this than I could even begin to. But when I look at what's going on in China, I see some interesting dynamics. If you take a look at what's going on in China, of course, the world's largest buyer of copper. If you look at what's going on in ASHR, the mainland ETF, it's down. And it's down back into its range and never really had that rally that everybody was singing songs about when they looked at something like FXI, which of course is different than this because all of those names are securitized and traded in Hong Kong. And Hong Kong markets and mainland markets are not the same. They're disconnected. And what you've seen is Hong Kong markets have rallied. So if you look at FXI, you see that. And when you look at this, they haven't. Underlying this are capital flows that have, in a one-sided way, flown southbound. That is, from mainland to Hong Kong. There's data on this from the Shanghai and the Shenzhen Stock Connects, and you can see it. At the same time, more and more people in China seem to be turning defensive on their spending. The spread between how much new money is going into demand deposits, so checking accounts type things that are there to spend readily, versus time deposits, so like CDs where you lock up your money and you will wait because you're not planning to spend it. The ratio has gone to like 3-to-1 in favor of time deposits, which is the highest it's been at least since 2008, higher in fact than 2008. So people don't want to spend money. The stimulus in China isn't working. All of what they keep saying is at this point just rhetoric. And so I look at copper as it sits at major resistance and go, well, how long before the market looks at China and goes, what we've been seeing in Hong Kong is money leaving the country because it needs an out and there's capital controls. So people are just buying stocks in Hong Kong so that they can quietly later cash out and send the money abroad. Or even if you just look at the dynamics in both of these markets, you can, I think, very clearly see even Hong Kong is getting soggy. So how long before the markets go, they whiffed stimulus again? There is no uptick in Chinese growth that's coming downwind. They're still not serious. And this thing comes undone. So I see it at resistance, and it worries me.
Mike, do you have any strong opinions on gold, silver, as we look to wind down this week on overtime?
I was peer pressured into placing a bearish position in gold today. I really like broken wing butterflies in here in the futures. So gold futures, like doing it to the downside if you're trying to play for a pullback, or to the upside as well. The one I had on was a 2920, 2930, 2940. That's what I have now. But I had a call broken wing butterfly. I got one day where it dropped and I bought in the risk. So that's the nice thing about broken wing butterflies is if you get the out of the money move, you can remove the risk, free up the buying power, and leave yourself with a symmetrical butterfly on for a credit. But today I placed a bearish trade in GLD, just a really small diagonal spread. I bought the 280 put in May, and I sold the 275 in April against it for $375. And I'm literally just looking for 1 day of a pullback, and I'll close that for $100. But yeah, I mean, it's pretty wild to see a 16% IV product just go straight up like it's an equity. But this is where we're at.
When I see where we are in the chart, there's two ways to examine it. This seems like a place where the market could really cool off, right? Let's take that into consideration. Fibonacci extension, those June lows, the highs that we have in October to the November swing low. First target would be right around 30, 43, 30, 40, 30, 39, depending upon your exact measurement and what product you're using, right? If you go out to a different expiration like GCM5, different levels. The other one here is the near-term triangle that we just saw form over the past month and a half in January through the swing low in February, and that gives you a target of about 3060. Today, the high was 3065.20, where 5%. We're getting 5% away from our 1 month moving average. It's getting into the froth zone right now. So I'm remaining long gold, silver, but I understand that there may be a wallop coming, which is why my priority at the end of this week is to roll out, get more duration, and that longer term chart is where my personal Valhalla waits. On a pullback, I'm structuring trades for a move up into 32.25 moving forward. Silver for $40 an ounce. So we're going to have some fun here next week, though, because overtime is out of time for today and this week. I want to thank Mike Butler for coming aboard. Same thing for Nick Batista to fill in for Dylan Radigan. Likewise, Thomas Westwater for me yesterday. We'll be back on Monday, same time, same place, right after last call, 4 p.m. Eastern, 3 Central. So for Ilya Spivak in San Francisco, Mike Butler in Chicago, I've been Chris Vecchio in New York. Good luck trading. After this, Tasty at Night begins. You know who's starting it. It's Ilya Spivak with Macro Money.
See you there, everybody.
Well, this is me. Thank you so much for tonight. I've never been to the Hard Rock Cafe before. That was really fun.
Bow, bow.
Okay, well, this night.
This is a song for the broken hearted. Bow, bow.
Okay.
Hey.
All right.
Why don't we get up there and you can lay some hands on me, and I'll see if you're slippery when wet.
That's really inappropriate for a second.
I want to lay you down on a bed of roses and send you off to Slumber Town in a blaze of glory.
No, don't say things like that because my boyfriend was an aerial artist and he used to do things like that.
I might be Monday now, but someday I'll be Saturday night. You give life a bad name. Whoa, shake it up just like bad medicine. Bad medicine is what I need. I'm going out in a blaze of glory. Take me now, but know the truth. 'Cause I'm going out in a blaze of glory.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Twitter versus Facebook. A rap battle. First up, Facebook.
Twitter, I'll snuff you out like I did to MySpace. I'ma have to erase your little Twitter face. Warm it up, Facebook, I'm about to. Did they make an Oscar-nominated movie about you? Check my school out, I'm at the top of my class. My main interest is listed as kicking your ass. I help dictators get thrown over. You help the cast of Jersey Shore get overexposure, I'm too Titanic for you Twitter retweets. You bird-ass tweets, stick to the branches. I'm root deep, universal expansive. Twitter better get lost before you get poked. What? What? Yeah, this is Twitter. Check it. At Facebook, can I attack you? Yes, and I could do it in 140 characters or less. Brevity's the soul of wit. I'll make this quick. Hash mark. Facebook is a dick. Retweet. Yeah, I'm backing that ass, and I'm young and I'm brash, and I'm packing that cash. Stick with the kid, I'm an early adapter. Your old Facebook played out like Napster. I make it real easy for family to talk. I make ex-girlfriends real easy to stalk. I show you life in real time that's completely amazing. I show you which celebrities are totally crazy. From Blitzer to Sheen to Kanye to Rom. I run with stars. Facebook is a place for your mom. What's the matter, Zuckerberg? Don't like how that sounds? I got 1 million customizable backgrounds. You're so totally boring. My card's on the table. Hash mark. Facebook is disabled.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
Rewatched that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring Zero DTE. We promised you we would take a look, and here we go.
Well, we're through the Fed, and we've had a day to digest it and think about it, and the markets are nowhere. Apparently, we don't know what to do and what to make of what's going on, but we're going to try to figure it out here and see if the markets really are through whatever consternation struck them over the preceding 4 weeks, or if there is still trouble ahead. This is Macro Money. I'm Ilya Spivak, head of Global Macro at tastylive. And what we are going to start with here, first and foremost, is, of course, identify what it was that the Fed did and didn't do, what the tone was, why the markets initially reacted the way that they did, and then see if this lack of conviction tells us anything in the aftermath. So let's break this down. We're looking here at the Fed policy statement, and you can see the revisions highlighted on it, and you can very clearly catch it's that second paragraph where all of the action is. Now, much is being made about the changes in QT, the runoff in the Fed's balance sheet, but we'll get there in a second. The meat of what the markets seemingly reacted to is that second paragraph revision. So you'll notice that before, the committee thought that risks to achieving its employment and inflation goals were roughly in balance. Now, uncertainty around the economic outlook has increased, and the committee is attentive to the risks to both sides of the mandate. Now, ostensibly, this is exactly what the markets wanted to hear. They wanted to feel seen. They wanted for the markets sell-off to be noticed by policy officials. And the conversation that was being had from the White House against the backdrop of the sell-off was, yeah, we really don't care. This is fine. The economy needs to adjust and, quote-unquote, detox. It's unclear what it needs to detox from, but the message was, look, this is not anything to be concerned about. The underlying economy is healthy. This is just a lot of new policy happening all at once. The markets will adjust. What the markets saw was, as we discussed earlier on the show this week, not so much that the policy was untoward. They knew what the policy direction was going to be as early as November and maybe even before. But certainly once it was clear that it would be a Trump administration that would be taking office in 2025, the markets very clearly knew that there would be tariffs, that there would be cuts to fiscal spending, that those cuts to spending might be balanced by, at the very least, making the first Trump term's tax cuts permanent. And so there would be a generally understood policy trajectory. It's not until survey data on business confidence and consumer confidence, in particular the S&P Global PMI surveys in early February, that began to show that the implementation of the policies is starting to impact confidence. Not the direction, but the seemingly volatile implementation of the policy that's starting to impact sentiment. And what that sentiment is doing is it's pushing people to withhold spending, pushing businesses to withhold investment, and that is significantly eroding confidence and undermining activity, especially in the service sector. And so what the markets wanted as they reacted to this over the past 4 weeks was some sort of a reaction function from officials, where the markets fall, officials go, oh, well, that's not good. Let's calibrate our approach. Not necessarily, again, in terms of direction of policy, but implementation, or at least communication with the markets. And the message from the administration was, everything is fine, we don't need to calibrate, moving on. The markets then turn to the Fed and say, well, surely if something were to go wrong in this implementation, you would backstop us with lower rates by cutting borrowing costs sooner. And if you're going to do that, we're going to need for you to signal that you're seeing what we're seeing here. And this passage seems to indicate exactly that. Now, as far as the summary of economic projections, the other big sort of numerical forecasting tool here, we can see the Fed lowers its GDP expectations, which, again, seem to acknowledge the market's concerns. They also increase inflation expectations, which seem to acknowledge consumers' concerns. The latest survey on consumer confidence from the University of Michigan put one-year inflation expectations back to 4.9%, which is the highest since the second half of 2022, just as the Fed was starting to really have impact on bringing inflation lower, having, of course, initiated a blistering rate hike cycle in March of that year. So the Fed is seemingly saying to the markets here, okay, we can see that there is a risk that growth is going to be weaker, and we're going to acknowledge that. We can see that there is a risk that inflation is going to be higher, and we're going to acknowledge that. This pulls policy in different directions, so we're not going to change course on the actual expectations for Fed funds. And of course, as Fed Chair Powell began to speak at the press conference after the meeting, the caveat there is we're not going to adjust it for now. And this probably gave the markets some confidence in being seen as well. And we'll go through what Powell said here. It's been nicely categorized by the fine folks at Forex Live. Had tipped to them. Here are the highlights. So on rates, I mean, the clear sort of bottom line here is the Fed does not feel that they are in a hurry to move now. And we can see that it's not so much that they're reluctant. They're saying they can move in either direction. It's that they are waiting for clarity, and they don't think that waiting is a high-cost proposition. They feel confident that they don't need to be in a hurry. They can wait. And of course, they're acknowledging here that if the Fed's goals need to be balanced against each other, that is to say, weaker growth, higher inflation, that would be difficult, but they're not currently seeing that in practice. On the spiciest topic of the bunch, tariffs and inflation, the Fed, of course, acknowledges that tariffs tend to bring down growth and tend to bring inflation up. Of course, the forecasts reflect exactly that. But what they're saying is that it's too soon to say if it will be appropriate to look through these effects. And of course, we've heard these comments from the administration saying that what a tariff is a one-time price adjustment. And that one-time price adjustment will work its way through the economy once it's made, and that's it. Businesses will, as a one-off, adjust to a new level, and on we go. That's not necessarily wrong or right. It's a cogent theory, but when you put tariffs on input goods, for example, like aluminum and steel, that other industries rely on, there can be vast ripple effects, and those ripple effects can be sticky. So, for example, if you are a maker of steel and there are tariffs on steel, well, then you're happy because the price of steel from your imported competition has gone up, and that opens more markets for you to sell steel, at least domestically. But if you are a buyer of steel, let's say you make nails, let's say you make appliances, cars. If you are a buyer of steel, then you now face a higher input cost structure. And that means that you're, assuming you're passing that on, of course, as most businesses would be, at least to some extent, now you have a general rise in the price level for whatever it is that you're selling, for which steel is an input. And everybody that buys that thing from you now has their cost structure go up. So even though you might not be applying a tariff directly, let's say to appliances, in applying one to steel, you are. To appliances and cars and home fixtures and nails and whatever else. So it's unclear what ultimately the net effects look like, and that's exactly what the Fed is saying here. A telling quote here is Powell says, "I'm not dismissing that short-term inflation expectations are rising, but long-term expectations are still anchored, and that's what we're going to watch." So wait-and-see mode yet. But again, an acknowledgement of the source of the market's worry. On the economic outlook, again, acknowledgement. Sentiment has fallen off, but the economy is healthy. And this seems to be the real key going forward here. If soft data becomes hard data, we will know very quickly. The upshot being, if the pain and mayhem that now appears in this sentiment data, like PMIs, like consumer confidence data, starts to show up in employment and inflation and so forth, well, then the Fed will be ready to pull the trigger on rate cuts without delay. So we see all of this, and the bit on the balance sheet is interesting because the Fed says that what got them thinking about reducing the runoff in the balance sheet wasn't a particular desire to ease policy. It was flows in and out of the Treasury general account, which reminds us that when the Fed makes money on these securities, it puts the proceeds back into Treasury because the Fed isn't financed by taxpayer money. It finances itself through its own operations. And essentially what Powell is saying here is that they would like less turnover in their Treasury security holdings coming in and out of the Treasury general account because the markets are uncertain and bond prices are jumping all over the place. So the Fed doesn't want basically their P&L with the Treasury to be volatile. So they are going to move at a pace that's slower. We'll notice that what the Fed doesn't do here is make any changes to its pacing for mortgage-backed and agency debt, just the Treasury side of things. And this probably speaks to their perspective that monetary policy expectations are likely to remain volatile. So the market ostensibly feels seen and gets that bit from the Fed that it wants to hear, that the Fed is mindful and that the Fed sees what they see. And the response is encouraging. Stocks go up. The upshot is that whatever the Fed said was dovish. Yields come in. The yen, a creature of yields, mostly, goes up, as it tends to do when yields decline. Bitcoin confirms the risk on tone. Gold, interestingly, doesn't make a big move, but it had been rallying going into this, so perhaps it just ran out of immediate conviction, having already gone up a lot. But one would think that gold would be better supported in an environment where you have this kind of a situation. And the euro, interestingly, is down, but look under the surface and it's down much less than it had been earlier. The decline going into the Fed was almost 0.8%, and ultimately the euro finishes down only 0.3%, and all of that reclaiming of lost ground comes after the Fed. So the dollar weakens on net. Now, of course, the markets are concerned and have this need for acknowledgement because there has, in fact, been a downturn in the economic data that is worrying. And this is the Atlanta Fed's GDP Now tracker for the first quarter GDP number. What this is a nowcast, so it takes incoming economic data as it appears, dumps it into the model, and the further you go in time, the closer you get to the actual number, the more data and the more relevant inputs you have, so the closer the forecast is to what the actual number is likely to be. Whether or not the economy actually shrinks at an annualized rate of 2% in the first quarter ultimately is not what's important here. There's no way to know that ahead of time, and although that looks dramatic, who's to say? What's important is the direction of travel for the model, because what it tells us is the tone of the incoming data that's been dumped into it. And clearly, everything that's been coming out, basically since late February, has been painting a very grim picture, which is why the model looks the way it does. So the markets are concerned because, indeed, the data is telling them to be concerned. And, of course, the first piece of this data has been the S&P Global PMI numbers that show over the course of January and February a steep drop in the manufacturing or in the service sector, even as manufacturing claws back a little bit. Commentary from S&P Global in doing these surveys has been, it is uncertainty about fiscal policy and trade policy in particular that's driving negativity in the services sector, which is interesting, of course, because trade policy mainly concerns the goods side of things. So this is a very pure sentiment sort of indicator where the economy's largest sector is more concerned with the optics of the policy and how it's being implemented and what they're extrapolating from the management style than really from those things hitting services directly because the price of this or that input has gone up because of a tariff. So that's, of course, very telling of general sentiment in the business community. For the manufacturing side, there has been a little bit of a move higher. We're north of the 50 boom-bust level where the sector is expanding, and in fact, it's now expanding at a faster rate than is than is services or the overall composite, which tends to follow overall services because, of course, it's a much bigger sector of the economy than manufacturing is. But the commentary on that is this is mainly front-running of the tariffs. So stocking up on things before the price goes up. And that's where you get all this extra manufacturing activity, which makes the upswell necessarily a temporary thing. Moreover, this doesn't just scream that there's a problem in the U.S., but when we look at the drivers of global GDP growth, we of course see that the U.S. is the biggest overall piece at 26%, but moreover, the entire pie is 58% just three economies, the U.S., the Eurozone, and China. And those are the main drivers of demand. Most of the rest of the world, 42%, are vendors to the large three. So obviously in the U.S., we're thinking Canada, Mexico. In the Eurozone, Central Europe, Nordic Europe. In China, we're thinking Australia, New Zealand, the commodity producers of South America and Southeast Asia and Africa. So a lot of what's there in that 42% needs demand from China, the Eurozone, or the US in order to have contributing demand of their own. And so this is really why the US slowdown is such a problem. Going all the way back to the middle of last year, the Eurozone and China are already on a slowing path. It's the US that's holding up global growth. And the first 2 months of this year, what you get is the very wrong kind of convergence, weakening US activity coming down to the standstill-like setting that we see in Europe and in China. How you don't get a global recession in this environment seems difficult to imagine. In fact, we can see that all through last year, overall global PMI numbers from about mid-year are slowing, which reflects exactly this. The U.S. is powering higher, but it isn't pulling the rest of the world along because the other two engines are off, and what is actually getting powered in the U.S. is the service sector, which is mainly serviced by domestic firms. Imports, exports, where U.S. demand might extend to other countries because they're selling to a robust U.S. consumer, that's the goods side mainly. And that's why the overall global total has been moving ever closer to ever slower settings over the course of basically the second half of last year going into this year. And of course, the situation has only become exacerbated here at the start of the year with the U.S. looking weaker. First thing Monday, there's an opportunity for this trend to be reasserted because we're going to get the March updates of these PMIs. And of course, we're going to be looking at the U.S. numbers most closely. The expectations here already that we're going to get weakening to near standstill on the composite as services contract. The numbers out of the UK looking like maybe they'll be a little bit warmer. The numbers out of the Eurozone looking like they're going to be, again, flat. We're not going to get updates from China until later in the week and the following week. And if you look at what's going on in Australia and Japan, it's about a scratch there. So the real issue, of course, the U.S. numbers, and that we're expecting this slowdown. Moreover, U.S. economic data has been tending to disappoint relative to expectations, eyeing this Citigroup data. So we could get a reminder of exactly the risk of recession that the markets have been so worried about as soon as Monday. And the real question will be, do the markets shrug that off because it's not, quote unquote, hard data? Or do we finally see this consolidation post-Fed resolve? Is it going to resolve to lower stocks? Any which way it go, it seems likely to resolve to higher bonds and a weaker dollar as more easing enters into the longer end of the forecast. And that is macro money for today and for this week. We are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Macro Money will be back next week, as it always is, Monday through Thursday. I'm likewise on with Chris for Futures Power Hour Mondays and Fridays. That's coming up tomorrow. On with Victor Jones for The Price of Truth on Tuesdays. On with Victor and Tom for First Call on Sundays. Check that out at the start of the week. Writing for the News and Insights portion of tastylive.com. Commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money's back next week. Take care.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Liz Deerking, Eastern Illinois University. #1, because dedication and motivation equals success. Being able to make that one trade that builds on the next is the very first step.
Matt Helmuth, Illinois State University, #30, because that's how many of Tom's credit card purchases I have to decline a week. Stop trying to buy a suckling pig online, Tom.
Bobby Shepard, School of the Art Institute of Chicago, #6, because that's how many revisions every piece of copy goes through.
Jenny Andrews, University of Illinois Urbana-Champaign,
Number 18, because that's the average of the VIX over the last 10 years, and I cannot wait for it to get back there.
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
It was a great show, very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
We built Tasty Trade for today's traders. See it, click it, trade it. Customized charts with hundreds of indicators. Actually see your potential profit and loss. Quickly roll to the next expiration. See gains and losses even when you roll. Cancel, replace, duplicate, or invert orders with just a few clicks. The tools, the data, the knowledge. See it, click it, trade it. Join the club, genius. Tasty Trade.
What's going on, guys? Welcome back to the segment. We're back today with Luis, my brother. How we doing? What's going on, chat? I hope everybody's had a great day. Today, we're going to go and do a little tour to market, check out some of these positions. We put on some positions yesterday with Dr. Jim, so we'll check all of that out. But Luis, brother, so good to see you. How we been?
Been great, man. It's great to be here with you, with my brother from another mother. I'm excited. A lot has happened. You know me, leaning more bearish always. 2024 wasn't the best year, but this year, at least, finally, man, the bull market more than 2 years. So yeah. I'm very excited to be here with you, excited to see your positions, happy to hear on Tasty Trade again. So I'm excited to see what's happening on with your positions.
Yeah, absolutely. We'll get into all of that here in a moment. I know a lot has changed. The market, a complete different market environment than I think last time we spoke and we hopped on here. I think you're on the 4th or 5th kid now, something like that. Give us an update, brother. How we doing? What's new with Luis?
No, not even married, man. You are the one. Come on, I've seen your stories on Instagram. I've seen you're deeply in love, man. And
I don't know what you're talking about, but I see yours. You don't. I keep up with you, brother. I keep up with you. But how's the weather over there right now? What's new? You've been paying attention to the market. Anything else? What's been going on with you?
Yeah. Trading a lot lately. I actually changed a little bit of my methodology. Now I'm leaning more to cover calls lately, which I've actually paid. Long China. Julia and I discussed it a lot last year about Chinese stocks, also Alibaba especially. Yeah. And with all the stimulus from China, I don't know if you've been trading them or someone bought them. Alibaba, JD, Baidu, PDD. All those have been amazing. I've been applying a little bit of cover calls, a little bit on the cheaper ones like KWeb, FXI, JD. Yeah. Cheaper ones because Alibaba is now a little bit more expensive. But today they got a little bit of a pullback, maybe for a. I don't know. I saw Tim Knight earlier on today talking about FXI, about a possible pullback. That got me a little bit worried because he's the best bear out there. I really follow him. So look at that. It's looking a little bit toppy, honestly, FXI. So I'm honestly still going to hold my positions. Long China, I'm right now on the April contracts. I've been doing some covered calls, but overall, China is the fifth best ETF FXI in the world. I was surprised when I actually saw the top ETFs in the world. Poland was number one. I think Greece.
Which one was that?
Poland.
Okay.
I don't even know that ticker for the ETF. Greece was second, but who trades that stuff? China at least is way more liquid. It has ADR. So yeah, those, and I shorted a lot those quantum computing stocks. I don't know if you've been trading them. Have you traded computing stocks?
No, I mean, I know they were really popping off. It almost felt like it was a mini like quantum computing bubble for a little bit. Not too much. You said you've been kind of short a little bit those into this new year.
Yeah, I started shorting them a little bit since December, especially IONQ a little bit more. Well, I started with QUBT, but today it was a quantum computing day from NVIDIA. I don't know if you saw it. Jensen Huang actually said to the panel, he invited the top CEOs of quantum stocks from IONQ, also Argeti, some of those names, and he actually said that he didn't knew that these quantum computing stocks actually were public traded companies. So you can imagine what happened with those. IONQ dropped like 10%, but I've actually dropped a little bit off from those quantum. I think they already crushed them a little bit. I won't be chasing down any further the short. But look at that. It actually went from like $5 to like 60 in a few weeks. But yeah, now focus more in China. And honestly, I don't know. Tomorrow's going to be a big day. Are you prepared for tomorrow? It seems like the quad witching day.
Witching.
Yeah, it's expected.
I know there's
to be
a lot of
later,
yeah, I know there's a lot of option contracts expiring tomorrow, so that's going to be interesting. Before we do shift gears here, I'm curious. You've been looking at Carvana at all? I know you're like the Carvana ambassador. It kind of feels like. What's been going on over there?
Carvana was my biggest loser last year. Actually,
really?
This year I shorted the stock.
Right.
I actually decided to short it again once I saw those earnings. Once I saw the Hindenburg research report about a possible fraud. If nobody has seen the Hindenburg research report on X, it's worthwhile. They actually say big thread about how they might be doing some bad stuff. That's not 100% sure. I don't know, but started shorting there. Also, Amazon said yesterday that they will be likely entering the used vehicle market. So they'll definitely be competing against Carvana. And honestly, I'm the investor, but for the short side. I don't like Carvana. That stock went from like $3 to $280 in 2 years. I'm not sure right now, but I'm definitely planning on entering again. I shorted this year. It's not my top performing stock, but definitely recovered most of the losses from last year. Because last year I decided to focus much on my opinion rather to what the market was saying, and it's not looking pretty well for Carvana. It's had an amazing rally, and I honestly still think that it has more room to the downside because it has a lot of pressure. Earnings were actually pretty bad. The first time they actually had lower revenue than expected in the past 2 years, which still they've had an amazing run up. Competition is ramping up. Also, I don't know if you saw, but a warning sign that the default rates on automobile loans is actually skyrocketing right now. So that's definitely not good for Carvana.
Yeah, no, definitely. One thing that you mentioned was Amazon getting into that space. That's one thing I won't underestimate Amazon on, because one thing that did surprise me was Amazon Prime Video. Like, I know Amazon, there was a lot of pushback. I think even with Jeff Bezos, when he first wanted to get into the video space, putting kind of like the Netflix style log with the movies and things like that. I didn't even think Prime Video would catch on too much, but they're killing it. And that's one thing where I won't underestimate Prime. So if Amazon gets into the space of Carvana, I think they just have the brand, the awareness, and the capital to really destroy any industry that they choose to get into. So that's one thing I won't put past Amazon. But in terms of that, what was the recent ticker you had just mentioned before that?
For the quantum one?
Oh yeah, I think you were talking about IONQ.
IONQ, yeah, that one.
IONQ. I mean, speaking for Carvana, this kind of seemed like it was. I mean, there was a lot of good news with Carvana. I think this was exciting. I mean, the vending machine style vehicles. all those kind of things. But I mean, this had an insane rally over the last 2 years. So this is one I'll keep an eye on from probably more shorts. Like maybe if we get some type of ramp up to the upside, might look to maybe sell some out of the money calls. But I'd probably be on the same side. You'd be a little bit bearish on that one. But IO and Q, I know you mentioned too, kind of looks like this short-term bubbles is kind of popping over here. And what's going on, Lone? Reporting live from Costco. Check out Costco actually here in a little bit. I think the hot dogs are still at $1.50. But no, this quantum computing even bubble is kind of bursted. But I think Julia got me really interested in the quantum. That's a tongue twister. The quantum computing space and those computers, right? Not something that the average individual is going to have that type of computer. But I mean, when it comes down to Bitcoin or like mining Bitcoin, I am curious to see like how more efficient using a quantum computer could be when it comes to mining Bitcoin. So that's been on top of mind too.
I don't know about mining Bitcoin, but let me tell you this. They actually had, I saw on the news a lot of hype about IonQ today because they reported today that they actually are, their production system shows 12% faster performance over the classical computing alternatives. Like they're spending millions of dollars, hundreds of millions of dollars. They're called quantum. They're actually saying they got all these breakthroughs and they're only 12% better than normal computers. Like I think that actually did not disappoint. That actually helped the stock in the morning. The thing that disappointed today was Jensen Huang's comments on the computing, quantum computing stocks a little bit. Mm-hmm. He actually apologized to them because just in January he actually pushed them lower after saying that he sees quantum computing to be available in at least 15 to 20 years. So he actually apologized today about that. He still was surprised that they are actually publicly traded. I don't know that's definitely not a good signal for them that the stocks drop. But for example, IonQ, I don't know, but that's a really good question for how faster they're mining Bitcoin. They actually just came today saying that they're 12% faster than a normal computer, which I don't know. I'm not very impressed with 12%. Neither the market was. I mean,
for the price, for the price and the accessibility of these computers, I would have thought 12%. It would have been a larger gap than that. I mean, for the price and the accessibility of these things, so I would agree there.
Yeah, for sure. But maybe I'll definitely be entering more if it breaks the 20 mark to short. Hase, 50 from all the quantum. I think IonQ is definitely the best one, based on numbers. It's definitely the one that has actually resisted the most because other ones are actually on the single digits, very low single digits. But for example, it has a 50 million revenue over the past year, and it has a market cap of 5 billion.
Yeah.
Versus a 50 million revenue. Net income is actually way negative, so they're losing a lot of money. They're burning through cash very fast. And I will not be surprised if they start issuing a lot of shares to actually get cash and be there for longer, which that actually be diluting existing shareholders. And I don't think the market will actually take it. Otherwise, even though it's actually, I think, already priced in, I don't think it's not going to be the best news. But yeah, I've been trading those really heavily, especially at the beginning of the year. But I don't know, what are your thoughts on IonQ?
Again, with the quantum computing, I've kind of just been looking at the bubble just burst in there in terms of that. I mean, I'm bullish long term. You know, the 12%, again, would have thought the gap would have been wider, especially with the accessibility of those products, the price, all those kind of things. But I think long term, I'm definitely bullish. When it comes down to development and technology, I'm typically bullish. And it's kind of funny because I know I've talked about my skepticism around like the auto driving, right? I know over the last couple of weeks, Gus and I, Dr. Jim and I, we've been touching a little bit more on like the robo taxis, the self-driving cars, and I've been really skeptical about it in terms of like when is this going to see mass adoption? But overall though, I'm bullish on development and technology. I think it's only going to keep speeding up, and I mean, it's kind of ironic because quantum computing helps speeds things up too. So I'm bullish. That's one of the reasons why I'm bullish on quantum computing. Go ahead. You had something to say?
I'll be buying, definitely. That's a great point. I'll be bullish on the full self-driving and all that vehicle stuff. Once I see a Tesla or whatever car it is, a BYD driving full autonomously in Mexico streets. Mexican streets.
Hey, you let me know when that happens, and so we can know what to do over here, Luis. So give us a heads up.
Yeah, for sure. Because Mexican streets, man, oh my God, they're nothing compared to the U.S. streets or highways.
Yeah. I hear you. I mean, speaking of Teslas, these are some of the positions that we have on right now. Meta, as you know, with the continued down moves we've been seeing in the market. I mean, it's a better day today. But Meta, we sold an out of the money put spread on Meta. This one's 28 days till expiration. Gonna have to manage this one by next week. We got QQQ1 out of the money put spread. We sold on there. We'll see what happens by next week and have to manage that one too. Tesla, down a little bit on Tesla, but Tesla's a really volatile underlying. So this can flip in a matter of a day or two. So still have some more time on that. By next week, when it comes down to managing that one, I'm going to have to decide on if I want to maybe roll that, add more time, or if I just want to take the position off, redeploy the capital elsewhere. That's kind of where my head's at right now. And then we got USO. I don't know. Have you ever traded a zebra before? So we put on a 0 extrinsic back ratio yesterday with Dr. Jim, and it's working out pretty well so far. We wanted to get a little bit of long exposure in the oil market, and I typically like to use USO to do that. And it's pretty much a synthetic stock position, right? So it's almost like being long a synthetic 100 shares in the underlying, but using options and not having to worry about that theta decay. So that's working out really well today because USO is up on the day. Up about 160 on that because the underlying's up about $1.34. So that one's working out really well today. But have you put on a zebra before?
I actually have not.
Yeah. Here, check this out real quick. So this one was actually pioneered by Liz and Jenny, if I'm not mistaken. So if anybody wants to see more details about that, they got a lot of videos on YouTube breaking it down. Excuse me. But what we do is we sell an at the money call. If we want to be bullish, we sell an at the money call, and then we buy 2 of the 70 delta calls that are a little bit more in the money, and then that should bring us near 0 extrinsic value on our contracts, and then it should bring us very close to being long 100 deltas. So again, day by day, I'm not affected by time decay, but I do need this one to move. I do need this one to move in my favor before expiration, or I could potentially lose the debit that I paid for this position. And I think I paid maybe $7.13. I think I had paid for it, but it's kind of cool too because it is a synthetic. Because it is a synthetic stock position, we could also use this as like a synthetic covered call position because we can also sell calls, right? Because it's a synthetic stock position. We can sell calls against that as well if we want to hedge. So that's something I could do too if we keep rallying to the upside. I mean, maybe I could even look at selling one of these calls over here, collect an extra 75 cents of credit. That's not in the plans right now, but that's something that you could potentially do in that. But USO has been working out really well right now. Just wanted to get some long delta in oil. Not something I typically trade, but I don't know what your thoughts are on oil overall, Luis.
I haven't actually seen it lately, but that looks to be working pretty nicely. I've heard about some stuff about with Israel and the conflicts again, the geopolitical stuff happening once again. So kicking up a little bit higher oil. Obviously, you want to see conflicts with that, but seems like it's actually, from what I've seen, I haven't actually even traded this year oil, but look at that consolidation might actually looks good. It's been holding steadily around 66 even since December of last year, so you might actually be in for a nice bump to the upside on oil.
Oil was one of those underlyings that I was never too fond of. It was one of those that it can get pretty hot in the kitchen real quick. Like oil was one of those underlyings. And I think the more you trade a specific underlying, you get a feel for its personality. And I wasn't really vibing with oil like that before, but if I can do some defined risk positions on it, I'll take part in that. I was even looking at /MCL, right? The micros on oil, but just due to the nature of oil and the tendencies that it has, it's so heavily affected, especially by news that kind of talk about supply and demand when it comes down to barrels of oil or whatever it might be. I've noticed it's very sensitive.
I never know how to. I actually seen those reports and the US oil inventory barrels, they come in lower than expected. It's bullish or bearish. It's very hard to actually interpret those data. Honestly, that's why last year I traded a little bit of CL, but I got caught in a lot of big moves. So overall, I stayed away a little bit from oil.
No, I hear you. I'm very fortunate on this move today in USO because, of course, this is what's nice. I put the long position on in USO yesterday, and we have an absolute rip to the upside. So That's nice. But again, I think USO, the premium wasn't too attractive. That's why I didn't end up selling an out of the money put spread. It's usually the go-to whenever wanting to get directional and an underlying, but I ended up going with the zero extrinsic back ratio. It's paying off so far today. So maybe I hold this one for a swing. I could even hold this one even a little longer. And if I want, I could just exit the position at break even because it is a very directional trade. It's only direction that I'm trading. And because I'm so a little bit more in the money because of the big move that we've gotten today, I could just set my stop loss at break even. But that's another thing to keep in mind. Because it is a straight directional play, you do have to decide on how you want to manage your risk on things like that if things go south. But that's the only most, I guess, position that I'm fond of in the portfolio right now, Luis. I don't know what else you've been looking at.
What made you actually enter a little bit long on Tesla? Matt, I actually understand, but Tesla, well, maybe the fact that it's down 50%.
Because exactly. I mean, Tesla's been getting hammered. I mean, I think most underlyings in the market has been getting hammered. But I mean, if you really look at Tesla, I mean, Tesla has taken an absolute beating, right? I mean, Tesla's going to be more attractive around the $200 level. I don't even think Tesla at 200 is that far fetched. But I mean, we were trading at a high of what, 487 just back in November, the end of November, almost December. That was just about 3-4 months ago. This has pretty much almost been chopped in half. So that's one of the reasons why I wanted to get long here. The premium was pretty solid. I'm not one to trade Tesla either, but when it's at these levels in such a short amount of time, it just looked attractive at that point. So maybe if we start trading above this 200 SMA, then I'm going to be a little bit more comfortable in the position. But from now, I'm going to have to manage by next week. But we really haven't gone anywhere in terms of my personal position on it. You're not allowed to trade Tesla, though, right? I remember that.
Well, sorry?
You're not allowed to trade Tesla. I remember that.
Oh, no, I'm not allowed. But actually, I've traded Tesla this year. I shorted Tesla this year, and it's actually my worst performing stock on my portfolio. I went short heavily a little bit like around February. When it actually broke the 400, I was bearish. It actually recovered to like 430, around that mark when it went around 390. I entered short at 390. I remember it was a CPI report from January that actually just to make the market go higher. Tesla went from like 390 to 430 in the same day. I got spooked, closed my entire position. The following day just reversed backward, and I actually haven't traded Tesla once again. But it's an amazing.
Was that a shares position?
Yeah, shares position. It took like 30 shares. Well, actually, ended up having 50 shares short. You know me a little bit. Sometimes I like to take shares.
You're the reason why Tesla's tanking. This man buying 50 shares of Tesla at these levels.
I lost money on Tesla on my. I did not hold it. I was actually thinking I'd actually retest again the 52-week high. Well, it's not the 52-week high. It's actually the all-time high, 487, I think. But the Trump bump, adios, no more. No more for the Trump bump.
Yeah. I think it was Dr. Jim the other day. He had mentioned, or was it Gus? It was one of the two. They had mentioned, I mean, Tesla went on an insane rally, right? Especially heading up to the election, especially post-election. But a lot of these stocks are taking a massive hit right now. And it's almost like Tesla was able to get a head start on the hit that the market's taking right now. Because if Tesla didn't have that massive move almost up to $500, I mean, Tesla would have been sitting at a lower price right now. Maybe we would have been sitting at 200 if that wasn't the case. But yeah, it looks like the hype is over right now. Things are correcting to where they should be. I mean, we're on the weekly chart right now, and this doesn't even look natural. I mean, again, we were trading at 244 on Tesla 1, 2, 3, 4, 5, 6, 7, 8 weeks later. I mean, we're trading at almost 500. This is like meme stock territory almost. But that's what you got on Tesla, Luis.
I might actually enter long Tesla, given the fact that it actually made higher lows this week than compared to last week. Mm-hmm. Again, today managed to be barely green, even though it was a wild day. Difficult to trade these days with such a
this entire week
on the market.
What were your thoughts on the market Monday, Tuesday? That was some of the choppiest price action I think I've ever seen in the last 5-6 years looking at the market.
You know, I'm happy that I've been able to actually be profitable for the week, but I've been, for example, today I actually entered some longs. Out of nowhere, I actually gave all of my gains right away. Managed to be barely positive on the day on the MES contracts, but it's been hard. It also, I think they've been selling all of the major move higher. It's like an H, you know, it's basically looking like an H rather than like the V-shaped recovery. As I've actually steered away from the micro Nasdaqs. You introduced me to those ones. I love them, but oh my god, yeah.
The Nasdaq is a little bit more volatile for sure.
Yes, that's why I definitely prefer the MES.
Yeah, I like to refer to it as like very wicky. Like you can get a lot of wick. I mean, case in point here. I mean, you can see this massive wick on the bottom of this candle, and then we reverse massive wick down here. These aren't even the bodies of the candle. And I know if we kind of compare that to ES is a little bit slower moving, and I think the range that ES trades is a little bit smaller, but the point multiplier is a lot higher on ES than it is on Nasdaq, so it makes up for it. So Nasdaq and ES kind of has its own personality, and it's really just up to whatever you prefer or are more comfortable with. But I definitely hear you on the Nasdaq. It's a lot more wicky. That's how I usually describe it.
For sure, I hate when I open a position and right away I'm $50 down because a candle in the 1 minute. So it was a $25 movement right away. So personally, for my sake, I rather enter 2 contracts on MES that basically is just like one MNQ on the MES from what it moves likely. But still, I like it better. I've done way better trading just 1 or 2 MES contracts. If I go high, maybe I'll take 3, but no more than 3 personally for MES contracts. And the movement is, way smoother.
No, I hear you. This was the price before we wrap up here. This was a price action on Tuesday. We had that initial sell-off in the morning, and then we chopped around in this range all day. Really nothing to do. Again, not too much of a surprise. This is a day heading before FOMC, but so not expecting too much of directional moves with that binary event to come. But that's what we had on Tuesday. Super choppy markets this week. Anything else to add, Luis, before we wrap up here?
I just want to ask you thoughts for tomorrow. I was seeing a report from Citi that $4.5 trillion are expected to actually expire tomorrow, the quad witching. Over the past 10 years, 7 have actually been green for the Nasdaq, but overall tends to be bearish over the past 20 years. So we were to say green or red tomorrow. What do you feel?
I'm gonna go. Hold on, let me zoom out real quick. Let me take a good look. I'm gonna go. I'm a little bearish, honestly. Even though some of the positions that I have on don't even though some of the positions that I have on don't reflect that, I would be a little bit more bearish. So that's what I'm going to lean tomorrow. The quadruple witching is tomorrow. So keep that on your guys' calendar. Could be a little volatile. And then also, we really haven't had much movement this week. So maybe we finally get a directional move in the market. Again, Monday was super choppy. Tuesday was choppy. We had some directional moves, but those moves were given back. Like after the FOMC, we ended up selling off overnight, giving all that move back. We ripped to the upside today, gave it all back by the afternoon. So we really haven't gone anywhere when we zoom out. But I'm going to go bearish. Where are you leaning?
I'll say also bearish, even though I'm also leaning long on my positions, even though in China, most of my positions. But I want to say bearish for tomorrow, and maybe we can scoop in some or buy the dip, because the dip just has been dipping.
Yep, the dip keeps dipping. That's how it is, and then you turn into a long-term investor. But Luis, my brother, so good to see you again, bro. I hope you're doing well. We'll have to catch up on some of these positions. Tell the kids I said hello, and we'll call up there. But anyways, thanks for taking the time to hang out with us. We'll see how the market performs tomorrow. We got 1 day left. Tomorrow's quadruple witching, so something to be mindful of, and we'll catch you guys next time. Peace.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on tastylive.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, Glad we're through here? Sayonara, Mr. Genki. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
All right. Perfect. I would like to buy Park Place.
No.
What?
There is no Park Place in this game.
Yes, there is. I'm looking at it.
No. This is mine.
Take it.
It's mine. You don't get it.
Okay, alrighty.
You know what? $500. $500 to the electric company if you want to keep all of your power on all these houses and hotels. And
You can't negotiate. I landed on it. I can buy it if I want it.
I'm the electric company. I'm the most powerful thing here.
Excuse me, to the person who owns one property on Monopoly, this is the mayor, and I'm overturning everything, and
You're
I'm
in over
allowed
your
to
head.
buy. Excuse me?
You're in over your cute little head.
Don't patronize me.
You
This
don't
is a
come
board
down
game.
to where the big chimps play and expect to get a banana, sweetheart. You gotta earn it.
Okay, asshole. Give me my money back. Come on, let's keep
Whoa.
playing.
Whoa. Asshole. No, my father was an asshole. I'm king.
You are so wrong.
I'm very right.
Did you even take a wallet? Did you just eat my piece?
You don't have a piece now.
Seriously,
The
it's a
dog is
game.
gone. The dog is gone. You have nothing. I have a car.
Are you seriously pissed off because you're losing the game?
I'm not losing. I'm winning.
You are clearly losing. Look at the board game.
Every utility, 2 of the railroads. And what do you just have? You have a bunch of hotels and houses, which in this market is ridiculous. A nice, simple house on Mediterranean Avenue. A beautiful car worth 10 times more than your dog who is gone. Cut a deal with me. Come on.
Okay, I quit. If you're gonna be an asshole, I quit.
Then I win. The old bait and switch. I got you. I told you I'd never lose this game. I've always got a plan. And you fell for it. Boom! Shalaka!
Welcome in Tasty CEO Tom Sosnoff, also found at Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
If you missed the live show, here's our cherry on top weekly recap.
You're making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on, what did you want to do last night? I missed that.
Don't repeat that. No.
No, what did you want to do?
I do this every time I'm here.
I just want to know what
Every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
the
up.
The thought of you guys is like sickening. I'm sitting here like this, like, it's hot as hell in here. I'm like sweating, like it smells.
yeah, it is Wednesday. Wacky Wednesday around here. March 19th or so, they say, a little bit after 5 p.m. Central Time. The best time, you know what that means? It's time for Tasty Live's evening show, a little podcast called The Price